If price decides to come back up, price has a good chance to short at that same area, okay, of resistance. Since people sold there the first time, has a good chance to sell there the second time, okay? And then you're going to have areas of support. And these are going to indicate buying zones, okay? And even if it doesn't congruently happen like this, a setup can commonly look like this. I call it the support mirror, resistance mirror, or the stack mode mirrors, okay? So you might see a setup that looks similar to price might come up, it might rally past the resistance, you know, come back down, and then mirror the resistance. You know, very common. You have setups like this for a downtrend type of setup, and then for an uptrend type of setup, could definitely look like this. Price might bounce here, and then price might come back up and then validate it again. So even though it invalidated at this area here, it decided to come back up over here and then go in an upwards direction. Okay. So we have to understand the market is a vertical chart. You're looking at a vertical chart. That's why I do not want you guys to fall into the indicators traps. Okay. Now, there are going to be some pretty good indicators. Okay. Volume. Okay. A lot of people don't even know what volume is. What is volume? Volume is going to be the amount of orders placed at a specific area or time. So volume is the amount of orders placed at a specific area or time. That's going to be volume. So that's the term you always hear. So you want to be buying at key areas of support, okay, because it's going to have most of the volume there. You want to be selling at key areas of resistance because most of the volume is going to be there. Now, let me go ahead and give you guys some secret sauce here. Way more powerful than indicators. Okay, understand that sometimes in the market, resistance can be broken and turned into support. Okay, resistance can be broken and turned into support, and then price can bounce in an upwards direction. Just the same way, support can be broken and turned into resistance. Okay, so resistance can be broken and turned into support, and support can be broken and turned into resistance. Even if it doesn't happen this cleanly, it can happen something like this. And price might run through there, come back up, turn this resistance here into the support later on. Okay, go to the support area, support, say price decides to run under here, come above it, and then come up again, boom. This area of support made this area of resistance created here. Okay, so I make it simple for you guys, man. I do not want you guys to be struggling. Okay, there's going to be times life is going to be hard. The charts are going to be hard. People are going to be doubting you. People are going to be hating you. And there's going to be times you might not even believe in yourself. And all that doubt has to be killed. Okay, and indicators equal doubt. If you have to rely on indicators to trade, then you can't be a profitable trader. Okay, if you can't just look at the chart and be like, okay, I see why price bounced here, 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 and here, then you cannot be a profitable or successful trader. You will continue to struggle. You will continue to go through hard times. Okay, and it's going to be very, very hard for you to elevate. And the indicators are what's holding you back. So I want you guys to do this. Okay, for a year, No indicators. Okay. No indicators. Just read the candlestick chart clearly. Read it raw. Read it raw. Okay. That's what I need you guys to do. So for a year, no indicators. And I want you guys to just go hard, man. Go hard. Put in 16, 20-hour study sessions. Live on these charts. Understand every single micro reaction. Understand why price bounced at every single area that it did. Understand why price sold off at every area that it did. We have to get the full congruent picture. We want to get to the next level, and we're pushing harder than ever. We're not stopping for nothing. Okay, this is real therapy for me, guys. Just sitting here teaching you guys these charts. I'm so passionate about this. You know, I live for God, and I live to just get people out of financial poverty. I don't want to see anyone struggling. I don't want to see you guys blowing up your accounts or committing suicide over the markets or just going through any financial hardships. I want you guys to be successful. I want you to get to the next level. And I want you to win. Okay? And I want you to win. And best way to win on the charts, okay, is you have to have your setup. Okay? Follow your heart. Okay, if God put it in you to trade, trade. Don't let anyone stop you. Don't let anyone stop you. You have to trade. Okay, whatever's inside of your heart, you got to go with that. You got to do that. It's going to be times you're going to be feeling doubt. It's going to be times you're going to feel like, oh, it's not for me. I don't know. But God put it inside of you for a reason. So go hard. Okay, follow your heart and follow your setup. Okay, you tell yourself, I'm only going to play break and retest. Okay, if you're a break and retest trader, why are you trading anything else other than break and retest? Why? If you're a mirror trader, okay, someone who trades resistance or support mirrors, okay, why are you playing anything else other than mirrors? You need to, if you're a trend line trader, okay, why are you playing anything else other than the trend lines? Okay, that's the things. You have to follow your heart and follow your setup, and most importantly, follow God. Okay, you can get successful. Investing, it's important in this world. Okay, the more shares that we buy, the more companies that we can help, the more that we can help each other on this earth. Okay, faster healthcare products, more communication so we can communicate with our parents, grandparents around the world, etc. Okay, investing in the stock market is crucial. It's important, and don't let anyone else stop you guys from doing it. Very, very passionate about teaching this, and if you want to learn more about it, and if you want to get a free stock watch list, should see you at stackmode.net. Stay prayed up to God, keep grinding. Catch you in the next one. Peace.
What's going on, class? We're going to be talking about Forex trading fundamentals. We're going to be understanding what a pip is, what a lot is, and how Forex leverage works, and what leverage is in the first place. These are going to be the 3 pillars of position sizing and risk management. Welcome to the class. Let's jump into it. So let's understand what a pip is. A pip stands for percentage in point. Okay. So that's what pip is short for. P-I-P stands for percentage in point. And it's the smallest standard unit of price movement. So the definition, a pip is the standard unit used to express the change in value between 2 currencies. For most currency pairs, a pip is equivalent to the 4th decimal place. Okay, so for example, dollar 0.000 and then the 4th decimal place. So then 1. Okay, so for example, and a currency pair is going to be something like USD JPY, for example. Okay, something like that. That's going to be referred to as a Forex pair. And many brokers now quote prices to a 5th decimal place. And this fractional pip is often called a pipette or a fractional pip, allowing for tighter spreads and more precise execution. And calculating the pip value, USD quote currency. Okay. And the monetary value of a pip depends on 2 factors: the currency pair just like we talked about. This is the currency pair, USD, JPY, etc., and the size of your trade, and that's going to be the lot size. That's going to be the amount of money you have allocated into the trade, whether you want to be at $10 worth of size or $100 worth of size. Okay. So for example, let's say you're trading Euro USD. Okay. Let's say you're trading this pair. If Euro USD moves from 1.0001, let's say Euro USD is at that price, okay, to 1.10002, okay, that's a 1 pip movement. Okay, so the fourth decimal place changed from 1 to 2. That's going to be +1, so that would be a 1 pip movement. Okay, and 1 pip is equal to 0.0001 per unit of base currency. And an exception, pairs involving the Japanese yen, okay, JPY, are typically quoted only 2 decimal places. For example, a USD JPY, a movement from, let's say, 150 to 150.1 is going to be 1 pip. Okay, so instead of the 4th decimal place, it would be just the sen. Okay, so which would be the 2nd decimal place. So the concept of a lot, what is a lot in the first place? So this is going to determine what the trade size is going to be, how much money you're going to be putting into the trade. And it's the volume that determines the profit and your loss scale. And a lot defines the currency units that you're trading. And since currency moves in tiny pips, large volumes are necessary to generate meaningful profit or loss. And the 3 standard lot sizes, okay, a standard lot, okay, it's going to be 100,000 units of base currency. And let's say, for example, be $10 per pip, okay, a mini lot, okay, 10,000 units of currency, okay, and let's say it'll go ahead and be, for USD pairs, $1 per pip. And for a micro lot, let's say 1,000 units of base currency, okay, and it'll cost you 10 cents per pip, okay, of USD fiat. So the fractional representation used in trading platforms is 1.0 equals standard lot, okay, and 0.10 equals mini lot, and micro lot equals 0.01. That's a micro lot, and beginners should start with micro lots 0.01 to manage the risk. And the importance of lot size. A 50 pip move in your favor is $500 profit with a standard lot, but only $5 profit with the micro lot. And choosing the lot size correctly is the first step in risk management. So I'm going to give you a deep dive into what leverage is in the first place. So it's going to be margin trading. Margin trading is when the broker is pretty much going to let you have a minimum amount of money, okay, and then you can go ahead and trade pretty much with over that. And it could be a double-edged sword of buying power. So here's the definition. So leverage is the ratio of the capital used in a trade to the amount of money required to open that position, which is called margin. And common ratios are going to be like 1 to 50, okay, where it's going to be have like a 50x multiplier, okay, on your currency, okay, 1 to 100 or 1 to 500. And this is the required amount, okay? And the required amount is going to be margin. And that's a collateral amount that your broker temporarily locks up from your account to maintain the leverage position. So let's say you want to trade with $5,000, okay, in hindsight, worth of leverage, right? But you would have to have a minimum of $500 in your account, okay? And let's say you go under that. Let's say you go to 480, right? Then if you don't have that full 400, you don't have that $500 minimum, right, and you go down to the 400s, then your account can be wiped down to 0 and liquidated. And depending on how quick the price move that happened, that puts you underneath the minimum, okay, you could potentially owe the broker money and go into the negatives. So be careful. Margin can be a lot of power, but it could also bring a lot of destruction. You don't want to go into debt and stuff like that for no reason, okay? Something I've struggled with for making just bad decisions. I don't want you guys to go through it. So power and peril. So the power of leverage. With 1 to 100 leverage, a trader can control 100,000 standard lot position by only pulling up $1,000 of their own capital. So, and leverage is going to come with this. And if that 100,000 position loses, let's say 100 pips, okay, $1,000, the entire margin instead of $1,000, for example, is going to be instantly wiped off, leading to a margin call or automatic stop out by the broker, okay, causing you to either A, owe the broker money, or just set your balance to zero sometimes. And higher leverage means smaller required margin, but drastically increases the risk of rapidly depleting your account balance. So don't trade close to margin. Make sure you guys have way more money than the margin requirement. This way you guys can trade without even having to worry about this. So here's an example, the trade calculation. Let's combine a pip, lot, and leverage in a single trade. So let's say we have a $5,000 account. Okay, let's say God bless us with a $5,000 account. Okay, and the leverage we're going to be trading with is 1 to 200. Okay, let's say we're trading USD, CAD. And the volume we're going to be trading with for this example is going to be 0.5 lots. Okay, so that's going to be mini. So calculate the position size and the margin. So the trade units, okay, so I'm trading with 0.5 lots. So I'm going to go ahead and take the 0.5, okay, and I'm going to go ahead and know, okay, so take that into 50,000 units, okay, and then from there, I'm going to take that 50,000, okay, and I can go ahead and take that by the 200, okay, and I got the 200 from the leverage amount, okay, and that's going to go ahead and give me $250. Okay, so 50,000 divided by 200 is $250. Okay, and for the pip value, okay, I'll take that 50,000, okay, that I got from that 0.5 times 100,000. That's where I originally got that 50,000 from. Okay, then I take that, divide it by whatever the leverage is. Okay, that's 250. So then I'm going to take the pip value. Okay, so for the pip value, I'm going to go ahead and put that as 50,000. Okay, because 0.5 times 100,000. It's going to go ahead and be 50,000, okay, and times 0.00001, okay, equals 5 units of CAD, for example, okay, and the value is going to always be in the quote currency. And for USD value, if the CAD USD exchange rate is 0.75, for example, the pip value is 5 CAD, so times 0.75, okay, so it's approximately 3.75 USD per pip, okay, and if the trade moves 20 pips in your favor, then you can go ahead and determine if you're going to be profitable or not, okay, by just keep on calculating certain costs, or you can go ahead and put it into a profit or loss calculator. A lot of brokers too will show you if you put down a take profit limit order, okay, you can go ahead and see how much you're going to make on certain areas too. So risk management, the crucial connection. So use pips and lots to control exposure. Effective forex trading is not about predicting the market. It's about controlling your risk. And this is achieved by linking lot size volume to your tolerance for pip loss, and the 1% rule and lot pricing. And the golden rule, never risk more than 1% of your total trading capital on any single trade. And for a $10,000 account, your max risk should be $100, for example, or $1,000, okay? Once you start getting better, you can trade between 1 to 10% of your account. And assume your strategy requires a stop loss, okay, especially on forex and futures, since you're going to be trading with leverage a lot of the time. You don't want to get margin called, so make sure your stop loss is going to be at a place that's going to be before you get margin called, okay, so you don't lose your money for no reason. And calculating the max pick value, so put it in forex calculators, and understanding the math is really going to help you put your risk management into place. So the risk adjusted lot size. So let's say a micro lot is 10 cents a pip and a mini lot is $1 a pip. To achieve the $2.50 pip required value, you would open a 0.25 lot position, okay, which is 25,000 units, which is 2 standard lots plus 5 mini lots. And responsible trading reverses the calculation. Determine your risk percentage and your stop loss, okay, then calculate the correct lot size, and never choose the lot size arbitrarily, okay. Do your math, put everything in calculators online. Okay, stay productive to God, keep grinding, and that's what a pip is, and I pray that it helped. Head over to Stackmode.net if you want to learn how to trade Forex, crypto, anything. Catch you in the next one. Peace. Let's go. We're going to be talking about how whales manipulate the crypto market within the first place. So whales are going to be cryptocurrency players that have tons of money, for example. Okay, so if you ever see an order come in for like $1 million plus, that's going to go ahead and be a whale. And sometimes whales can go ahead and control a lot of the markets, especially if something doesn't have a high market cap, which is going to equal the value of something. So for instance, someone purchases $5 million worth of Bitcoin, it won't really move the market much due to the fact that Bitcoin has $1 trillion market cap. So it's extremely valuable and a lot of people are investing into it. So it's not going to move the market much. But for instance, say somebody invested $5 million into whale coin, okay, some random meme coin that just dropped, okay, they pretty much now own all of whale coin, okay, they bought all the shares pretty much since they invested $5 million, okay. Due to that fact, if any time whale coin goes up, since they're a majority holder, as soon as whale coin decides to go up, they can go ahead and sell, and since they're a large majority of the shareholder, the price is going to go ahead and tank with it since they hold a large majority of the value. Okay, so that's what a whale is. A whale can affect your trading in different ways. Let's go and let's talk about what we can do and how we can trade with the whales in order to make sure we're making profitable trades. Inshallah. Let's go. So what's a whale in the first place? So in the world of cryptocurrency, a whale is an individualized or entity that holds an immense amount of our particular digital asset. And due to the decentralized and often less regulated nature of the market, the actions of these whales can have a disproportionate impact on price, liquidity, and overall market sentiment. And their large transactions can single-handedly trigger significant price swings, whether in a positive direction or a negative direction, creating both opportunities and risk for smaller investors. So the market influence that whale has. So whales are not just big investors, they're market movers. Their buying and selling can create price momentum that a typical trader can't due to the fact that they own such a large percentage of the value that's being traded into it since they have such a large percentage of it, okay? And concentrated ownership. The concentration of wealth in the hands of few people, entities, individuals, or hedge funds included. So a few whales means that they control a large percentage of a token supply, giving them significant control over its price. Okay. And it has a large psychological impact. When a whale makes a move, other traders take notice, and this can trigger a chain reaction of buying, okay, which is FOMO, or panic selling, and as others try to follow or get out the way. So the psychology of manipulation. Whales don't just move the markets with their money. They exploit human emotions. They understand that FUD, okay, FUD stands for fear, uncertainty, and doubt. All things that are banned because we trust God, we trust our plan, and we're not here to fail. And FOMO, okay, and we don't trade with FOMO, okay. FOMO is banned too because we trade with logic behind our trades, okay. We know what our entry is, we know what our exit is, and we know what our stop loss is way ahead of time. Okay, we're strategic, logical traders. We're not falling into any type of FOMO, so we're good off that. But these are psychological triggers. And a whale's goal is to not just profit from the price change, okay, but it's to get other traders to do the heavy lifting for them by creating a narrative that encourages mass buying or selling. So strategic moves that whales do. Whales make calculated moves, not emotional ones. And they plan their actions to maximize their profit by preying on the emotional reactions of others. So this is the illusion of momentum it creates. A whale's large buy order can give the illusion of a strong market momentum, drawing in retail investors who fear missing a rally. Okay, because people might see like, oh man, the price is deciding to go up, but it could go ahead and be overextended, for example. And whales and their affiliates can use social media, okay, and other news outlets to spread stories that justify their market movements. Like for some reason, people like to go ahead and tweet certain things like, oh, the market made this much today, it lost this much today. Market's going to always fluctuate. Just pay attention to the chart and put everything together. Okay. So don't be manipulated by what you see on social media. Okay. Take actual education and implement it into your trade, do your research, and take your time. So for example, the fake sell wall. So if a whale places a massive sell order at a slightly higher price than the current market price, this sell wall is going to create the illusion that a strong resistance wants to be created there. And that can scare other traders into selling their holdings at a lower discounted price. And once the price drops, the whale can cancel their fake order and buy it right back in at the discount. And some common manipulation tactics. Understanding these tactics are going to be your first line of defense in order to avoid fake outs, things like that. And they're designed to be subtle, but they can be identified with some careful observation. So we'll talk about pump and dumps. Okay, so a group of whales can buy a large amount of low cap coins. Okay, so for example, if they bought whale coin, okay, And let's say a group of individuals in a Discord, it's the real thing, real people, things I've seen myself. Okay. Group of people in a Discord come together. Let's say they own 60% of the coin. Okay. They're going to be in from the lows. They're then going to go ahead and push ads, social media advertisements, pay social media influencers or hack social media influencers to push the meme coin that pretty much has no intrinsic value for the future. Okay. And since they own a large majority of it, by the time the stock starts going up, starts getting hype from the internet, they're going to go ahead and sell. Since they're in at the bottom, they're going to make millions of dollars. Since it's trading, okay, you make money when someone's losing, and when you lose, someone's making money. So since they're in at the bottom, they're going to go ahead and sell. And since they own 60% of it, the market will go ahead and crash. Okay. So that's what a pump and dump is. And don't get manipulated by that. Okay. Take your time. So wash trading. Okay. And this involves when an individual or group simultaneously buys or sells an asset to create fake trading volume in hindsight. And this makes the asset appear more popular in liquidity than it actually is, attracting legitimate traders. So a lot of meme coin traders started creating their own tokens, do that. So check out the flow, okay? And the flow is going to give you the ability to see all the orders coming in, okay? And see where the transactions are coming from. Is it a diverse flow coming in from a bunch of different addresses, which is going to indicate it's a bunch of different people investing in it, which is going to indicate it actually has value? Or is it just one address buying over and over again, which is going to indicate a whale, okay? One person buying large quantities of something. And a whale places a large order on one side of the order book, okay? And this is using the buy or sell, okay? So order book shows you who's buying and selling, okay? And they use one side of the order book, okay, to trick others into believing that there's strong market interest. Then they can cancel the order before it can be filled, and often at the same time, they execute a real order on the opposite side to profit from the price shift. So since people are looking at the flow so heavily instead of looking at the chart, they end up getting faked out and they end up just losing a trade. Okay, so make sure you're taking a look at your TA, okay, your technical analysis, take a look at your chart movements, and look at the flow too if you want to. Make sure everything lines up and correlates. So here's how to spot a whale's footprints. So while you can't read their minds, you can track their movements. So some tools give on-chain analysis, and they can go and reveal suspicious activities, and they can help you avoid being a victim of manipulation. And some unusual volume spikes. So you can go ahead and look for sudden and inexplicable spikes in trading volume, okay? So that means a large amount of people are getting in a certain direction that are not tied to any major news or fundamental developments. And some on-chain analysis. You can use blockchain explorers to track large funds who are transferring to and from exchange wallets, okay? So you can see what type of cryptocurrencies are getting withdrawn the most. And a massive amount of a token being moved to an exchange could indicate an upcoming sell-off. So order book analysis. Pay close attention to the order book and be wary of a thin order book that suddenly gets massive. A single buy or sell order placed on it. And what you can do to protect yourself. You can't stop a whale from manipulating the market, but you can build strong defense against it. One, okay, just master the charts. Okay, master your technical analysis. Make sure you're understanding what you're looking at, and you might even be able to buy when the whales are going to be buying within a positive direction. Okay, just trust God. Okay, keep studying the market, and once you're buying when the whales are buying, that's actually definitely when you're going to be profitable, inshallah. So your best protection is about not outsmarting them, but sticking to a disciplined strategy and buying at levels to where you're actually going to participate where the whales are going to be buying at too. So key levels are going to be important. Okay, so if you're looking for an area of resistance to be broken, if it turns to support, then it looks like people want to go ahead and buy it there. It wants to hold there, and market might want to continue in an upwards direction from that level. Okay, so some things you can also do to protect yourself just in trading in general. Never invest more than you can lose. Okay, no trading with rent, no trading with important bail money or anything. Okay, and this golden rule of crypto trading reduces the emotional pressure that makes you vulnerable to manipulation. And you can also diversify your portfolio. Don't put all your eggs in one basket. Okay, spreading out your investments across multiple assets can reduce the impact of a single asset being manipulated, and you're not just going to be hoping the whole time that one thing sweeps while everything else is going in an upwards direction, whatever direction you want. Stop loss. Okay. Set your stop loss. Okay. Stop losses automatically sell your asset if it falls to a certain price. So if your broker supports stop loss, go ahead and use it in case it's like 3 a.m. Okay, and price starts dumping and you're in a long trade. Okay, and it passes a certain area, then you're more comfortable than losing with. You can go ahead and set your stop loss, and it'll go ahead and close you automatically. Okay, that's the key function of it, is that it closes you automatically. So while you're doing something, driving, the gym, whatever, okay, your trades will go ahead and do its thing. Okay, you can set your take profits, which is a limit order. That'll go ahead and make your trades close automatically. And then you can set a stop order, okay, which will go ahead and cancel out your trade if it hits a certain price threshold that you don't want it to, causing you not to lose all of your money, but just some amount of money that you're comfortable with. And I can't stress it enough, please do your own research. Okay? Do your own research. Don't take anyone else's trades that you just see, okay, unless you're trying to actually study and understand the market. Okay, do your research, and knowledge is going to be power. Okay, and in the end, the crypto market is really just a game of psychology. Okay, as a lot of people have made a lot of money. Okay, I've made a lot of money just buying and holding. Okay, just simply buying and holding. Okay, people are millionaires who don't look at the charts. Okay, but just buying and holding. So ideally, that's just going to be the main concept of it. Buy the dips. Okay, if you want to learn how to buy the dips, head over to stackmode.net. Okay, so buy the dips, buy certain low points. Don't buy at all-time highs. Okay, that's also going to be a big thing too to succeeding. And try and follow what the whales are doing. Try and buy at key levels. Okay, buying at key levels is going to be a good way to go ahead and make some profit as well too, inshallah. Okay, buy key levels. Okay, key levels are going to be areas where everyone wants to buy at. Okay, an area where everyone wants to buy at is going to go ahead and attract whales. Okay, wherever the money's moving, you should be moving to within the market. Okay, so by arming yourself with knowledge, getting more informed, heading over to Stackmode for mentorship, getting a free trading mentorship call, and maintaining a disciplined strategy, resisting emotional trading, you can navigate these volatile waters safely. And your goal isn't to beat the whales, and it's to avoid being their meal, also known as liquidity. Okay, liquidity is pretty much people who are just losing, and you don't want to be ammo connected and collected in order for the real trade to actually happen. Okay. Stay prayed to God, keep running. Catch you in the next one. Peace. Class, let's go ahead and let's talk about what a stock is. So don't go buy at nonsense and invest. This is probably why you're broke in the first place right now. Invest your money into things that are going to go ahead and turn your money into more money. If you want to stop being broke, if you want to stop being poor, if you want to stop having low bills and debt, start using your money to turn it into more money. If you want to be foolish and be a consumer, that's fine. Choose your pick. But life is only getting more expensive, so choose what you want to be on. Okay? Do you want to be someone who's providing, who's succeeding, and is going to be self-sustainable? Or if you want to be someone who's just not self-sustainable, no money in your bank account, and no wealth built or left for anybody around you, it's your choice. So invest. If not, up to you. But here's what a stock is in the first place. So a stock is owning a piece of the company. Okay. So instead of buying the actual product itself, buy the stock. Okay. A stock is going to go ahead and give you a part ownership of that corporation. And that money is going to go ahead and make you more money by buying and holding. So the reason why people even start the stock market in the first place is due to the fact that, or put their company on the stock market, is due to the fact that they want to raise funds for their company. Okay, more funds raised, which means more parts, materials, etc., can be put into the business. Okay, and when that happens, that means the business could potentially get bigger. Okay, and make more money, grow potential wealth. Okay, and the bigger the company gets, the more you'll get rewarded for that. Because since you're a part holder, the share price will go up. Okay, so the share price is going to be the price that pretty much just depicts its number value. And as the share price increases, let's say you bought in at a $39 share price, for example. If it went up to $100, okay, you would make a certain percentage gain depending on how many shares that you have. Okay, so a stock is formally called a share, and each share represents a tiny fraction of the company's assets and earnings. And the company divides its total value into millions of these individual shares. And why the price moves in the first place? So the stock price change based on supply and demand. And when more people want to buy, okay, that means demand is higher than the supply. Then the price goes in an upwards direction, okay? And this demand is driven by expectations of the company's future profits. So the reason why it's going up is becoming more scarce. Okay, so people who already have it or people who are buying into it are either going to be buying at the highs, or if you got into it at the lows, you're going to be holding onto it. And since the company is getting value, you're going to go ahead and be able to make some money based off of that. So why do companies go for public in the first place? Okay, the IPO. So first of all, companies go public due to the fact that it helps raise capital. Okay, once again, more research development funds, more material funds, etc., can be garnered by just putting your company on the stock market. So the primary reason is to generate large amounts of cash for company growth. So it helps you fund research and development, pay off existing company debt, and to expand operations globally. And the money raised does not have to be paid back, unlike a loan. And the initial public offering, the first time a private company sells shares to the public. So before a stock market company can be available to the public, it has to first go through a private investor. Okay, so someone on the back end has to purchase all the shares. Okay, they have to purchase all of it, and then it can go ahead and be available into the company. And after the IPO, the shares trade on an exchange, okay, also known as the New York Stock Exchange, the NASDAQ, S&P 500, etc. And the secondary market is where everyday investors buy and sell to each other. Okay, and this is going to be available on your brokers like Webull, Robinhood, and just the stocks you're going to be able to purchase on your phone. So the reason why investing is going to be so powerful is when it gives you your time back. Okay, you can go and put your time into working harder at your business, working harder to developing yourself. Okay, stop being a consumer. Stop spending all this unnecessary money on shoes you can't even afford right now. Okay, some of y'all can't even buy the items that you own twice. If you own items that you can't buy twice, okay, that's not a good look. Okay, it's time to either A, run it up again, or you just have more stuff in like liabilities than assets. And the liability is something that's not making you any capital. It's just something you just spent money on. Okay, so don't make foolish decisions. Okay, stay down. Some people don't know how to stay down, and then people wonder why they're broke. They wonder why they're poor. They wonder why they don't get anywhere, and it's because people don't know how to stay down. Once people start learning how to stay down, they'll stop being broke. Okay, once they realize, okay, my money's a tool. Instead of me being a pansy animal and investing in somebody else's company who just dropped the product to me, instead of me putting money in their pocket, let me put money in my own pocket. Let me invest. Let me build myself up. But some people aren't ready for that. Okay, some people are just always going to be slaves. Okay, they're going to be broke slaves. But if you don't want to be a broke slave, you need to start investing. Okay, if you don't want to be someone who's controlled by just wages and everything, let your money make some money. Okay, God gives us a really beautiful opportunity in order to do that. But if you want to spend your money on nonsense and then not invest, that's going to be fine, because the people who are investing are making substantial income. Okay, I don't want you guys to be broke anymore. So keep investing, keep going, keep building that stash. So, stock terminologies, ticker symbol. The short, unique abbreviation used to identify a stock on an exchange, okay? That's going to be the ticker symbol. You're going to have Apple, okay, AAPL. You got Tesla, TSLA, Google, GOOG, also known as GOOGL. Okay, you're going to have certain other companies as well, too. They're going to be tradable on the stock market, okay? And when you're going to be able to invest in them, you can trade a couple of things. Either A, you can buy shares, which pretty much just give you a piece of the pie, okay, depending on how many shares that you do own. Okay, so shares equal ownership. The reason why I like shares too, I recommend you guys have 2 accounts, okay, or 2 portfolios. One for day trading, okay, whether you're day trading penny stocks or trading stock options, which is where you get paid based off of just directional bias, where you can trade in upwards direction or downwards direction, okay. So instead of having ownership, you're getting paid based off of your correct analysis, pretty much with options. So you can either trade stock options or buy shares, or I like to personally do both. Okay, I like to take my options profit and reinvest it back into shares. Okay. So reinvesting your money into a cycle. Your money should be a wheel. It should be a wheel. I'm starting to really understand how everything comes into place. It should be a wheel. The reason why people are broke, the reason why people go down bad is because they don't put their money in a wheel. They don't put it in any type of water. They don't let it flow, and they're not letting their money do anything. Okay. So if you don't invest, you're going to be broke. So voting rights. Owners of common stock typically get 1 vote per share on a major company decisions. Okay. So the more shares that you have too, and especially people who own a large amount of shares, have a lot of jurisdiction when it comes to the company heads and as well as the votes. So the votes go towards who's going to run the company. Okay. And this is going to be a really big thing. Okay. When it comes to certain stock ETFs, exchange traded funds, say you invested like $2 million, right, into an ETF. and you could easily make $70,000 a year just based off investing that $2 million, which you could still withdraw at any time, right? But since you have $2 million in there, you could easily make $70K a year. Okay, you're gonna be able to make $70,000 a year, okay, just by having $2 million invested, okay? And you could live off that for the rest of your life, pretty much. So even if you touch $2 million, you could pretty much never go broke. Okay, going broke is really how you maneuver your money. Okay, I've really been staying down these past few months and just been running up a big bag. Alhamdulillah. Okay, so stay down. When you stay down, you don't buy what you don't need to be buying. When you should start investing, stacking up that money, it runs up quick. Okay, everyone should have at least $10,000. Okay, and if not, it's time to grind. It's time to pray and grind. Okay, but try to get to at least $10,000 in your bank account, in your brokerage account, and in your crypto account if possible. Okay, just spread across. So 2 ways to invest your profits. Okay, you're going to get paid based off of capital gains, and that's when you're pretty much just right. Okay, if you know that something's going to go ahead and go in an upwards direction, let's say you found a really good company that you just believe in, let's say Stackmode, right? Let's say the Stackmode company, let's say I opened it, boom, for example, okay? And let's say it went up, okay? If I got in at the lows at $2 a share, and then price went up to $100 a share, boom, I would go ahead and make some profit based off of that, okay? So whatever the profit is, you can throw it into a stock calculator, okay, which will go ahead and show you how much profit you're going to go ahead and make too. So this is just getting paid based off of appreciation, okay, which pretty much just means you're getting paid as the stock goes in an upwards direction, as the share price increases, and as the future value increases. And it's making money when you sell a stock for a higher price than you paid for it. So if you bought it at 40 and then you sell it at 100, that's profit. If you bought it at 20, you sell it at 80, that's profit. If you bought it at 10, you sell it at 25, that's profit. Okay, and this is the most common and largest source of return for high growth stocks. And then you can also get paid in something called dividends. Okay, dividends are going to be a really, really solid way to go ahead and generate income, especially once you have enough money invested into it, where you can receive regular cash payments from the company's profits. Okay, so if you, once again, if you have like $2 million invested into an ETF, okay, you can easily make $70K a year in returns. Okay, for example. So if you invest your money into the right places, you can never go broke, okay? And they're often reinvested to buy more shares, utilizing compound growth. So you get paid based off of the shares and you're getting paid based off of the dividends. So if you invest in certain things, you're gonna be in an extremely good position, inshallah. And the goal is to find companies whose value will grow over time. So some takeaways. So when you own shares, understand that you're gonna be the owner, okay? You can hold shares for 30 years if that's what you want to do. And I actually encourage you guys to hold shares for over 1 year if possible. Okay, when you hold shares for over 1 year, you're actually subject to a lot of long-term tax benefits. And it's going to be really, really good for your portfolio. And you guys are going to get, once again, a lot of benefits for just holding a trade for over a year. Now, when it comes to day trading, okay, the short-term capital gains tax is going to be a little more intense, but this is why you're taking that profit and reinvesting it into something that's going to make you more money, because that way taxes, inshallah, especially when you're making good trades, it should go ahead and all cycle out with each other as long as your money is always being thrown on the hamster wheel. And the secondary market, okay? Secondary market is where you trade with other investors, not directly with the company after the IPO, okay? And the secondary market is going to be the market that we normally trade, that we're able to go ahead and buy shares, buy options, etc. And take a look at the business. The stock price follows the success of the company right behind it. And investing is owning a slice of the company's growth and the economy's growth. Okay, make wise decisions, spend your money wisely, invest, 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 invest. Okay, if you're noticing yourself, you can never afford your bills. Okay, you're spending too much money. Take a look at your bank statements. What are you buying? Okay. Take a look at everything that you're wasting your money on. What can be reduced? Are you eating out too much? Okay, if you're eating out too much, it's time to start buying groceries. Okay, the technology that you have, dumb it down. You can't afford it right now. Okay, some of you guys have just things that you just shouldn't have, you know, priorities. And priorities are the reason why people don't get rich, you know, and not everyone is meant to get rich. I'm starting to realize that. Some people are meant to stay exactly where they are. Not everyone is meant to get wealthy, but if you're interested in getting wealthy, you got to learn to sacrifice. That's going to be one of the main things I can go ahead and tell you. If you're anyone interested in getting wealthy, putting yourself in a better position, putting your family in a better position, you got to sacrifice. Okay. Once again, not everyone is meant to be rich and wealthy. Okay. Not everyone is going to get there, and that's fine. But if you want to get there, sacrifice, stay down while everyone else is out doing nonsense. You have that fun later on. Okay. When you're secure, you're going to be balling, hooping, not stressing, bills overly paid, stash overly healthy in stack mode. Okay. While people are out and then they come back home and then they start stressing about bills and stuff like that, letting that real life hit them. And then that's why people go run to things like alcohol, drugs, etc. and stuff like that, because their life just isn't together. So just get your life together. Get your life together. Let your money make some more money and just start living a way better life. All right. Love you guys so much. Head over to stackmode.net for all trading education. I'll catch you in the next one. Stay prayed up to God. Keep grinding.
So imagine waking up in an economy where money can appear out of thin air, or one where every coin is locked behind an unbreakable vault. And that's the clash we're diving into today. Let's talk about quantitative easing versus Bitcoin's fixed supply. And it's a true economic showdown to be talked about. So in one corner, you've got quantitative easing. It's the central bank's money creation lever. And when the economy slows, they print even more, inject more, push more, and it can rescue markets. But it can also quietly stretch your dollars thinner over time. And in the other corner to fight against it, you have Bitcoin. It's a digital asset that refuses to bend, and only 21 million will ever exist. No printing press, no emergency button, just a predictable, halving-driven drip of new supply that's immune to human panic. So let's go and let's jump into it, class. Inshallah, if God wills.
All right, so let's go and let's talk about the economic showdown. So Bitcoin has scarcity involved within it. There's a limited amount of Bitcoin available. 21 million Bitcoin exist. But versus fiat currency, the traditional fiat currency, such as the US dollar, there's an unlimited supply, okay? But with that unlimited supply, things catch up over time. So let's go and let's talk about exactly what I mean. So mechanism, quantitative easing, right? So the term QE, let's talk about it. So QE stands for quantitative, Q stands for quantitative, okay? And E stands for easing. Okay, and here's how it actually works. So it's not just printing cash, okay? It's an asset swap. So step number 1, the central bank creates digital reserve, okay, out of nothing. And they use these reserves to buy treasuries and mortgage-backed securities from commercial banks, okay? And now banks now have the cash reserves and are incentivized to lend it out to companies and people. And in the result of all of this, the central bank balance sheet then explodes, okay? And the Fed's balance sheet grew from 4 trillion, okay, to 9 trillion during 2020 through 2022, okay? So let's go and let's break down the further logic of what this all means, because there's definitely going to be consequences for everything that we just spoke about. And let's talk about it. The Cantillon effect. So who gets the money first? So new money doesn't reach everyone at the same time. It flows just like a river does, okay? And one, the insiders, okay, banks, okay, / government, they get the money first at near zero interest, okay? And they buy assets for cheap. Okay, they buy it for a low price. Okay, God says no interest anyway, so they finesse the whole system. So the asset owners, right? Let's talk about the rich people. So stock and house prices rise due to the influx of cheap capital. Okay, and let's talk about the wage earner. Okay, by the time money reaches you, prices for food, okay, just a basic item, let's say like a piece of chicken, for example, okay, or macaroni, okay, 1 year you might be paying $5, okay, for a chicken sandwich. Next year you might be paying $7, okay. 5 years down the line you might be paying $13, okay. you went from paying $5 a chicken sandwich to $13. Okay. Yes, we can print infinite currency, right? But there's going to be consequences to everything. Okay. It's going to be supply and demand, equal opposite forces in everything. Okay. So understand that the fact that infinite money gets printed means that over time things have to get more expensive in order to compensate, because people are going to start just having more money. Okay, there's going to be more money flowing in the river, so the numbers have to balance out logically. Okay, so knowing this, we have to understand that your income has to catch up. So let's focus on point number 2 here. Okay, so point number 2, the asset owners and the rich. So stock and house prices rise due to the influx of cheap capital. Okay, so they go up due to the influx of cheap capital. We need to think about this logically. Okay, so while food, rent, and stuff is getting more expensive, okay, stock and housing prices are also rising. You guys should be trying your hardest to stack as much assets as possible. If you don't know what an asset is, that's going to be anything that's pretty much going to turn your money into more money. Okay, whether it be real estate, okay, you could do stocks, okay, cryptocurrency, so many different avenues, okay, business, pay for ads and start you a digital business or physical business, whatever. Okay, just whatever is turning your money into more money, that's going to be an asset, because you have to understand that your income has to catch up. I don't want you guys to be struggling in society. Okay, your income has to catch up. And just like God says in Quran, we have to spend moderately. Okay, we have to spend moderately. I'm really telling you guys, the key to life is just following what God says. Okay, if you guys aren't religious, you need to go start reading the word, man. Okay, it really helps a lot. It's a lot of psychology in there. Okay, especially as a trader, an investor, somebody trying to have their finances together, you need to definitely read Quran if you can. Okay, so spending moderately. Okay, so stop being so much of a consumer. If you realize, okay, there was times I was spending my whole bag on DoorDash, on this and that. Okay, having no assets stacked. Okay, and I'm not saying don't live life. There's going to be times where we want to live it a little life. Okay, I understand. Okay, there's times, you know what I'm saying, I go out, you know what I'm saying, you might pop it a little bit. Live your life, do your thing. But that doesn't need to be a consistent every single week, every single day thing. Okay, save your money. Invest your money. Okay, so when I say save your money, save it in some assets if you can. Okay, don't just have your money sitting in your bank account, because inflation, food, rent, etc. is rising. Okay, which means if you just have money sitting still, you're going to pay more taxes over time. Okay, so always try and keep your money flowing in the river. Okay, this way, by the time tax time comes, you're going to have an easy time paying it off. Inshallah, if God wills. Okay, so let's head over to the next slide. So the response, okay, absolute scarcity. Bitcoin, where my Bitcoiners at? All right. So Bitcoin, the 21 million hard cap. Okay, and this limit is not something that needs to be taken lightly. Okay, Bitcoin is gonna go away one day. Okay, Bitcoin is not infinite. Okay, it is not infinite. Okay, you need to understand that it's a resource that is going to expire. Okay, that in itself, that alone gives it value. Okay, so there's 21 million, okay, Bitcoin that has to be mined until it goes away. Okay, depending on when you're watching this video, you should be able to do a quick Google search to see how much Bitcoin is left. Okay, people are starting to buy hundreds of millions of dollars worth, including the US government. So check your watch, okay, because time is ticking. Okay, so this limit is not a promise, it's math. Okay, it's enforced by tens of thousands of nodes globally. To change it, you would need to convince the entire network to devalue their own wealth, which would be practically not something that people will be wanting to do. Okay, and there's a whole decentralized consensus behind it. So that word decentralized, okay, you might have heard of it. Let's talk about it. Decentralized means no banks, okay, control anything. Okay. No banks control anything. What it is all peer to peer. Okay. Which means person. Okay. So we got Joe. And then I'm going to go ahead. And we got Jack. Okay. So we got Joe and Jack. Okay. Joe lives in the US. Okay. And Jack lives in China. Okay. Joe hired Jack to do some work for him. Okay. Joe hired Jack to make some ads for him. Okay. For his company. Okay. But he's in China though. He's in China. Keep that in mind, guys. Okay. If you're trying to wire transfer some money to somebody in China, okay, or somebody in, let's say, Africa, okay, for example, okay, because I know China has some cryptocurrency laws and stuff like that. So let's say Jack is in Africa, okay. So Jack is in Africa, and you're trying to send some money to him, okay. He's making some ads for you. He's trying to get his paycheck. And what's a good way to pay him? Okay. Might be a little difficult to use PayPal. Might pay a lot of transfer fees. Might pay a lot of this. Okay. Especially if you start trying to send large amounts of money. They might flag your account and be like, hold on, why are you trying to send so much money to somebody in another country? Okay. They might get questioned. And it's your money. Okay. Not cool. This is where cryptocurrency comes in. God is the greatest. Okay. So thank God crypto exists now. Okay, if you want to send some money to somebody that you hired in another country, your family, whatever, however much you want, whenever you want, okay, you can instantly send your currency. And that's the decentralized network. Okay, that's the difference between centralized and decentralized. Decentralized, you can send it when you want, you can send it to who you want, and you can send it to where you want. Okay, whenever you want. Centralized, stuff works on times, okay? I'm sure you guys know that direct deposit time, okay? Waiting for that 6 a.m., waiting for that check to hit, okay? Certain times like that. That's the whole centralized system, okay? Cryptocurrency strikes that out, okay? And let's talk about an immutable ledger, okay? So once a block is confirmed, it is thermodynamically secured by energy, okay? Rewriting the history would require more energy than a medium-sized country could consume. So once it's confirmed, once it's on the blockchain is going to be where all pretty much the cryptocurrency information lives. Okay. Once all the blockchain information has been confirmed, okay, and set in stone, shouldn't change. Okay. Inshallah, it shouldn't change. So that's what makes Bitcoin a big help in society, especially when we're just trying to live some life and do some things, okay? We might have some family in other countries, and we just want to live like people, okay? Come on. Let's go to the next slide. So the supply shock, okay? Let's go and let's talk about the halving, okay? Halving. So half, as you guys know, 50%. Fraction is 1/2, okay? Because 1 plus 1 is 2, okay? So programmatic disinflation. So every 210,000 blocks, okay, which happens every 4 years, okay, which is, yeah, pretty much how often it happens, the issuance cut happens by 50%. And this creates a predictable supply shock. So let's break it down. So pre-2024, the Bitcoin inflation, okay, was around 1.7%. Okay. Post 2024, okay, inflation went down to 0.85%. Okay, which became scarcer than gold. Okay. And projections, if this math continues by 2028, we should have the inflation at 0.4%. And then 2140, when Bitcoin decides to go away, which is by the time when people calculate, inflation will be at 0.0%, of course. So while the fiat supply accelerates, right, exponentially to pay the debts, Bitcoin supply decelerates, okay? You have to understand that it happens because it's a limited currency. Okay, it's limited. It's not something that's going to be here forever. Try and get it when you can. You don't want to be one of those people who regret it and be like, oh man, I should have bought some Bitcoin, and you just didn't. Okay, so make your decisions now. Put some money to the side. Okay, you don't need to be buying no clothes, McDonald's, no DoorDash, no right now. Buy some groceries. Okay, buy some groceries and grind. Okay, wake up, pray to God, grind, and stay down. Okay, live a little life, of course. Take care of your mental health, but try and put some money away. Okay, we gotta have this asset flowing. Okay, let's get it, inshallah. So the systematic comparison. So fiat currency, US dollar, man, cash, you know, good old dollars. Let's talk about it. So policy, okay, it changes based on politics and crisis. Okay, if the US economy is doing well, then that means our dollar is going to be more valuable. If it's doing bad and we have a lot of debt, etc., the US dollar is not going to be as valuable. Okay, and that's just what it is. And people will want to run to other assets, which once again, assets are things that turn your money into more money. Okay, because fiat currency, that money, is not as valuable. Okay, so they at least want to try and generate more, which makes logical sense. Defense, survival. Okay, so unlimited amount of fiat currency can be printed, press of a button. It's kind of just numbers on the screen. Even kind of same thing with credit too. And system, okay, permissioned. Banks control the access. Okay, they can tell you no, and they can tell you yes. Okay, and the outcome, right? Your savings lose value over time. Okay, due to the fact that it's not growing in anything. Okay, it's not in the river. Okay, it's sitting still on the rocks. Okay, and let's talk about some Bitcoin. So policy, okay, set in stone with code. Okay, can't be changed, which means Bitcoin is gonna have the same intrinsic value baked into it a lot of the times. Okay, and of course there's gonna be chart depending on where the price is at, all-time highs versus a low, for example. Okay, but for the most part, with it having that fixed supply, okay, it's gonna remain valuable. Okay, fiat currency, if the US started getting bombed right now, the US dollar probably wouldn't be as valuable. Okay, so certain things just are logical with that. So supply, okay, strictly capped. Okay, 21 million, and it's very costly to mine. Okay, you can't just spawn Bitcoin at a press of a button. You actually have to have a whole logistical system. Okay, Bitcoin is created by proof of work. Okay, the computers have to show math. You know when your teacher asks you to show work, that's what the computers have to do. So it's pretty much a bunch of computers. Okay, or it might be one, however much the person has who's mining the Bitcoin. Okay, and what they're gonna go ahead and do is look for mathematical equal signs. Okay, they're trying to solve a code, okay, to give the hash. Okay, and in that, the computer has to keep solving these codes. Okay, and it has to show work. Okay, and that proof of work, and if it's correct, okay, then they're rewarded with a piece of Bitcoin. Okay, and then they keep doing that, and then every mathematical problem that's solved, then a Bitcoin gets created. Okay, and it's all solved by supercomputers. Okay, could be very, very expensive to run depending on your country. Okay, so before you just go try and boot it up, look into it. Please do your research. Pray to God on it. Take your time. Okay, and it's open to all. Anybody can buy Bitcoin. Okay, you can buy some Bitcoin right now if you want. I don't care if you got $2. Okay, get in that habit of buying assets. Try and keep yourself broke. Okay, because what do you have your cash in your bank account for? Go buy some assets, live off of credit if you can, and stay down. Okay, keep doing that. And then when it's time to pay your credit, boom, 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 and keep the money flowing. Keep it flowing. Okay, don't stop hustling. Okay, I know life happens. Don't get depressed. Keep your head on straight, man. Okay, there's gonna be things that go down in life. There's gonna be times your emotions are gonna be shook up. Okay, there's gonna be times where you can't stack up. Okay, your car might break down. Okay, things happen in life. Okay, you might have to pay rent. You might have to pay direct deposit on a new crib. Okay, and rent. okay? Depending on whatever it is, any situation, right? Hospital bills, okay? Just pray to God on it, okay? Pray to God on it and keep hustling, okay? Don't get in your head, don't get poopy pants, and don't get depressed because you got to get to this money, okay? I'm telling you, when you pray on it, you keep going forward, you keep hustling, things get easier, okay? But you got to keep hustling, okay? After you pray, you got to keep hustling, okay? Don't grieve, okay? Don't get sad, just focus, okay? Don't take that money and indulge in food. No alcohol, okay? If you're drinking, quit that. God says don't do it. It makes you weak, okay? No alcohol. Take that money, buy some assets, buy some Bitcoin, okay? Change up your lifestyle. It's really deep, okay? If you catch yourself buying certain kinds of food, ask yourself why, okay? Why am I eating these Doritos? Why am I booting this up right now? Okay? When's the last time you had some vegetables, some fruit? Okay? You got to change your lifestyle. You guys are so obsessed with investing and trading, but we all have to realize that we have to change our lifestyles. Okay? This stuff takes money. Okay? It takes money to invest. So if you want to invest, you need to change your lifestyle up. Okay? Put some bread away. It's cool to stay down. Okay? It's cool to save some. Okay? Wear the same clothes for weeks if you got to, but you know how much Bitcoin you have in the stash. You know how much assets you have stacked up. Who cares what anybody's saying? Okay? Because if you want to get to this Bitcoin, it's going to take a certain level of discipline. Okay? It's going to take a certain level of staying focused. Okay? We can't be being lazy when we say we want to be stacking assets. You got to choose. You got to be relentless. You got to be a dog. Okay? So, before Bitcoin expires, I don't want you guys to be like, man, I wish I bought Bitcoin. And it's like, that's not how you want to go out. Okay? Leave something for your family. Okay? And take care of yourself. Inshallah. So let's go. Let's head over to the next slide. So the hardness of money, right? Stock to flow. So why hardness matters in the first place? So money is a technology for storing time and energy. And hardness measures how hard it is to produce more of it. So let's talk about the S to F ratio. Okay. And existing supply, okay, divided by the annual production. So let's talk about the real estate, right? High S2F, okay? Because real estate is pretty hard to build, okay? You need a whole crew of people. Stuff could be changing now, though, because they do have houses that you can just drop on a plot of land, okay? That's like carried by a giant truck, okay? So it really depends. That could change as humans develop more innovative technology and ways to get housing quicker. But as for now, real estate is pretty hard to build. And let's talk about gold, right? So gold takes about 60 years to double supply, okay? And Bitcoin, okay? It's the hardest asset ever discovered, ever, okay? So gold has a 60 S2F, Bitcoin, as of 2025, has 120 S2F, okay? And if money is easy to produce, right, such as fiat currency, which is unlimited, people won't save it. They're just gonna go ahead and dump it and blow it, okay? And if money is hard, okay, Bitcoin, civilization can save for the future. Your Bitcoin is like your gold, okay? You should not be touching your Bitcoin. You should not be touching your Bitcoin. You should not be touching your Bitcoin. You should not be touching your Bitcoin, okay? Keep it in the stash. Keep it locked away. Keep those secret keys locked up, okay? Don't be touching that Coinbase card. Don't do it. It's not worth it, guys. Okay, so let's stack it up. Let's stay down. Okay, spend that credit. Okay, spend that credit and build it back up. Spend that credit, build it back up. Pay your bills, spend that credit, build it back up. Keep hustling, keep grinding. Okay, spend that credit. Credit. Fiat currency, unlimited, pretty much almost not real. But think something like Bitcoin, okay, something like real assets like gold, okay, that there's limited resources and actually exist, okay, whether you're buying the gold, ETF, etc., just understand that investing into assets that have value are going to be a lot more worthwhile than hoarding fiat currency for no reason. So let's jump into the next slide. So the verdict of everything. Okay, we're witnessing a global competition between two monetary operating systems. Okay, you got the debt path. Okay, fiat requires inflation to service global debt. So your savings are the fuel for the system. Okay, eating it all up. And then you got your true savings path. Okay, Bitcoin, it's an exit valve. Okay, a savings technology that cannot be debased by any central authority. Okay, and this is not financial advice. Do your own research. Okay, do your own research. Okay, I'm not saying go take all your money, dump it into Bitcoin, but do your research. Check it out. Okay, check it out and do your thing. Okay, stay prayerful to God. Keep grounding. Head over to stackmode.net for all trading education. And I'm going to catch you guys in the next one. Peace. Here's what a smart contract is, and here's how it applies to the cryptocurrency world. Let's go and let's jump into it. The fundamental concept. It's a digital agreement. At its core, a smart contract is a self-executing contract with the terms of agreement between the buyer and the seller being directly written to lines of code. The code and the agreements contained therein exist across a distributed, decentralized blockchain network. Decentralized means that it's pretty much just going to be a network with no middlemans involved. So say you start to send currency from one person to another, typically with the bank system, the bank would have the jurisdiction to confirm the transaction or decline it. On the blockchain system, transactions go from one person to another, and everything is autonomously done via the smart contract system. And this simple yet powerful mechanism removes the need for a central authority or intermediary to enforce the contract. Think of it as an if-then statement, but one that is enforced by a network of computers, and if X happened, then Y is automatically executed. And this logic is hard-coded and cannot be changed once deployed. For example, a simple smart contract might say, if a product arrives at the buyer's address, then release payment from the escrow account to the seller. And this transaction happens automatically and without any human intervention, contingent on verifiable data. So some key characteristics, why they matter. So the properties of smart contracts give them significant advantages over traditional contracts. And these characteristics are fundamental to their value proposition. So they're smartless and trustless and transparent. Okay, so parties don't need to trust each other. They only need to trust the code. And the code is publicly visible on the blockchain, so anyone can audit it before engaging. And immutable. Once a smart contract is deployed on the blockchain like Ethereum, its code cannot be altered. And this ensures the integrity of the agreement and prevents tampering. So this prevents anything like from hacks, database stuff, everything works a lot differently due to the fact that everything is done by code. Okay. And it's autonomous. The smart contracts are designed to be self-sufficient, and once the conditions are met, they execute automatically without any human intervention, and they're essentially digital agents. And secure and enforceable. The cryptographic principles of the blockchain ensures that transactions are secure and the terms of the contract are enforced. It's computationally impossible to break the agreement. So how do they work? Here's a step-by-step breakdown. So understanding the flow is crucial to grasping the power of smart contracts. Here's a simplified view of the process from creation to execution. So step 1, coding the agreement. So a developer writes the terms of the contract in a programming language like Solidity for Ethereum, for example. And they define the rules, conditions, and actions of the contracts. So then they deploy it. The code is then compiled and deployed to a blockchain network. And this costs a small fee, also known as the gas fees. And this makes the contract code and public address public and immutable. In step 3, it awaits the execution. The smart contract now lives on the blockchain and it passively awaiting an event or an input that triggers its logic. In step 4, say something triggers this event. A specific event such as receiving a certain amount of cryptocurrency or data from an oracle, also known as a data feed, it triggers the contract's logic, for example. And then step 5, autonomous execution. The code will then run automatically based on the if-then logic, just like in code, and it'll perform the predefined action, such as sending funds, issuing a token, or updating a record, depending on whatever was requested by the user. And a practical analogy, the vending machine. The best way to understand a smart contract is compare it to a real world vending machine. And the parallels are striking and make the concept very easy to grasp. Thank God. So you and the user, so you represent the counterparty in a transaction and your money. Okay. So practical. So this is the currency that you send to the smart contract. Okay. And the vending machine. The vending machine is the smart contract itself. It's a pre-programmed autonomous machine. Okay. So think of the vending machine, okay, displaying out cryptocurrency snacks, okay, and controlling everything. So one vending machine controls all the cryptocurrency transactions, distributes everything, and controls all the funds and the money flow. So the if-then logic. So if you put $2, then the machine dispenses the soda can, for example. The machine will automatically perform the action without an intermediary, okay? So it's automatic, okay? It's no someone being like, okay, you want a soda? It's not the drive-through. Be like, can I get a soda? Yeah. And then if they don't have it, they don't have it. Okay, the vending machine, if it's right there and you put in that dollar, you're going to get what you want. And that's why cryptocurrency is so powerful, okay? It's really innovating the future, giving us our instantaneous dollar and giving power back to the people, okay? So the machine automatically performs the action without intermediaries, okay? If you try to pull out 100K from the bank, most of the time they won't have it. If you try to withdraw 100K crypto, it'll be pretty much instant, okay? So, inshallah. So it's a self-enforcing agreement. So you don't need to trust the human to give you your drink. You just trust the machine's code, and this is exactly how a smart contract works. So real-world use cases beyond cryptocurrency. So smart contracts are no longer a theoretical concept. They're being implemented across various industries to automate processes, reduce cost, and increase security. So finance, let's talk about DeFi, also known as decentralized finance. So smart contracts power decentralized finance, and they can be used for automated escrow services, lending protocols, and creating financial derivatives. For example, a loan contract that releases collateral if a user defaults on a payment. Okay, and let's talk about some supply chain management. Smart contracts can track goods from manufacturer to consumer, and when a product reaches a certain location, the contract can automatically release payment to a supplier, ensuring transparency and reducing fraud. In real estate, they can automate the transfer of property titles, removing cumbersome paperwork and expensive intermediaries like lawyers and brokers. A contract can automatically transfer ownership once all conditions like payment are met. In healthcare, they're also beneficial here. Small contracts can also manage health data with heightened privacy. A patient can grant a specific doctor temporary access to their records via a smart contract that automatically revokes access after a set time, so they don't have unlimited access to the information. Voting systems. Secure and transparent voting can be implemented using smart contracts, and each vote is recorded as an immutable transaction on the blockchain, making it impossible to tamper with and allowing for a verifiable count. So advantages, the benefits of automation. So adopting smart contracts offers compelling benefits that address many of the inefficiencies of traditional banking systems. So efficiency and speed, this is going to be my favorite portion of cryptocurrency. I like how fast everything is. I like how you can get your money instantly. I like how you can withdraw. I like you send it to whoever you want, whenever you want, as quick as you want. Okay. And all you have to do is wait for it to get confirmed on the blockchain. Okay. Once this is confirmed, a lot of the time, it's going to go ahead and be on its way to the wallet. Okay. And once it's in the wallet, whoever has received the funds can go ahead and do whatever they want. Okay. Whether they want to go ahead and withdraw it to their bank account for fiat currency, or they even have what's called like Coinbase cards, for example, okay, where you can go ahead and spend your cryptocurrency on a card. Okay, so many different things you can go ahead and use in order to spend your cryptocurrency. It's a really beautiful time. God is great, and it's time to take advantage of the future. So smart contracts eliminate the need for manual paper-based processes and intermediaries, dramatically speeding up transactions and business operations. So if you're trying to send money from somebody in another country, say by PayPal example, sometimes the funds might get put on hold, okay? And sometimes that might affect you, okay? And the whole can be normal that they're trying to verify transactions and stuff. But cryptocurrency, say you have really tight bills to pay, okay? You got to pay it right now. Cryptocurrency, you're going to be able to get your whole funds amount, okay? And you can potentially pay it with your crypto card. Okay, so it can really help you and save you in situations where fiat currency isn't going to be the best of situations as far as certain hold times and wait times. With cryptocurrency, you can also get paid on the weekends too. With fiat currency, unless you do Zelle or Cash App or something like that, you're not going to get like a deposit really hitting your account. That's not Monday through Friday a lot of the times. Sometimes Saturday. Most of the time, most people, most banks, Deposits will hit your account Monday through Friday. Okay. So security and trust as well too. The decentralized immutable nature of the blockchain protects against fraud and data manipulation. And once an agreement is coded, it's enforced by the network, not by a single party. And cost reduction. By removing middlemen like lawyers, banks, and brokers, smart contracts can significantly lower the cost of transactions. And we're talking about accuracy and transparency. Automated execution reduces human error, and the terms are publicly visible, and the outcome is verifiable by anyone on the network, creating a fully transparent system. So lots of uses with autonomous contracts, and under the cryptocurrency world has definitely been a big use to me, thank God. So limitations and challenges, the path ahead. So while powerful, smart contracts are not without their limitations, and it's important to understand that these challenges come with their own ballgame. So let's go and let's understand it. So they can come with bugs and vulnerabilities sometimes. Code is law. It's a double-edged sword. If there's a bug in the code, it's immutable. And what a bug is, it pretty much just means an error. It's immutable and malicious, okay, which means it can be susceptible to hackers, okay, which means people could potentially lose money, which is definitely bad. And actors and hackers can exploit it, leading to irreversible loss of funds. Famous examples include the DAO hack, for example. So legal uncertainty. The legal status of smart contracts is still evolving, okay? The SEC has definitely been working on stuff, and the future of cryptocurrency is looking bright, though. So, and can they be enforced without a traditional court of law? You know, the government, as of recent, as far as the United States, has been purchasing cryptocurrencies and stuff like that. So I do believe the future of cryptocurrency could be strong, inshallah. Some scalability issues. Many current blockchains like Ethereum can only process a limited number of transactions per second. This can lead to network congestions and high fees, making some smart contract applications pretty much impractical. And Oracle problem. Once again, these are things I think that can go away within the future, inshallah, especially as the networks decide to get bigger, more people collaborate on it, and the whole space just grows. An Oracle problem. Smart contracts can only access the data on the blockchain, and to interact with the real world, they need oracles. Secure third-party data feeds. And if the oracle is compromised, the entire contract can be compromised, okay? So oracles are secure third-party data feeds. So the future of smart contracts. This technology is constantly evolving, and future developments are focused on addressing current limitations and expanding their capabilities. So some layer 2 solutions. Technologies like optimistic rollups and ZK rollups are being developed to improve scalability and reduce transaction costs on networks like Ethereum. And cross-chain functionality. As more blockchains decide to emerge, more people decide to innovate, smart contracts will be able to interact seamlessly across different networks, unlocking new possibilities. Okay, so God is good, okay, creating a system in order for us to just trade all our currency all across the world simply and easily, inshallah. So self-evolving contracts. Researchers are exploring ways for contracts to adapt and upgrade themselves in a decentralized way to fix bugs and add new features. So always innovating, always working on it. And that's what smart contracts are. If you guys are struggling with trading, head over to stackmode.net. If you just want to learn how to trade cryptocurrency, stocks, futures, whatever. Or if you're just struggling with discipline, whatever, head over to stackmode.net. Stay prayed by God, keep grinding. I'll catch you in the next one. Peace. Okay, so let's talk about how to research stocks. The best stocks to go ahead and invest in are going to be the ones that have some future value. So anything where people are going to be helped within the future, and anything that's going to put a smile on people's face, ideally, is going to be a good stock. Okay, so anything that's helping the most people, it's going to be something that's going to be the most valuable. So this is going to be a step-by-step guide to analyzing certain stocks that are going to be profitable. Let's go and let's jump into it. So why does research matter in the first place? Okay, so this goes further than speculation. So researching a stock is the cornerstone of successful investing in the first place. It allows you to move beyond speculation and base your decisions on a company's real value, rather than on market hype, such as like Instagram hype, Twitter hype, or anything like that, or a rumor, okay? And a disciplined research process helps you understand what you own, okay? And how you're gonna manage your risk. So managing your risk is pretty much gonna mean how much money you're gonna be saving, okay? How you're distributing your money, okay? And how much money you're gonna be risking per trade, Okay, so that's what managing a risk is going to mean. And it's going to identify true long-term opportunities by, once again, making sure we're investing in companies that have future value invested into it. So anything that's putting a smile on people's faces, anything that's helping people, inshallah, year after year, should go ahead and be beating earnings, okay? Because it's going to be making money, okay? Anything that's putting a smile on people's faces, for the most part, is going to be making money, okay? And then when companies are making money, stock value decides to go up. And since as shareholders, we're pretty much going to be company holders, at the bottom value here, we're going to be in. Let's say we get in right here, and then we can go ahead and exit at the top, right? Because we went ahead and got in before price decided to pump up super duper hard, because we did our research before, for example. So informed decisions are going to help us out. Research gives you the data needed to assess a company's health and future potential, reducing reliance on guesswork. And without research, you're simply gambling. So risk management. By understanding a company's fundamentals, you can identify potential red flags and avoid overvalue or unstable investments. It helps you quantify your risk exposure. And proper analysis helps you find stocks that are undervalued by the market, providing the opportunity for long-term growth and capital appreciation. So depending on whatever time period you're in, okay, let's say as of 2025, AI is super duper popular. Okay, so a lot of companies dealing with AI when it comes to chips, like NVIDIA, for example, are going to go ahead and be extremely popular. Okay, so whatever time you're watching this in, okay, relate it to the current sector. Okay, whatever is popular within your current sector, see what companies are advancing the future forward, and go ahead and invest into that. Make sure you're doing your TA, your technical analysis, and read the charts. Okay, try and buy certain areas that are going to involve dips, and make sure there's some resistance above current price, so you know price is something to hunt for. And keep your risk management in place. By understanding a company's fundamentals in the first place, you can identify potential red flags and avoid overvalued or unstable investments. Even if a chart is looking pretty good, if a company's fundamentals aren't good, then the company just won't work out, or a lot of the times the trades won't work out how you want them to. And it's going to help you quantify your risk exposure. So, identifying the value. Proper analysis is going to help you find stocks that are undervalued. Once again, okay, so finding undervalued stocks is going to mean that, okay, I'm going to be able to catch this low, and I'm going to be able to catch the whole sweep up into the highs before it starts getting popular, okay? But be careful when you're doing this. Don't invest into things that don't have any value, okay? And don't invest in any meme coins or any meme stocks, okay? A lot of the times things like that are not undervalued. They're valued low for a reason, and they only burst a couple times a season due to just certain events that most likely won't happen again. So a guiding compass. So in volatile market conditions, your research is going to serve as a compass, and it allows you to stay the course and avoid making emotional, fear-driven decisions within the market that could plummet your account entirely. Okay, so make sure you do your research and understand why you're getting into the trade. Make sure the technicals and the fundamentals behind the trade make sense. So, fundamental analysis. Let's talk about core financials. So fundamental analysis is the process of measuring a company's intrinsic value by examining its financials. Okay, so you're going to see if the company is making money or if it's losing money. Okay, and you can also determine if it's profitable regarding its economic factors. So if a company is like, you know what, we're banned in all countries besides this country, that's an economic factor that could potentially drive the price in a downwards direction due to the fact that that's less sales being available, since that's less volume available to clients, since countries are being banned, okay? And it's going to help you determine if a stock is a good long-term investment by looking at a company's financial health and not just its current price. And key financial metrics. So let's take a look at the PE ratio, a common valuation metric that compares a company's share price to its earnings per share. A high PE, and that means price to earnings, okay? Price to earnings, PE, price to earnings ratio can indicate a stock whether or not it's overvalued or has a high growth expectation, while a low price to earnings value may suggest that it's undervalued. Okay, and EPS stands for earnings per share, and it's a company's profit allocated to each outstanding share. And rising EPS is a sign of profitable and a growing business. It's a key indicator of a company's profitability. And revenue growth. It measures how quickly a company's sales are affecting the company's revenue, okay, in an increasing manner. And consistent revenue growth is a sign of a healthy and expanding business, indicating strong demand for its product or services. And ROE stands for return on equity, also known as ROE. And it's a measure of financial performance calculated by dividing net income by shareholders' equity. Okay. So ROE reveals how much of a profit a company generates with the money shareholders have invested. And a high ROE generally indicates efficient management. And this ratio indicates how much debt a company is using to finance its assets relative to the value of shareholders. Okay, and that's going to be called the debt to equity ratio. Okay, so the debt to equity ratio is going to indicate how much of a debt a company is using to finance its assets relative to the value of shareholders' equity. Okay, and a high D ratio can indicate high financial risk. So charting the course, technical analysis, also known as TA, it's reading the charts. Okay, study the charts, understand the charts before you even put a dollar into the market. Okay, understand support. Support is going to be a low area where buyers are going to step in. Price is going to potentially push in an upwards direction from there. And resistance is going to be an area where sellers step in and price should head in a downwards direction from there. And technical analysis is the study of past market data. This is a left to right chart we're going to be reading. So anything that happened to the left is going to be relevant to the right. So it's the study of past market data, primarily price and volume, to forecast the future price movements. It's based on the idea that market prices reflect all relative information and that trends and patterns tend to repeat, which is extremely true. And while it's not a standalone solution, it can help you with the timing with your entry and exit points. Okay, so once again, understand how to read areas of support and resistance, and head over to Stackmode.net if you don't understand yet. So as far as reading the price chart, you can use the candlestick charts on like TradingView, your broker or whatever, to visualize certain stock prices movements. Okay, see where the current price is and make sure that you're either buying at a price below current price, catching a sweep up, or if you buy, let's say for instance, you buy at a resistance breakout area. Okay, either wait for a 4-hour close or wait for that resistance to be broken and turn it to support. Okay, have a strict criteria that you play, and if you figure out certain things that help you out, like moving averages, RSI, MACD, and certain things like that, that can help you read the trend if it helps you personally. So qualitative analysis, the intelligible factors. Okay, intangible. Qualitative analysis involves evaluating a company's intangible factors that are not found on a financial statement. This is more often subjective, but it's just as critical to understanding a company's long-term potential. And this is where you assess the business as a living entity, not just as a set of numbers. So check out its management teams, okay, and see if there's any, I'm going to go ahead and add this too, okay, investors slash collaborators. Okay, so check out the management team, assess the leadership experience, okay, see the vision of the company, and check out the company's track record. Sometimes a company could just be gifted a lot of money, but then not be putting in enough work, and then over time, the company starts to go down and plummet. So make sure it has a strong ethical management team with a proven history of execution that can navigate a company through difficult times, and look for past successes and how have they handled previous challenges. So competitive advantage, also known as moat. And it's what makes the company difficult to compete with, okay? What gives this company the competitive advantage over other companies? Say brokers, for example, okay, Robinhood, okay, Hood versus like Charles Schwab, okay? So Robinhood, they have like a card, for example, okay, Robinhood has a card. They also have instant transfer, so you can connect your debit card to instant transfer instead of waiting for a couple of days. It's easy to operate, has a cool UI, okay, a lot of advantages over Schwab, and that's why Robinhood is just starting to blow up. Okay, so for example, like that, how is the stock beating the other stocks? What's the point of this company? And how is it helping people better than other companies? So This moat could be a powerful brand like Apple, for example, okay, a unique patent, and economies of scale like Walmart, or network effects like Facebook. And the wider the moat, the more durable the business. Okay, so Apple, they have Face ID, they have unique phones. Walmart's an extremely big retail store. They sell absolutely everything. Okay, compared to like Kroger, sells more stuff than that. And they also have like car repair and stuff like that too, and oil changes, etc. And Facebook is also connected with Instagram. So it's trying to just be, more than a certain social media. So industry trends in market position. And is the company in a growing industry? That's going to be a big thing. Okay, is the company growing? Okay, if the company isn't growing or it's not in a growing industry, kind of just forget about it. Okay, is it a leader or is it a follower? And is the company in a declining industry that may struggle no matter how well that is managed, while the leader in a growing market has a tailwind at its back? So Robinhood, trading is becoming exceedingly popular. Okay, crypto laws are getting passed, so broker cryptos or brokers that host cryptocurrency are starting to go up on the stock market as of like 2025, for example, due to the fact that it's in a growing industry. Okay, same thing with AI stocks, for example, past couple of years as of 2025. Okay, so whatever time frame or year that you're in, play and do your analysis based off of that. So reading financial statements, we'll restart. So financial statements here. So they're the ultimate source of truth about a company's performance. And you must know how to read and interpret the three main statements to truly understand a business's health. So income statement. So the income statement, it shows a company's revenues, expenses, and net profit over a period. Okay, so it's going to show you pretty much the time over a quarter or year. And the balance sheet, it provides a snapshot of a company's financial position at a single point in time. And it lists its assets, liabilities, and shareholder equity. And it tells you what the company owns and owes. And a healthy balance sheet shows more assets than liabilities. And cash flow statements. It details how a company generates and uses cash. And it's often considered the most important statement, as cash is the lifeblood of a business, and it can reveal if a company's profiles or profits are real, or just accounting entries. And pay attention to cash from operations, which should ideally be positive and growing over time. So, valuation methods, and what's it worth in the first place? So once you've done your research, you've got to determine if the stock's current price is fair, undervalued, or overvalued. And this is where you use valuation methods to track everything. So check out the price to earnings ratio, and as discussed, it's a simple comparison tool to value a company against its peers or its own historical average. Okay, so you can normally check at the bottom of your broker, trading view, and stuff like that. You can go ahead and see the company's earnings, and you can see whether or not the earnings are going to be positive and they're being beat, companies making money, okay, or if the earnings aren't being met to their expectations, okay, and the company is not making money consistently, okay. So that's going to go ahead and determine a lot of the future growth. And earnings rates can change. The company could drop a really good product and then the earnings just start being positive, and then the company could take a huge turnaround. Okay, so it really just depends. So let's talk about some red flags. So your research isn't complete until you look for potential problems in a trade. Okay, see what can go wrong. Okay, see what any type of weak points the stock has. And a single red flag can negate all other positive indicators. And check out if there's any insider selling. So while it's not always a negative, a significant amount of insider selling, okay, and that means executives are selling off their stock, that can be a signal that the company's leadership lacks confidence in its future. So if you start seeing that shareholders, okay, people who own the company, okay, and stuff like that start selling their shares within large flows, okay, which means like all together and stuff like that, that could indicate that they might mean that the future, or at least briefly, the future may not be too strong. Okay, but not every time. They could also be taking profits. Okay, and high debt. So a company with high debt load and low cash flow may be at risk during an economic downturn, causing it to crash significantly harder than certain other things. And other stocks too, like let's say Apple, for example. Apple goes through a lot of stuff with their iPhones, okay, causing their stock to crash and go down sometimes, okay, and that's because of legal and regulatory issues. Same thing with like Tesla, for example. Okay, sometimes Tesla's going through legal stuff and regulatory issues, and that can make price decide to go down. So check for any ongoing or past lawsuits. A lot of times TradingView will update you with the current news, see if there's any fines going on, okay, because if the company's owed a large amount of money, that could mean that they have to pay a larger back, which means their investment time could be a bad time to invest, okay? Or regulatory actions that could impact the company's reputation or profitability. And the frequent share dilution. If a company is frequently issuing new shares, it can dilute the value of your existing shares. So putting it all together. So a truly comprehensive stock analysis combines all of these approaches into a single cohesive view. Fundamental analysis tells you the what, okay, see what sector you're getting invested in, okay, see how it's going to affect the future, and see how it helps people, okay. If the company can help people, okay, it's in a good sector, it has a place in the future, then the stock can go ahead and be decent, okay. So Robinhood is giving people easy access in order to trade cryptocurrencies, okay. That's definitely putting a smile on people's faces, okay. It's also providing things like credit cards, okay. So it's providing funding, okay. That's also something else that's putting a smile on people's faces, okay. So that's what Robinhood, as of recently, has just been blasting, okay. Certain stocks like Palantir are trying to innovate technology using AI, for example, okay. So AI is trying to advance the future forward by having things being done autonomously. So AI stocks as of 2025 have been a popular option as well. So investing in the future, getting ahead of the curve is going to be a good way to make some money. So qualitative analysis, it explains the why and the competitive advantages and management that will drive the future of the company and drive the future performance. A technical analysis tells you the when and the best time to enter or exit a trade based on market momentum. And by using this holistic approach, you can make confident, data-driven decisions that will serve you well over the long term. And remember, the goal is to not predict the future, but to understand the present and make informed decisions based on facts, not on speculation. Okay, so do some strong research, make sure you're buying at clean, crispy levels, and then go ahead and take your trade based off of certain things that you believe in. Okay, so that's going to go ahead and be that. Class, we're going to be talking about value investing versus growth investing. We're investing for a reason. It's time to stop being broke. Being broke isn't cool. Late bills isn't cool. Debt isn't cool. And suffering isn't cool. If you want to start being broke, all right, start being lazy. Start not believing in your view. Start closing your trades early. Okay, start doing things like that if you want to stay broke. So let's talk about value investing versus growth investing and how we can actually have our money make some money. Let's jump into it. So an investment philosophy is a consistent overarching set of principles and beliefs that guide an investor's decision-making process, and it dictates what to buy, when to buy, and when to sell. Without a coherent philosophy, decisions become emotional and reactive, and the core tension in equity investing lies between intrinsic value, which is what a company is worth today, and future potential, which is what a company could be worth tomorrow. And by the end of this module, you guys are going to be able to understand how to articulate the foundational theories of value and growth investing, how to identify key financial metrics using each philosophy, and assess which approach aligns best with your personal financial goals and risk tolerance. And value investing is rooted in the principles laid out by Benjamin Graham. And it's often called just someone who's pretty good at investing. Okay, and it's popularized by one of his most famous students, Warren Buffett. And the core of the idea is simple, and it's buying $1 for 50 cents. So intrinsic value, right, IV. This is the estimated actual worth of a company, and it's calculated through fundamental analysis, which is analyzing assets, earnings, and cash flow. And value investors believe that the market price often deviates from this implied volatility, and intrinsic value due to irrational investor behavior. Let's talk about margin of safety, MOS, the most critical concept. This is the difference between the stock's current market price and its estimated intrinsic value. And a high MOS provides a cushion against calculation errors, business downturns, and market volatility. And the business owner mentality. Value investors think of themselves as buying a part of a business, not just trading a stock ticket. And this leads to a long-term patient holding period. So, Graham introduced the concept of Mr. Market, and it's a manic depressive business parser who shows up every day offering to buy or sell his shares at a wildly different price. A smart investor does not let Mr. Market's daily mood swings dictate their decisions. Don't let them come up to you and be like, you know what, I want to go ahead and just get into this because X, Y, and Z decisions. Make sure it's logical, okay? Don't just hop into it because of a FOMO candle, because of emotions. And remember, the compounding effect is what's going to get you guys to the profit that you want to be getting into. You got to stack up the cash, stack up the wins, keep investing in certain shares. Okay, so a smart investor, once again, does not let Mr. Market's daily mood swings dictate their decisions. They trade based off of logical and fundamental parameters, and instead use rationality to their advantage. And when buying, they're pessimistic. So buying when prices are low and selling when euphoria is in and the supply is super duper low. Okay. And that's gonna mean the demand is in, which is gonna make the prices high. So buy low, sell high. And the value of a buy. If a company has an intrinsic value estimated at $100 per share, a value investor will only consider buying if the market price is $60 or less, creating a margin of safety of over 40%. And the investor must be confident in the IV calculation in general. So formula, market price divided by the earnings per share, EPS. So the PE shows how much an investor is willing to pay for every dollar of a company's earnings. And value investors generally see stocks with a low PE ratio compared to historical averages and industry peers or the S&P 500. And a low PE suggests that the stock is currently cheap relative to its profitability. So for example, a PE of 8 means that it's going to take 8 years for the company to earn back your initial investment, assuming constant earnings, meaning that it's constantly making profit. So the price to book ratio, the PB, and the formula is going to be the market price per share divided by the book value per share. And the book value, which represents the shareholder equity, it represents the theoretical value left over if the company sold all its assets and paid all its liabilities. And the PB ratio is less than 1.0, and it indicates that the stock is selling for less than the liquidation value of its net assets, which is considered a classic deep value signal. While less common today, it's essential for financial and industrial sectors. And DE, debt to equity, measures a company's leverage, and value investors prefer a low DE ratio, as high debt is going to be a major source of risk and can erode the margin of safety. So free cash flow, right? FCF. Free cash flow is the cash that a company generates after accounting for cash outflows to support operations and maintain its capital assets. Strong, consistent, and FCF is vital as it fuels dividends, stock buybacks, debt repayment, and the things that ultimately justify intrinsic value and the things that are going to cause a stock to go in an upwards direction. So pay attention to all these things, okay? Look at the ratios, see what's going to be worth investing into, and scan each of the fundamentals and know what each of them things mean before you invest, okay? You can see quality companies that are temporarily mispriced and not companies that are structurally flawed, okay? Because over time, that'll lead into a downward decline of money for the most part, okay? They're not helping anybody. They're not putting any value to society. They're not making people smile. So it's not going to be a worthwhile company. It's not going to be something that is going to put some future value, okay? So there's no point in investing to things like that. We're here to make some cash. We're here to stack some cash. We got people to take care of, houses to buy, land to get, okay? We got to be stacking this cash and getting to it, inshallah. So there's some pros. There's the lower downside risk. The margin of safety acts as a buffer. And by buying below the intrinsic value, the potential for further significant losses is theoretically reduced. And psychological calm. Value investing encourages patience and detachment from daily market noise, reducing emotional trading errors. So in dividend income, value stocks are often mature and profitable companies return capital to shareholders via constant dividend payment. Why? Because the company's making so much money. They're going to be like, you know what? You guys can go and have some money back. Here you go. And that's what a dividend is. Patience is going to be required. All right. It can take years for the market to realize the stock's true value. And that's okay. Okay. Be patient. Keep stacking cash. Keep grinding hard. Keep waking up, praying to God, and putting your full force into whatever, your business, your work. Keep stacking cash. Okay. Keep going hard, trying to protect and provide for yourself and your family. Okay. Keep stacking cash. Stay down. Get into stack mode. Don't buy that whip just yet. Don't buy those clothes just yet. Okay. You don't got to fill up the cologne cabinet full of X, Y, and Z right now. Stay down. Okay. Take your time. Build real wealth. Okay. So you can take care of your family whenever it's time. Okay. You're going to be the one who can handle the hard times. Okay. Why? Because you were in stack mode. You didn't give up and you were staying down. And the value trap. This is the greatest risk. And a stock looks cheap, right? Low P and low PV, but it's cheap for a valid reason, such as a fatally flawed business model, disruptive technology, or poor management, and the value never materializes. And missing out on innovation. By focusing on established, mature businesses, value investors often overlook high growth companies that are changing the world. And the ideal value investor is patient, contrarian, analytical, and possesses strong emotional discipline. They thrive deep on research and are comfortable standing alone against popular market sentiments. So, foundation principles. Growth investing focuses on companies that exhibit above average rates of expansion in revenue and earnings, often driven by new technology, market expansion, or innovative business models. And the philosophy was philosophized by investors like T. Rowe Price and Philip Fisher, and has a focus on momentum. Growth investors prioritize future earnings and potential over current valuation metrics. They are willing to pay a high price today for the promise of massive earnings tomorrow. And disruptive innovation. Some key characteristics include a high rate of sales growth, a strong competitive advantage, a moat, and a rapidly expanding industry, and a focus on reinvesting all profits back into the business for continued scaling. Okay, and ignore current profitability. It's common for high growth companies to report low or negative earnings. Okay, just because they're getting their feet off the ground. Okay, they're letting the sales come in, letting the customers come in, doesn't mean that the company is not worth nothing. And thus a high PE ratio is going to be involved into that as they invest heavily into R&D, marketing, infrastructure, and trying to make the company bigger. So then their profit margin is going to be a lot bigger. Okay. Then while a value investor seeks a stock trading at $60, that should be $100. A growth investor seeks a stock trading at $100 that they believe will be worth $500 in 5 years. Okay. They're concerned with the trajectory of the business, not its current snapshot. Is it going to be putting smile on people's faces? Okay. That's going to be the number one telltale sign to know if a business is going to be successful or not. How much is it affecting people's lives? Okay. And a growth buy, let's talk about it. So let's say a software company is losing money today, has a negative EPS, but its recurring revenue is growing by 50% annually. A growth investor buys based on the expectation that once the company achieves critical mass and stops aggressively spending, the profits will be enormous and the stock price will multiply several times over. So focus. Investors primarily look at year-over-year revenue, growth, and earnings per share, the EPS growth. And consistent growth above 15 to 20% is often the benchmark for a true growth stock. And quarterly acceleration in these metrics is a major bullish signal. So let's talk about the law of large numbers. Growth investors must always assess how long a company can sustain high growth rates, as it becomes exponential harder as the company scales. And that's the law of large numbers. And we'll talk about the PE ratio, okay, divided by the annual EPS growth rate. That's a percentage. The PEG ratio attempts to harmonize PE and growth rate. And a PEG ratio of 1.0 or less is often considered a fair value for a growth stock. And it suggests that the price being paid is reasonable and relative to the expected growth. And if a stock has a PE of 30 and is growing earnings at 30%, then it has a PEG of 1.0. So high growth, recurring revenue. High growth software and subscription companies are highly valued for their predictable recurring revenue streams. Okay, for example, software as service or SaaS. And TAM. TAM is going to be the total potential size of the market and that the company is targeting. The bigger the TAM, the longer the company can maintain hyper growth, and investors seek companies with small current market penetration but colossal TAM. Okay, and TAM stands for total addressable market. It's a principle. Growth investors are fundamental, betting on future performance and disruptive power in an expanding market, looking to make money constantly. So, advantages: potential for explosive returns. The possibility of 5 or 10x returns in a shorter time frame is the primary draw. and compound growth is exponential. And exposure to innovation. Investors gain exposure to the companies driving technological change and societal evolution. And the simplicity of thesis. The core thesis is often easier to articulate, and this company is winning in a massive growing market. Okay. And the cons. Extreme volatility. High expectations lead to steep sell-offs, and if the company misses even minor earnings targets, these stocks are vulnerable to economic downturns and interest rate hikes. And valuation risk. Paying a premium for growth means the investor must be right about both the growth rate and the sustainability. If growth slows, the stock can fall dramatically. And the lack of dividends. Growth companies typically reinvest all the cash flow, meaning that the investor receives no current income at all. So the ideal growth investor is risk tolerant, technological savvy, forward-looking, and comfortable with volatility. They seek to capitalize on the long-term trends and accept the risk that many investments will fail, provided the successful ones generate outsized returns. So, bridging the gap, the GARP philosophy, famously employed by Peter Lynch, it seeks to combine the best aspects of both disciplines. And a GARP investor looks for companies that are exhibiting consistent above average growth, but are not trading at exorbitant, speculative valuations are going to be involved in them. And a GARP criteria, it's really the best of both worlds. Okay. GARP, it stands for growth at reasonable price. A growth at reasonable price stock often has a PE ratio that is only slightly higher than the overall market, but its EPS growth rate is slightly higher, and it blends the safety of a modest valuation with the upside of strong business expansion. And the PEG ratio is the primary tool used by GARP investors. And the GARP investor profile, right? Consistent growth. It seeks stable, sustainable growth. For example, 10 to 20% per year, rather than volatile, exponential growth. And the focus on quality. It prefers companies with strong balance sheets, high returns on equity, right? And strong free cash flow. And it's hallmarks of a fundamentally sound business. And risk mitigation. Okay, you can see things like the PE and PEG metrics, which you can use to evaluate and to avoid grossly overpriced stocks, thereby mitigating the risk inherent in pure growth investing. So you don't be buying things at all-time highs, stuff like that too. So insight, GARP is perhaps the most practical strategy. Once again, growth at reasonable price for the average long-term investor, providing a path to the market and beating returns without taking on undue speculative risk for no reason at all. So choosing the right approach is less about what's right and what's wrong, and what about aligns with your personal goals. Are you a family? Are you a guy with someone with kids? Okay. Are you a woman with someone with kids? Are you by yourself? Okay. You just have a partner. Can you go a little bit more heavy with your investments? Are you trying to play it safer with maybe dividends? Okay. So let me know what you guys are doing in the comments below. So your time horizon, right? It's going to be 10 years if you're value investing, but you prioritize capital preservation. Your risk tolerance is going to be low to moderate, and you dislike volatility. And your goal is going to be to generate current income via dividends and stable compounded returns, investing in things like SPY, QQQ, and things like that, slow movers that are very consistent. And you enjoy deep analytical research into financial statements to figure out the best ratios to see what's going to pay you guys the most out. And consider growth investing if your time horizon is long and you're seeking to maximize capital appreciation. And then maybe you might want to go ahead and invest into some value stuff, dividends, after you get some day trading, futures profit, swing trading profit, whatever. And your risk tolerance is going to be higher in this scenario. And if you're comfortable with significant drawdowns, and your goal is to capture exponential returns from market disrupting businesses, and you're technological informed and enjoy following market trends and innovation. So have a diversified portfolio. Okay. I recommend you guys having a long-term portfolio and then you guys having a short-term portfolio. Okay. Also, because the taxes are going to be different too. If you're holding a trade for over 1 year, taxes are going to be subject to some long-term tax benefits versus the short-term tax benefits if you sell before a year. Okay. So decide what's best for you. Okay. Invest in a smart way. Keep this capital. We're building wealth for ourselves, our families, our loved ones, making sure everyone can be taken care of, making sure everyone can be protected and provided for, because we're being disciplined, because we're going hard, and because we're pushing forward. All right. Don't be in your head. Don't let anything stop you guys. Stay prayed up to God. Keep grinding and head over to stackmode.net if you want to learn how to be disciplined and how to invest. Catch you in the next one.
Whoa. Another episode of Coop Talk. It's cold like Minnesota outside. May God bless y'all. I pray y'all are doing straight. Want to talk to y'all about a very sensitive topic. What are you trading for? Are you trading for family? Are you trading to just ball? Are you trading to clear your debt? Because there's different styles of trading and investing for everything. But at the end of the day, you're looking for income, I assume. Okay. We're all in the markets trying to make some income. But the income is not going to be the end all be all. You don't just get the income and ball out and that's life. Yes, balling out is amazing. But don't lose your family values. Don't lose yourself as a person. When you start touching the income that you want to be touching, it's really important to stay intact with yourself. Okay. What are you trading for? Are you trying to own a bunch of real estate? Whether it be duplexes, multiplexes, multifamilies. Excuse me. Ask yourself, why? Why are you trying to run up these bands? Why are you trying to run up a surplus amount of income? Because it has to be channeled. It has to be channeled. Okay, right now, for example, right, God forbid, let's say you're a drug addict. If you're a drug addict, right, and you're a heavy drug addict, once you start getting more income, what do you think your money is probably going to be directed towards? More drugs. If you're addicted to buying clothes, what do you think your money is going to be directed towards once you get more money? You're going to start buying more clothes. So if you're an investor, you're going to call yourself an investor, you need to focus on keeping your money in an asset river. Okay, once you touch that big bag from the markets, what are you going to do with it? Do you want to buy real estate? You want to buy yourself a house? Do you want to pay your mom's bills? Pay your loved ones' bills off? So you got to really have a talk with God and talk with yourself. Because I'm telling you, when you start touching the money, it's different. Yes, you're going to be able to live in peace, but don't forget you also have to pay taxes. But when you start touching the money, it's really important to not lose yourself. Okay, direct your focus and your income will flow in that direction. Okay, if you're really into fitness, you could potentially build gyms if that's what you want to do, or build yourself your own personal gym in your house. Okay, put a sauna in your house. Don't indulge in sin when you start touching the money. I especially am talking to my younger crowd for sure. I've done it, living the high-rise lifestyle. I did it for a couple of months. And I'm going to tell you right now, if you're a God-fearing person, if you're a grinder, someone who's just focused on their work, you just wake up, pray, you grind, take care of your loved ones, you really hold it down, focus on bettering yourself, improvement, and being a provider. Environments like that where you're around partying, drugs, sin, infidelity, etc., it's not going to be really positive for your mind frame. Okay? So if you touch the big bag, even if, let's say if you're in your hood right now, right? Even if you're in the hood, right, and you're looking on YouTube, you're seeing people in Miami, you're seeing people on the boats do this, whoop-de-whoop. Take a vacation, experience it first. But don't overly glorify that lifestyle. Take a Lamborghini, for example, seeing the guy with the lamb. You don't see underlying issues. There's tons of stress I go through outside of finances. Okay? So you don't see underlying issues when it comes to social media and certain things like that. So when you touch the big bag that you want to touch, when you start making the income that you want to make, it's really important to, one, stay focused on God. I'm not just talking about God for no reason. It's because, one, I've made mistakes in the past, right? And I pray God can forgive me. And I don't want you guys to go through those same mistakes. And I don't want you guys to go through mental spirals of, whoa, this isn't really what I thought it was. You might want to go towards maybe some farm life. Just a calmer, more decent life. You can still go nice car, get you a Porsche, just something chill. But you don't gotta have 10 cars. You don't gotta have 5 Ferraris, 3 SRTs, 2 Bentleys, and the Lamb. Like, you don't have to have that. You know what I'm saying? And then a Benz, and then 5 Maybachs. That's not what you want in your life, ideally, stress-wise. It may look good, but who really cares what people think? You got to stop caring what people think too. When you touch that big bag, please do not do things to pop it, to flex because of people. I don't care if it's old people in the past, old friends, whatever. Oh, I'm going to go ahead and run up this money and pop it on them. I did it when I was 18. Okay. I went through it. My first car was an Audi. It was an Audi A4. 2014, something like that. 13 maybe. And someone crashed into it while it was parked. Thank God, that taught me a lesson. But during that time, it made me very arrogant, and I repented to God. But, you know, just after all the years of getting bullied and stuff like that, finally be able to have something and people look towards, you know, me for some type of motivation. But I realized it's not about the materialism. You know, even if you do pop up nice car, try and give some game. You know, try and give some game so they can get one too. Don't put yourself over people because you have more materialistic items. This is a fleeting world, and we'll all be judged as human beings by God. Okay? So just because you cop the lamb, don't start popping it on people that you used to know. Don't start poo-pooing on people. Don't start treating people bad. Don't start putting yourself in a negative mind frame too. Like, oh, this lamb isn't good enough. I've gone through that. You know, even with the coupe I'm in right now, I'm in the Mustang coupe. You know, it's cool. It's cool. It's stay down. After the Audi, I decided, you know what? I'm going to go ahead and downgrade a little bit, pay a little bit less insurance, and not really care what people think. And the kids still smile when they see this car. I think it's pretty cool. My wife thinks it's cool. My family thinks it's cool. So I'm not tripping. But I'm not over here posting every little thing, posting my car all the time. You know, even inshallah, if God wills, if I do cop a better car, like a Benz or a Maybach or something like that, the whole channel is not about to be back about the Maybach. I'm not about to make my whole life about the materialistic item that someone could crash into and it could be gone in 2 seconds. Okay. Is it nice to have? Is it a blessing? Absolutely. All credit to God. Thank God we have the wisdom and the strength to be able to enjoy this world. Okay. Especially as we grind, get more resources, work harder, hit more trades, stack up more income, and invest. We'll be able to do more. Okay. But don't lose yourself when you touch that big bag. Please. 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 It's really important. Keep God first. Okay. Even when you start touching 5 figures a month, 6 figures a month, don't forget about taxes too. But keep yourself mentally focused. Do not lose yourself in sin. Do not start living in a super unrighteous lifestyle. For example, you know, I'm not better than anybody, but I don't drink alcohol, for example. Okay. And just being around people who constantly drink alcohol, it's not for me. It's not for me. And if you're someone who likes to be focused, if you're thinking about moving to a high-rise city type of life, and right now you're maybe in like the suburbs or more of a rural-ish area, what you have is a blessing. Please understand that. I just moved to Las Vegas, and I tried out the city of Atlanta. And I still like living in rural areas more. Okay. I tried the city life, guys. It's not for me. It's not for me. And for a lot of you guys who are just focused, tunnel vision, focused on providing for your family, focused on God, don't think that type of lifestyle is going to be for you guys either. Trying to have 5 cars just to post on social media. Whole time you got 5 insurances. You got 5 different people who could break into 5 different cars, or someone could try and break into all your cars. You got items to keep up with in all your cars. You got people asking to borrow, yo, can I drive this today? Yo, I got this. Yo, oh, you're not letting me drive the car today? You could fall out with your family. A lot of this comes with underlying stress. So I just want to keep it real with you guys. Okay, please. Just wake up, pray to God, work out. Working out really helps you channel your energy. your direction, especially so you're not talking to your loved ones or anyone disrespectfully. Let's say you have a bad trading day. Let's say you lose like 5K in a day or something like that. You don't want to be storming around the house grouchy, everything about money all the time. You're treating your family bad because you just lost. Chill. Don't lose yourself. Relax. Okay, you could lose all account. Don't crash out on your family or yourself. Don't put yourself into mental desperation. Please don't commit suicide. Okay. And please just try and keep yourself focused on God. Don't grieve your spirit so you don't go through depression. Because this money stuff can get deep. Especially when you start balling and then whoosh, God takes it all. Okay, because if you fall into sin, you will get the results you deserve. Okay, anytime I fell into sin, God forgive me, I got the results I deserve. Cars taken away from me, luxuries taken away from me. And thank God I was able to be focused and get it back. Okay, all credit to God, alhamdulillah. So, this journey is going to be a long, beautiful one. But I just want you guys to be conscious of what can happen when you do start touching certain levels of income. Don't change yourself. Don't lose yourself. And don't let the income affect your life to the point where you just don't even know. Okay? Got a call there. My fault, guys. But the income, don't let it make you. You make the income. Okay? Take care of your family. Take care of yourself. Okay? Especially if you're a provider. Let me talk to you guys about this too. If you're a provider, let's say you're someone who takes care of your family and yourself, etc. Have some time for you. Do the things that you like to do. Take care of your mental health. Because especially as a provider, you can really lose yourself and everyone else, making sure everyone else is okay. Make sure you're okay. Okay, take care of you. You ball out. Okay? Don't overly pop it and lose all your money. You know what I'm saying? But get yourself a nice meal. Get yourself some new clothes. You know what I'm saying? Cut your hair. Get your hair done. You know what I'm saying? Do your thing. Do yourself. We're human beings. You know, life is, you know what I'm saying? It's more than just money. So don't lose yourself. Yes, we're getting this income to make sure we're good. Make sure we can chill out, do what we want to do. Thank God. But at the end of the day, take care of yourself. I've lost myself a few times in the grind. I'm not going to lie, guys. I've lost myself a few times in the grind. Was my work always consistent for the most part? Yes. I'll say that. Was my income always consistent and going in an upwards direction? Yes. But was my mental health always in the right place? No. Was my physical health, you know, I was in shape weight-wise, but as far as my other external factors or internal factors, like my kidneys and stuff like that, not drinking enough water, I had to quit soda, a lot of certain things, you know. So just maturing and growing up is really just teaching me a lot of lessons, and I just want to come on here and just give you guys some just warnings and just let you know what I've gone through, just so you guys don't go through any hardships and any hard times. Just stay focused on your family, your loved ones, and most definitely God. And I promise you'll probably have a good life. Yeah. I love you guys so much. Catch you in the next one. Head over to stackmode.net. Peace.
Cool. So yeah, let's go over some 930 setup. Let's go and let's check it out here. Okay, so we had Uber. See, price went up here on Friday. Had a 4-hour close above it. Okay, so that's extremely nice. I think we might definitely push up to this area of resistance up here. Okay. So with this area here, okay, this was cool. Could see price here. Decided to pass this 930 area of resistance here. Okay, 930 resistance. Price even retested off of it here. We could see on the 5-minute, we had one of these candles here. Okay, price retested off of it. I believe we're definitely going to go ahead and try and fill up to the next area of resistance at the very top here. Okay. So very extremely easy here. Okay, this is going to be like a day trading setup where we're holding these trades for like a couple of days. Okay, we're still going to buy like weeks, months out just for the contract and just in case. Well, a lot of the times these will hit take profit within a couple of days or weeks. Okay, so indicators, we're going to start off with the market open maker. Okay, and we're just focusing on these 930 levels. Okay, that's what really we're going to be focusing on. So got a 930 level right here. Okay, another one right here. And one up here, if I'm not mistaken. One down here. Okay, so all of these levels here are going to be 930 levels. Right here. And right here. Okay, then I can go to my 4-hour time frame. Okay. And that's why we lock the lines. But if I wanted to, I could definitely wait for price to pull back to any one of these levels. Okay. And see if price will go ahead and give me a buy entry. Okay, so I just look below current price. Okay, set all the 930 entries that I saw. Okay, and if I see price come to this level, give me a bounce up. Okay, that'll potentially be a valid entry. Okay, same thing with this entry here. Could potentially be valid. Same thing down here. Could potentially be valid. Okay, and if you get a 4-hour close and a sweep up from these areas, then that's definitely going to go ahead and be that. Okay, so just be aware before you just instantly buy. Don't just buy the first wick. Okay, make sure you take your time. Be like, okay, I know what I'm doing. I know what I'm buying. I know what I'm looking at. Okay, so your 930 levels are really going to show you everything that you need to see. Okay. So let's go over another 930 example here. And this is really going to help you trade with the trend, whether it is a pullback scenario or an above current price scenario. Okay, so let's take this stock for example here, bam. So I'll go to my 30-minute time frame, look above current price. And let me go ahead and just start marking out areas where I see 930 reactions. So I'm gonna take my line here and mark it at the 930 reaction here too. I'm gonna put one above current price at this 930 level here, and this one up here as well. Okay, as well as this 930 up here. Okay, all the reactions I'm gonna go ahead and put in, just so we know where price is heavily reacting off of the most, as these are gonna be the highest volume levels, and volume is gonna be the amount of people that are trading. Okay, so when 930, which is when the stock market opens, okay, hits, the bell rings, people are going to be frantic, okay, putting in trades and stuff like that. Everyone's excited. So wherever market decides to open up from these levels are going to be really important. So that's a really good way to find the best pullback levels, see how price wants to react. Okay, so just going from left to right, okay, even checking out this area here at 930, for example. Okay, if I wanted to, from there, I could easily go to like my 15-minute or 5-minute time frame. Okay, wait for price to break and retest from any of these levels above. Yeah. Okay, so if I see break and retest on any of these levels, I can easily go ahead and take the trade from these 930 levels. Okay. Resistance right here, 930 resistance up here, 930 right here, 930 right here. That's going to show you where the best levels are. It's going to be extreme cheat code. It's going to make it simple. Let's go over another example here. All right, we have MDLZ. So let me go to my 30. Okay. And just check it out. Okay. Ideally, I like to start off with my daily too. Make sure I see the full price action. So I can see a super low was created at the bottom down here. I can see price wants to try and meet this resistance up here that came in July. Okay, so I'm going to go to my 4-hour too, see everything closer perspective, and the resistance up here. Okay, sometimes the daily can not show you everything you can see. And then let me go to my 30-minute time frame, and we can go ahead and find pullback levels or price levels above current price in order to trade like a direction flow. Okay, so right here, it's gonna be pullback level there. Wherever these green lines are on my screen is going to be exactly where markets decide to open up. So we have a level here, got a level here. Okay, as we can see, the 930 levels are correlating with each other. We got one here, and then this one is going to line up with this one. Okay, and then this one is going to line up with this one. Okay, so it's always going to line up for the most part too. The more taps that you see in a certain area, the more powerful of an area it is that you should be playing there. Okay, even 930 area right here, 930 area right here. Okay. Finding the key levels here, taking our time. Okay, and that's all below current price. Okay, so as price goes into progress, if I see price pull back to any of these levels, give me a 4-hour close, then I'm gonna be cool to go ahead and take it. That's the whole sweep back up. Okay, if it breaks this level, it's okay. You could try this one. If it breaks this one, that's fine. You could try this one. Okay, as soon as you get your 4-hour close though, you know you're gonna be good to go ahead and kiss the sweep, inshallah. And above current price too. So it's going to be trading with the trend. It's going to be a simple way to make profit as well too. Okay. So you can get on your 30-minute time frame, look for areas of resistance. For example, if I'm taking it long, above current price, can wait for it to get above current price and take this area of resistance right here and turn it to support and just take it back up, okay, from the original breakout. So you don't have to take the original breakout. You can let price break out, do its thing. Wherever the breakout closes from, price has a chance to retrace, turn the resistance to support. If it does that and you get a 4-hour close, go ahead and get in. And that's a good trade as well, trading with the trend. It's very safe. So let me see here. You can get in here too. And you can get in up here. Okay. So any of these levels of resistance or even support above current price are going to be good levels to go ahead and look for a break and retest. Okay. So even levels of support can go ahead and be mirrored too. So even if price were to go up past this level of support, okay, it can kind of inverse retest and mirror that level of support and go up too. Okay. So that's also going to be part of the breakout model. Okay. And certain things with high liquidity are going to have a little cleaner levels, okay, compared to smaller stocks, but even smaller stocks, you're still going to be able to find good trades. Okay. So for instance, a price break and retest here, could take it up to the next level up here. You could just keep going, doing all your levels and just playing your chart like a staircase. So that's pretty much all it is. It's just a big giant staircase. We'll check out Wells Fargo, for example. Hop on my daily. I can see that we're all-time highs. We can't touch this. Okay, there's nothing we can do here. Okay, personally, right now. Okay, we can't trade a resistance breakout. It's at all-time highs. So what we have to do is wait for price to come back down so we can buy it back up. So here's how to find the pullback level. So now that I see the data on my daily, I see what's going on. Let me go down to my 30-minute. So I'm on my 30-minute time frame. I'm going to look below current price logically. I want price to touch one of the levels below current price and sweep back up. Okay. So that's going to be the goal and objective. So let me go ahead and get the line tool here. Okay. And I can go ahead and put the prices down at the 930 doubles. So let me go ahead and put a line price here, line price here, put down here. And I can go ahead and see the prices of the lines completely to the far right in black. Okay, so if price comes down to any of these levels, gives me a 4-hour close and bounce, I'm gonna be good, inshallah. Okay. It's about taking the right trades, okay, taking informed trades. Okay, this is gonna be a low right here too. Okay, and you can see some of these lows are going to mirror each other. Okay, this low is matched with another low over here to the right. Okay, and then we have this resistance up here too, which matters. Okay. And then down here, boom, area of support down there too. Have another one too. Okay. Just mark out your clean levels. Okay, you don't gotta make it difficult. Just play what needs to be played. Okay, so if price comes down to any of these levels, it gives me a 4-hour close. I'm not gonna play the first tap. Okay, if price comes down to any of these levels, gives me a 4-hour close, I'm gonna be good to go ahead and take the pull back up. Okay, confidently. Okay, these are 930 levels where market wants to open up at. Okay, and just burst in upwards direction a lot of the times. So a lot of the times market will mirror what it's done in the past. So it could definitely do it again for sure. So we'll go over PayPal here. I'll start off on my daily time frame, get the bigger picture. I can see price made this low right here. I can see price at least wants to come test this resistance area up here. Okay, so I'll get on my 30-minute time frame. Okay, and I'll look for a pullback area to see if we can go ahead and catch it back up to this area of resistance right here. So we get on my 15-minute or my 30. I'll do the 15 for this example. Yeah, and I'm gonna go ahead and look at the key areas. Okay, I have this area right here. 930 is clean. Keep finding the best areas, all I'm focused on. Okay, right here. That's the ultimate low that was created. Okay. You can also lock your lines too if you notice your lines moving too much. Okay, up here, price decided to short downward. Even up here. Shorted downward. Okay, and as you can see, a lot of these are just correlating. A lot of these lines and levels are correlating with each other. Yeah, a lot of these 930 levels are going to be solid. Yeah, we can definitely trust a lot of these levels for sure. Okay, so that's going to go ahead and be PayPal. So I can go ahead and see this area here. This area of resistance clearly above me. Okay, I can wait for price to either break here, retest off of this area, or I can try this area up here. Okay. Or if it doesn't work here, I could try this area here. So it's all about patience. Like, you can win the trade if you truly want to. It's just about waiting to see, like, okay, will my trade do what I need it to do? Okay, and even for a pullback level, if I see price try to dump down to here, okay, turn this area of support into resistance and then fall down, which it could potentially do, and meet up with this low, then that's going to be in probability too. So bread is everywhere. Bread is all over the place. It's just depending on how patient you want to be, what type of setups you take. And just because there's bread everywhere doesn't mean you should be taking a short and then taking a long and then taking a short and then taking a long. Like, your trade frequency and how much money exposure you have in the market is going to depict like how profitable you are really. So it's like, yeah, you can see everything, but just take the trades as data. So yeah, if you see a profitable trade, you can either take it as data or take it. But if you take it, I advise you stick to that model. Okay, so if this is break and retest and you're a break and retest trader, you see support getting broken and turn into resistance, then okay, it could be potentially a decent trade down to the next level. Okay, but if you're a breakout trader, this is something that might not work out for you, okay, depending on certain situations and your criteria, for example. Okay, but you do have a 4-hour close underneath the level, so even a breakout trader here would potentially be able to take this too. Okay, so focus on your criteria, focus how you trade. Okay, and it's not always going to work on all markets. Like, Forex made shorting really popular because the chart is a lot more sideways. But when it comes to stocks and crypto, stock pretty much just goes up in straight line over the years, okay, in the long-term scenario. So it's a lot different, but both the technicals and all technicals work on all charts. So that's the cool thing. So once you learn once, you can apply it to any market that you understand or want to get into. So we'll talk about Cisco here. Okay, we'll restart from scratch. So Cisco here, I can easily just see, okay, So I know on the stock market too, price is trying to go in an upwards direction, and crypto, because people are working hard to increase the value of their company or make cryptocurrency more useful, whether it be just innovating new technologies or etc. Okay, so they want their value and their shares to go up, so they get paid more on dividends and stuff like that, and share exits. So even the normal workers, like for Nvidia, for example, a lot of people who just worked in Nvidia past 10 years just became millionaires because they were able to retire early because the company blew up. Okay, so if you work for a company and it blows up and they give you shares, it's going to be a really good way to retire early. So it's showing you that trading is going to be a really quick way if you want to retire early, as long as you invest your money correctly, you get in at certain lows, and you invest in the future. Okay. So know that price is always going to try and chase resistances for the most part. Always, always, always. Okay, because it's trying to break out into new highs. Okay, people are trying to get paid more for their shares, so price is trying to chase new highs. Okay, and the richest traders are going to be the U.S. stock market traders, so it's one of the most important markets. Okay, so price is always chasing higher resistances. Always. Okay, it's always looking to break into new all-time highs for the most part. No company wants their stock to be going down. It's not beneficial for them. Okay, so I'm going to go ahead and start off with my 30-minute here. I'll go with my 15 here, and I'll look below current price and above. We'll do both. Okay. So for this candle here, it's 9:30 candle. I'll put go and delete everything. Put this level here. Get back on my daily. You can see price wants to at least come up here. So price is always going to be hunting either an area of resistance above current price, or if an area of resistance is too far, like all the way up here, okay, it's still going to be aiming for all-time highs ultimately. But depending on your expiration dates and something like that, okay, then closing in an area of support above current price is going to be solid too, because we know that just like we saw, support can be broken and turned into support. So put everything logically, put it together like a puzzle piece. So if I get on my 15-minute here and see the structure and everything closely, you can see price wants to bounce from this low here. Okay. Price bounce from this low here. Price bounce from this low here. All I got to do is focus on 9:30 levels. I don't really have to focus on anything else. Okay, as far as the stock market. Okay. And this level too. Okay. And then a lot of these levels too are going to be related to each other. So a lot of the times you'll see a lot of levels working at the same areas over and over again. Okay. And right here. All right, boom. So let's say we have all these levels, for example, okay, that I think are going to be solid, good levels. Okay. And this level here. Okay, let's say I go to the far right on Cisco. Okay, I can go ahead and just see certain things. Okay. So I know that price is trying to at least chase this resistance up here. I can go to my 30-minute and see everything cleanly. Okay, I can just wait for either a pullback or resistance breakout how I want. Okay, I can see at this level I already got a pullback. So price decided to fall all the way down, come up, and then pull back to this level right here. Okay, and we just did all the 9:30 levels. Okay, then it's not okay. This level's important. So if I wanted to, really, I could delete this one. And because we have all the data to the left verifying that this low is valid, okay, and I have a 4-hour close verifying that the pullback is valid, I can easily go ahead and take this up to the next area, like up here, for example, okay, and see if this area up here wants to turn it into resistance. Okay, so you can use certain different scenarios to make bread, just about thinking how logically you want to play. Okay, it's a big puzzle piece, and if you play logically, there's going to be money everywhere. Okay, which is why people just make money by just buying and holding. Okay, it truly can be that simple. So let me check out here. Okay. Even right here on Pfizer, okay, I expect price to come up to this area of resistance up here. Okay. I'm sure I could go to the left and find some good levels. That's why price wants to react the way it does. So we have a low right here. I have one right here. We have another one down here. Okay, go ahead and go to my current price. Okay. So I know if price pulls back to any of these black lines, okay, it's going to be effective for me to go ahead and get in at these positions. 930 low right here too. Okay. The further we go back, the more data we're going to collect. See if everything that we're doing makes sense and correlates. We got one up here. Got one here. All right, and then we go ahead and go to my current price. And guess what? So you can see here that this line that I just went ahead and drew from all the way to the left correlates. Okay, so correlates with this line right here, verifying this low with a push up here. Okay, so on Pfizer here, this trade goes ahead and makes sense too. Okay, you can easily go ahead and potentially take it up to the next black line up here. Okay, so many different ways you can go ahead and take a trade. Okay, many different formations, and it's just going to depend on what way you're looking at the market and how you want to take your setups. Okay, so let me take you through another example here. So let me go ahead and pull up a high liquidity stock. We'll go over NVIDIA, for example. Let me start off on my daily. Okay, logically thinking, I know that the stock market wants to go up. So my take profit is going to be these all-time highs up here, for example. Okay, let me go to my 15-minute time frame. And let me go ahead and start marking my levels. So I'll do levels below current price and above current price. So I got support below current price right here. And you can see which direction these 930 candles are moving in by just seeing how the flow works. So if you clearly see a top resistance wick and then price falling down, then you know price reacted off of the top resistance wick here, not the bottom. Okay, so just check out the flow. You can easily see which direction the price is moving in. Okay, we got a 930 level here. Got one up here. We got one up here. And let's say we got one here. Got it's precision scrolling and just taking our time on these setups. Okay, 930 resistance right there too. 930 support. Price shorted down from here, 930 support here. Okay, and you see everything correlating as well too. 930 support here too. Then we got some down here. Okay, and then once you have your levels, you're good. Okay, you have your data here. You know how to play your reactions. You know what you're looking for. You're not going to be playing without any data or information on your screen. You know exactly what you're going to be looking for. So let's say price decided to go in upwards direction here. Price went up right here. And then we got right here too. These are going to be all the best levels. Anything with the 930 reaction is going to be the best level supply. Okay, let's say we stop there. So I can go to my 4-hour time frame here, just analyze everything. Okay, I can still see that price wants to go ahead and try and at least touch the black line all the way up here. Okay, and as we can see, we got price shorting at this black line here, but we do have a pullback at this level here that did work. So if price pulls back, holds this level here, could potentially be good. Okay, take the sub point there. Okay, maybe break and retest here, potentially break and retest here. Okay, or price could potentially short from these areas too. Okay, resistance mirrors, and these are going to be the cleanest levels to play a lot of the times. So it's about taking your time, analyzing what works, analyzing the cleanest levels, and playing with potentially just needs to be played. Okay, so even right here, we have this area of resistance. So right here. Okay, so yeah, price reacting with this area of resistance too. So break and retest can happen at any of these areas. Okay, and a lot of these areas are going to be about 1 point per. Okay, so it's going to be good money even if you day trade just these small zones in between. Okay, so break and retest, they should work all between these areas, and it's going to be an easier way to just catch your day trade flow. Okay, so if you want to make some money multiple times during the week, okay, just boot up your account, mark out all your levels, and then you can catch your flow. Okay, be responsible with your trades. Okay, and be ready to just close relatively quickly. You can't really cook your trades like this, especially when you're trading on a smaller time frame basis. So even right here, let me go into all the levels. Starting off on Walmart here, get on my daily. Okay. This price actually already hit all-time highs here. So let's find a pullback level. Okay. That's good. So we know that price wants to at least touch this resistance up here. Yeah. So let's find a pullback level below current price. So let me get on my 15-minute time frame. Just pay attention to the dotted line here. Okay, and I'm looking at all levels below current price. So we got this level down here, 930. Got some 930 support down here. Some more 930 support here. Back down here. Just about marking the best levels that we can find here. One right here. Got one right here. Down here. Okay. This is the bottom wick because price is going up. This is the top wick because you can see price going down afterward. Okay, read the flow. That's how you can determine what candlestick it is. And sometimes it can be easier to detect than others, but for the most part, you're going to be able to get it. In here. Okay. Zooming out. Then we got this area here too. Okay. So just finding the best areas below current price. Waiting for price to give us a 4-hour close and pull back to these areas. This area down here. And up here. Here. Okay. And now you have the cleanest levels. Okay, so you can see here in Walmart, if I get on my 4-hour time frame, you can see all the areas where price wants to dip down to. Okay, so if price comes down to any of these areas below current price, it gives me a 4-hour close, I'm going to be good. Okay, I can clearly see that price wants to short down to this level here too. So even if I wanted to take a short, I can clearly see that price wants to short down to this level here on the black. Okay, it's already more than halfway done, and yeah, price definitely wants to make its way here. Okay. And then after price gets here, if it decides to want to bounce here, it's going to be another question. Okay. If it decides to break this level, even after a small bounce, that's fine. We try this level. We'll try this one. Okay, try this one. Okay, you'll know the pullback area as long as you have your levels down. Then you can go ahead and buy months out, buy some years out, catch the whole sweep back up. Okay, that's going to be a lot more profitable than just catching a tiny burst move. Okay, you know exactly where you're trying to buy. Go grind real life, stay down. Okay, keep grinding bread, keep putting that bread away, and then when the play comes, you can catch the whole move. You can buy the contract that you want, and your money's going to be able to 10x. Okay. So once you have your levels here, just be grateful for bear markets too. If markets ever dipping down, have all your levels placed down. Okay, especially on the stock market, you can take serious advantage of the 930 manipulation, and you can see the best levels and go ahead and buy a certain amount of shares or buy months out or years out for options and stuff like that, and just let your bread make bread. Okay, catch the whole sweeps back up. So this is going to be one of the best ways to do it and to see which levels are going to be clean to play to the downside. Okay, so if price is going to the downside and you're like, okay, where's the bottom? So these are going to be potential bottoms, and wait for your 4-hour close. Don't buy on the first wick. Buying on the first wick can really get you destroyed and you might get irritated. Okay, so just don't get irritated and stick to a plan that's logical. So even for Apple here, I can see it bursting all the way up. Even if I wanted to take a pullback trade, okay, I could easily go ahead and do something like this. Mark this level here. This one here. This one here. This one here. Okay, all the data is going to be here for us. Okay, literally all the data is here for us. Everything that we need. Okay, 930 level right here too. Another one right here. All the information that we need. Every ounce of it on the screen. Okay, all the levels that we need right here. Price decided to bounce upward. Okay, sometimes price is going to go ahead and mirror certain transactions. Okay, price decided to short from here twice. Okay, so resistance once and then resistance twice. So sometimes 930 is just going to mirror level. Happen to the left. Okay, right here, price decided to bounce upward. Price decided to short. Actually, no, price decided to long. Okay, it's about just being precise for what we're looking at. Right here. And then right here. Yeah, a lot of times if there's a lot of lines in one area too, that area could be potential good zone as well too. Okay, potentially right here. Potentially right here. Okay, right here. Okay, so cool. Yeah, these are going to be just the cleanest levels I can find here. So then from there, I'm going to be able to go to my 4-hour time frame. Okay, and I can look below current price. Okay, if I see price pull back to any of these levels and give me a 4-hour pullback, then I know, okay, inshallah, I'm going to go ahead and be able to get in and catch the whole sweep back up. Okay, so I'm only looking at 930 levels personally, waiting for pullbacks and catching the whole sweep back up. Okay, so that's how you trade if you see something bursting up. Okay, and don't buy things when they're overextended. Okay, wait for price to come back to these levels and catch it back up. Promise you it's going to be a lot more worth it on your risk to reward and on your P&L. Okay. Hey, welcome to Stackmode.net. There's 2 things I want to do. I want to put a smile on your face, and I want to help you make some money by trading. Okay. So here's an example of a trade that I gave in my Discord here. So all we're going to do is understand some logical processes here. I teach stocks, Forex, crypto, options, as well as futures. Okay. And trading each of them is going to be fairly similar, but different for each sector. So whatever you specialize in, I can help you. Let's say we're trading the stock market, for example. I know that stocks have an incentive to go in an upwards direction due to the fact that these companies employ people. Okay, these people then pay taxes to the government. Okay, so as long as these companies go upwards and upwards direction, the richer they're going to get, which means they're going to expand further, which will lead to further opportunities to employ people. So let's say, for instance, I'm trading the stock market. I personally wouldn't short the stock market. I'm looking to play call options or buy shares, catching my V directional fill. So as you can see here, I have an area of resistance above current price here. And as you can see, I have just some empty space here, and price decided to blast straight through it and fill in this area. Let's talk about how I caught this setup here. So here I can identify two things. We're going to have areas of resistance. Areas of resistance are going to be areas where price decides to fall in a downwards direction. Okay, and then we're going to have areas of support. Support are going to be areas where price decides to bounce in a upwards direction. Okay, using support and resistance together can lead to some very, very nice setups. So as you can see, market can only go in two directions, either up, okay, and once again, if market's going to go from a upwards bounce direction, that's going to be called support, and if market's going to go in a downwards bounce direction, that's going to be called resistance. Okay, so let's understand some things. So resistance can be broken and turn into support. So here I have this area of resistance being created. As I can see, market's falling downward here. And once the area of resistance decided to get broken, it decided to turn into some support. And then price went in the upwards direction. Okay, and I know that price in the stock market at least wants to go to all-time highs. Okay, same thing for cryptocurrency. There's tons of coders behind these tokens, tons of people putting in a lot of effort, wanting to see the token or the stock succeed. So of course the share price or token price wants to go in an upwards direction. So I play until areas of resistances for my take profit. So as you can see, resistance got broken here, turned into support, and then price would have met with the area of resistance and decided to do it again. Resistance got broken, turned into support, and then looks like price wants to keep going in an upwards direction. I try and make trading as easy and simple as possible for you guys. You guys see all the reviews from my students. I try and make it simple for you, and I adapt to your life. Okay, here's how the class system works. So one, I offer 10 classes. Okay, these 10 classes can be stretchable however long that you want. Okay, it could be between 10 weeks, we could do 10 days, or a class every 2 weeks. Whatever your schedule is, we're going to be flexible, and I'm going to maintain a optimal workflow for whatever you trade, your schedule, and what type of person you are. Okay, so I'm going to catch you guys in the free call. Go ahead and book the calendar. Stay prayed up to God. Keep grinding. And I'm going to catch you guys in the next one. Peace. Let's go and let's jump straight into the lesson. This is going to be the differences between stocks, shares, and options. Let's go. And at their core, stocks and shares refer to the same thing, a unit of ownership in a corporation or a company. And the terms are often used interchangeably, and those shares typically refers to the number of individual units held by an investor, and while stock is more of a general term used for the entire collection of shares. Okay, so for example, I own 10 shares. 10 shares is going to be the amount, the percentage of the company that you want to be a hold of. Okay, the amount of shares equals the amount of percentage ownership that you have in the company. Okay, so if you want to own 10 shares of Apple stock, okay, and Apple is going to be the primary stock. Okay, shares is the percentage amount that you own, and the stock is going to be the name. And here's what they represent. Owning a share means that you're a partial owner of a company, and as an owner, you have to represent. Okay, and you also have a claim on a portion of the company's assets and earnings. And this ownership gives you a right to the company's profits, and it's distributed as what's called dividends. Okay, and dividends, especially if you have enough shares invested into, then dividends will go ahead and be paid out to you. And this way you can be able to make money just by being an investor. And say in the corporate matters though, it's also going to give you some voting rights depending on the amount of share that you have. And for every share that you own, you typically get one vote. Okay, so the more shares that you have, the more votes that you're going to have. Okay, so you're going to have one vote per share, for example. Okay, and that allows you to influence key decisions like electing the board of directors and who's going to be controlling the future of the company's growth. And why do companies issue them in the first place? Companies sell shares to the public to raise capital, and this money can be used for expansion. So whenever you guys see millionaires, billionaires, stuff like that, and their company owners, a lot of the time it's not in raw dollar currency, okay, sitting in a bank account. A lot of the time they're rich through the company they own, and a lot of times it's on the stock market, okay, and then that company generates money. And since they're associated with it, or the leader, they get the money associated with the tag, so then they get to be a billionaire. For example, any creator of, like, say, company.com, okay, say they have $500 a share worth, okay, the owner of it, let's say the company does $10 million a year, okay, the owner of it would be classified as a billionaire because he's the owner of it. So that's normally how that works. So they sell shares to the public to raise capital and raise money. And this money can be used for future building expansion of the company, research, paying off your debt, and other business goals. And this process is known as an initial public offering, also known as an IPO. And this transforms a private company into a public one. And this is when shareholders, okay, can invest like me and you if we wanted to. And for a company like Google, for example, a public offering allows them to raise billions of dollars to fund new ventures. And when you buy shares directly from a company during an IPO, you're participating in the primary market. And after the IPO, shares are bought and sold among investors on exchanges like the New York Stock Exchange or NASDAQ, then that's going to be the secondary market, okay? So when you're buying shares directly from the company during from IPO, okay, that's a primary market. And after the IPO shares are bought and sold among the investors, okay, on exchanges like your New York Stock Exchange, that is the secondary market. So let's talk about equities. The broader view is ownership. So the term equities is a broader financial concept, and it encompasses all ownership interests in a business, which includes common stock, preferred stock, and retained earnings. And it represents the value that would be returned to a company's shareholders if all assets were liquidated and all debts were paid off. And on a company's balance sheet, it's often referred to as shareholders' equity or owner's equity. Let's talk about shareholders' equity. This is a fundamental metric used by analysts to assess a company's financial health, okay? So, and it calculates it by calculating the assets minus the liabilities. Okay, so what assets are things that a company needs. Let's say like the light bill. Okay, a company might need a light bill in order to run a factory, for example. That's assets, something that's needed. And a liability is something that's not needed. Okay, any business expenses that's just going to be extra. Okay, like giving all your employees a vacation or something like that, for example. Okay, and then that's going to equal shareholders' equity. Okay. So, common versus preferred stock. Common stock. This is what most people mean by stock, and it comes with voting rights in corporate matters, but it's secondary to preferred stock in claims on a company's assets during liquidation. When you're a true owner, sharing in both the upsides and the risk. And let's talk about preferred stock. These shares typically do not come with voting rights, but have a higher claim on a company's assets and earnings than a common stock. And holders of preferred stock receive dividends before common shareholders, and this makes them a hybrid security. And it's often seen as less risky than common stock, but without the same growth potential. Okay. So, stock options, my favorite. Okay. One of my favorite things I like to trade, and it's pretty much when you get paid based off of the direction of a stock. Okay. If you think the stock is going to go up, then ideally you would purchase what's called a call contract, which we'll talk about here. Okay. And if you think the stock is going to go in a downwards direction, okay, then you would buy a puts contract. You can also have expiration dates on your contracts too, to choose how long you want to hold the trade for. And when the contract expires, it's going to automatically close on its own. So you either sell the contract before it expires, or it'll go ahead and just close on its own. Okay. So stock option is a contract that gives the holders the right, but not the obligation to buy or sell an underlying stock at a predetermined price. Okay. And that's also going to be known as the strike price. So let's say a stock is at $32 a share currently. Okay. Let's say a stock is at $32 a share. You think it's going to go to $34 a share. Okay. Then you could buy a strike price contract of $34. Okay. Or even $33, since that's above $32. Okay. So you could buy any number above your prediction, but below your take profit. Okay. And that's going to be a good strike price in order to purchase, inshallah. Okay. So when you do that, you're going to go ahead and get paid based off of your prediction. Okay. Say, for a put example, let's say share price is going to be at 20, for example, right? And you think price is going to go down to 15. Okay. So if price goes down to 15, you could buy a 19, 18, 16, or $15 strike price contract. Okay, because you're going to get paid based off your prediction. So just focus on what you're doing. All right, just focus on what you're doing. You're going to get paid based off your prediction. Okay, and it's also going to be within a specified time frame that you purchase. Okay, and the higher the expiration date that you go, the more expensive that it's going to be. And it's a derivative instrument, meaning that its value is derived from the performance of the underlying asset, and they're a popular form of compensation for employees and a powerful tool for investors to leverage their positions. So a call option, it's the right to buy stock at the strike price, okay, which is going to be the pretty much price that you're wanting price to go to. And an investor would buy a call option if they believe the stock price is going to rise above the strike price, and you're betting on the stock's upward movement. Let's talk about a put option. And it's the right to sell a stock at the strike price, and an investor would buy a put option if they believe the stock's price will fall below the strike price. And this is betting on the stock's downward movement, often used for hedging. Yeah. And also sometimes companies often grant stock options to employees as a form of non-cash compensation. Okay. So it incentivizes them to work towards the company's increasing value, because as the company keeps innovating, putting smiles on people's faces, okay, creating more product, generating more revenue, then inshallah the share price is going to increase, making their options worth more. And most of the time, inshallah, they're going to be getting paid in like some long-term cost contracts, I assume. So risk, reward, or purpose. So while all these terms are related to company ownership, they serve different purposes. Okay, so stocks. Okay, stocks are going to be the name. Okay, stocks are going to equal the name. Okay, stocks are the name. So let's say I open Stackmode. Okay, let's say I open Stackmode on the market. Okay, if I put Stackmode network on the market, okay, inshallah will happen one day. If I put Stackmode network on the stock market, that's going to be the name. So if you just hear the term stocks, that's going to be talking about the name. Shares, the term shares is going to be talking about the percentage ownership that you're trying to purchase within the company. So you can own 1 share, okay, or you can own 50 shares. And the share price is going to be determined on the current price. So if the current price of a stock, okay, remember the stock is the name. So if the current price of Stackmode is $32 a share, for example, okay, and I think it's going to go to $600 a share, okay, or $700 a share, okay, then whatever the current price is going to determine what the share cost is. So if price is at $32 a share, 1 share will cost $32. If price is at $700 a share, 1 share will cost $700. Okay. So inshallah, try your best to get in at a dip or a low and then catch the sweep up. And that's how money is made. Okay. That's how growth equity is created, by trading shares. Okay. And stocks and equities. Okay. The primary goal of these are going to be long investment. Okay. There's going to be also a lot of tax benefits when you hold your trades for over a year. And the primary goal is going to be long-term investments when it comes to shares and equities as well too. And the reward comes from dividends as well too, which is going to be quarterly money that's going to be spread out to everyone who has a decent amount of shares. Okay. So you'll get paid by dividends and capital appreciation. And the risk is that the company's value could decline, leading to a loss of your initial investment. But no risk, no reward. We're only here one life. Okay, just trust God, take a risk, keep going. Let's talk about some options. The primary purpose is speculation or compensation, and the reward can be much higher due to the leverage they provide. And it makes you control a large number of shares for a small upfront cost. And this risk is that if the stock price does not move in your direction that you purchase, then the stock price could tank on the contract. Okay, but it's going to be fine. If it expires worthless, you just try again. Don't lose hope. Trust God. Keep going. Okay, and you could potentially lose your entire investment, but you could also play into that. Okay, whatever your stock option cost is, you could use that as your stop loss. So if it costs you $70 to open a contract, that could be your stop loss. Okay, instead of buying a $500 contract trying to play with the $70 stop loss, that might not always work in stock options as cleanly as you might want. Let's explain leverage. And with the call option, you might only pay a few dollars for the right to control 100 shares with leverage and the time expiration. And if the stock price goes up by just $1, you've made a significant percentage gain on your small initial investment, far greater than you would have buying the shares outright. Okay, but it also has time expirations on it. Okay, so this is why the longer the time you're going to buy on a certain play, it's going to be the better. Okay, give your trade time to work out. Okay, but the longer that you go trying to buy out, the more expensive that the contract is going to be. Okay, so for practicality, for example, if an investor wants to build a retirement portfolio, okay, you could buy stocks. Okay, so you'd be buying shares of those stocks for long-term growth, for long-term tax benefits, and just holding trades year after year, keeping money in the stash, keeping stack mode, okay, implemented into your portfolio. Staying down, not touching the bread, okay, staying down. And if a trader is looking to profit from a short-term market movement, then stock options would be able to amplify your return. So you can use the stock options profit to buy some more shares, but stock options in general is just going to be better to go ahead and generate some more income. Okay, so it's going to be time to just start going harder, get more education, and really understand what we're doing before we put money into the market. All right. Market capitalization, valuation, how a company is priced in general. So understanding that a company's market cap, okay, also known as the market capitalization, is pretty much how much a company is worth. And the valuation is crucial for making informed investment decisions. Now, market cap's not going to be everything. You could do your research and catch a good trade at the low, and then the market cap turns huge later. Okay, but market cap is just going to be a good decision to see if something's going to be a strong value play. And market cap is going to be the total value of all the company's shares, and it's a key metric used to determine a company's size. So here's the market cap formula. The calculation is pretty simple, but does a lot. It's quite advanced. So market cap, okay, the calculation concurs of it's the current stock price. Okay, so Stackmode is worth $700 a share. Okay, then it's worth $700 a share. Okay, so you take the current stock price, $700 a share, times the number of total outstanding shares, so whatever that would be, and that's going to give you the market capitalization. Okay, so this tells you what the market currently values the entire company, and it changes every minute as the stock price fluctuates. People are always going to be putting in orders, selling and buying, and especially something that has a high market cap, there's always going to be more orders flowing in due to the fact that it's popular. So there's some different market cap categories. Companies are often categorized by the market cap, which influences their risk growth and their potential. Once again, it's not going to be everything, but something to look for. So a mega cap, it's going to be something worth over 200 billion in market cap. So for example, big giants at the time, like Apple, Microsoft, for example, they're generally seen as stable, mature companies. And let's talk about large caps. It's going to be 10 billion to 200 billion. Okay, and they're established leaders in their industries. You got mid caps, 2 billion to 10 billion. And that's companies with solid growth prospects. And small caps, 300 million to 200 billion market cap. There could be a bit higher risk if they don't decide to grow and have some future innovation. But with the potential, they have a bunch of high expectations, certain companies, and they could explode super duper hard. Okay, like for example, Palantir. And microcap and nanocap, and below $300 million. And they're the riskiest category once again, because it's fresh, new startups, new ventures. Sometimes it could be people with a bunch of money investing into it, and then it doesn't go anywhere. So make sure it has some future value. So let's talk about valuation versus price. So it's important to distinguish between a company's price and its market cap and its intrinsic valuation. Valuation is a more complex process that attempts to determine a company's true worth based on its assets, earnings, future cash flows, and growth prospects. And a savvy investor is going to be looking for stocks where the price is lower than the company's estimated intrinsic value in the first place. So we'll talk about valuation methods. There are many methods for valuation, including the discounted cash flow, the DCF model, and a company's price to earnings ratio. Comparing that to its others ratios of other companies is going to be a good way to determine if what company is making more money than others. Okay, and these are essential tools for a fundamental analyst if you want to be an investor. So let's say, for example, let's say company A has 10 million shares outstanding. Okay, let's say Stackmode has 10 million shares outstanding. Okay, and its stock is trading at $50 a share. Okay, and its market cap is going to be $50. Okay, because that would be the current price. Okay, you're going to be multiplying the current price times the number of outstanding shares. So let's say Stackmode has 10 million outstanding shares. You're going to multiply that by the amount of outstanding shares. So 10 million. So $50, the current share price, times the number of outstanding shares, 10 million. And that's going to equal 500 million. Okay. And that's how the math is done. That's how you find out market cap. Let's say company B, for example. Let's say it has 5 million shares outstanding and its stock is trading at $150 a share and its market cap is 750 million. And even though company B's stock price is higher, company A might have a higher intrinsic valuation based on future growth projections and its expectations. So the difference is at a glance. So to summarize, it's essential to recognize the distinct roles of each of them. So shares and stocks. Stocks represent actual ownership in a company and they're tangible assets that can be fractional and traded on exchanges. Okay. Any stock exchange is going to be a broker where you can put in your bank account, your card, and buy some stock for yourself. Okay. That's what an exchange is, also known as a broker. So let's talk about equities. Equities are a broad term for the total ownership of a value of a company. It's an accounting term that includes all forms of ownership interest, and equities is the larger category, which includes stocks and stock options. They're a contract and a right to buy and sell shares, not the shares themselves. Okay, and you get paid based off of the direction that you think price is going to go into. And they're a tool for speculation or compensation and are not an ownership stake until they are exercised, until someone's to fill in the contract. So think of the company as a pie, okay, also known as the stock. A fraction of the pie, okay, is going to be known as a share. And let's say you're about to deliver pie. Let's say you project to sell 4 slices of pie. If you think that, you could buy an option based off of that. Okay. So put all of that into retrospective and understand. Okay. So if you think you're about to sell 4 slices of pie, then you buy in options. Okay. But the pie in and itself is going to be the shares. Okay. And the store name, let's say it's Stackmode Pies, is the stock. Okay. So that's how it all works. So by understanding these core concepts, you're just not a spectator anymore. You're getting informed, understanding the market, not a gambler, and you're becoming an active participant with the knowledge to navigate the complex world of finance. Alhamdulillah. So while the terms may seem confusing initially, their distinct definitions and functions are critical to building a robust financial vocabulary. And remember, stocks and shares equal ownership. Okay, they equal ownership. You can hold them for however long that you want. So use that money. Don't go buy clothes, stay down. Don't go buy drip. Don't go buy the best whip right now of paying the high monthly payments. Stay down, invest, and go ball out later. Let your money make infinite money and then go buy what you want. And equities are going to be a broad ownership value. And stock options are going to be the directional bias that you can get paid based off of. You can use all of these to create future value, provide for your family, and provide for yourself. Stay prayed to God. Head over to stackmode.net for all trading education and business education. Love you so much. I'll catch you in the next one.
Welcome to the beginner-friendly guide to trading futures. I'm going to make it extremely simple for you guys. Futures might sound intimidating at first, but here's the truth. They're just contracts that let you trade the future price of things like oil, gold, and even like the S&P 500 or NASDAQ 100 without ever actually owning them physically. And the best part, you can start small, control big positions, and react fast to the market. And here's how it works. You pick an asset, whether an index, currency, or commodity, decide whether you think the price will rise or fall, and place your trade and let the market move. If you're right, you win, profit. And if you're wrong, then you lose, but only what you put at risk. And it's that simple. And when you understand the rules, it all comes together over time. But here's the real secret. New traders really fail because they treat futures like gambling. Successful traders treat it like a business and a skill. They use levels, trends, risk management, and most importantly, have a trading plan every single time. Because the thing about futures compared to any other asset, you know exactly how much you're going to make and exactly how much you're going to lose per trade. So in this video, I'm going to break down the basics in the clearest way possible, showing you exactly how futures work, how to manage your risk, and how to avoid the biggest beginner mistakes so you can trade confidently. Let's jump into it, inshallah. All right, let's talk about trading futures. I'm going to make this guide extremely simple, okay? I'm not going to make it difficult. I'm going to keep it simple. I'm going to keep it easy, okay? I don't want you guys to be struggling. I don't want you guys to be going through hardship, okay? Futures is a way different game, okay? The discipline required to trade futures is night and day compared to anything else, okay? Futures, you need that real hardcore discipline. High risk involved into it, but you get disciplined. You learn how to control your flesh. There's a high reward involved into it, okay? And you can make money very, very quickly, okay? So let's go and let's jump into futures. So what is a futures contract in the first place? So let's talk about locking in the price. So a futures contract is simply an agreement to buy or sell something
at a specific price on a specific date in the future. So let's say, for example, let's say a farmer grows corn, okay? And he's afraid that the price will drop before harvest. So he signs a contract today to sell his corn for $5 in December, okay? And no matter what happens, he gets $5, okay? He just traded a future, okay? Or a lot of people have been able to make money in instances like this. Say a price of something like eggs, okay, were to be increasing, okay? Some people were to buy futures and prepare for the increase and the cost of eggs, okay? So if you think the NASDAQ 100 is going to go up, the NQ, then you would go ahead and buy a long, okay? So a futures contract is being able to speculatively buy a directional bias and get paid based off of it. So you're buying whether or not, if you want to buy a contract for buys, okay? Or you can buy if you think something's going to go down, okay? So it's going to be two ways you can be able to trade futures. You can buy contracts, or you can sell contracts if you think things are going to go in a downwards direction, okay? So you can prepare for the future in whatever speculative direction. So what are we actually trading in the first place? So we're trading standardized contracts. So we rarely trade the actual physical corn or oil. We're trading the contracts, and it's standardized. So every contract is identical, okay? Has the same size, same expiration date. And that's what makes futures so linear. On futures too, you know exactly how much you're going to make and exactly how much you're going to lose due to the fact that the tick sizes, okay, which is how much money a futures contract moves, okay, it's going to stay the same. Okay, only thing that's going to ever increase is the amount of contracts that you're playing with. Okay, but as far as your tick size and as far as the amount of money per tick, that is always going to remain the same per whatever contract you're looking at. Let's talk about liquidity. So you can buy and sell these contracts in milliseconds. Now, futures gives you a lot of control in your hand in 1 second. Okay, you can instantly click buy, and once again, it gives you the ability to buy or sell and get some money based off a directional bias. Okay, so you have the ability to buy or sell and get some money based off a directional bias. Okay, so has a lot of self-discipline that comes into play when it comes to trading the futures asset. Okay, because you can instantly just get in and get out. Options, you got to go out, find the contract, etc. It's not that easy to just enter in a trade. Okay, but with futures, you can instantly just click buy or instantly click sell and be placed in a directional bias trade. Okay, so make sure that you know what you're trading, you understand margins. Okay, and what margins are is going to be the amount of money the futures contract is going to require. Okay, so say for instance you're trying to trade the S&P 500 futures contract, the ES. Okay, you're trying to trade the ES, then you might need at least $500, okay, inside of your futures account in order to open the trade. Okay, so understand that all the tick amounts are going to be the same, and as well as the margin amounts. Please look at the margin amounts on your broker before you start trading futures. And traders usually close the contract before the date arrives, so they never have to store 1,000 barrels of oil in the first place. So a lot of the times you're going to see an expiration date on futures contracts. Okay, so let's say for example you're trading the ES. Okay, you might see something like ESQ. Okay, and when you see letters, each one of the letters are going to represent different expiration dates. Okay, so let's go and let's jump into the next slide. And the main reason why people like futures in the first place is going to be the leverage. Okay, it's an extremely powerful asset class to be trading. Okay, but you can't blow the bag. You can't blow the bag. Okay, so you're going to be able to control more with less. Okay, so this is why traders really love futures. With other things, you got to deposit and it has more upfront cost in order for you to see some profitability. But with futures, you could really just deposit one time. Okay, you only need one small deposit, okay, to cover the margin. So make sure you look at it. It's going to differentiate per broker, so I can't just give you guys a solid answer. Okay, on the NASDAQ 100, in order to trade the NQ futures contract, one broker might require $1,000 in order to trade it. One broker might require $5,000 in order to trade it. Okay, so whatever broker you're trading on, make sure you're looking at your margin, okay, requirements, so you know how much money you need in order to trade in the first place. Okay, so here's an example. Okay, so let's say your contract, once again, okay, is requiring a $1,000 margin. Okay, let's say you're trying to trade gold. Okay, let's say you're trying to trade the GC futures. You're trying to say trade some gold. Okay, and the margin for gold, okay, is going to be $1,000. That means you would need at least $1,000 in your account in order to trade this futures. If you have less than $1,000 in your account, then what's happened is your account has the chance to get what's called liquidated. Okay, so if you need $1,000 in order to trade the asset class, you cannot go underneath that. Otherwise, your account is what's going to be called liquidated. Yes, futures is a leveraged asset, but that comes at the cost. You have to have the bare minimum amount in order to trade with the leverage. Okay, that's the other reason why people trade things like prop firm and stuff like that, is because they don't have the capital for the margin up front right now. But be patient and stack up that capital, because trading on your own live account really does help, makes things a lot easier, and you have full control over your funds, so you could feed yourself and your family however you want. You don't have time to be playing on other people's rules. When you want to withdraw your money after you win a trade, you should be able to withdraw your money. So I really recommend live account. Okay, get your life together, grind hard. Okay, work on your business, work on your job, level up, get some money together, and boot up a live account. Okay, I don't recommend you guys try and rush and go the prop firm route just to go ahead and avoid the margin. Okay, take your time, learn the skills. Okay, pay for some mentorship first, or sign up with a free call at stackmode.net, and I'll teach you guys how we could trade futures before you just start trying to boot up a prop firm and trying to just take any type of ghetto weird trades. Okay, because there's a lot of things that come into the futures market. Okay, especially on a live account, your margin is going to be the most important thing. If gold says that they need $1,000 in order to trade gold, okay, you need $1,000, okay, in margin, okay, which is the bare minimum requirement in order to trade the asset class. If you go under that, your account could be zeroed out, okay, or your account could go into the negatives, okay, if price action moves too fast and clips past your stop loss, if you have one, okay, and if it moves too fast and clips into the negatives, then you would have to owe the broker money, okay, and if you don't pay it back, then they could sue you, etc. Okay, so make sure that you're paying attention to the margin cost on whatever broker that you're trading on. Every broker is going to be different. Okay, gold might require $1,000 to trade on one broker, might require $5,000 to trade on one broker. Okay, check it out and make sure you're doing your research. Let's go to the next slide. So, up or down? Okay, let's talk about long versus short. Okay, the difference between the two. So, in stocks, shorting. Shorting is when you're betting on the price direction to go down. Okay, shorting means down. Okay, and longing means you think price is going to go in an upwards direction. Okay, so if you're speculating that the NASDAQ 100, gold, or whatever asset class that you're looking to trade is going to go in an upwards direction, okay, then what you need to be looking at is looking to buy a long contract. Okay, so you're going to be buying, okay, and going long. Since you think price is going to go up, okay, then you need to be buying, and that's going to be the long direction. If you think price is going to go down, you'd be shorting, okay, and you'd have to go ahead and purchase a sell contract. Okay, so go long, you buy a contract, and you'd profit if price goes up. And going short means that you're selling a contract, okay, and you're profiting if price is going down. And that can be for anything. Okay, I don't care if you're trading egg futures. If you think the prices of eggs are going to go down and you buy a short contract in egg futures, then inshallah you would make some money. So that's just exactly how it works. So because it's just a contract, you can agree to sell at a high price today, even if you don't own the asset. Okay, so do your research, and when you guys start putting the economy and your technical analysis information together, okay, because your economy information is absolutely futile to be looking at. You have to be looking at it. It's essential. Okay, it's very important to be looking at your economy information, the CPI, PPI, inflation rates, etc. Okay, seeing recent laws are getting passed. Okay, things like that have a big factor in where the market is and where it's going, most importantly. Okay, so put your economy factors and then get your technical side. Be like, you know what, are we at all-time highs right now? Okay, ask yourself some certain questions. Okay, am I ready to buy on this pullback? Okay, I'm going to wait market to go down, and then I'm going to buy back up again. Okay, take your time and strategically plot and plan your trade before you make any rash, wild decisions. Let's head over to the next slide, class. So the danger zone, margin. Okay, just like we talked about, margin can be dangerous. I don't want you guys getting sued. Okay, I don't want you guys getting served court papers or anything like that because you owe some money to the broker. Okay, and understand that sometimes your stop loss, okay, stop loss, that's what SL is, stop loss. Sometimes, okay, let's say you have your stop loss set at a certain price. Okay, if price decides to run past your stop loss too fast, you could end up losing more than you thought. Okay, so if you have your stop loss set for $300, okay, and price action moves fast way past your stop loss, okay, you could end up losing like 380. Okay, and if that goes underneath your margin requirement, also known as your maintenance margin, okay, which is the minimum amount required to even have the trade open. Okay, so since you're using leverage, you must maintain the minimum maintenance margin. Okay, so if you're trading the NASDAQ 100 on a broker and it says it needs $1,000 in order for you to have one contract open, okay, then you need to have $1,000. If you go under that, then you're going to face what's called liquidation, which is pretty much account death. And once again, if price action happens too fast, past your stop loss or whatever, you could end up losing more than you actually expected. Okay, and that could lead to, God forbid, a margin call. So if your trade goes against you and your account balance drops below the minimum, okay, the broker will automatically close your trades and take the rest of your money. Okay, so rule number one, never trade without a stop loss. Never trade without a stop loss. Okay, and it's very rare too that price decides to just clip way past it instantly and it fills you for a different number than what your stop loss was set for. But just know that it can happen. So it is good to have more money than your margin account. Okay, so if the margin or the maintenance margin requirements, so if the margin is asking for $1,000, okay, I would try and have like 2K. This way you guys can take some losses, etc., and you're not going to be panicking. So let's head over to the next slide. So the ticking clock. Okay, so unlike stocks, right, which you can hold forever, futures contracts actually expire. Okay, they have a time limit and they're quarterly a lot of the times. So most of them expire in March, June, September, and then you got December. Okay, and then we have rollovers too. Let's talk about rollovers. You might have seen this on your broker asking you if it wants to roll over contracts, etc. So if you want to keep trading, you must close the old contract and open a new one before it expires. Okay, so don't forget too, if you hold oil futures to expiration, okay, you're legally asking for oil to be delivered to your house. Okay, and brokers a lot of the time usually prevent this. Okay, so if you're just trading for pure speculative reason, which means you're trading off pure technical analysis and the chart, okay, then make sure you guys are closing trades before expiration dates occur. Okay, close the charts before the expiration dates occur. Makes things a lot easier and you're not going to have to stress out about anything. Okay, just keep your digital money and hop off, and then you could take that futures income and buy assets with it. Okay, take that futures income, buy real estate, buy real life stuff, do what you want. Okay, and cycle your money like that. So what can we trade in the first place on futures? So we got the big three. All right, the big three. You got the ES. Okay, the ES is going to go ahead and represent the S&P 500. Okay, and then we got the NQ. NQ is going to go ahead and stand for the NASDAQ. Okay, that's going to be the NASDAQ 100. Okay, which is going to be the powerful batch of tech stocks. Okay, and then you're going to have the YM. Okay, and YM is going to be for Dow Jones, also known as US 30 for any forex traders out there coming to futures. Okay, so you got the ES, that's the S&P 500. NQ is the NASDAQ 100. And you got the YM, that is the Dow Jones. Okay. So the big three, okay, those are really going to be the big three. And yeah, and then you're going to have things too, like crude oil. Okay. People trade oil as well too. And then you're going to have things as well like gold, okay, which is a precious metal. So beginners often start with micro contracts too. Okay, so starting with micro contracts change the whole ball game. It makes things a lot easier when you can scale down, okay, and risk less. When you risk less, you have a lot less anxiety per trade, and you could catch way bigger trades as well too, due to the fact that you don't have that fear of, oh, I gotta hop out the trade, I have so much size in right now. No, you can let the trade ride out, do its thing, and play properly. Okay, you can let market do its thing. Okay, you can let market actually cultivate itself, and most importantly, you could risk a little and catch a big move. Okay, and continue to keep yourself profitable and stress free, just like that. Inshallah. Let's over to the next slide. Breaking futures down, okay, from top to bottom is going to be extremely easy. Okay, so we're trading the U.S. stock market. The U.S. stock market, it's made to go in an upwards direction. Okay. And all of these stocks are put into one index, creating the futures indexes. Okay. So breaking everything down logically, if I head over to the stock screener, okay, and I have my market set to United States, okay, I can see the companies that are United States companies. I'm going to have companies such as Microsoft, Nvidia, Apple, Google, okay. The whole world is using iPhones. The whole world uses Google to search, okay. The whole world owns Microsoft products. Okay, the whole world orders off Amazon. Okay, and we have to also understand that these companies employ hundreds of thousands, if not millions of people, okay, all across the world. And these people are paying taxes. And the more taxes getting paid, the more beneficial it is for the United States government. So, of course, the United States stock market would be made to go in an upwards direction. Okay, so forget getting lost deep in the technicals, okay, because market is pretty easy to understand technically. It's just support and resistance and understanding where market wants to go. But understanding where market wants to go and why is going to be a big part. When you're trading the United States stock market, stocks are meant to go in an upwards direction year after year after year, because that's the baseline of the company. America is built off of strong companies. Okay, so take this area for example. You're going to have areas where market decides to bounce from the bottom from. Okay. As you can see this area here, market decided to bounce twice from this area. Okay. And as we know, whenever we see market bouncing within an upwards direction, okay, that's going to indicate that, of course, buying is coming into place. Okay. And when buying steps into place, that's going to let us know that that's an area of support. Okay, and we want to be looking at everything on our higher time frames first. Okay, so doing top-down analysis and looking at your chart on your higher time frames is going to give you that real bigger picture for absolutely everything. Okay, so start on your weekly time frame and then head down to your daily, then your 4-hour, and then your 15-minute. Okay. Your weekly time frame is going to be your bird's eye view. Okay. We need to zoom all the way out to see the true trend of the market, where stuff is heading to, okay, and how market wants to react on the higher time frame basis. Okay. The higher time frame is going to show us the true price action. It's going to show us where price truly wants to go, what it truly wants to do, and where the orders are truly being placed and stopped at. Okay. Your daily time frame, okay, you're going to use just to see a little closer for take profits. Okay. And then your 4-hour. We know the 4-hour is going to be really important because on the weekly and the daily, you can't see everything you need to see. So make sure that your electronic or extended trading hours is going to be enabled before you start trading futures. Okay. So now let me go ahead and pull up the futures chart once again. So now we understand what's inside of futures. Okay. We understand how it operates. Now let's talk about how to read the chart. Okay. So what I'm going to go ahead and do is start off on my highest time frame first. Okay, I'm on the weekly with it. Okay, so breaking down certain logical things. We know that market wants to go in an upwards direction due to the fact that it's the most beneficial for the United States economy. Okay, market wants to go in an upwards direction. Okay, it's the most beneficial for the economy. Okay, and the United States dollar is one of the most powerful currencies in the entire world. Okay, so our stock market is really, really important. We have innovative minds that build world-changing companies here. Okay, so putting that into perspective, we know that whenever we're trading the stock market or futures, as we can see on the weekly time frame, price is meant to go up year after year after year after year after year. Okay, regardless of how many new lows are being made, okay, we could still see price heading in an upwards direction year after year after year after year. That's because that's what it's made to do. The United States' backbone is built off of companies and work. Okay, so this is pretty much going to be looking at real life in chart form. Okay, so as more companies get created, as technology starts expanding, okay, etc., you could start seeing more money being pumped in to the economy. Okay, thus leading the index to go in an upwards direction year after year after year after year. Okay, so trading futures, a lot of the times you're going to be looking to trade longs. Okay, so what a long is means that you're going to be trading in the upwards direction. Okay, so futures, you get paid based off speculation, which means you get paid based off your directional bias. Okay, so primarily, since logically on the higher time frames, we see market going up year after year after year after year after year. Okay, we're going to go ahead and focus on buying up. Okay, since the market is made to go up, let's focus on the direction where the market is made. Okay, the reason why people short is Forex traders came on and influenced US traders, and people who are in the US are now trying to short. Okay, so you can see this is going to be the United States index, the NASDAQ 100, goes up year after year after year after year after year, almost undoubtedly. Now let me go and pull up some Forex. So I got Forex here. Okay, I can go back all the way back here on Forex. We can see that all-time highs is way higher than it is today. It does not work the same. Okay, the United States stock market is meant to go in an upwards direction. Forex is going to be a lot more sideways. So don't let Forex traders influence you if you're a United States stock market trader. Meaning if you trade options, if you trade futures or shares, understand that these companies are meant to go in an upwards direction. It is not sideways like Forex is. It is two completely different instrument and asset classes and has to be treated as such. Okay, now let's continue. Okay, so we know price is going to go ahead and hunt this all-time highs up here. Okay, price is hunting all-time highs. And let's talk about the V formation. Okay, so market will continue to head up in an upwards direction year after year after year after year. Once again, for the greater good of the world. Now, it's about knowing when to buy. So you don't want to buy when market is at all-time highs. Okay, because remember, we make money whenever we buy longs, which means we want market to go in an upwards direction. So in order to buy when and be profitable whenever market's going in an upwards direction, we can't buy at the tippity top, because then we're just going to eat the whole drawdown. Okay, so you never want to buy at all-time highs. Okay, never buy at all-time highs. Okay, so all-time highs is going to be the highest point into the market. Okay, you never want to buy at all-time highs. Not worth it. Okay, because then you're just going to get pulled back on. But understand that market always wants to try to make new all-time highs. Okay, so in that logic, let's put something together. That means that market will always want to hunt an area of resistance above current price. Okay, to try to meet it again and try to break it, or sometimes it might meet it again. Okay, and then price might decide to reverse hard. Okay, so this is why we want to go ahead and close at the area of resistance, okay, where market decided to fall down from in the first place at all times. Okay, all of our trades are going to look the same from now until we fall off the earth. Okay, until it's time to die, all your trades are going to look the exact same. Okay, we're going to focus on letting market make the top left of the V. Okay, that's going to indicate the area of resistance. We want market to fall down first. After market falls down, you want it to also make the bottom of the V. Okay, so you want market to do two things for you. Okay, you want it to make the left side of the V and the bottom of the V. Okay, the left side of the V is going to indicate where it decided to start falling down from. Okay, so the left side of the V indicates where market decided to start falling down from. And the bottom of the V is going to go ahead and indicate whenever price wanted to stop falling and catch itself. Okay, and whenever market stops falling and catches itself, okay, that's going to indicate an area of support. So support equals buying. Okay, support equals buys. And the top left of the V is going to go ahead and equal resistance. Okay, resistance is going to go ahead and equal selling. Okay, sells. Hence why market's going in a downwards direction. And then once people start buying, longing, okay, buying and longing is the same thing, then market's going to start going in an upwards direction. And understand that logically, okay, because market wants to try and always make new all-time highs, we can put some logical perspectives together. Okay, we can understand that wherever market decided to fall down from, market will eventually try and reach that area again to smash past it, or reverse from the area to try to smash past it again. Okay, so understand that wherever market decided to fall down from originally, okay, wherever market fell down from, it will try and recover too. I don't care what it is. Okay, wherever market fell down from, I don't care if you're looking at futures, stocks, options, whatever. Okay, wherever market fell down from, if it's a half decent asset that people invest into, it will try and recover and break past where it fell down from every single time, because that's the greater good for the economy. Okay, the stock market isn't just going up to go up for no reason. Okay, so I don't want you guys to just be faked out, and I'm not going to be just showing little 15-minute breakdowns of structure and this and that. Understanding the true logistics between everything is going to give you a lot less anxiety when you're in your setups. You're going to have so much conviction, you're going to have so much understanding, and understanding that, you know what, price has to go up. It's logically meant to go up. Price already sold off, buying has stepped in, price is going to go ahead and meet up to the area where it sold off at to try and break into new all-time highs. And you continuously farm that logical structure. You continuously take the same setups. Okay, when you see the staircase stock chart emoji, okay, understand all you see is market going up, pulling back, going up, pulling back, going up, pulling back. Okay, and when you see market making these higher lows, okay, this low is higher than this low. Okay, this low is higher than this low. Okay, we got this low is higher than this low. Once you start seeing market making higher lows and breaking previous all-time highs, okay, you know you're trading a good asset class. Okay, that's going to be an asset class that you want to be focused on primarily, because all you have to do is wait for market to make these little pullbacks. Okay, please pay close attention to this drawing. Okay, that's exactly how market works. All market does is go up, come down, then go back up and break where it previously fell down at. Okay, and take advantage of that. Wherever market previously fell down at, it will almost always want to meet it, because it has to break it in order to make progress. So wherever market decides to fall down at is going to be your take profit. Okay, so your take profit, which is when you close and you get your money, that is going to be wherever market decided to fall downward at. Okay, wherever the left side of the V was created is when you're going to take your profit, because we don't know if market always wants to break into new all-time highs. Okay, market could easily come into the resistance again, okay, and fall down extremely hard, okay, and then break one day again. But still, you don't want to eat the whole fall down. Okay, just take advantage of the logic that's there. Understand that the right side of the V wants to be filled, Price wants to recover from where it fell down from. Okay, it may not want to break it immediately, but understand that a lot of the times it will want to at least recover from where it fell down from. And that window of price recovering to where it fell down from is our money window. Okay, that's going to be our money window. So using all of our time frames and seeing everything and doing our top-down analysis is going to help us put it all together so that we can make the right profitable decisions. Okay, so let's go and let's keep going here. So take here. Okay, even if I'm on here, let's say I start on my weekly. Okay, I know price wants to come up to this all-time highs. Okay, we just went ahead and broke down all the reasons why. Okay, I can see we're not at all-time highs right now. If you're not at all-time highs, okay, there could be a chance to get a trade in. If you're not at all-time highs, there could be a chance to get a trade in. If you're at all-time highs, you do not trade. Do not trade at all-time highs. Okay, we need market to make the left side of the V, let market pull back, okay, make the bottom of the V, form support, and then we catch the right side of the V right back to where it fell down from. Keep it simple. Keep it simple. Some of you guys are making market way too difficult. No need for all this weird stuff on the 1 minute. No weird terms like the silver bullet. Just understand that wherever market fell down from, if it's a profitable asset class, okay, and the whole United States runs off of these futures, okay, if you turn on the news and you look at the bottom left, you're going to go ahead and see it tracking futures, okay? The whole United States runs off of the stock market, okay? So understand that. Once you understand that, you can easily just start using your higher time frames and making a lot better decisions, okay? So even here on futures, if I wanted to do something like this, okay, you could easily make your trades, okay? You could easily put down a trade, okay, and just catch it all the way to all-time highs, okay? And catch the whole thing. You know price wants to go ahead and fill all the way up here, okay? But even if you didn't do that, say you didn't have enough margin, right, to hold overnight, right? Here's what you would do, okay? What you can do is hop on your daily, okay? If you wanted, you could put your, depending on how big of it is, depending on how big of a stop it is, saying have your stop loss set, okay? Find a good stop loss that works for you and your account, okay? You can go to your 4-hour time frame after your daily, and you want to find yourself a support candle, okay? Find yourself a support candle if you can, okay? Whether it be this one, okay, this one, okay? Try and find yourself support candles, okay? Then from there, go ahead and just read the structure, okay? So we can see market is making higher lows. Why? Because I'm looking at the support candles, okay? So I'm seeing each of these support candle conjunction areas heading in an upwards direction, okay? Time after time after time again, okay? So it's letting me know that, okay, this asset class is definitely bullish, okay? This low up here is higher than this low, okay? This low up here is higher than this low. This low appears higher than this low. This low appears higher than this low, okay? And you keep taking your formations like that, okay? Now, I can go to my 15-minute time frame, okay? And I can see everything more logically for what it is, okay? So I can see here, actually, I'll stay on my 4-hour for a second, okay? We could see price decided to come in contact with this area here of resistance, okay? We could see price wants to come up here first on the 4-hour, okay? So what I'm going to do is go to my 15-minute, okay? And I want price to show me bullish structure, okay? So this is exactly what I mean. So price decided to make the left side of the V here on the 15-minute, okay? And getting on the 15-minute is where it gets nitty-gritty, okay? It's really turning on your Sharingan, making sure you can see everything that you need to see. And putting that same higher time frame logic on the lower time frames is what's going to make the world of difference, okay? So go ahead and get on your lower time frames after you've done your highest time frame analysis, okay? I'm trying to make you guys the best traders in the entire world because it's not that difficult, okay? After I touch $1 billion from this, so many free guys that's going to be out for you guys, okay? Because it's not hard. It's just you have to get your psychology down packed, inshallah. So look, you could see market decided to make the left side of the V here on the 15 minute. Okay, so on the higher time frame, this is the ultimate beginning of the V, is up here on the 4 hour. Okay, we can see market topped out right here before it decided to fall down. Okay, market decided to fall down all the way down here. Okay, found an area of support and then started to make some higher lows. Once I start seeing things like higher lows come into place, I'm like, oh yeah, we're trendy. Okay, because market doesn't want to go past these supports. Okay, look at this line right here. Okay, let me go ahead and change the color of this. So if you look at the yellow line, you can see market has these 2 wicks that did not want to go beneath. Okay, now we have this line up here, did not want to go beneath. Okay, and then we have the support accumulation zone up here. Okay, and price looks like it wants to hold this area right here. Okay, price looks like it wants to hold this area very, very confidently. Okay, price looks like it found another area of support right here. Okay, so I can start seeing here, I have my 4 hour wick and I have a 4 hour close above the zone. Okay, so I like that. Okay, I have a 4 hour candlestick above the zone and I have a 15-minute candlestick above the zone. Okay, so I can see that market is trending, okay, in upwards direction. Market fell down and it looks like it's trying to make the V right here, so then it can go in an upwards direction from here. Okay, and at least hit this resistance. Okay, and this profit window is what we're going to use in order to make our trade. Okay, then from there you'd be able to pull out your risk to reward tool. Okay, this would be long position. Okay, you could put your stop loss below this area of support if you wanted, and then take profit would go ahead and be the area of resistance up here, and we play this for a 1 to 2 about. Okay, so you play this for about a 1 to 2, catch your trade and hop off. Okay, or even if you wanted to play the take profit up here, you could play this one too. Or if you had multiple contracts, you could do it like that. Okay, but if you just wanted to play the first 15-minute V structure after the higher lows were created, then you could go ahead and get in just like that. Okay, so it's doing that top-down analysis, seeing everything, okay, and then catching the V structure, even on the smaller time frames, breaking everything down and seeing it for exactly what it is really going to help you put things into logical perspective and help your trades over time. Okay, so we could see market decided to make the main V here. Okay, so starting off on the weekly, okay, we got all-time highs. Okay, I can see market decided to make some higher lows here, even on the weekly. Even on my daily here, I can see market made the top of this main V up here all-time highs. Market fell all the way down and made the bottom of the V on the daily. Now I'm going to go to my 4 hour time frame. Okay, and I can see market deciding to do its thing. Okay, market's deciding to trend in an upwards direction, and I can see all the higher lows on a smaller time frame for exactly what it is. Okay, I can see that market decided to make this area of resistance here, fell down, but it's still trying to trend up to fill in this V right here. Okay, and ideally it wants to fill in the whole V. Okay, so what we can do, I could get on my 15-minute time frame here. Okay, and I can open my trade. Okay, catch my 1 to 2 and catch it up here, or I can move my take profit to up here if I wanted to as well. Okay, and keep my stop loss as this support right here. Okay, and have the take profit as the final V all the way up there. Okay, so it's just about knowing when to enter. Okay, so on your 15-minute, you want to make sure that you're seeing that recent support structure. Okay, and you want to make sure that you're buying when everyone else is buying. Once again, let me repeat that one more time. You want to make sure that you're buying when everyone else is buying. Okay, so if market right here just made the left side of the V, okay, and then the bottom side of the V already got made, so market already dumped down and it already made a bottom. Okay, what direction is it most likely going to go into from here? Buys. Okay, because people already sold. Okay, and the low already got formed again. Okay, and understand that this asset class also has laws in place to make sure it doesn't flash crash to zero, the short sale restriction. Okay, so don't expect more markets going in a downtrend for it to last too long. Okay, because people are going to be fiending to find a new low to buy it again because they know it's going to go up year after year after year. Okay, so on futures, primarily try and focus on the pullback formations. I'm going to go ahead and pull up the S&P 500 futures, known as the ES. Okay, let's go ahead and let's cover this and break it down. So what I'm going to go ahead and do, just like we talked about, is I'm going to start on my weekly time frame first. Okay, then I'm going to go to my daily, then to my 4-hour, and then to my 15-minute. Okay, then to your 15-minute finally. Okay, so what I like to go ahead and do is ask myself, are we at all-time highs? We cannot trade if we're at all-time highs. Okay, we just can't. We want market to pull back first, and then we take it back up. Okay, don't trade at all-time highs. Don't do that. Don't do that. Don't short, don't long, don't do nothing. Wait for market to pull back and then take it back up. Okay, wait for market to form. If there's no resistance above current price, do not trade. Once again, if there is not resistance above current price, okay, if you can't get on your time frames in market area of resistance above current price, like right here, okay, then you shouldn't be trading. If market's way up here and there's no resistance above current price, you're gambling. Okay, you're not playing logically. Okay, market works in structured formations. Okay, you know market wants to come up and head to this area of resistance right here. As you can see, market decided to make this bottom right here. Price went all the way up from this bottom and stopped up here. Okay, after it stopped up here, it decided to make it flash down all the way to this low. Okay, so this is a pretty strong area of resistance. If it can make it flash for about a month downwards, okay, that's a strong area of resistance. Market wants to dust off its knees, throw on its gloves, and get ready to fight again. Okay, it doesn't want to lose at this area. Okay, so after it lost the fight once and it fell down, it's ready. You know, it's ready to go back up and fight again. So always think of market as a fighter. Okay, after it got knocked out, punched in the teeth, all their teeth on the ground. Okay, they come back, mouth guard in, gloves in, training sessions done, and it's ready to try and fight and break the new all-time highs again. Okay, so it's real life too. Okay, there's going to be seasons where you're dumb up, but when you fall down, are you going to panic? Okay, and trading's the same way. If you panic sell while market's falling in a downwards direction, okay, instead of just waiting for market to bounce at a certain low and then buy then you're going to get your results. Okay, so when you're drowning, you're falling down, you can't panic. Okay, you got to wait, catch yourself, and then go right back up. Okay, so right here, even logically, I know price wants to reach this area of resistance. Okay, price is upset that it fell down from here. It almost can't believe it that it lost. Okay, it lost at this area right here, and sellers stepped all the way in, stopped buying from here. Okay, and market's like, hold on, you know what? Who said sellers could step in right there? Okay, it doesn't like that. It's going to try and break past that area and do it over and over and over again until we die. Okay, that's just how it's created. It's how it works. It's welfare sitting here for us. Sitting here. Okay, all you have to do is plant your seeds. So boom. So market is going to go ahead and chase this main V up here. Okay, and I can know that because one, market decided to bottom out after making that heavy fall down. Okay, and we're almost fully recovered here too. But I can also see market making on my 4-hour higher lows. Okay, so I can see that this low is higher than this low. This low is higher than this low. Okay, and I can start seeing this low even here too. Okay, and then let me get on my 15-minute time frame. Let's check it out. Okay, so I'm on my 15-minute time frame. Let's see everything a little bit more logically. Okay, even right here, this is going to be an area of support here too. Okay, that's a very recent low. Okay, and we could see, okay, price decided to fall downwards recently. Okay, price recently fell down from this area of resistance here on the 15-minute. Okay, so what we need is to see market hold an area of support and see if it's really for true. Okay, so after market decided to fall down from this area right here, okay, it came down and it looks like it made this kind of candle right here of support. Okay, so after a heavy sell-off, you want to see, okay, did the market try and bounce from that at least? Okay, so we could see even right here for this top, okay, market decided to have a heavy sell-off, but it decided to find a low right here, correct? Okay, market decided to even come down and test it in the same area. Okay, so I want to see, okay, is this a higher low? Okay, this low right here. Okay, I want to see if this low is a higher low than this low for real. Okay, so what I want to be waiting for is I want more 15-minute candlesticks that are green filling in the right side. Okay, so I can see this low right here is real. Okay, you know this low is real because outside of the zone, okay, you start seeing green candlesticks heading up in an upwards direction, buying multiple green candlesticks in a row. Even down here with this low, okay, you know this low is real because you start seeing green candlesticks heading in an upwards direction, ready to fill in the resistance gap. Okay. But we could see here from this low, okay, it's just a wick. Okay, after this, it's red candlesticks, green, red, green, red, green, really choppy. Okay, really choppy. Hasn't started fully trending yet. Okay, has not started fully trending yet. Okay, after market found this low, green candle, green candle, green candle, green candle. You start seeing them rapidly success in a V direction. As you can see, it decided to kind of make this wick, but then a red candle, and then a green, but then red dojis, and then not really consistent. So I don't even know if this low is real. Okay, so I'm not going to take the trade here yet. Okay, I'm going to wait for more 15-minute candlesticks to keep heading in an upwards direction. Okay, I want to see price fully give me that V curl. Okay, one thing too, especially when you first start off and it's helping you eyeball, you can draw trend lines too. Trend lines, like when you first start, could help you out too. Okay, it's really just knowing where the area of resistance is. Okay, so look at where price decided to start falling down in the first place. Okay, so price started falling down up there. Okay, in this area up here. Okay, from there, you could draw the trend line off of that. And a lot of the times, by the time the trend line gets broken, it'll let you know if the area of support is real for the most part. Okay, but that's why trend lines work, because price is confirmed. Okay, but you have to close at the area of resistance above current price. Otherwise, it's all going to be shambles. Okay, it's not going to work how you want it to. Okay, so even with here, honestly, it's been a couple minutes, honestly. That's why I like to wait for multiple 15-minute candlesticks. So you have this low, and then you have a bunch of candlesticks above the zone too that's closed. Okay, so you could either wait for the trend line to get broken and then enter, and then stop loss could be under the low and take it up to the high. Okay, and it's about knowing when to buy. You buy directionally. Okay, you want to buy after market sells. Okay, we just play logically. Buy after market sells. Okay, that's it. You buy after market sells, and that's literally how you trade. Okay, that's how you trade the United States stock market. Okay, is you buy after market sells off. Okay, after it sells off, then you buy. Okay, so even this here too, like, yeah, you could avoid a fake out if you wanted to just wait for the trend line, honestly. Or you could take your chance and see if this low is pretty real. We're starting to get some more 15-minute structure here that I like. Yeah, and we could either do that, or I really like this too, though. We have a kind of higher low being formed here on the 15-minute. So a lot of the times too, you see how this area of support got tested like twice. So sometimes it'll do that. Take like a price like right here. We got two 15-minute candlesticks stopping in the same place. Okay, after I see something like that, that's going to let me know, okay, price doesn't want to break below the support. Okay, giving me way more conviction. Okay, price would have broke below the support if it wanted to, not bounce at the same place. Okay, once I start seeing stuff like that on my 15-minute, for sure, yep, I can go ahead and I can get in right here if I wanted to. Okay, stop loss underneath this low. Okay, and then take it all the way up here. Okay. Yeah, for it's a 15-minute time frame. So yeah, this could be like overnight. Could be a couple days. Yeah, for sure. A couple days at max if it's choppy. but a lot of times it'll be like a couple hours. So yeah, and then you just take that structure and you just keep taking your trades. Just keep taking your trades, okay? And this is a very small stop loss here. It's 37. Let me go ahead and log into my paper trade here to break down the math. Okay. So boom, you'd be playing for about 108 ticks. Okay. So this is a really, really good trade. Okay. So you're only risking, okay, let's say you're on the micros. Okay, you'd be risking $45, right, to make 135. Okay. So that's over double your money. Okay, and this is a pretty small take profit. You could definitely take this take profit up here as well too, if you feel comfortable holding a little longer, for sure. Okay. So if you wanted to take the take profit up here, okay, that would be playable up here as well too. Okay, so you'd be risking $45 to make 180. Okay, and just wherever market decided to fall down from, it'll want to return to. It will want to return to almost every single time. As long as you're trading, whenever market is making higher lows, okay, understand that market is always going to want to fill in and return and try for vengeance again from where it fell down from. Okay, wherever market fell down from, it's going to try to recover. Okay, it's going to try to recover, and keeping that perspective is really going to help you. Okay, after market makes its low and falls down, okay, let market make its own area of support. Okay, and we can see on the 15-minute here too, once again, areas of higher lows being formed. Okay, I have this area right here. Okay, I like this candle a lot. After that, price went all the way up. Okay, fell all the way down and then made this low. Then price went up. Okay, came down and then made this low. We got two 15-minute candlesticks chilling in the same place here. Amazing, amazing area. Okay, so I wanted to stop loss underneath this area of support since we look like we're trending here. Okay, and then take it up to this area of resistance. Okay, for the whole formation fill. Okay, and it's about just waiting for pullbacks, taking the trade. Wait for a pullback and then take the trade. Okay, and being as patient as possible is really going to be the determining factor versus profitability and just unprofitability. Okay, and buying during trending times. Okay, because you can't just live on your 15-minute time frame and try and do things like that. Okay, it's still important to do the whole top-down analysis. Because we did the top-down analysis, I was able to understand the 15-minute time frame structure a lot different. Okay, because the 15-minute, if I just pull it up, it could be a whole different story. Okay, but when we're on our higher time frames, we can see everything for what it is. We can see that this is a bullish asset class year after year after year, and all we got to do is buy the dips and catch the sweeps back up. Okay, and that's it. So get ready to rumble, traders. Okay, if you guys want more help with futures trading, okay, whether it be education, technical analysis, or anything, head over to stackmode.net. You guys can book a free call with me. I got free courses, free ebooks for you guys, and there's just too much information out there, okay, that I really try and give you guys to help you get profitable, inshallah, if God wills. Okay, and let's break down these things. Okay, understand that leverage gives you a lot of power. Okay, but you gotta be in control of this. This could be a really good thing or a really bad thing if you don't have it down packed. So make sure you study yourself as a human. Make sure you're aware of your emotions and don't crash out and make irrational bad decisions. Okay, and liquidity gives you speed. Okay, when everyone is buying, okay, you're gonna start seeing price action flood in a upwards direction. When everyone's selling, you start seeing price action flood in downwards direction. Okay, and risk management is the thing that's going to keep you alive. Okay, and your risk to reward. Okay, so if you're risking $50 a trade, you need to be at least trying to make 100 to 150. Okay, if you make 100, that would be a 1 to 2 risk to reward ratio. If you make 150, that would be a 1 to 3 risk to reward ratio. Okay, and focusing on your risk to reward ratios is how you're going to become profitable. It's all in the math. So if you're making more than you lose consistently, you will become profitable. Okay, and start with paper trading and start with mentorship first. Okay, so head over to stackmode.net. I love you guys so much. Keep grinding, stay prayed to God, and I'll catch you in the next one.
Peace.
"2026 is here. Let's turn up." I want to talk to you guys about a couple of things. Let's talk about how we're going to focus this year, how we're going to stay consistent this year, how we're going to achieve our goals this year. It's not going to be any old year. So, traders, consistency is going to be one of the main things that is going to determine whether or not you're going to be successful or not. If you're not consistent, if you're not on these charts taking the same kinds of setups year after year after year after year, month after month after month after month, week after week after week after week, you will not win in this game. If you're taking this kind of setup this week and then this kind of setup that week and then this kind of setup this week, it's not going to work out for you most likely. I want you guys to be successful, and you have to be consistent in order to get there. Big giant oak trees do not get in the sky without consistent sun, a consistent water, good soil underneath it. The things that come into play, such as your account going in an upwards direction, a lot of that is really determined based off of how hungry you are, how consistent you are, how bad you want it. If your account is going in a downwards direction every time you boot it up, every time you put in $1,000, boom, you blow it up. Put in $2K, boom, you blow it up. You're not hungry for it. You're not hungry for it, because I'm telling you, when you're hungry for it, you got bills to pay. You got debt to clear off. You want to live the lifestyle that you want to live. You don't got time to be playing around. You don't got time to be playing around with the setup. You don't have time to destroy your account doing anything. It's really important to stay focused this year, man. I want you guys to see success. I don't want you guys to stay in the same loop. And being consistent is where it's going to start. Inshallah, if God wills, you guys are going to see a whole different level of consistency from me. Lots of content coming out. Educational, good content that I just want to consistently pump and make sure that you guys are knowledgeable, so you can start feeding your families and pay your bills and live the life that you want to live. You could drive what you want to drive. You can get the house you want to get. Just wake up, pray to God, and take the same kinds of setups that you need to take. If you're trading the United States stock market, understand that, one, the stock market is meant to go in an upwards direction. The more that these companies have funding-wise, the more employees they'll be able to employ. The more employees that a company has, the more money that the government makes, due to the fact that more taxes will be garnished from the wages. Okay, we have to keep all of that into play, keep all of that into mind. So stack your money up, stack your cash hard. And after that, invest into some crypto, invest into some stocks, run up money and invest, run up money and invest. Okay, even if you're swing trading, I really recommend swing trading. I don't care if you're on crypto, if you're trading futures, if you're trading Forex, if you're trading options, all instruments. Okay, some of you can get good at day trading, you can run it up, but there's a mental health underlying side to day trading that people don't talk about. There's times I've been able to make some great income day trading. Okay, and there's been times I've also lost some good income day trading. But the times I was able to make some good income, I realized that it just wasn't worth the mental health or the stress. Once I started making equivalent amounts just swing trading, sitting and holding, waiting for the real plays to sit in. And you got to use your higher time frames this year. No more lower time frames. All that 1 minute scalping, that 5 minute scalping. If that's not working out for you, it's time to stop it. If it's not going well for you, it's time to stop it. We can't repeat the cycle. One thing we're not doing this year is repeating the cycle. If you were taking setups last year that weren't working out, stop taking them. It's time to switch up the game and start taking a new kind of setup where you can have a more successful win rate. Your win rate should not be bad. That's not something I believe in, and I'm not going to sit here and tell you guys that. Like, oh, you can have a low win rate. Your win rate should not be that low. Your win rate should not be that low. If your win rate is that low, you're not studying the charts enough. You got to be living on TradingView. I'm telling you, my first couple years coming up in this game, I lived on TradingView, and I still do to this day. Every day I try and stream teaching mentorship for you guys live, etc. Okay. Working with clients. You guys can head over to Stackmode.net if you want to book a free call with me, and we'll talk about how you can get into this Stackmode mentorship program. Okay. But working with my clients every day, booking my calls, doing what I need to do, staying consistent, staying focused. Thank God is letting me level up. It's letting me get to the next level. My portfolio is growing. I'm starting to see tons of more positive returns. My swing trades are working out, and my long portfolio is also working out. Thank God. So putting your grind forward, don't ever retrace your grind. I don't care how much money you lose. You can go to zero. Don't ever go backwards. Your grind needs, you need to only go harder. Your grind needs to only be forward. Then we don't got time to go backwards. All that anxiety, all that sadness, all that depression, we don't got time for that. We got people to take care of. You got to take care of yourself. We waking up, we praying to God, we're working out. You got to work out Monday through Friday. You got to work out Monday through Friday. All that waking up being lazy, all that getting up late, all that not wanting it, all that taking ghetto setups. We're not taking ghetto setups. We're taking the real setup. If you say you're going to wait for the higher lows to form and close at the area of resistance, that's what you're going to do. Don't lie to yourself and don't sell yourself short. It's time to change things around, and it's time to be more consistent than ever. Nobody is messing with you. You're the one. You got this. You got this. All those people in your ear that are hating on you, all those people who weren't believing in you, you don't even got to pop it on them. But you can prove to yourself, you know what? God made me for a reason. I'm strong. I went through all that for a reason. All those trials and tribulations you went through, all that money you've lost in the past, it's over now. Let's turn up. It's time to catch these setups. It's time. It's time. It's time to invest in this crypto. It's time to stack up these stocks. It's time to invest in the correct plays. Okay, cool. AI is the future. What AI stocks are coming up into play? Let me get my money in a position to where I could still catch my swing trades and funnel some of that money into more long-term plays, so my money is always flowing and cycling. I don't keep my money in a checking account. For what? I'm investing. If I'm going to call myself an investor and a trader, I'm here to show you guys that I want to be one of the best financial coaches in the entire world. I'm 22 right now, and after I plan on doing some things, I'm working on the app for you guys right now at the time of this video. Should be out soon, inshallah, if God wills. And I got some more books for you guys. I already wrote one, Key Steps to Profitability. You guys can get that at Stackmode.net. It's free, my free course. And I'm working on some new books too, the How to Stack series, how to get halal money, you know, how to get clean money. I don't want you guys scamming, robbing, doing all that dirty stuff. We don't got time for that. We got to make God proud. We got to make ourselves proud. We got to be happy when we wake up in the morning. We got to make sure people respect us, and we got to respect people. So in order to respect people, we got to all be on the right path. That's all I'm getting on this net, to just try and just convey a little piece of the message that I can. You know, whoever's hearing this, I really care about you. I want you to win. And just know, hard times, I've gone through them too. There's times growing up, living in hotels, lying to my friends about where I live at because I'm embarrassed. Okay? We've been able to come a long way. My first car was an Audi. First car was the foreign. After that, I bought a little Mustang coupe. You know, even when people, my Audi coupe, it was parked. You know, well, I think it was a sedan. But my Audi, it was parked, chilling. And I went through some hard stuff. They lost my keys. I took it to the little repair shop to fix something. Got scammed for like $9,000 or something like that. That's actually how I started trading a little after that, because I was like, well, I need some income. So started trading after that. And they lost my little keys too. So after that, I couldn't turn on the car and take it to the Audi dealership because the guys at the shop couldn't program the keys even though they lost it. So after that, it was just really frustrating. I looked for the keys every single day, never found them. Never found them. But I thank God that I didn't. Ended up towing the car to the Audi dealership, got some new keys, Guess what? Took the car home, was ready to try to get it up and running again. I wake up, I come outside, guess what, guys? Literally, I wake up, saw my car totaled. And I was like, okay, I just went through all that, getting stopped in the middle of the highway since the car just turned off after paying us the giant bill in repairs. I just wanted to drive my little foreign in peace. But during that time, I wasn't the most humble. This is what made me get close to God. I'm not out here just talking about God for no reason. There's things that I've gone through within my own life. And I want you guys to just understand certain mental frameworks and understand where I'm coming from. I don't just think I'm the most perfect person ever. Definitely not that. Only God is perfect. But so I just want to come on here and always be vulnerable, tell you guys my faults, and just be human to human with you guys. I'm not out here preaching like I'm better than you guys or anything, and I'm not preaching at all. I'm just trying to convey a good message because I don't want you guys to go through the frustrations that I've gone through. There's been times where on futures, I've booted up my account with the entire work check and lost it in the entire day, which caused me to take out a loan, which caused me to get sued, etc. So a lot of stuff I had to figure out, guys. And I'm not on here passionately yelling at this camera for no reason. It's because I don't want you guys to go through financial hardship, especially when life is already life. I'm not going to say life is difficult because it doesn't have to be, but life is life, and finances, I think, is the one thing that should be pretty much at ease. Like God talks about in Quran, spend moderately. It's really important to spend moderately. Keep your money invested. Keep it in the asset river. The asset river is really just amazing. It's a lot of books I really want to write for you guys. I love it so much. I love everything about just the whole self-improvement aspect of life. And I'm just really grateful to God we can go forward, change ourselves, change our mindset, get better. And 2026, we don't have time for stuff. If you've been arguing with your loved ones and stuff like that recently over the holidays and stuff like that, we don't have time for that. Let's ball. Let's pray to God. Let's be healthy. Let's get in the best shape of our life. Let's get a haircut. I'm saying change your hair up if you're feeling that. Okay? Cut it a little different. Change your style up. Maybe grow it out if you want. You know what I'm saying? Grow your beard if you want. If you're a woman, change up your hairstyle if you're feeling that. You know what I'm saying? Go natural if you're feeling that. This year, we got to do things different. We can't do the same things that we've been doing and expect different results. I'm not going to lie. That's truly insanity. And anytime that I notice myself or catch myself in that cycle, I thank God I'm able to break that, okay, and progress and go forward. I want you guys to be seeing beard mode Chris here, man. When you guys see beard mode Chris in full effect, I'm on grown man timing. I'm on grown man timing right now, but I'm trying to mature for you guys. That's why I even want to go out of my way to get my finance degree and get certain things just to show you guys how serious I am about being one of the best investment and financial coaches in the entire world. I'm just passionate about this. I'm passionate about making sure people don't go through poverty. I didn't grow up in the worst environments. It wasn't the most horrific times of poverty, but just having to grow up and be away from my mom, for example, because she has to work to keep a roof over our head, and may God bless her soul for that. My mom, shout out my mom. Shout out you, Mom. I love you. And shout out my mom. And I'm sure you guys can understand, too, if you guys just have a hard-working mom who just really tried the best for you. You may have not had everything that you ever wanted, but that's a good thing, actually, because it makes you be more human when you're an adult. Makes you mature, makes you grind, and it makes you be more tenacious. If you're trying to catch these setups and you're trying to be locked in, and if you want what you really want, you have to catch these setups correctly. I'm telling you, if you truly want what you want out of this world, you have to pray to God and you have to be consistent. Because I'm telling you, if you're not right with God, you're going to blow all your money doing stupid stuff or living a lifestyle that you shouldn't be living, which will either lead you broke or dead or in jail. And that's not what I want for you guys. Or prison. And I promise you, I really care about you guys. There's a reason why I give that first call for free. I really care about y'all. I do not want you guys out here messing up, because I grew up with a really good mother. And my mom taught me a lot of avenues and a lot of mental frameworks that helped me be where I am today. So shout out my mom. And I realized that the things that my mom taught me because of what she's gone through helps me be the man I am today, you know. And my mom is an extremely strong woman. She comes from raising herself in the Bronx. I was born in the Bronx, New York, but my mom comes from raising herself in the Bronx, from coming from an island to American soil, to just grinding and hustling, to getting her degrees and just really making a life for herself. And watching her do that over the years, it helped me build my standards, you know. Like, I got 2 doors in my car right now. So, you know, but as I mature and become more grown man, you know what I'm saying, I'm in beard mode. I realize I got to get an SUV because I got to think about my family, okay? I got to think about my family because that's one thing my mom always did, was she thought about her family. And when you keep God first and you're hustling for your family, you're most likely just going to live an excellent life, inshallah. You know, I don't know everything, so I'm not going to say most definitely. But, and not everyone has the best family too. So that's why I'm going to say most likely. I don't know everyone's family situation, but if you have a good set of loved ones around you, even if you have to go out in the world and create your own family, but if you have your own family that you've created or found, or good friends, just good loved ones, cherish them and take care of them and go hard for them. Catch these setups for them. Take these setups serious, guys, please. I'm telling you, you could change everything around you if you just lock in. And I know it's that typical cliche, just lock in and grind, but like, no, it's actually not. It's that simple. The reason why it's repeated so many times is because it's the truth. It's just the truth. Okay, just literally lock in and be consistent. Just be a ferocious animal about your work. Treat people kind and worship God, and just watch where you'll be at by the end of this year. Your work is your setups. Okay, and outside of catching these setups, don't be sitting there looking at every candlestick like, oh my gosh, it's going up. It's going down. It's going up. It's going down. You can't go through cycles like that. That's cringe. And yeah, you gotta occupy your time. You say, I got my ring on. Shout out my wife. You know, she gave me this. But, you know what I'm saying? Even if you want to, you know what I'm saying, have a conversation with your loved ones. Grind hard. You know what I'm saying? Send some emails out. Do something. Grind. Get a job. Like, do some business. Like, literally do anything but stare at the setup tick after tick after tick. Set your alerts at take profit. Analyze if the setup is decent. If it's good, okay. Set your alerts. After that, what you need to go ahead and do is just wait, bro. Wait. Ring, ring, ring. Alert goes off on your phone, and you're decent, man. Don't trip. Some of y'all be tripping. I used to be tripping bad. I used to be tripping real bad. I'm not gonna lie. I used to be tripping horribly. I used to be on the charts tripping, watching every dollar move. And like, you can't do that. That's cringe. Like, just go grind. That's why I dropped that other video the other day. Just keep grinding. Literally keep your mind, after you enter your trade, keep your mind off the charts. Like, even if you're making content about investing and trading, like, don't look at the setup. Just keep hustling. Keep grinding, 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 keep grinding. I swear, keep grinding, keep hustling. You gotta love it. You really have to love it. And I know there's so many people out there, especially the people watching this channel, inshallah. I know you guys love grinding. You guys love hustling. Do more. Whatever's in here, whatever God bless you with, whatever wisdom God bless you with in here, you might be one of the best shoemakers in the world. We're waiting on you. We're waiting on you. We're waiting on you. I got on my wife's Birks right now. All right? I'm in the car just chilling. I'm waiting on your shoes. The world is waiting on you. Some of you got some of the craziest ideas and you just trap it in here. We're waiting on you. You could drop the best, fluffiest robe in the world. I will probably cop it. I'm waiting on you. The world is waiting on you. The world is waiting on you. And you gotta show up. The world is waiting on you. Stop living in consumerism. I'm not not pushing that. I'm pushing investing. I'm pushing being the CEO. I'm pushing being the boss. Because I want you guys to be able to take care of yourselves and take care of your families in ways that you could have never even imagined. You know what I'm saying? As I level up in life and things change, when I listen, you know what I'm saying? When I was 18, broke, in my boy's basement, doing nothing, I ain't have no car, no nothing. I didn't think I was going to be able to do this. Like, you hear that? Like, my car make noise when I turn it on. It's a blessing that I can even sit in the vehicle. Alhamdulillah, all credit to God. And I'm not trying to pop it or flex or nothing like that. I'm just trying to show you that I'm a little black boy who came from nothing. Failed school. For sure, failed school. Got kicked out of school. And God gave me a chance to rebuild my life and do this. Got into the IT field. Was able to level up and use that money to start business and start trading. Okay? From nothing. I was the last person to start driving. One of the last people to get a job. Even relationship-wise. One of the last people to do that. And now I'm married. All credit to God. So I just want to let you guys know that if you're in a pot position right now, if you think you're messed up, if you think things aren't going to get better, you got to get right with God. I'm telling you, get right with God and watch how quick your life will change. Everything will change around you. Everything will change around you, inshallah. You start waking up, praying to God and grinding every single day and not wasting your opportunities. Watch. You gonna cop you a watch or 2 or 3. And that's if you want. You can cop one for the whole family if you want. Inshallah. You know, it's not being arrogant or boastful. But it's living the lifestyle that you want. Not letting this weakness around us consume us. It's too much strength in the earth. Too much strength God sent down here. It's beautiful trees outside, beautiful lands outside, beautiful oceans. Beautiful stuff to see. Let's get this money. Let's see it. Let's take our family. Let's ball. God says travel the world. So let's get some money and let's ball. So we can travel the world and enjoy this beautiful experience. I love y'all so much. I don't want y'all tripping. I don't want y'all stressing over nothing. Because for what? What are we doing that for? We got a whole beautiful life to live. So let's go after it. Let's get after it. Don't sit there and just wait for the work check to hit your account. Do something else. Let's get some money. Let's get after it. Don't sit there wasting your time watching the setup tick after tick after tick after you're already entered. You know where you need to close. You know where you're going to get out at. Get some more money while you're getting money. You say you want to get money, don't be wasting time. Let's do it. Let's do it big this year. 2026. You guys can tell me your goals. Book a free call at Stackmode.net. Let's talk about it. Let's develop a plan. Let's build. Let's grind. I love y'all so much. Stay prayed up to God. Catch you in the next one. Peace.
Imagine waking up and realizing the Federal Reserve just moved this single number, and suddenly Bitcoin, Ethereum, your entire portfolio either pumps like crazy or falls off a cliff quickly. Sounds dramatic, right? But that's exactly how strong interest rates are. And today, I'm breaking down how the Fed quietly controls the entire crypto market. So here's the truth. When interest rates go up, money gets expensive. Investors pull cash out of risky assets, and crypto is usually first on the chopping block. But when rates start to drop, liquidity floods back in, risk appetite returns, and when crypto wakes up fast, then the whole economy is ready to pump the market back up. Let's go on and jump into the reasons why interest rates are so important for the crypto market. Fed rates, they're extremely important. Let's go and let's understand the macro forces and how central bank decisions move the digital asset market. So the engine, the Federal Reserve policy. The U.S. Federal Reserve, which is the Fed, it operates with a dual mandate, maximizing employment and maintaining price stability, which helps manage inflation. Their decisions ripple across all global financial markets, and the primary tool is used using the funds rates. This is the target rate for commercial banks lending reserves to each other overnight. By raising or lowering this rate, the Fed influences the entire economy's borrowing cost from mortgage rates to business loans. Let's talk about a rate hike, right? Tightening. It makes borrowing more expensive, and it slows down the economy and cools inflations, and this generally hurts risk assets. And rate cuts, it makes borrowing cheap, stimulates spending and investment, and this generally favors risk assets. And the secondary tool involved into it, quantitative easing and tightening. These involve open market operations where the Fed buys or sells government bonds to expand or contract its balance sheet. Okay, so we're going to go ahead and keep understanding certain implementations and why Fed cuts are going to be important. And to understand that importance, let's talk about the DXY. The US dollar index, also known as the DXY, measures the value of the US dollar against a basket of 6 major world currencies: the euro, the yen, pound, etc. And because the USD is the world's primary reserve currency, its strength dictates global capital flows. In the inverse correlation mechanism, Bitcoin, BTC, and the DXY often exhibit a strong negative correlation. When the US dollar strengthens, DXY rises, and risk assets like crypto and sometimes stocks tend to fall, and vice versa. And why does the inverse move occur in the first place? A stronger dollar often results from higher US interest rates, and higher rates make safe haven assets like US Treasury bonds, for example, much more attractive, leading investors to sell off riskier non-yielding assets such as Bitcoin or other cryptocurrencies to move capital into dollar-denominated stability. This is known as a risk-off move, so people can plant their money in a less volatile environment. And USD and global liquidity. Since much of the world's trade, debt, and finance is denominated in US dollars, a strong dollar effectively tightens global financial conditions, reducing the total amount of available capital for speculative investments globally. So, how well the US dollar is doing and how high inflation is really going to correlate to everything, such as crypto. And taking a look at the DXY is going to be a nice way to navigate and understand where the economy is at as far as the US dollar. And with all this, it can have a significant impact on crypto. As a high growth, non-yielding, and historically volatile asset class, crypto is highly sensitive to the cost of money and general market risk appetite. And rising rates, right, during the tightening cycle. Higher interest rates hurt crypto in several ways. A higher discount rate is going to be one of them. Future cash flows for growth stocks and projects are valued less in the present. And a yield competitor. Safer assets like bonds start offering attractive yields, pulling capital away from speculative assets so people can have more of that definitive, stable income. And credit contraction. Borrowing costs for institutions and exchanges increase, discouraging leverage trading. So people are not going to be able to make money as rapidly, but they're going to have their money implanted more of like a seed within a stable position. So not looking to quickly leverage trade based off a high and a low or a short and long scenario, but it's more of a scenario of, okay, I'm going to be making this investment with the idea of holding this for decades and years and years and years. And falling rates, this helps ease the cycle. Lower rates are typically a tailwind for crypto, and it increases liquidity. It includes cheaper borrowing, and it injects capital into the financial system, with some flowing into risk asset. It also involves lower opportunity costs. Bond yields become less attractive, which force investors to seek higher returns in growth sectors. And a weakened dollar happens when rates fall. And it often accompanies rate cuts, making Bitcoin, which is a digital gold, which people like to call it, relatively more attractive as a hedge. In the balance sheet, understanding this is going to be extremely important, and quantitative tightening is a policy that's frequently deployed alongside rate hikes. It directly reduces liquidity by shrinking the central bank's balance sheet, creating a powerful headwind for risk assets. And how quantitative tightening works in the first place. The Fed first reduces its holding of treasury bonds and mortgage-backed securities by allowing them to mature without reinvesting the proceeds. And this effectively removes cash from the banking system, which achieves several outcomes. With one, reduces the money supply. It directly pulls liquidity out of the broader financial ecosystem, and it increases the bond supply, which floods the market with more bonds, which requires higher yields to attract buyers, driven up long-term interest rates. And quantitative tightening's direct impact on cryptocurrency. Since cryptocurrency thrives on liquidity and risk appetite, quantitative tightening is a major negative factor, and historically, periods of aggressive QT have coincided with significant drawdowns in the Bitcoin and altcoin markets. Less money circulating means less capital available to flow into speculative digital assets. And the word speculative, it's pretty much meaning where you're trying to make money based off directional bias. If you think something's going to go in an upwards direction or in a downwards direction. And crypto's evolving macro relationship. So while Bitcoin was once seen as totally uncorrelated, its relationship with macro forces has evolved due to the increased institutionalization. So the institutional factor, right, with major hedge funds, asset managers, and spot ETFs holding Bitcoin, institutional investors, and now even the US government, for example, treat it similar to high beta tech stocks. When they face the risk-off macro environment, they sell both their tech stocks and their crypto holdings, increasing the short-term correlation and holding cash. And partial hedge thesis, right? Despite the short-term volatility, some analysts suggest that over a longer time horizon, maybe over a course of 180 days, Bitcoin's correlation with the DXY often vanishes, indicating that it can still act as a partial hedge against dollar market-driven fluctuations. Okay, so while the US dollar is weak in certain scenarios, there's a strong chance where Bitcoin can remain strong due to the fact that it's a decentralized currency and takes itself out of the whole fiat currency pool. And some key macros to watch, right? Take a look at CPI. You guys can go to forexfactory.com or any other news website to see some news. Take a look at the CPI, all right? CPI and the PCE are going to be really important inflation data numbers to pay attention to. It signals the Fed's next move, and typically after CPI and PPI happens, the market makes a drastic move a lot of the time since people are going to know how to move. So if rates get cut in certain ways, people are going to know how to invest, and then you might see market get extremely bullish after CPI. So if you're going to make a super big investment, whether it be in a cryptocurrency, stock, whatever, wait for CPI to happen, wait for certain earnings to happen, and then see how the market reacts, and then you can make your decision a lot more logically based off of that. So DXY is also going to be a great macro to check out too. It's an indicator of the dollar strength in capital global flows. And check out the Fed balance sheet. It tracks the velocity of quantitative tightening and QE. So everything together is really going to help you put together a good thesis and know when is a good time to buy. And as of recently, we've been trading in a much more mature market when it comes to the cryptocurrency space. The cryptocurrency market is no longer isolated. It's intrinsically linked to the global economy. If you check out SPX or the S&P 500 and you pull up the Bitcoin chart, you'll see certain correlations, which is definitely going to let us know that it's classified as a high value asset. So it's intrinsically linked to the global economy, making the Federal Reserve policy the single most powerful external driver of market direction, especially as governments get more control over it and things like that. In understanding the Fed's tools, the rates, quantitative tightening, QE, it's all essential for interpreting market shifts and when market is going to be bullish, which is when market is going in upwards direction, or bearish, which is when you think market's going to go in a downwards direction. And particularly the inverse relationship between the strength of the US dollar, the DXY, and the appetite for high risk, high reward digital assets can have some things you can look at to let you know when it is ready to buy on either sides. So stay prayed up to God, keep grinding. Head over to stackmode.net if you want to learn how to trade cryptocurrency. I'll catch you guys in the next one. Let me know what you thought in the comments below.
Let's go ahead and talk about crypto wallets. So I want to go ahead and break down the difference between hot wallets and cold wallets, as well as keeping your crypto secure by making sure you guys lock down your seed phrase. So let's jump into exactly how we can secure our cryptocurrency. Inshallah, if God wills. Boom. Let's talk about how to secure your crypto like a pro. So if it's not your keys, it's not going to be your coins. I want you guys to understand the difference between ownership and just keeping your keys on a broker that if they get shut down or something like that, you won't have access to your crypto, or they could even limit how much crypto you could send, withdraw, deposit, etc. And that's not what you want. The whole reason we're trading crypto in the first place
It's so we can have some freedom over our money, inshallah. So let's talk about it. So hot versus cold wallets. So the vital distinction, understanding where your private keys live is going to be step one. Understanding where your private keys live is going to be step number one. So the hot wallet is going to be online. Apps on your phone or your computer, for example, Coinbase or MetaMask, keys are on a device connected to the internet. Convenient, but can be hackable. If people guess your Google or hack into your 2FA or multi-factor authentication, etc., then they're going to be able to have access to your crypto. Not what you want, because then they're going to have access to your money. So let's talk about what a cold wallet is. So a cold wallet could be like a USB drive, a little block device, etc. And it's going to be a physical device, and it's a hardware wallet that stores keys offline. And it never touches the internet, and it only signs transactions. So what you can do is buy your crypto on a hot wallet and then transfer it to a offline cold wallet. So it's kind of going to be like cash, but cryptocurrency. So you guys are going to be able to transfer it to hot wallets and transfer it to your bank if you ever need to, etc. So a cold wallet is pretty much going to be like cash, but for crypto. And a hot wallet is going to be like the online live store where you can purchase and store cryptocurrency as well too, but it comes with limitations. Let's continue on. So the seed phrase, also known as the recovery phrase, make sure you guys keep this safe. I don't care if you guys put it inside of a notebook, if you guys write down the keys on a piece of paper. A lot of the times it's going to be a 12 to 24 key word phrase, okay? And it's going to be random words like this. So for instance, like which, collapse, practice, feed, etc. And then 24, some brokers only do 12, okay? So when you create a wallet, you get 12 or 24 random words, and this is going to be the key to your vault, pretty much. If you lose the words, okay, then you cannot get access to your vault. Once again, if you lose the words, you're not going to be able to gain access to your vault. So never type it in on a computer unless it's somewhere where you feel it's secure and safe. Try not to take photos of it because people can hack into your iCloud. I'm not too sure about Google. I haven't had a Samsung phone in a few years, but I'm sure there's going to be ways that people could access your photos too. And try to write it down on like a piece of paper, multiple piece of paper if you can. Store it somewhere, you know, in case paper gets burned, lost, wet, etc. And try and just store it, password protect it. If you do store it online, there's going to be ways to password protect your documents. You guys can put it inside of a WinRAR file. WinRAR is going to look like the stack of books. It's going to be an icon. And you should be able to put a .text file, .txt. And you could put it inside the WinRAR and then password protect it. And then you could upload it somewhere, wherever you want, because only you know the password at the end of the day. So keep these words secure and safe. Please, for the love of God, do not lose these words. And there's going to be a lot of phishing scams and stuff like that too. You're going to see online like, hey, I lost my account, and it's going to be a bunch of random words like this. They want you to log in, buy crypto, and they're going to try and take your money. So never try and take people's money. Never log into somebody else's wallet. Okay, be righteous, be focused on God, and be focused on your bag. Stay in your bag. Don't try and scam. Don't try and do little weird stuff trying to get some money real quick. Stop it. Okay, be genuine, work hard, and most importantly, pray every day. So keep these words secure, and you guys can also keep these words for your kids, your family down the line, etc. Just as long as you keep it secure. Stuff happens in life though. Once again, papers could get wet, fires, etc. A lot of stuff goes down. But if you write it down like some metal, keep it with you, and upload it to multiple sources with a password protected form, then you could have your money secure in a nice way. Let's continue on. So hardware wallets, okay, the standard. Boom. Physical security. To be a pro, you must move significant funds off exchanges such as Coinbase, okay? And how it works. The device generates keys internally, and the keys never leave the chip at all. And you must physically press buttons on the device to approve any outgoing money. So hackers cannot press the buttons remotely. You got to have the actual cold device in front of you. Now, you can't be running your mouth telling everyone on the block like, yo, I got 10,000, I got $1 million on my crypto wallet right now. You know what I'm saying? That's not playing a good game. Still, you got to be secure, just like if you have cash.
you got to worry about little security things. And for verification, you must physically press buttons on the device to approve anything. Okay, so unless somebody actually has it or rob you, God forbid, okay, keep it safe, keep it locked away, keep it inside of a safe, even if you got to, and just keep it secure. And some popular brands are going to go ahead and be Trezor, there's Ledger, Cold Card, and Bitbox. There's going to be some other ones as well too, and they pretty much just look like little USB devices. Now, let me go ahead and tell you guys about something. May God bless his soul. There is a guy who lost his hardware wallet, and he had a bunch of cryptocurrency on it. And he spent millions of dollars clearing a trash excavation site trying to look for it because he accidentally threw it away. So it just like cash, you got to take care of it. There's been times where I've had cash inside of my coat pocket and I accidentally put it inside of the washing machine. And thank God you could wash cash, so it was okay. But like little things like that, like you got to just be on top of it if you're going to have a cold wallet. So if you're lazy, if you're not consistent with your things, you know what I'm saying, things like that might got to change. Pray on it, get better, improve, and just understand that the hardware wallet and cold wallets, you got to take care of them. It's going to be secure, but you got to keep it secure yourself in real life. All right. And the passphrase, the 25th word, the hidden wallet, advanced security feature supported by most hardware wallets. So the seed phrase plus the passphrase equals a totally new wallet. So if someone finds your 24 words, God forbid, they see wallet A, okay, and it's going to be more of a decoy, okay, a dummy, a fake, but your real money is going to be in your wallet B, which requires the extra word that you memorize. So if you forget the passphrase, then the funds are going to be lost forever. No recovery, there's no support you can go run to like, hey, I lost my money. Like, no, you want to play cryptocurrency, you want to invest in a cryptocurrency, you got to have the responsibility of pretty much being your own bank. Okay, you control when you send your transactions, you control how you store your transactions, and be on top of your stuff. Okay, just like if you're your own bank, you could choose between cash, digital currency, etc., whatever you want. Okay, same thing with cryptocurrency. You can go hot wallets, cold wallets, find your sauce, do your thing, and do what feels right for you. Okay, if it feels right in your stomach, then that's just what it needs to be. Okay, so fire and flood protection. So paper burns. Psh. Writing your seed phrase on paper is going to be risky. Houses burn down, pipes burst, stuff could get wet. So you could use things like steel plates. Use the center punch, if you guys have ever seen that, kind of like the things that look like Braille. So you could use a center punch, or you could use tiles to record your seed words on a stainless steel or titanium surface. This way that if anything happens, such as a disaster, God forbid, as long as you don't lose it, it's going to go ahead and be indestructible for the most part. It can survive house fires up to 2,500 degrees Fahrenheit and corrosion, and as well as any water and things like that. And it's just a one-time cost, kind of like a safe if you wanted to keep your cash, jewelry, etc. safe. So it's a small price to pay to secure your life savings absolutely forever. So keep that in mind. There's going to be multiple things you could do, multiple ways you guys are going to be able to keep your money secure and safe. But keep your money to yourself. Okay, evil eye is going to be a very real thing in the world, sadly. So don't be running around telling everyone on the block where you have your cold wallet, where you have your phrase, etc. Okay, keep it just between you and your family, inshallah. So as far as the security checklist, right, let's ask ourselves, do we buy a hardware wallet? Okay, because if not, you could go ahead and invest into a Trezor, Ledger. There's going to be multiple ones you could check out. Hop on Amazon, eBay, the internet. There's going to be some hardware wallets you could check out. Okay, God wills. And write the seed phrase on steel. Try not to do it digitally just in case you ever get hacked, God forbid. And never type the seed phrase into a computer or a browser unless it's password protected. If it's password protected, okay. And try to use the extra passphrase for extreme large amounts in case somebody ever gets your 24 words. And always do a small test transaction first. Okay, you want to do a small test transaction first. So that's going to go ahead and be it. I love you guys so much. Stay prayed up to God. Keep grinding. Don't ever give up, even when things get hard. Pray to God every single day. Try to work out if you guys are feeling any type of anxiety or anything like that about your money. Keep it secure and don't be overly boastful. Okay, spend moderately
and catch you guys in the next one. Read Quran and listen to God. It's the easiest way to be successful. Catch you guys in the next one. Peace.
It's 2026. What's going on? We're back in the Stackmode community, and first week, I just wanted to go ahead and recap and let you guys know what the business is. So we're up about 6% so far in the first week of 2026. I'm going to start doing a recap kind of once a month, just updating you guys on my P&L. Sometimes twice a month, showing you guys like the first week what my plan is, and then showing you guys like the end of the month result and showing you guys progression on how to start an account from nothing and grow it into something. So here, focusing a lot on AI stocks, tech stocks, and stocks that really have stuff to do with the future is really what I'm going to be going forward with this year. So a lot of people like to invest in stocks that have been around for decades and years and stuff like that. Me personally, I like to invest aggressively. This year, I'm going to be really focused on shares as well too, pretty heavily compared to options and futures like I have in the past. I'm really going to be just trying to go hard on shares this year, scouting out good companies, finding good buys, purchasing them, and just holding and sitting on my trades. That's noticing it's been working out for me really well. Been able to grow my account at a relatively fast pace. Been really happy with the profit. And one thing I really like about swing trading shares compared to options trading or futures trading is whenever you're swing trading shares, you can just sit back and chill on your trades. You don't have to worry about time, no expirations, no getting margin called. You could just buy your shares, sit and hold, and that's it. That's all you absolutely have to do. And taking your time on shares, trades, and scouting out the companies that are going to be making the most ample progression within our societies, getting rewarded for that, getting rewarded for your research, for your knowledge, for knowing to not buy at all-time highs and to buy at certain low areas. The reward that you get from shares compiled with the risk factor that's pretty much taken off, because say options, for example, I've changed my whole mental mindset. When it comes to options, people can pretty much sign a death contract. Your contract is pretty much locked in. It has to hit or it's going to miss. Okay, that's 100% just what it is with options. With shares, as soon as you buy, your money will fluctuate over time. But one thing about it is that you 100% do own. If your options is not going towards your directions, you're going to be losing. Okay, even with shares, if it's sideways or moving slowly towards your direction, you're still going to have all your capital. If you put down an options trade with not enough time and it's moving slowly towards your price direction, but it's still moving, okay, either A, your price is going to go negative on the contract due to theta and time decay, or your profit's going to be moving extremely slow and not how you want it. Also, another reason why I'm focusing on shares instead of options this year too is that at a certain point, when you get too rich, you can buy all the options contracts for most stocks that you're looking at. Okay, so that's why billionaires have to play shares. So I'm trying to get to the financial point to where I'm one of the best traders. Okay, so personally this year, I'm going to be focusing really heavily on shares. Got Bitcoin, of course, and in order to generate income, maybe later down the line towards this year, first couple months within the year, I look forward to playing some futures as well too. Okay, so I look forward to playing some futures within that. And I'm just going to be fully transparent with you guys at all times. I want to just show you guys stats, show you guys what I'm holding, and show you guys how I plan to continue to go forward. So let's go and let's jump into some performance, inshallah. So jumping into the stats here. So compiling an account, guys. Okay, I want to show you guys what it looks like starting an account from 0 to 4 to 5, 6, 7 figures. I want to just be fully transparent with you guys and show you guys how it's done. So starting here, you could see just have this account here, kind of restarted it July 2025-ish. Okay, started growing it throughout this time, just reinvesting income from business, winning trades, adding over a single time. Okay, and as you can see, P&L is just heading in an upwards direction, month after month after month after month. Okay, so your work income, your business income, or even your options and futures income should be funneled back into your account. Funnel it back into your account. Say your business, for example, If you're doing 5K a month in your business, okay, try and take 4K a month of that, okay, and invest it. Okay, you could put maybe 2K in the crypto, 2K in the stocks. Just try and break it down and invest what you're making. So your P&L is always going in an upwards curve. Okay, every time you guys get some money, try and invest. And then as you win trades, okay, there's going to be times where you may lose, okay, but then you're going to win more trades, get in different seasons, and continue to uptrend. Okay, if you feel like you have to invest every single time you get some money, then do that. Do that. Okay, I'm absolutely addicted to investing. I'm going to keep it 100%. Okay, shares is not something that I played past 2-3 years. Yeah, shares is not something that I've played or really looked at. It's really just been a lot of options in futures. I played options on Robinhood, TradeStation as well too. So I have some stats just spread across everywhere. But as far as Webull, I want to just use it for my shares portfolio. And I just want to be just fully transparent with my portfolio and how I plan to upscale it. Okay. So when you guys are growing your account, right, patience is going to be the number one thing. Okay. It's going to take time for you to know how to identify the setups you need to take. I recommend you guys go to stackmode.net so you guys can get with my trading mentorship, so it doesn't have to take you a long time in order for you to understand what a decent setup looks like. But I went through a lot of unnecessary losses early on within my trading career due to the fact that I was just being uneducated and being impatient and being stubborn. Okay. So completely my fault while I was struggling in the beginning, but once I started getting my foot, I was able to go ahead and progressively increase my P&L year after year after year after year. Okay. So all your business income, all your work income, okay, after your bills are paid, of course, and make sure you guys are reinvesting the profits from the trades that you win. So your income vehicle generating skills are going to either be your options or your futures. Personally, I'm going to go with futures this year. I've played options for a few years and I like just the stability of futures and how you can just turn dirt into diamonds. Same thing on options too, but the time decay factor and stuff. But I don't know. I'll see even this year if I'll even touch futures or options at all, honestly. I might just stick 100% on shares, find little small caps, and just really try and turn up like that. And just continuously do my research on these stocks and these companies and try and catch some stuff at the lows. I'm really having fun doing that, finding the best companies and playing shares. Just really been having a blast. Options, it's really funky with options. Options has a lot of derivatives built into it. Price could be going in your direction and you could still be down due to multiple factors, due to like how much volume a contract has, etc. And all that stuff is just really ghetto, especially when I'm trying to protect and provide for my family. I don't really want little random factors determining whether or not I'm going to get paid. So I like shares a lot, even when if I, inshallah, if God wills, if I cross into like the 10 million plus range, 50 million plus range, I can comfortably trade shares, even as a 100 millionaire into billions of dollars. Okay, due to the fact that shares are going to be pretty much always available for the most part. So shares are really just my favorite instrument. This year, I'm focusing completely on shares. 2023, I played a lot of futures. 2024 was a lot of options. Same with 2025, was a lot of options as well too. 2026, let's swap up the game. Going to be focusing on shares. I've been finding some success recently in just investing in little tech stocks and stuff like that. And just, I want to just break down and give you guys full guides on what I do to find the stock that I want to play, why I'm getting in said stock, and what I see in said stock within their future, right? So is this stock even going to be half decent in the first place? And as you guys can see, this is completely live. P&L, you can see it moving up here. Market is closed right now though. So yeah, that's going to go ahead and be that. So keep all of that in mind. And let me head over to the positions here. So this is what I'm currently holding. Okay.
We got some Path right here. Path is a stock that is been in the works in the limelight recently. I bought some more at like 16, but I sold some a couple of days ago. So we got Path. That's one thing that I am holding. Once again, bought it at around 17.75. Let me get on my higher time frames here. So on my higher time frame, I could see we IPO'd all the way up here at around 90. So I liked that a lot. So I can see a lot of upside room, at least to this 30 area here. They've been getting a lot of funding. I see higher lows being put in. So Path, really, 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 really happy there. Excited to go ahead and take that up as well. Let me go ahead and open up NVTS. So we got NVTS here as well too. NVTS, this is one I'm really, really excited for. So we're currently at 10.31 right now. We got price trying to head up. I bought around 9.89 right here. Okay, and once again, we got price heading in upwards direction. We IPO'd. IPO stands for initial public offering, which is where the stock decided to open at. So we IPO'd at around 22.19, and it looks like price just made this high resistance at around 17.82. So yeah, we're gonna go ahead and wait here, and wait for price to go ahead and catch up, do its thing, and then we should be able to make some good profit on this as well too. So I like this a lot. Big fan of NVTS here. They collabed with NVIDIA, and that NVIDIA collaboration, of course, helped it a whole bunch. Whenever we're collabing with NVIDIA on certain things, of course, that's going to be, pretty successful for us to be looking forward for the most part. So NVIDIA is going to be one of the biggest stocks, and I personally sometimes like to look at stocks that NVIDIA is collaborating with, or say Apple or something like that. Any big world-leading stock, if they're making collaborations with other stocks, I like to look into those too, and then I like to see if profit can be made. So EOS as well too. This is an energy enterprise stock, about around 14.22. Price is trying to push up here. Let me get on my monthly time frame here. So I can see price decided to IPO at this 31 area up here, 0.95. And we just recently created this area of resistance here at this 19.91 area up there. Okay. So just waiting for price to go ahead and go up. Feeling this area here. And I could see here, even on the weekly, I could see higher lows being put in constantly. Okay, constantly. We got constant higher lows being put in. Okay. And it's really just taking heed, noticing price how it goes up, goes down, goes up, goes down, and continues to just spam that. Goes up, goes down, comes up, comes down, and it'll just continue to spam that over and over and over again. Inshallah, especially since this seems like a half decent stock that people will care about. And once again, this is an energy enterprise stock, so I like this one a lot too. Price looking to swoop up. Let me head over to IONQ. Big dog right here. So IONQ, one of the leading quantum stocks. We just had a burst to this area of resistance at this 84 here. So as soon as I saw this higher low get put in, I was like, oh yeah, let me go ahead and hop in those. So that higher low, I loved it a lot. Was a big fan that I put in right here at this area. So as soon as I saw that, I was like, okay, price is looking to progress. And even after that, it came up, made new resistance, it came down, and then made some new support. So I like that a lot. Even if I head over to my 4-hour here, let me turn off the poo-poo time frames. Get on my 4-hour here. So even if I hop on the 4-hour here, boom. Could see price decided to come all the way up here, fall all the way down here, bounce up, create a new resistance wall here. As you guys can see, we have one push down here, another push down here, And then we got price falling down, making a higher low here. So this low is higher than this low. I like that a lot. Super big fan. And then from there, we can go ahead and wait for price to come up, smash past this area of resistance. And then after that, inshallah, we should be able to go ahead and catch price upwards right after that. Okay. So it's really just about taking your time, being patient, and waiting for the setup. Okay. Remember, you want your gap to be filled to the right. You want market to make the left side of the V, let it fall down, let market make the bottom of the V, and then we catch the right side of the V. Okay, we catch the empty right side of the V. Okay, that's what I want you guys to be doing. Catching the empty right side of the V. Okay, like this. Okay, this is what we're catching. All of this whole empty space between this resistance and this area of support, right? This whole area is nothing but profit. Right? Nothing but profit. All up here. Okay. So 40 plus 40 points left between this area of support and this area of resistance up here. So a very, 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 very long way to go. Intel, check this out. Up crazy on this one here. All right, Intel, I got it at around this 35 area. I'm going to go ahead and hop up on my higher time frame here just to show you guys why I got in here on Intel. So Intel, I decided to get in this area. Kind of the same reason, even if I'm on monthly here. I could still see price making upwards progression for the most part. Yes, we did fall down and make this low here. Although after this low, I put that into combination with some fundamentals. Since all the tariff stuff was going on, the United States needed their own AI chip making company to make AI chips for them, and Intel decided to partner up with other companies. I believe NVIDIA is included. And as you can see, we're starting to get a lot of bullish reaction looking to fill in this V. So we first had price falling down from this resistance here on the weekly. And then we could see price deciding to come up and fill in this gap area up here. Okay, so just go ahead and let price do its thing. Let it fill up. Okay, and just give it its space, give it its time. Okay, let market do its thing. So that's going to go ahead and be that. As far as Intel, this trade was super duper simple here, and I bought after this little higher low area here too. After I analyzed this higher low area, I was like, okay, cool, yeah, super duper bullish after this. Check on the daily here too. Even after this resistance, we came down, made another higher low. After this higher low here, saw 1, 2, 3, 4 green candlesticks, bought in. So you can see you're getting a nice V fill here. And on my monthly time frame, we can go ahead and head up to this resistance up here and head up to this 40 area up here to all-time highs. I'm praying. Okay. So that's going to go ahead and be a flip from, let's see, I opened here. So it's about 28 points here. Very great flip. And then Webull here. You know what I'm saying? Webull, they're hating on Webull. We're waiting on this. I'm not going to lie. Waiting on some Webull here. I just keep adding into this. This is going to be a huge play. Webull is my favorite broker. I'm using this right now. If you guys are wondering what I'm looking at to look at the charts and do all this at once and see the price right here, Webull. Webull is going to be my favorite thing to analyze my stocks on. While you use TradingView, but honestly, I might just use Webull itself from now on because I think it's a cooler interface and you guys can actually see some specifics of everything too, which I really like. So yeah, that's going to go ahead and be that. I pray it helped. That's how I'm opening this year. All the stocks I'm watching, that's the profit I'm up. And yeah, I'm just going to be fully transparent going forward. Just want to show you guys absolutely everything. Not going to be one of these mentors being cringe, making things uncomfortable, and just not trying to be truthful. I always want to show you guys the truth. All right, love you guys so much. Stay prayed up to God. Keep grinding. Catch you in the next one. Peace. What's going on, guys? Let me go ahead and show you the full guide on how to detect when prices are going to go ahead and reverse, whether it be for an uptrend or a downtrend. So let's talk about it. So first, price is going to reverse when it meets at its congruent areas or opposite areas. So what does that even mean? So if price, for instance, is trying to hunt an area of resistance, price has a chance to reverse at an area of resistance again. Okay, so that's going to be one potential reversal pullback area. So if you're looking for a short, this is going to be setup number A. Okay, if you're looking for a short setup. Okay, then we're going to have setup B for the short. Okay, or if there's an area of support above current price, okay, price can come up and turn that area of support into resistance. Okay, this is also going to be a probable area to short too. Okay, so both of these models right here are going to be usable in order to catch a reversal trade to the downside. Okay, so if you think price is going to go in a downwards direction, okay, if you think sellers are stepping in and price is going to short, then you're going to go ahead and be able to play model B. Okay, and you're also going to be able to play model A. Okay, so model A and model B are going to go ahead and work if you're trying to short trades, for example. Okay, so let me go ahead and show you if you're trying to long a trade. Okay, so let's talk about model C. Okay, model C is if an area of support decides to be created. Okay, an area of support is going to be an area where price decides to bounce upward at. Okay, so an area of support can go ahead and be mirrored and bounce that again. Okay, so if you see an area of support getting bounced at similar times, then that can go ahead and be a trade. This will also count as model C too. Okay, say price didn't exactly do a clean level of support. Okay, let's say price decided to break past this level of support that's going to be right here. Okay, so let's say price decided to do that. Okay, price could still run through it downward, come back up, and give it support. Okay, and that still be a support mirror. Okay, and then you can go ahead and take it up to the areas of resistance, which would go ahead and be another reversal point. Okay, so we're going to be closing at congruent or reversal areas. Okay, so if you're in a long trade, then you're ideally going to be closing at an area of resistance. Okay, because you're expecting price to go in an upwards direction. Price can't go up if it doesn't break resistances or break past areas of supports above current price. Okay, it has to do one of the two. Okay, so you know price is going to try and either A, reverse at the resistances before the breakout, or reverse at the area of support above current price. Okay, causing a support into resistance. Okay, candlestick formation. Okay, also known as break and retest. Okay, so as far as a long example two, okay, example D, price can also break an area of resistance, turn it into support. So resistance can be broken, turn it to support, and the price can go up to the upside and decide to go up. Okay, so this is going to be like the staircase model, and this is going to be my favorite model personally when it comes to longing trades. Okay, even when it comes to pullbacks. Okay, so even prices or areas of resistances below current price, price can still hunt back down to it eventually, turn it into support, and then you can catch an even bigger sweep up. Okay, so let's go and let's talk about on the chart how we can identify certain pullback levels. Let's make it easy. So if I'm on the stock market and cryptocurrency market, I like to always start off on my daily time frame. Daily time frame is going to give me my bird's eye view, and I'm going to be able to see absolutely everything. I can see 5 years worth of price action on one chart, for example. Okay, so I can also use my 4-hour time frame too. 4 hours are going to be amazing, and it's also going to be my bread and butter time frame too. So if I'm on the daily time frame here, I know that price is always going to be trying to chase new areas of resistances or supports above current price. Okay, why? Because if I'm on the stock market, I know that people are working hard within the company, generating revenue, generating items, okay, and giving those items to the public, okay, in order for people to buy, which will generate more revenue, okay. And when the company generates more revenue, earnings reports beats, you're going to see these financials down here where you can see surprise, estimated. So it'll be a report that estimates how much money a company will make. And if they beat it, then that means that they beat their earnings. That means that they beat the reports that they thought were going to happen, the estimates. Okay. If they beat the estimates, a lot of the times price can move in either a positive or negative direction sometimes too. But once a company has shown that it's profitable, especially when it's paying out dividends, which is something to where the more shares that you have, the more money that you get paid out in dividends, then it's going to go ahead and show you that, okay, this company is potentially profitable. And as you can see here on the daily time frame from just 5 years ago, price was at pretty much $2 a share. Okay, $10 a share. Price is now at $178 a share. Okay, if you know the old NVIDIA prices, then if you know, you know. But NVIDIA had a squish, so the numbers got smaller. It used to be a lot bigger than this. But yeah, so you always know that price is trying to hunt an area of resistance above current price. Okay, always know that. So price is trying to hunt areas of resistances above current price, especially all-time highs. Okay, all-time highs is definitely a level that's trying to get hit and destroyed, so then price can continue upward. Okay, and then price can continue trying to make some more money. Okay, or the company can make some more money due to the fact that their share value is going to be increased. Okay, so instead of a certain person being a billionaire, you know, they could be a trillionaire depending on the stock value. So that's why I want it to go up. So here's how you know price is going to reverse. Okay, one, it's like we talked about with Model A. When price decides to come across areas of resistances, even if it's way in the past, you're going to see here on this blue line, price reversed at this area one time here. Okay, once, okay, twice, 3 times, 4 times, okay, 4 times, 1, 2, 3, 4. 4 times price decided to short at this blue line area here. Okay, and if I'm going to trade a breakout, this is why I don't trade the first candlestick personally. I like to wait for a 4-hour candlestick, so I'm going to wait for a whole new 4-hour candlestick to be above the zone for me to trade that personally. Or I would wait for break and retest. I would just wait for the resistance to be broken completely, and if it turns to support, then I'll take it up. Okay, that's also how you trade break and retest too. Okay, so you know price is going to be trying to break this area that one day. So even if price is below current price, I can see that, okay, price has this area of support created right here. Areas of support are going to be important because it's going to show you where price pretty much already wants to retest and bounce from. So areas of support below current price are going to be really important, but so are areas of resistances. Okay, heavy areas of resistances can also show you, especially with support, can show you and be like, okay, this price area can go ahead and be a decent area to buy. Okay, so check out this area right here. Okay, so if I put this area of resistance here underneath the circle, I could check that this area of resistance decided to get broken here. Okay, price got broken here, but once I got up, price decided to turn this area of resistance here, got broken, and turn into support here. Okay, so resistance broken, turned into support. Tried to hold it here once, got broken down, and then came up and did it again, and then price decided to bounce up. Okay, so you could wait for price to either come down to areas of support like here and see if price wants to bounce up. Okay, so either that, or you're going to wait for price to come in contact to an area of resistance. So price can either bounce down there, okay, or price can go ahead and bounce on the candles on top of it. Okay, maybe at these areas of resistances here. Okay, and just wait for price to go ahead and react, because we know that resistance can be broken, turn into support. Okay, or price can go ahead and bounce at an area of support that was already there. Okay, so you can use that in order to make trades. Okay, make it extremely simple. Don't make it too hard whenever you're catching your reversals and your sweeps. All right, so either play a support mirror, resistance mirror, however you want to trade. That's all the formations of reversals. Stay praying to God, keep grinding. I'm gonna catch you in the next one. Peace.
So, psychology, it matters. You can have the best levels on the chart and still mess up a trade, okay? How you're thinking about the charts, the long-term perspective, okay, that you need to have whenever you're trading is going to affect whether or not that you're going to be profitable. If you have an instantaneous mindset thinking that you need to make some money every single day, okay, on the market, you're most likely going to lose, okay? You got to understand that you don't have to trade every single day. You don't have to take 10 trades in a single day, okay? You can have a long-term perspective. Understand that you're in the market to trade year after year after year after year after year. Okay, some of you, if you want to do this until you die, if this is what you say you really want to do, then this is what you need to be doing. Okay, so go ahead and do that. So emotional control. So fear of missing out, FOMO.
Greed and revenge trading are the greatest account destroyers. A successful trader replaces impulsive reactions with measured responses based on probabilities. Okay. Capital preservation. Keep your money in your account. Okay. Save up your money. There's going to be certain things down the line. Okay. Certain things that might come up that you have to pay for. Okay. And invest your money into certain long-term positions. So your money is always going to be making you money. Okay. So when your money is always making you money, you're going to always be in a good position in order to keep investing and keep getting to where you need to be. So the primary goal of every trade is to survive. Profit is going to be secondary. Okay. You should be focusing on the trades that you're taking where your account is going to be alive. Okay. Take the trades where you're not going to lose money. Okay. Not focusing always when you're going to win money. Okay. If you take the trades focusing on how you're not going to lose, if you take the trades that are going to be probable, having a long-term perspective on the market, okay, investing in things with good future value, then you're pretty much never going to lose. Inshallah. Okay. But if you're fiending, okay, for every trade, being hasteful, okay, not taking it serious, okay, over trading, oversizing, you're going to blow your account. Okay. And you're going to get the results that I used to be getting when I used to have so much ego, so much pride. I put myself into debt. Okay. Made myself struggle, made myself go through a lot of hardship, a lot of losses due to the fact of I was just being an idiot. Okay. And I thank God that I was able to get better, and I just pray and try and get better every single day. Okay. Because losing capital like that is not okay. Okay. It's pretty easy to grow your account. Okay. Especially once you get the real solid grasp of the market, you understand how you should be implementing your trades. You know what type of setups you're looking for. You know how much you should be risking. Okay. And if you want to learn all of that, head over to stackmode.net and I can teach you the same things. Okay. And just like I've taught many of my students, you can check the reviews out as well too. Real proof. Alhamdulillah. But just putting all of that into perspective is really going to let you know, like, okay, I have to succeed. I have to go hard no matter whatever's in my brain. Okay. No matter how many times I blow my account up, I have to run it back up and keep trying again. But you don't want to keep blowing up your account. Just stop the things that you're doing. Okay. If you have too much ego, if you have too much pride, whenever you take a loss, humble yourself to God. Okay. Get down on your hands and knees and really feel that. Okay. Humble yourself and be grateful to the Creator. Okay. Because doing that is going to help you come onto the charts with a lot more humble mindset. And protecting your capital through strict risk limits is the foundation upon which consistency is built. And the illusion of riches, okay? One, the internet can be capped. Sometimes people that you see on the internet with certain things, it could be through fraud, stuff could be rented, okay? So don't believe everything that you see on the internet, okay? I'm not here to flex. I want to just educate you guys. Sometimes I might post a little stuff here and there, but I'm a purely educational channel, okay? So trading is a skill required time and deliberate practicing, okay? It's plenty of times, even to this day, still on the charts, at least 4 to 8 hours a day, okay? Still to this day, okay? It probably will be, inshallah, for the rest of my life, but especially when I was first starting doing 24-hour plus sessions on the start, just studying, okay, on the chart, just 24 hours a day, okay? Week after week after week, month after month after month, okay? It took like 2 years to really get a good solid grasp of the market, okay? So keep going. It's going to require time, and think of a get rich slow process. You have to be in it for the love of the game. This is why I'm an educator, okay? Because I really love this. I want to understand everything about it. I'm not just here for money, okay? I understand that trading is not a lottery ticket, and everything within the finance world, it has a logistical process behind it, okay? You can't be expecting quick, massive returns instantly. Grow your account via discipline, being consistent, okay? And keep grinding. And massive returns can sometimes lead to oversized risk and inevitable burnout, okay? Focus on the process and fall in love with the game. Don't get focused on the money, okay? And when you get focused on the game and the process and the discipline, the money is going to go ahead and come, okay? I promise you guys, inshallah. So, discipline, adhering to the system. So have a strict trading plan. A trading plan is your non-negotiable set of rules and must define specific entry criteria, profit targets, and most crucially, your absolute exit trade strategy for losing a trade. Trading without a plan is going to be gambling, okay? If you want to go throw dice in the casino, go ahead and go do that. It's haram. God says don't do that for a reason. But, okay, if you want to just continue to not get to where you want to be, okay, if you want to continue to fall downwards in negative directions, okay, keep gambling. Keep trading without a plan. Keep trading without logic, okay? Keep failing yourself. And make sure you're having some predefined risk installed too, okay? You should be risking 1 to 10% of your account per trade, okay? Never try and go any more than that, okay? And discipline dictates that position sizing is determined by the stop loss distance, not emotional conviction. And this ensures that no single loss can critically damage your equity. And patience and timing. It's going to be extremely imperative. God tells us to be patient for a reason. Okay. The market gives the best opportunities to those who wait. Disciplined traders wait for A+ setups that meet all the criteria. I like to wait for S+ setups, Stackmode setups. Okay. Resisting the urge to enter early or chase moves. And time spent waiting is capital protected. Okay. So keep trading between 1 to 10% of your account. Okay. Even if you trade with 10% of your account, it would take you 10 trades in order to blow your account. Okay. So whatever percentage that you guys like, use that. Okay. So consistency, repeating positive behavior. So let's talk about execution and fidelity. No deviations. Consistency means executing your trading plan 100% of the time, regardless of whether the last trade won or lost. Okay. It's a 60% win strategy. Okay. Percentage equals money on. Okay. Percentage equals money. So that's why I have this here. And requiring 100% consistent execution to deliver its expected outcome. Okay. If you're a break and retest trader, you're going to be waiting for resistance to be broken and turn into support. That's just what you do. You're going to stick to that. Okay. And don't change it up. Okay. Stick to what you know. Journal your trades. Okay. I'm dropping the Stackmode app soon, so you guys are going to be able to journal your trades there. Do it on Discord, Notion, wherever you feel needed. So journal documents why you took the trade, your emotional state, and whether you adhere to the plan. And it's a feedback loop, and you can't improve what you do not accurately measure. And this is critical for objectivity and allowing the edge to play out. Your strategy provides a statistical edge over a large sample size. Okay. For example, over 100 trades, see how things are playing out. And consistency ensures that you capture the statistical advantage. And inconsistency destroys the sample and invalidates your entire system. Okay. And warning, the inconsistent trader. The inconsistent trader moves their stop loss. Okay. You don't need to be doing that. Sizes up after a win and trades not in the plan. Okay. They cannot analyze their performance and they attribute wins to skill and loses to bad luck. Okay. Which is not happening. Okay. And the results are purely just random noise and occasional. Okay. So your wins are going to be coming to the fact that your skill comes from your consistency. Okay. But you can't just be on the 1 minute scalping, thinking that you're playing a mini game and making some money. Okay. And analyze your performance, see how you're working out and see how much money you're making year after year. That's really just going to be the best performance measure in everything. Okay. See how much you're understanding and see if you're repeating the same things. So the power of the compound returns. Small, consistent gains protected by strict discipline are reinvested and generate exponentially larger returns over time. Focus on the percentage gain, not the dollar amount to leverage its power. Okay, focus on the long-term vision of the market whenever you're grinding. Okay, and trading longevity. Discipline ensures that you survive market volatility and drawdowns, and consistency ensures that your account grows. And the combination guarantees that you stay in the game for decades, which is the only way to achieve financial freedom through trading. Okay, building real wealth, no scam, no lies, building real wealth, and consistent versus volatile growth. Okay, consistent trader, making 5% a month, for example. Okay, month 6, you'd be at $13,401. Okay, that's $3,000, $401 in profit. Okay, by month 12, okay, at year end, you'd be up $17,958. That's $7,000, $958 in profit. Okay. And a volatile trader, okay, let's say I start with $10,000. Okay, then they go down to $9,850. Okay, then they go down to $7,500. Okay, and you could still come back, but volatility and large drawdowns can destroy your capital, and consistency guarantees the compounding edge works. So make sure you're losing a consistent amount. Okay, and be careful. Okay, if you're going in a downward spiral, don't try and oversize and add more money to your trades, trying to make it all back. Consistently build your way back up, and you have to earn your position sizes. So the tale of two trades, let's check it out. So the disciplined trader, okay. So the disciplined trader waited 3 hours for the stock to pull back to their EMA, for example, okay. Their A+ setup, okay. or S plus setup. They waited for resistance to be broken, turn it to support. Risk management. Okay, their position size, risk to exactly 1 to 10% of their capital. Their stop loss is placed, which is an order that's going to automatically close their trades, defined at a technical level, and then they're going to have action. The trade move against her, okay, hitting the stop loss, and then they accept the small loss without emotion, okay, knowing they're going to come on, plot an even better trade, and see if they're going to win the next time, okay. And 1 to 10% of her loss is gone, the account is still intact, and ready for the next setup, having executed the plan amazingly. So whether you take a loss, even if you didn't make money, okay, if you stuck to your trading plan, that's going to be a win. Okay, let's go over the emotional trader. Okay, they chased the price 5% after it broke out, convinced it couldn't stop. Okay, that's FOMO. FOMO, getting in at the very highs. Then they get whooped back on. They use maximum leverage. Why? Because they were probably already in drawdown and trying to make some money back. Okay, and no stop loss planning to see what happens, since they just made a quick emotional decision. Okay, so never have fear of missing out. Plot your trades, and don't worry about someone else's setup. That wherever that trade you're looking at is someone else's setup they're waiting for. Wait for God's plan for you. And action. The trade reverses quickly because when they bought at the all-time highs and putting him down 15% and moves his stop further out, okay, dragging a stop loss, hoping for a return, revenge trading, okay, causing a 25% loss, okay, and then they'll panic sell, critically damaging your account and confidence and making it feel like trading's a scam, the market's a scam, overall, due to the fact that you just made an emotional decision. So don't ruin your perception of the market based off of just a couple of things, okay? Stay consistent. And the value isn't in the result of a single trade, but the fidelity of the execution. And the formula recapped, okay? So discipline, okay, plus consistency is gonna equal profit, okay? Focus on the process and the profits will follow, inshallah. Trading success is gonna be built daily. It's not gonna be found instantly. It's gonna take time. Stay productive, God, keep grinding, and head over to stackmode.net. Catch you guys in the next one. Peace.
So I want to talk to you guys about trading with the trend. Understand that trading with the trend is going to be trading with where the money is flowing. You have to trade with where the money is flowing. Think of the market like a river. If you're trading against the current or you're swimming against the current, what's there going to be? Counter resistance. It's going to be hard. So if the market's going in a heavy uptrend, lots of buying is happening. Lots of liquidity, lots of money is flowing into the upwards direction. And you put in a short and you notice market still keeps going in an upwards direction, you're swimming against the current. Stop swimming against the current. If you're doing that right now, stop doing it. If you see market going in an upwards direction, you need to be buying in an upwards direction. If you see market shorting, okay, then you need to trade with the trend and take shorts. Stop trading against the market. Stop trying to see market go in an upwards direction and be like, market's going to short exactly right here, and then try and plant something that's not even going to happen. Next thing you know, buyers are still in place, the breakout happens, and then price continues in upwards direction. Why? Because the trend is so heavy. The buyers have stepped in. If it's an upwards trend on the higher time frame and it's real, it's going to be a heavy trend. Okay. Trading. It's the art of reading human psychology through price. Most traders fail because they look at the reflection and not the source. When price is the only really thing that matters. Where's price going? Is price going up or down? Price can literally only go up or down. Trading is quite simple when you think about it. Okay, everything else is pretty much a derivative. So any type of indicators, things like that, all delayed, not things you need. So let's talk about the cycle of money. So accumulation, right? Professional buying. Accumulation is going to be people loading up on things, people loading up on shares, people loading up on crypto. When people are accumulating large amounts of an asset, such as the government, many governments buying hundreds of millions of dollars worth of Bitcoin, for example. Okay. Accumulation is going to be when an investor or an investing class, such as a government, a hedge fund, and the hedge fund is pretty much just a bunch of people with a lot of money coming together investing, and they buy. Okay. And markup is going to be letting you know that there's a visible trend. Okay. And professional selling as well too. Distribution coming into play. Okay. Is market going in a downtrend? That's all it is distributing going on. Okay. And accumulation is just a bunch of buying. people loading up on shares, cryptocurrency, whatever. Okay, and the markup. So as far as certain things, you can wait for pullbacks, wait for support to confirm, and you could see breakouts, such as breakouts into new all-time highs, to confirm the markup phase. Okay, a lot of the time that's going to be where the easy money lives, and risk is going to be the lowest. Okay, so if market is continuously breaking areas of resistances, okay, you can wait for market to pull back and buy each pullback until market comes back to the area of resistance. And you could continue to hold your contracts for a breakout if possible too, because you have to understand that market, in order to continue in an uptrend, for example, has to break areas of resistances above current price or areas of support above current price. Okay, let's head over to the next slide. So the anatomy of an uptrend. So higher highs plus higher lows equals a trend. So higher highs equals exactly what I talked about on the last slide. Areas of resistances, which is just going to be areas where market decided to sell off at. That's all an area of resistance is. And then you're going to have areas of support, which is going to be areas where market decides to buy at. And that's going to be where buyers are stepping in it. Yeah. So sellers resistance, buying at areas of support. And you see higher highs, which means areas of resistances are getting broken into higher areas of resistances. Okay. See these areas of resistances, see how each one of these are higher, and then you're going to have the higher low. So look at this low, this area of support where buyers are stepped in. Then this low, buyers are stepped in. And this low. This low is higher than this low. This low is higher than this low. This low is higher than this low. Okay, so whenever you see higher lows getting put in and higher highs getting put in, then you know price is trending in upwards direction, inshallah. So certain things matter. Resistances getting broken out into new highs and higher lows being maintained, so price doesn't keep dumping down to the same areas of support over and over again. So it can actually trend in a staircase. So identify the last higher low. Higher lows are going to be good areas to enter, and that's going to be a really good pullback entry. And some people do find success in breakouts as well too. Find your bread and butter, find what you like to play, and play that. And as long as that low holds, then the trend is going to go ahead and be intact. And risk versus reward. So you might see certain things like on the risk reward tool, like 1 to 4, or you might hear terms like 1 to 2. So what this means is, let's say let's say you're risking $100. So if you're risking $100, then the 4 is going to be a multiple of that. So that means you made $400. So if your risk is $100, you made $400, your overall profit would be $300. Okay. So you always want to try and make double at least whatever you're risking. Okay. So if you're risking $50, try and at least make 100. If you're risking 70, try and make at least 140. Okay, if you're risking 1,000, try and at least make 2,000. And that's going to be a 1 to 2 whenever you're just catching the double multiple like that. And the strategy is only as good as the exit. So remember, as higher lows and higher highs are getting put into place, let's say you are trading in an uptrend. Let's say you caught a higher low entry, such as right here. You want to make sure you're closing at the area of resistance, most of your contracts at least. Okay, and then if you want to play a breakout, let's say you have 3 contracts, then maybe hold 1 contract for a breakout and see if price will continue. Okay, but don't be greedy and take profit. Target the next major horizontal resistance or area of support above current price, and that's going to be a trouble area where a lot of orders are going to be sitting. Okay, people are going to have what's called limit orders and bracket orders, which are automatic orders. When price comes in contact with a certain area, either price is going to sell or buy, because people know price is waiting to react at that certain heavy area. So if market falls down heavily from a certain place, people might have limit orders placed at that area of resistance if they're in buy, so price will automatically close. Or some people, which you, depending on the market, could affect you, could be good and sometimes not. Some people might have sell orders at the area of resistance too, expecting price to fall downwards. Okay, and structural protection. So your stop loss. It's an invalidation point. Okay. And if price hits it, your thesis was wrong. Accept it and move on to the next trade. Don't break your account structure and everything you've been working hard for because you want to have an emotional moment. It's not worth it, I'm telling you. Okay. Stay focused, stay disciplined, and stay prayed up to God, and just keep working on your craft. Don't give up. It's really important to not give up. Okay, let's do it. Indicators. Just trash. Okay. All of them. All of them, in my opinion, are trash. Okay. Everything you need to see is baked into the candlestick chart, which I'm going to cover right after we get over these slides. Okay. But all these RSI, MACD, stochastics, EMAs, barf. Okay. Trash can. And we take the indicators and we put them in the trash can. That's what we do. Okay. We grab the indicators. You get on your trading view. You get on your broker. You click the trash can on them. And you delete them. Everything you need is baked into the chart. Why are you looking at lagging indicators? It's not worth it. They tell you what already happened. Just look at the chart. Look at the chart and look at your higher time frames. Stay prayed up to God and focus on your wisdom. Focus on how you're analyzing the charts. Focus on how you're feeling the charts. Okay. So the lag. Late data is going to kill your edge because you're relying on something that's already in your face. So stop it. A lot of people do that in life. A lot of people look instead of just doing and reacting. And it can cause analysis paralysis. Clutter clouds judgment. Instead of just being confident in the candlestick chart analysis mixed in with the economics with whatever you're playing, you're waiting for an indicator. Stop it. I used to be there. It's not worth it, I'm telling you. So naked charts, okay, just straight up candlestick charts, all you need. Indicators suggest reversal, and price action proves it. Stick to the source data. Stick to the actual candlesticks that are moving in your face, not lines that react off of the candlesticks later. Please don't do that. Don't destroy your account like that. Don't destroy your future's family profit like that. You got this. You're the breadwinner. You can't fail. Okay? If you do, get up, scrape your knees off, and pray to God and keep winning. Don't let these indicators hold you back. Let's go. Simplicity wins. I'm going to show you guys how to read the chart with just candlesticks. No indicators, no squiggly lines on the candlestick chart. It's not making sense. Turn it off. Turn everything off. Okay, trade price, not the derivative. Follow institutional footprints. You can see it all. A lot of it's going to be baked into the higher time frames. Okay, stick to your weekly, daily, your 4 hour, okay, and lowest maybe your 1 hour. Okay, stick to your higher time frames. It's really going to help you get that good edge and break everything down strategically. Remove the clutter, use your higher time frames, and use horizontal lines. Let's go ahead, continue on to the charts. So we're on the charts with it. Let's go ahead and analyze Bitcoin. So I'm going to show you guys two examples. I'm going to show you guys how to read an uptrend. And then after this, I'm going to show you guys how to read the downtrend. So a lot of the times the United States markets and cryptocurrency are meant to go in upwards directions. So US stock markets are meant to go in upwards directions due to the fact that the more successful that these worldwide companies are, the more taxes they're going to be able to pay to the US government, whether via business taxes or the more employees they're going to be able to hire since their company's on the stock market. And the whole reason companies list themselves on the stock market is so they can generate more income, which causes them to build more buildings, which needs more people to maintain. The more people, which means more taxes can be taken out of their wages, the richer that the US government gets. So it's really imperative that US stocks go up year after year after year, especially the big important ones that help the whole world. And cryptocurrency is meant to go in an upwards direction because the creators of them, especially Bitcoin, is going to be finite, which means that there's a limited amount. Okay, so people are trying to buy it up, and there's a lot of imperative value to owning cryptocurrency and buying and holding. So let's talk about how to read the uptrend. So a lot of the times you want to be starting on your higher time frames first. Make sure you're not trading when price is already at all-time highs, okay, because then you're just going to go ahead and get
pulled back on. It's not worth it. You don't want to get pulled back on. It can really, really just destroy your account buying at all-time highs. Buying after all the hype is done, you want to buy at pullback areas and then catch the sweep upwards, okay, back to the area of resistance above current price. Okay, so I'm going to go ahead and show you guys how to analyze the trend. So I'd like to go ahead and zoom all the way from the beginning. I don't like trading trash personally. I like to make sure I'm trading a trending asset, and I like to ask myself, does this asset go up year over year? Okay, if it doesn't go up year over year, I'm not even worried about the uptrend. I'm worried about if I'm trading something decent or not. Okay, Bitcoin, for example, I can see has gone up year after year after year after year after year. Okay, so in my opinion, this is going to be a good asset for me to trade and catch an uptrend on. If it doesn't go up year after year after year, if it's sideways, like if price action was like this, and then this, and then this, and then this, and then price was over here today, it's not something I'll be looking forward to uptrending on personally. Okay, but I could see price starts from here and decides to progress over time, and I like that a lot. Okay, I can see a lot of upwards projection value in this since year after year data is showing me that it likes to uptrend. So I can see price decides to burst up. So we started here from the beginning of time, price came up and it bursted up here. So buying started happening. So when you start seeing price heading up in an upwards direction, multiple green candlesticks, a lot of times is what I like to look for. Multiple green candlesticks on my higher time frames in a row. Okay, it's going to signal a lot of the buying. Okay, a lot of buying happening here. The price decided to top out right here. And then it fell down. Price decided to fall down and create an area of support. So let me go ahead and show you guys here. When price decides to fall down from an area, that's going to be called an area of resistance. And when price decides to bounce upward from an area, that's going to be called an area of support. Okay, resistance is going to be an area where price falls down from. Support is an area where price decides to bounce upward from. Okay. Then we could see this area of support. Price decides to bounce in an upwards direction here. Price decides to bounce up and stop again. So whenever I'm looking at an uptrend, I like to think of price moving in a V. V meaning that the top left of the V is going to signal the resistance. Okay. And the bottom of the V,
power off,
is going to go ahead and signal the area of support. So I'm going to have the left side of the V, which is going to signal area of resistance. And the bottom of the V is going to signal the area of support. Our goal, if we're catching an uptrend, is to catch the right side of the V. So on my higher time frames, I like to wait for price to make an area of support first. And if I get multiple green candlesticks heading in an upwards direction after price has already fell down, because that's going to let me know that sellers are selling. And then if I see price making a bottom and then buyers start buying, that's going to let me know that price is done selling and buyers have stepped in. Okay, price is not going to sell forever. And there's also going to be a lot of laws, especially on the stock market, such as the short sell restriction, which prevents a lot of things from just flash crashing to zero. So you can see here, price decided to create resistance all the way from here. And price decided to fill in and even break the area of resistance right here. Okay. And price decided to make a new high from here. Price decided to come up here and make an area of resistance up here. From there, price decided to make the left side of the V again, come down, bottom out, and make the bottom of the V. Right here. And then we see multiple green candlesticks going up in a row on the higher time frames and the right side of the V being filled. Okay, we got the left side of the V, bottom,
And then our job is to catch the right side of the V. Okay. So the later you enter on the V, let's say you enter like right here where that black line is, the later you enter in the V, the more confirmed. The earlier you enter, the more profit you're going to be able to make, but more of a chance that you could potentially get burned. So it's going to be depending on the certain setups you take. So if you would enter like right here on the black line, and if you're trying to close at this area of resistance, it's like not a lot of money left. But if you enter like right here, like that would be fine, or even right here, that would be fine too. Try and enter like halfway of the V, and then go ahead and close at the resistance. Yeah. And then you can see price decided to make a low right here. Prices had to come back up to the resistance. Didn't quite break it. It said, nope, gonna go ahead and reject again. We came down. And then we bounced at this low here. So this low is higher than this low. And then this low is higher than this low. Then we can see the V right here being filled in. Again, just like the V here filled in, V here filled in. Okay, and price will continuously do that. And you can also use your daily time frame to go ahead and plot out trades too. So even if I delete something here, and I just see this trend, I have the bottom area of support right here. We got another area of support right here. Then we got another one right here too, the C being generated. Price making higher lows. Price is making higher lows. See price uptrending. Yeah, it's going to be a really, really important thing to look at. And you can see these V structures being filled in. So top left of the V, price started here, area of resistance was formed, price came down, bottomed out. Then the right side of the V got formed, resistance area got broke, price came down, did the same thing again. Price bursted up towards this area of resistance here. Came all the way down, made this area of support, and did the same thing once again. Okay, could see price deciding to progress over and over again. Okay, and we're coming down here. Looks like it's trying to hold a new low, and we could potentially see over time if this low will remain higher than this low here. Okay, and if so, that's going to be another verified area of support. I like the multiple green candlesticks here on the daily. On the weekly here, we do have some sideways weekly candlesticks that are green. So we'll see about another week here too. Okay. So higher lows and higher highs are going to be something to look at whenever you're reading your uptrend. Let's over to the downtrend. All right, let's go ahead and talk about analyzing the downtrend. So when you're analyzing a downtrend, you want to be looking for lower lows and lower highs. Okay, so let's go ahead and let's talk about it. So let's say price decided to super top out right here. You know, we had a good run. It's been uptrending for a while, but since then, it's been trying to head down to the graveyard. So let's analyze and break down how you can catch trades when price is heading in a downward cycle. So you can see price here created an ultimate area of resistance. And resistance is just going to be an ultimate area where sellers are coming in. Okay, sellers are coming in to this area since price is falling down. Then you're going to have price making bottoms. Okay. Once again, that's going to go ahead and be areas of support. Support is going to be an area where buyers are going to be stepping in. Okay, you're going to have support and then you're going to have resistance. They both correlate. And the cool thing about them is resistance sometimes can be broken and turn into support. And a lot of the time support can be broken and turn into resistance. Just as resistance can mirror another area of resistance, even if price decided to previously break it,
Say, for example, price decided to create an area of resistance here. Price broke it, came down. Price could still come up and short at that resistance again. Same thing with an area of support. Price decided to come up, break below the support. Price could come above the support and pull back at the same support again. Okay, price is very reflective over what happened in the past. Okay. So let's go and let's keep analyzing. So you're gonna have the area of resistance where price decides to fall downwards from. And then you're gonna have the area of support where price decides to bounce in an upwards direction from. Okay. Both important areas to look at. So resistance, just like I said, can sometimes be broken and turn into support. Support can sometimes be broken and turn into resistance. Okay. Keep all that in mind. And put it all together on the charts. So a lot of times when I'm downtrend shorting, I'm looking for two things. I'm either waiting for an area of resistance. I don't even care if it's in the past, to meet up with an area of resistance, and I'm taking it again. Okay. Or I'm going to wait for an area of support to be broken and turn into resistance. Okay. So let's find an example here. So let's say price decided to make this area of support right here. Could see price decided to make this mini bounce after a heavy downtrend from a while. Okay. After that, price decided to hunt back up to this area. So look at this support zone right here. Price decided to bounce up for a little bit here. Okay. To this area of resistance here. Okay. And even this area of resistance right here. All right. Sometimes you'll be able to look to the left and be like, okay, I see why resistance was created here. Okay. So for instance, if I drag it all the way over here, we can look to the left and we could try and piece things together and see, okay, was there any price action that reflected? So I could see this area of resistance here. And if I zoom in close, I can see another area of resistance right here. Okay, so stuff doesn't just happen for no reason. You could see the two areas of resistance. Both cause price to fall downwards for a while. Okay, very, very reactive market. So stuff even from years, months ago, okay, could be reactive. And even right here, price decided to create support. And price broke it and turned it into resistance. Support right here got broken, turned it into resistance. And then price headed in a downtrend. That's going to be one of my favorite ways to downtrend. Is going to be waiting for support to get broken and then waiting for price to run back up to it and turn it into resistance. A lot of the times, if you see that, it's going to be a really, really good short or a good time to short. And even if you see two areas of resistances meeting up with each other, it's going to be a good area to short at as well, too, a lot of the times. Okay, but be careful with that, especially during uptrends. You don't want to get caught trying to short something that's not meant to be shorted. That's in a clear uptrend because you're just hunting for something. Okay, so that's why I like to wait for support to get broken and turn into resistance cleanly, whether it be it on my daily. A lot of the times I'm gonna wait for it on my daily because that's gonna give me the cleanest structure and what I'm actually looking for, making sure it's confirmed, because I don't want to be taking any type of nonsense trades. Okay, you don't want to be wasting your funds. You don't want to be wasting your time. You want to try and take the trades you know are going to be making you good money. Okay, and waiting for confirmation is also going to be really, really important too. So just as you're waiting for, let's say, an uptrend, I like to wait for 2 to 6 daily candlesticks going in an upwards direction to the right. If I'm waiting for a downtrend, I'll wait for 2 to 6 red candlesticks going down just to make sure. Okay, I don't buy the first immediate reaction a lot of times because I don't know if it's going to be completely true. So let me go and pull up an example here on natural gas. Okay. So even here on natural gas, we could see price farming this downtrend here extremely, extremely heavily. Okay.
And certain trades can be found by just being patient, analyzing the market, and really just taking your time. So even right here, take this area of support. That was very important. I like to look at very important areas of support, especially on my higher time frames. You can see price decided to break below it. We could see a daily wick right here. After that, I got one red candlestick, 2, 3, and then we got price heading in a downwards direction. Okay, from there. Okay, and you could have did take profit at like this support here, or even this support right here. Okay, and caught that good trade down. Could have entered down here, take profit here, and that would give you about a 1 to 2. Yeah. So taking your time with the setups and analyzing everything, it's really going to be important. And when you're downtrending, a lot of the times your take profit is going to be either an area of support above current price or below current price, not above an area of support below current price, or an area of resistance below current price too. Because just like I talked about, resistance can turn into support. So when you're shorting, your take profit can either be resistance or support. Same thing if you're uptrending too. So yeah. So say here, price decided to create a little buy zone right here. Price bounced in the same area 3 different times. Price broke it, and then price hunted all the way up to it, shorted, and then gave us 1 red candlestick, 2, 3. I like that a lot. You could have did take profit at like this support right here, and you could have went ahead and caught your trade. Okay. Boom. They even take profit down here. And then the amount of days this would have took, you can use your rule from on trading view. You can start on the resistance, drag it to the support. It took about 90 days, but that would have been a real account flipper. Okay. A lot of the times it's not about getting a trade over and over and over and over again. It's about just taking a couple of good trades. Okay, a month, a week, or even a year sometimes. Even if you did it right here, this resistance to the support took about 14 days. So if you did a smaller take profit, it would take less time. So yeah, so cool. That's gonna go ahead and be that. Stay praying to God, keep grinding. Catch you guys in the next one. And I pray this helped. Head over to stackmode.net for all trading education. Peace.
The real danger in the options trading space isn't the market, it's the people jumping into it with zero understanding. And options can either be one of the smartest tools in your trading toolkit or one of the fastest ways to blow up an account. And the difference comes down to one thing: knowing what game you're actually playing. Most people think that options are some get rich quick button. They might see a clip on TikTok, hear someone brag about a 300% gain, or see something on Twitter, and suddenly they're buying weekly calls or puts like it's a lottery ticket. And that's exactly why they lose. Options aren't risky by nature, but they're risky when you don't respect how they work. Let's go and let's talk about and see if options are too risky, and let's talk about the difference between a gambler and a proper trader. Inshallah. Alright, let's go and let's talk about the truth. So is options trading truly too risky? This is the prevailing myth in finance, is that options is just strictly gambling. So with options, it's a little bit different. So let's go and let's break it down. So on options, you make money based off of time. So there's going to be 2 directions you can either buy based off of. You're either going to buy calls, which is when you're waiting for price to go in the upwards direction, or you can go ahead and purchase some puts, which is when you're going to be waiting for price to go in the downwards direction. Okay. Now on options, you get paid based off of predictions. So let's say for current example, a share price is at $50, right? So let's say you opened a stock and it's at $50 right now. If you think it's going to go up to, let's say, $55, okay, then you would go ahead and purchase a calls contract since you think price is going to go in an upwards direction. Let's say the share price is $50 and you think price is going to go down to $40. In that instance, you would go ahead and play a puts contract since you think price is going to be going in a downwards direction.
Okay, so speculation is what they're mainly going to be used for, when speculation means that you're getting paid based off of directional bias. Okay, also hedging too. So since options contracts aren't pure ownership, you're getting paid based off time, and if your time prediction is right within a certain time period, then you'll get paid depending based off of that. So on options, you want to a lot of the times too have some time on your contracts. Once again, that's going to be one of the most important things that separates it from gambling versus actual trading. Okay, so your time matters a lot. There's going to be things called Greeks. You're going to have your delta, gamma, theta, and those determine how your profit moves. Okay, the more time that you have on your options contract, the more it's going to kind of pseudo play as a actual real investment. Okay, but if you have your options contract expiring tomorrow, the chances of a certain number hitting could be very, very skeptical. But if you have your options contract expiring in a couple of years, the chances of it hitting could be very, very likely. So it can be gambling if you make it, but it can also be a really, really good way to keep your money, let your money flow within the market, and dominate the instrument by just taking advantage of the time under contracts. So let's talk about if there are insurance policies on your portfolio, and let's go ahead and explore the mechanics of risk versus reward on options. Also, one thing on options too, options you can make infinite profit. Okay, so your profit that you can make is infinite, but your risk is going to be set. So if you pay $200 for an options contract, the max you could lose is going to be $200. Okay, but the max you could win is going to be infinite. Okay, so that's the big advantage of options too. So let's go. So just like we talked about in the last slide, what is an option in the first place? An option is a contract, not an asset itself. It derives its value from an underlying asset, stock, ETF, or index. So a call option, right? It gives you the right, but not the obligation, to buy shares at a specific price by a specific date. Okay, so if you think price is going to go in an upwards direction, then you're going to go ahead and purchase a call options contract. Okay, calls, think of picking up the phone. What do you do when you pick up the phone? Okay, you call. Okay, and then we're going to have the puts to the right. Think of putting the phone down. Okay, so call, pick the phone up, puts, put the phone down. Okay, so puts give you the right, but not the obligation, to sell shares at a specific price by a specific date. So calls is if you're betting on the price going in an upwards direction, and puts is going to be if you think price is going to go within a downwards direction. Okay, the United States stock market though is made to go up year after year after year after year. There's also laws in place such as the short sale restriction law, which kind of prevents and helps things from crashing down to zero very, very quickly. So a lot of the times on options, you might be better off playing calls, since it's going to go ahead and be on the actual investor side as well too. And the double-edged sword, let's go and talk about leverage. So options provide leverage, and one standard contract controls 100 shares of stock. And this is where the risk and reward are amplified. So scenario, right? Let's say stock XYZ is at $100. So the stock investor, let's say they buy 100 shares, right? So if the stock price is at $100, in order to buy 100 shares, that would cost $10,000. Okay. And an options trader, let's say they buy one call contract, okay, with the $5 premium. So let's talk about the decimal numbers on options too. So if you ever see an options contract, let's say 2.50, you always want to multiply every options contract by 100 to get the real dollar value. Okay, so 2.50 times 100 is going to go ahead and be 250. If an options contract is 14.20, okay, we're going to multiply that by 100. That's going to equal 1420. Okay, just make it super easy. Okay, whatever you guys see, you multiply that by 100. So let's say the stock price is, or let's say the options contract is 5.70. Okay, then multiply that by 100. It's going to go ahead and be 570. And that's how you're going to go ahead and get the share price for that. Okay, so if the stock goes to $110 and you have a calls contract, then that would be a 200% return. Okay, but if you have it on shares, then that would be a 10% return. Okay, let's just say that for example. So if the stock stays at $100, the stock investor loses nothing, and the options trader would lose 100% of their $500 because the contract expires worthless. Okay, so if your contract doesn't move the amount of ticks that you think it's going to move within that time period, then the options contract could very, very easily expire worthless, and you would see it at a negative 100%. But when you're buying things like shares, you're actually having the actual investment and you have the ownership power. within your account forever until you decide to close. And why is it risky in the first place? So options aren't inherently risky. So gambling behavior is risky, and most retail traders fail due to two specific factors, right? Let's talk about time decay, theta. So options have an expiration date. Every day that passes, the contract loses value if the stock doesn't move, and stock owners can wait forever. Option owners are also fighting the clock. So a good way to counter this, though, if you do want to play some options or you see some good plays, try and play what's called leaps if possible. Okay, leaps are going to be contracts that you're holding for like 1 to 2 years out. Okay, try to stay away from like 0 DTEs and things like that, and use your options as a seed to plant for the future. Okay, if you're buying contracts like 1 to 2 years out, and let's say the share price is at $50, right? Once again, so if share price is at $50 and your take profit, you think it's going to go up to $60. Okay, the best contract to buy would be a $51 call. Okay, and you might ask me, Chris, why would we not buy the $60 call if that's our take profit? Because on options, once again, you get paid based off of prediction, and there's going to be bonus points on option. So if the share price is at 50 and you buy $51 call, but your take profit's at 60, that's going to be a lot of bonus points versus just buying the take profit 60 contract, because then your contract wouldn't really start juicing and making good money until it gets hit. So if you buy a number before your take profit, you're going to get a bunch of extra bonus points, and it's going to hit really, really hard. Now let's talk about buying out the money, right? Try not to do that. Try not to buy cheap contracts. Also, don't forget that it's called trading. When you're winning, somebody else is losing. When you're losing, somebody else is winning. So beginners buy cheap, unrealistic contracts, hoping for a lottery win, and these have a low probability of profit. And consistent losses of small amounts add up to account blowups for sure. So don't just buy any random contract thinking it's going to hit. Try and buy 1 to 2 years out, and whatever the current price is, try and buy one above if you're going to purchase a call. Okay, so if the share price is at $50, try and buy a $51 call contract. Okay, if the share price is at $50, you think price is going to go down, try and buy a $49 put contract. Okay, play it like that, buy 1 to 2 years out. The chances of you losing is going to be really, really low. And using options for safety. So professional traders use options to reduce risk, not just to speculate. So the cover call income. So let's say you own 100 shares, right? You sell a call option against them, and you collect the cash premium instantly. This lowers your break-even price on the stock, and this is safer than just owning the stock. Okay, so whenever you have enough shares of a certain stock, you're going to be able to actually sell the options contracts. Okay, and then you're going to have protective puts as insurance. Let's say you own 100 shares and you're worried about a crash, then you would buy a put option. If the stock crashes to 0, which most of the time, if it's a half decent investment, it won't, then you have the right to sell it at the strike price, and you've capped your maximum loss, protecting you on really both sides and just giving you a lot more leverage on your account to manage and maneuver your money exactly how you just want. So covered calls and selling options is something you can also look into. I'm going to be dropping a video on that very, very soon as well, inshallah. But before that, let's talk about it. So let's talk about selling versus buying the premium. So the house usually wins in options, and the house is going to be the options contract seller. So the options contract seller is pretty much wanting you to do some insane decision. Okay, they want you to make the most dumb decision of all time, and then they're going to get paid off of it. So that's not what you want. You don't want to get taken advantage of, so you need to outplay them. Okay, so the statistical edge. So approximately 70 to 80% of options expire worthless. Therefore, buyers have unlimited profit potential, but a low probability of success. But if you want to see a lot more successful wins within your options trading portfolio, I recommend you guys focus on contracts 1 to 2 years out. And once again, wherever the current strike price is, buy one above or below that number in order to have that consistent value. Okay, that way you're pretty much gonna trick it into almost a shares type of play. Okay, but you're getting the options profit. Okay, focus on time and stay near the current price. And sellers have capped profit potential, but have a high probability of success. Okay, due to the fact that they know people are going to make some uneducated, silly decisions and destroy their account. So don't let it happen to you, inshallah. So conclusion. So risky trading usually involves buying short-term options, right? Like 0 DTEs, weeklies, etc. And conservative trading involves selling options or using spreads or buying contracts within 1 to 2 years out to define your risk in every single scenario. Really just protect your money, okay? You're not on this earth working hard for no reason. Don't go burn your money down to the ground making dumb decisions, okay? You got it. So if you're not focused on your take profit, options can definitely be a problem. if you get reversed on certain areas, the Greeks are going to really hit you extremely hard. And it's things that's happened to me. There's been times where I've been up at almost $1,000 in a day, come back later on due to the fact that I was playing 0 DTEs, come back to negatives. Okay, so it's not things like that I want you guys to go through. It's extremely toll taxing on your mental when you guys are trading, and it can bring a lot of anxiety on your next trade, and I don't want you guys to go through that. So understand that they're going to be too risky if they're going to be treated like lottery tickets. So if you're buying weekly out the money calls, 0 DTE without risk management, expect those results. But they're not too risky if they're used for hedging, income generation, or if you're buying leaps, which are going to be contracts that are 1 to 2 years out. Okay, so the danger really lies in the trader, not the trade. Okay, so control your flesh, be disciplined, don't make dumb decisions, stay prayed up to God, keep grinding, protect and provide for your family, and catch you on the next one. What's going on, class? Today we're going to be talking about layer 0 protocols. Let's go and let's jump straight into it. So what is layer 0 in the first place? Layer 0 is the underlying infrastructure that connects and supports different blockchains, also known as layer 1s. So the foundation. So layer 0 is like the internet protocol. It's like the IP address, but for blockchains, and it provides the base layer for communication and security. And layer 1 protocols, like Bitcoin or Ethereum, are built on top of the network provided by layer 0. And enabling interoperability, it solves the walled garden problems where chains cannot talk to each other, and it allows for trustless transfer of value and data across different chains. And it's key for realizing the vision of a connected multi-chain future. So this way, cryptocurrency, the whole infrastructure, whenever money is being sent within the network, everything can be securely done. And shared security, it allows for smaller, less established chains to borrow security from the robust layer 0 network. And it reduces the cost and complexity of launching a new secure chain, and is vital for the stability of niche decentralized applications. So, Polkadot, it's the relay chain, the central hub of the Polkadot network. It handles the finality and consensus for the entire network, and it does not process user transactions like token transfers. And it maintains security by coordinating all connected chains. And layer 1s, parachains, they're independent application-specific blockchains, and these are the layer 1s that process transactions, okay, for DeFi, gaming, and identity, and they rent a slot on the relay chain for shared security, and they can have unique governance models and features, and Polkadot uses shared security and a centralized relay chain approach. So let's talk about Cosmos, also known as Atom. So the SDK and Tendermint, they're tools that let developers launch independent blockchains easily. And Cosmos SDK is a modular framework for building application-specific chains. And the Tendermint, it provides the consensus engine for instant finality and security. And it allows chains to be launched in weeks, not months. And IBC stands for Inter-Blockchain Communication, and it's the standard for chain-to-chain message passing. And it allows sovereign chains to connect and exchange tokens and data. So it's going to be a big link for everything. And each chain manages its own security and validators. And IBC, Inter-Blockchain Communication, is the fundamental layer 0 protocol for communication. And Cosmos uses sovereign security and a decentralized hub and spoke model. So the blockchain layer stack, let's talk about layer 2s. And the purpose of layer 2s is to scale a single layer 1, okay? And examples are Arbitrum, Optimism rollups, and they improve transaction speed and lower fees by bundling transactions off of the chain. And layer 1s, purpose of layer 1s are going to be to execute and implement finality via smart contracts. Smart contracts are going to be the autonomous contracts that let the cryptocurrency space pretty much operate. Okay, so when you have smart contracts implemented, no middleman is going to be involved. So take a normal bank account system, for example, you would have to have a bank intermediary to confirm transactions or decline the transactions. Okay, but we can go ahead and bypass that by using smart contracts in the cryptocurrency sphere. So this is why the decentralized finance system and the whole blockchain sphere is extremely popular in the first place. It brings a lot of power back to the people, and people are going to be in an effective way to where they can go ahead and just transfer money. Say someone is completely out of in a different country, for example, you'd be able to go ahead and send them however much money you want to, whenever you want to, and it would go ahead and hit their account within their crypto wallet within a couple of minutes or hours. Okay. So, but using the traditional fiat bank systems, say you try to send, 1,000 USD to somebody in, let's say, Thailand using bot. Okay, there's going to be fees behind that, etc. Okay, but cryptocurrency, there's going to be fees. Okay, gas, also known as the fees, and those are just going to be tiny network fees involved to just send your money from one place to another. Sometimes they could stack up depending if you're sending a large amount, but a lot of times if you're sending a large amount, the fees realistically aren't going to matter too much depending on what network you send them off of too. So that's also going to be a big factor too. And let's talk about layer zeros. The purpose of layer zeros affect interoperability and provide a network setup. And examples of layer zeros are going to be Polkadot, Cosmos, and they allow layer ones to communicate and share security, forming a network of chains. And the future is going to be all interconnected, and layer zero is going to be the foundation of everything. So think about a house, okay? What's below a house, especially that's tall? A lot of the time it's going to be pillars that'll be connected to some mountains. Okay, a lot of the times the house before it's built is going to have a B structured on a base. Okay, and layer zero is going to be the base, and layer zero connects all the building blocks of Web3. So the whole cryptocurrency sphere, okay, and it moves beyond single isolated chains. And the interoperability race. Polkadot and Cosmos represent two of the leading distinct architectural approaches to this critical problem. And layer zero enables a seamless, cohesive, decentralized internet. So within the layer zero functionalities, okay, we have to understand that, okay, it's used to connect all of the blocks within Web3, okay? And it's gonna be a hub. It's gonna connect the separate layer one blockchains that would otherwise operate in silos. And developers can also build custom blockchains like layer ones, tailored to specific use cases, using the tools, consensus mechanisms, or security provided by the layer zero. And layer zero offers a shared security model where multiple chains can inherit the security of the base layer's validators or consensus mechanisms. And some layer zero protocols focus on ensuring data availability for transactions, allowing layer one chains to process transactions efficiently without storing all data on the chain. So Polkadot, for example, uses a relay chain, okay, for layer zero to connect multiple parachains, which are layer ones, enabling interoperability and shared security. And developers can create custom blockchains, parachains, tailored to specific needs like DeFi or gaming. Okay, so like a token like DOT. Okay, and the token be DOT. So that's just how layer zero works within the cryptocurrency space. Okay, and just think of layer zero as the internet's core infrastructure. Okay, think of it as the cables, okay, the base to the house, the routers and the protocols. And think of layer ones as the websites or the apps. Okay, like Google or Amazon. And layer two is the tools that optimize those websites, like content delivery networks. And layer zero makes it possible for websites to exist and communicate, even if they're built zero and built differently. And here's why layer zero even matters in the first place. As blockchain adoption grows, the need for scalable, interoperable, and customizable solutions become critical. And layer zero protocols address the limitations of isolated layer one blockchains, enabling more connected and efficient decentralized ecosystem. And they're particularly relevant for DeFi, NFTs, gaming, and other applications requiring cross-chain functionality or high throughput. Okay, and if you want to learn more about layer zeros or cryptocurrency in general, head over to stackmode.net. Stay prayed up to God, keep grinding. Catch you guys in the next one. Peace.
When the dollar starts becoming worth less, people start running to assets such as real estate, gold, and silver. Today, we're going to talk about how to invest into gold and silver, why you should invest in the gold and silver, and what inflation is, and why people run to asset classes in the first place because the dollar starts failing. Let's jump into it, inshallah.
So gold and silver are going to be hard assets that are going to be pretty safe to invest in, especially in an inflationary world where things just get more expensive over time due to the fact that more currency just gets generated over time. So the currency devaluation. So purchasing power is melting over time. So inflation isn't just about prices going up over time. It's about the value of the currency going down. So prices go up to correlate with that. So governments print money to service debt, which dilutes your savings over time. This is why I tell you guys all the time about the asset river. Okay. You want to always try and have your assets and your money flowing in your river. If things logically get more expensive year after year after year after year, then you have to have your assets flowing in a way that your money is always making you more money. Okay. So once again, I'm going to repeat. Your money should always be making you more money. Okay. Don't get outplayed by the certain calculations that just debase in the world normally. If things get more expensive over time, then logically, in order to counteract that, in order to feed yourself and your family, your money should always be making you more money. So we'll talk about the 1971 shift. So that's when Nixon ended the gold standard. And since then, the US dollar has lost over 85% of its purchasing power. And the hidden tax. Inflation helps debtors, which is pretty much just the governments, but it hurts savers. Anybody just stacking up cash in your bank account. If you have just a whole bunch of cash stacked up in your bank account, it's actually doing nothing but hurting you. Okay, even if you've worked overtime for a job before, okay, you might have seen that you've actually had to pay more in taxes. Okay, the more cash that you have just stacked up stationary, the more that it hurts you. And it transfers wealth from you to the state, which goes back to the government. So in 1920, 1 ounce of gold bought a high-end suite. And today, 1 ounce of gold would be about $2,600. Okay, so it still buys a high-end suite. And the gold stayed constant and the dollar collapsed. Okay, so keep that in mind. The gold stayed constant while the dollar collapsed. So that means that having your money parked in an asset class like real estate, people are always going to need houses. Gold, people are always going to be wearing jewelry. And other asset classes that stay constant and only rise up while the dollar collapses are going to be the asset classes that you want to focus on for the most part. So gold, people call it the ultimate hedge. A lot of the times, if you pull up the chart, you'll see gold year after year after year after year heading in an upwards direction. Okay, it's not stopping. And due to the fact that something has to counteract the dollar. So gold is going to be the human standard that people just use whenever the dollar is crashing or the economy isn't in a good place. So here's why central banks buy it. And central banks are going to be the banks where me and you bank at. Okay, the banks that hold our fiat currency, where we can go pull out our money to pay our bills, go to the ATM, etc. And the fear trade. So gold performs best when real interest rates are negative. And that's when inflation is higher than bond yields. Okay, and central bank demand. So in recent years, China, Russia, and India have been buying record amounts of gold to de-dollarize their reserves. Okay, so they're trying to de-dollarize their reserves in a significant manner. Okay, buying less time storage for their fiat currency and buying more time on their actual currency by investing into assets. Okay, you're doing nothing but losing time if you have more fiat currency. So fiat currency needs to be thrown into the river immediately. Otherwise, you're wasting time. Think of theta on options, if you're familiar with that. Over time, on a stock options contract, the options expires. Okay, think of your fiat currency the same way. Okay, if rent over year after year after year after year gets more expensive, if 1 year a house cost $200,000, but then 5 years later it costs $500,000, that means that your asset class has to be in a constant river, each and every single one of them. Okay. All your businesses, your profit has to be being reinvested into that. More stocks, more shares, more cryptocurrency. Okay. Buying more houses if you're in real estate, etc. Okay. Buying more land, and you could do whatever you want with the land. You could farm on the land, pay people to host ATMs on the land. Okay. People could build stores on your land. People could build antennas, cell towers, etc. But when you own assets and you keep stacking up your assets, it gives you a multitude of opportunities to be presented in front of you for your money to just make you more money because you invested in the right things. So volatility. So gold is slow, and it's not for getting rich. It's for staying rich, and it's wealth insurance, not a lottery ticket. Okay, so stacking up gold over time. A lot of people might buy certain jewelry, okay, go smelt it, take it to the jeweler, whatever, and either the jeweler will give them an exchange rate for the gold. So you're going to have multiple ways to invest in the gold too, which we're going to talk about. If you don't want to go the actual physical gold route, you're also going to have the ability to buy things like shares, etc. So let's jump into it. So silver is going to be the industrial hybrid. So it's the green energy paradox. So silver is unique and it acts like money during crisis, but trades like a commodity during booms due to massive industrial use. So as far as conductivity, silver is the most conductive metal on Earth, and it's essential for electronics, 5G, and EVs. So for modern technology, silver is going to be needed. So silver is also going to be something you could invest to too. If you ever see a pullback on the charts or anything like that, silver is going to be an asset class that goes up year after year after year after year very confidently, especially while the dollar is collapsing. And let's talk about the solar boom. So photovoltaic cells, okay, solar panels, consume massive amounts of silver. As the world goes green, demand explodes. Okay, so photovoltaic, okay, that's just solar panels. Solar companies are booming all over America, all over the world, and other countries as well too. Okay, especially countries with less green, less trees, taking advantage of that solar energy. So seeing silver going in an upwards direction year after year after year would make sense. Try to plant your seeds with things that make sense with the future, whether it being putting smiles on people's faces or helping people work throughout the day by day. Silver is needed in absolutely everything. And let's talk about the gold to silver ratio. So it's historically about 15-1. So 15 ounces of silver will give you 1 ounce of gold. And today it's often 80-1. And many argue that silver is undervalued relative to gold. And we'll see how that starts changing, especially during the AI era. When we start seeing robots and certain things start getting developed, the use of silver could go up in an industrial rate. So there's going to be two ways to invest. So you could either have a bunch of bars, whether it be it silver bars or gold bars, stacked up. Some people do that, put it in a safe or leave it with the bank, etc. Some people also have jewelry. Buy Rolexes, Audemars Piguets, Pateks, certain chains, real Cuban links, whether it be it bracelets, chains, etc. And some people take it to the smelter, melt down the gold, take that to the jeweler, and then you can go ahead and get some money for that. Or you're going to have the digital way, which is going to be via stocks and ETFs. So you could buy shares that represent gold. So in the stock world, it's going to be the GLD. So if you want to buy gold shares, you'd have to look up GLD. You could also buy gold options as well too. I have some recaps posted on my channel of some wins I've taken on that. Used to trade that a long time ago. And SLV is going to be for silver. And then for miners, as far as the mining industry, in order to mine the asset classes of gold and silver, you can look up GDX. And the pros of them have very high liquidity. A lot of people trade gold, from Forex traders to stock traders, options traders to futures traders. Golden is extremely, extremely popular asset class that's traded. It's low fees. It's easy to hold in the Roth IRA as well too if you just want to buy shares and hold. And the cons, you don't own the actual metal. So if the fund fails, then you have a paper claim, not actual gold. And as far as investing in the miners, it gives you leverage. So if gold is up 10%, miners might go up 30%, but they have risk as far as fuel costs, strikes, etc. And the physical side of everything, you have no counterparty risk, total privacy, and it's useful in extreme disasters. That can be true and also not true. Your house could burn down, etc., and then it could be hard to get to the gold bars. The gold could maybe survive depending on how long it's in the fire, but still, that could be relative to a lot of cases. And cons, you got to worry about security. Hey, you can't be letting everyone know that you got a whole bunch of gold bars stacked up. That's not going to be ideal. Okay? You got to keep that very private between just you and your family. And storage issues too. When you start stacking up more gold bars, having a safe might be hard if you're trying to move houses or something like that, etc. Okay? And it can be hard to sell quickly. You got to go to the smelter, melt it down, and then go to the jeweler, get an exchange rate on that. And they might give you a lower price than you might actually should get because they're trying to make some money too. You know, it's the world. We're all trying to make some money. And tax. So it's often taxed as collectibles too, which is a 28% capital gains in the United States rather than stocks. So the strategic allocation. So how much is going to be enough? So most financial advisors suggest precious metals should be a hedge, not your whole entire piece of the pie. So be conservative, 5%. Okay, it gives you just enough insurance to sleep at night. If you want to have a couple of gold bars in real life, then that would be fine too. And just keeping your asset classes divided in certain scenarios could really help you, especially during hard times. You might not have access to the internet, and you might need to go take the gold bar to someone who could exchange it for either some fiat currency or a car or just an item that you need. So having multiple sources of backup plans for your income is really, really going to help you. And gold pays no dividends if you do just have the actual gold bars. It just sits there. So try not to just invest 100% of your money into gold, or you're going to miss out on compound interest. And not even interest, but just compound equity curve just in general. Whether you invested into a stock that goes up year after year after year due to the fact that it's just making tons of profitable decisions, then you don't want to miss out on that. If you have one gold bar, 10 years later, if you don't do anything, if you don't get up and keep grinding and keep hustling, you're not going to have any more gold bars. Okay? But if you invest and put $1,000 into a stock, 10 years later, you could have did nothing and come out with $100,000. Okay, so having your asset classes divided is really going to help you. But there could be a time where you need to pull all your money out of your stock account and you have gold bars and you can exchange that, put it right back in your stock account. So there's going to be different scenarios and different floats, especially jewelry too. If you have any real gold jewelry that you don't care about, I would think about smelting it. Gold is extremely, extremely valuable, and just keep that in consideration. So is it a good hedge? I'm going to go ahead and say yes, but here's to clarify your goal. If you want to get rich, then focus on stocks, business, crypto. And if you want to stay rich and have protection over your purchasing power over decades, gold is going to be an extremely, extremely good standard. And if you want a speculative play to invest into, you could play gold futures. Gold is on Forex. Gold has stocks and shares you could trade. And same thing with silver too. So you could just make your decision in order to protect you over time. Take a look at the chart before you trade. If you're struggling with what to invest in, head over to stackmode.net. Stay prayers to God. Keep grinding. Catch you guys in the next one. Class, let's go and let's jump into it. How working on your trading discipline helps you think long term. Understand that process is going to be greater than the process. We gotta focus on the discipline. God tells us to be disciplined, be patient for a reason. You can't think you're about to get rich overnight. Okay, it's going to be a consistent journey. It's going to take you day after day, grind year after year, and being disciplined decade after decade. If you're thinking this is a get rich quick scheme, if you think you're about to just come into the market and get rich overnight, I recommend that you guys go find something else. Okay, but if you're ready to grind out this process, be here year after year and generate wealth and transform your entire self as a human, let's go and let's jump into the lesson with discipline. So short-term versus long-term focus. So the gambler's mindset. So gamblers decide to focus on the next trade. Okay, so they focus on the next trade. Okay, and the immediate P&L. So you can't do that. Okay, yes, you can focus on the next trade. Don't let this trade destroy you if you decide to take a loss. Okay, but you can't just immediately focus on the next trade. Okay, whether you take a L or you take a win. Okay, whether you lose or win, you have to pause for a second. Don't immediately try to take another trade. If you lose, don't try to take another trade trying to make some more profit back. And if you win, don't try to take another trade trying to make even more. That's greed. All right, don't try to just trade immediately again. Relax. Okay, don't let any emotions destroy you and just focus. And don't let any emotions trigger your trading material. Okay, no greed, no fear, no FOMO. You don't enter off of any of that. You enter off of strict criteria. If you're going to be breaking retest trader, you're going to wait for resistance to be broken, turn it to support and take it up to the next level. Okay, and your outcomes, right? You should not be having extremely random results when it comes to how much you're losing. For example, if you're losing different amounts each time variously, okay, and it's random, not calculated, you're gambling. You should know exactly how much you're going to lose when you put down the trade. And stop asking yourself when you get onto the market, how much can I make today? Ask yourself, am I going to stick to my plan? Does this setup look like an S plus criteria setup that I want to go ahead and take? You're not going to make money every single day in the market. So remove all of these short-term mindsets. The short-term gambler's mindset is not going to get you anywhere but just being sad, okay, with no money in your bank account, because that's all where it left me when I was a gambler, okay? Destroying my account, chasing the next one, even making really good profit over and over again, destroying my account, okay, not being able to keep it, not being able to consistently grow it, okay? So, and then I had to really develop the trader's mindset and start understanding that this is a whole left to right chart, okay? These stocks are out for decades, year after year. The whole market is meant to be played long term. So it's about keeping your account alive, taking trades that's going to keep your account alive, and prioritize those trades instead of just trades that's going to make you money. Okay, so focus on the system's edge. So instead of focusing on the next trade when you win or lose, having a frantic mindset, focus on the system edge. Reflect what you did wrong, or journal your trades, and then go ahead and see if you could stick to that for the next 100 trades. Okay, if it was a win, stick to that. Okay, stick to that system and keep doing that for at least 100 trades. If it was a loss and you stuck to your setup criteria, you could do the same thing. See if that system, that edge truly doesn't work. You can't just swap system and edges because of a couple of losses. Okay, you have to really understand your market edge, grind it out, fix any kinks, and stick to it. Okay, switching edges every 2 seconds, switching to this indicator, that indicator is a big reason why people don't end up becoming profitable. If you're going to be a break and retest trader, you only trade break and retest till the end of time, for example. So long-term traders are also driven by logic. They don't trade off of emotions. They understand their probabilities. They understand they're not going to win every single trade. They understand that their risk management is going to be imperative, and they know exactly how much they're going to lose in case they take a loose. Okay, so in case they take a L, and in case they lose, they know exactly how much they're going to lose. And they have a consistent equity curve. Okay, low drawdown. They don't let their trades suffer too much. They play with the stop loss if needed, okay, which is an automatic order that's going to close your trades when needed. And they make sure they play for sustainable growth, growing your portfolio over time. And they ask themselves, am I following my trading plan? Or how much am I risking today? Okay, instead of just wondering about how much am I going to make today, ask how much am I risking? Does this calculate between 1 to 10% of my account? Okay, and if so, then you can go ahead and implement that within your strategy. And long-term survival is achieved by prioritizing capital preservation over just immediate gain. Okay. So discipline, it's going to be the foundation of process, and that's with anything, okay? Whether it be praying to God, okay, pray to God every single day, okay? Requires discipline. Working out requires eating healthy, eating clean, working out Monday through Friday, for example, 5 days a week. And discipline isn't just about winning. It's about making every action replicable and measurable. And a strict entry-exit criteria is going to be needed in order to participate within the markets within a logistical way. So if your setup doesn't meet all of your criteria defined in your plan, you don't trade. Okay, and this prevents emotional entries and revenge trading. So make sure that you have your risk limit intact. Okay, know exactly how much you're going to lose, know exactly where you're going to enter, and know exactly where you're going to exit. Okay, once you have these 3 things in place, you can go ahead and take your trade. Okay. And some non-negotiable stop losses. A 1% risk, let's say, for example, per trade limit ensures that no single loss can derail your multi-year trading trajectory. And the soft loss is going to be extremely needed. Okay, so your risk limit can be between 1 to 10% of your account. Okay, and consistently journal. Okay, I'm going to drop the Stackmode app too, where you guys can go ahead and journal. Use a physical journal, Notion, Discord, whatever, and you can document every single trade, even winners with high fidelity, and they ensure that you have the data needed to make objective long-term improvements. Even if you fall into a season where you feel like you're not hot anymore, you feel like you're not winning like you need to, you can go ahead and check your journal, check out the profits, and just go ahead and replicate what you were doing then. Okay, don't change anything. Be as consistent as possible year after year and show up. So the bridge control. Risk control is going to equal longevity. Okay, so why does 1 to 10% of your account per trade? Okay, why does that discipline force long-term thinking? And this is because you're not instantaneously ready to destroy your account over one trade. Like, you know what, I'm going to use all the money in this account. It's either I win or lose, forget it. Okay, no, you're not building any edge like that. You're not working on yourself like that. Everything is a grind, and survival is going to be paramount. If you risk 50% on one trade, you must make 100% on the next to break even. And disciplined risk management, 1 to 10%, makes the next trade a simple statistical event, not a catastrophic recovery event. Okay, so you guys don't have to trade within a sense like, well, I just lost this amount. I just traded with 60% of my account. And then you only have 40% of your account left. So say you lost 60% of your account, right? Then you only have 40% of your account left. Then you're about to trade with all of that, trying to make it back. Okay. And you're going to have to put on multiple trades and your emotions are going to be all over the place. But if you lose 5% at a time, 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 and then you win 40%, you're good. Okay. You're good. You have to stick to that type of structure. Understand the logic is going to be in front of you. Protect your edge as well too. Your trading system is going to work over hundreds of trades. You have to focus on the long term. And discipline ensures that you execute enough trades in a consistent manner for your statistical edge to actually materialize. Inconsistency destroys your sample size as well too. Okay, don't just start losing yourself once you start making some money. Don't start throwing on more size than need to be. Don't start taking setups you wouldn't normally take, and focus on yourself and be blessed with the ability that God has blessed you with. Okay, and just keep growing it by staying locked in, staying disciplined, and staying down. Okay, keep reinvesting your profits into more different plays. Okay, keep being disciplined within the real life. Don't spend money that you don't have. Okay, and take your time and enable compounding. Compounding growth is the engine of long-term wealth, and discipline prevents large drawdowns that stop the compounding process. A small, consistent gain preserved is infinitely more valuable than a huge volatile gain followed by a huge loss. And the drawdown trap. To recover a 25% loss, you need to gain 33%, okay, which is going to be pretty manageable. So to recover a 50% loss, you need to gain 100%. And to recover a 75% loss, you need to gain a 300% win. Okay. So discipline is the tool that locks you out of the drawdown trap, forcing your focus onto the next consistent decision after you've reflected, after you've journaled. Okay. And if you follow your criteria, you're going to stick to that plan, not the last emotional mistake. Okay. Don't just hop into a next trade as soon as you lose. Okay. Relax, take your time, reflect on it, and then come back stronger. So the metrics of longevity: expected value, EV, expected value formula. You have the win rate times average win minus the loss rate times average loss. So expected formula, okay? Expected value formula is a long-term forecast. An EV tells you what your average profit per trade will be. And over a large sample size, let's say for example, took 500 trades, okay? You can go ahead and check to see what your average profit per trade will be, okay? Once you calculate everything will be. And depending on your contract size as well too. And discipline is essential because it's only the factor that's going to ensure your actual performance that meets your theoretical EV by controlling the inputs, okay, your average win and loss. So the disciplined trader's EV, let's say they have a win rate of 45%, for example, okay, you can have a win rate right around 90% if once you get pretty good, okay. Something I've tested myself. April had a really consistent month, posted every single trade on my Discord and stuff like that. And average R, okay, the risk to reward. Okay, let's say they have a 2-to-1 risk to reward on average. Okay, that means they're doubling their money. So let's say they took a trade for $50, they're making $100. Okay, a trade. Okay, so that's going to be a 2-to-1. So the EV is going to be positive. The system has an edge. They're making money consistently. They have a good win rate, and their account is growing over time. So let's go over the inconsistent trader nullifies EV, and the emotional trader destroys EV by changing the variables. They move stop loss, which then destroys all your percentage equity curve, which then increases your average loss. I know when I was moving stop loss, destroying everything, it was definitely messing up P&L. And they cut winners short too. Stop having so much anxiety. What did you enter the trade for? You got to really trust the intellect that God bless you with. Stop closing your trades early. That's cringe. All that fear, all that anxiety. You're trying to get rich. No risk, no Rari. Stop being scary. And stop chasing low quality trades. Okay, that's really going to decrease your win rate. Okay, we're here to win. We're here to put in some trades that are going to be high quality, expecting us to safely make some money, inshallah. And without discipline, the EV formula becomes meaningless, leading to random destructive results. So make sure you guys are doing everything within a structured, unbiased formula. So the final step, treat trading as a business. Some of you guys are taking it as a game, as a mini game, scalping on the 1 minute, 5 minute time frame, having fun, smiling, cheesing, losing all of your money. Okay, when you're a trader, you got to understand that you're the boss, you're the CEO, and your role is to not predict the next price move, but to manage your capital, execute the business plan, okay, in order to catch the price move that you want the directional bias based off of, and then analyze your performance, okay, consistently withdraw certain amounts. Let's say I make $1,000, I'm going to withdraw $500. Then I'm going to take 30% of that and put it away for taxes. You have to understand you're your own boss. You have to be structured with even the money that you're making. And daily discipline is the only thing that's going to ensure success. Focus on the 10 steps, okay, you must take today. Focus on the process rather than the 10,000 other ones that you hope to make tomorrow, okay? So focus on the 10 steps. Don't focus on the $10,000, okay? Focus on the 10 steps, okay? Focus on what you need to do. What's stopping you from getting the $10,000, okay? Your discipline. Get more structured. Lower your ego so you can stop blowing up your account. You can start actually growing it and start winning. Okay, come to me for mentorship if you need. Head over to Stackmode.net if you're struggling in trading. And have a compounding mindset. Okay, I'll give you guys a free call as well. And understand that small, positive, disciplined returns executed consistently are the only reliable path to long-term wealth creation. And longevity is going to be the true goal. And think in centuries and act within seconds. So, say prayer to God. Keep grinding. Catch you guys in the next one. Once again, you can head over to Stackmode.net for all trading education. Peace. All right, so we're going to go ahead and talk about the bear market, okay? So pretty much whenever cryptocurrency starts heading in a downtrend, okay, sometimes that's going to induce panicking, okay? It can induce a couple of emotions, such as like panic selling, okay? Certain things, whether you want to feel like you might want to dump your entire portfolio, okay, because of how many negative trades that you've taken within a certain bear market cycle, right? Or if your portfolio's down, okay, but we don't want to do that, okay? Let's not think of the market that way. Let's think of the market logically, okay? So just like we always cover and talk about, there's benefits to making sure that these markets go in upwards direction, okay? Cryptocurrency included. This is something that governments hold, many people hold, hedge funds hold, and just people with large quantities of money hold, okay? So cryptocurrency, it's not going to be something that's going to be useless, okay? It's going to be something that's going to be instructing and providing power back to us, the people, okay? So it's something that people are investing into due to the fact that people can easily send money from one person to the other, okay, without having any bank intermediaries in the middle of it, okay? So if you want to send a wire transfer, for example, okay, from $1 million from one person to another person in China, a lot of times that transaction might not easily go through, okay, without being first approved by the bank. Cryptocurrency removes the whole bank in the middle, okay, and works on its whole blockchain system, okay, letting people make their transactions on their own accord. So if someone wants to sell $1 million in cryptocurrency to a person in China, they can go ahead and do that and easily and instantly using the decentralized space. Okay, so let's jump into it. So cryptocurrency has many uses. If you see market going in a downtrend, all it is people selling as well too. Okay, just like we see this chart right here. Okay, this is a left to right chart. So if people got in at this low down here, okay, and market starts going in upwards direction, of course, when market decides to fall down and correct, okay, people call it a bear market, but of course it's going to fall down and correct though. People got in way back here and they're going to go ahead and take profit. So when people are taking profit, getting their money out, that's going to cause the shares to fall down. Okay, so all the crypto supply will fall in a downwards direction the more people sell. Okay, so whenever we see market going in a downwards direction or a bear market, okay, that just means markets going in a downwards direction, which also means people are just selling. Okay, but these are going to be opportunities where markets also going to go on discount. Okay, so if something is $50 right now, okay, and it's something that you want, and then it goes on sale, and you see it on sale for $20, okay, you might even get two of those things, okay, due to the fact that it's on sale now. Okay, so think of crypto market dumps like that. Okay, think of things going on sale. Okay, market has to go up in order to come down. It can't just go up in a straight line forever. Okay, it has to work in a staircase formation. People have to buy, people have to sell. Hence why it's called trading. Okay, when you're winning, somebody's losing. When you're losing, somebody's winning. Okay, so let's cover the mindset and really just understand how we can prepare for when market's going into downtrends. Okay, so let's define the bear market and root causes. So bear market is generally defined as a decline of 20% or more, okay, from the recent highs, marked by widespread pessimism, low confidence, and a sustained decline in prices and trading volume. Okay, and key definitions. So the 20% rule. So why subjective? A 20% drop from the all-time highs signals market distress. And in crypto, drops of 70 to 85% on certain things like meme coins and stuff like that can be common during major bear cycles. So that's why you don't really play meme coins and things like that. It's not really worth it since they just don't have enough value. Okay. And they can easily just go ahead and fall in opposite directions without much of a backbone behind it. Okay. Versus something like Bitcoin, where that's a lot less likely to happen. And the more actually it dips, the more people are going to buy. Okay. People are putting in $300 million orders plus, etc. Okay. Anytime Bitcoin dips down. Okay. So it's way different. So it's going to be sometimes too where certain cryptos go cold, okay, and they start consolidating. So what consolidating means that it starts going in a sideways direction, okay, not much price action up or down, and you want to stay away from those. Okay, so you want to trade something that goes in upwards direction year after year and is gaining percentage year gain, okay, making your money more money, making it a stable investment. So watch what cryptos we invest in, okay, and primary catalyst, right? Let's talk about it. So some macroeconomic factors. So global inflation that can affect crypto prices, interest rate hikes by central banks, and traditional asset market declines often correlate with crypto downturns. Okay. Excessive leverage cleansing. Okay. Overly aggressive market buying. Okay. With borrowed funds. So there's going to be times where people can trade Bitcoin with borrowed funds, right? With something called leverage. So just like, futures, there's going to be things called crypto futures. Okay. And on crypto futures, you can trade with the same leveraged amount. Okay. And any leverage amount, depending on the broker, it goes up to like 500x and stuff like that. Okay. And sometimes the market decides to go down. Okay. It creates instability, and bear markets, meaning markets going in a downwards direction. It purifies the market by liquidating these highly leveraged positions. Since the more leverage that you're playing with, the smaller that your stop loss is going to be. Okay, meaning that your trade has to close at a certain area automatically versus if you're playing with no leverage. Okay. So regulatory uncertainty. So major government crackdowns or unclear legal frameworks in key jurisdiction can trigger broad market fear and lack of trust within certain cryptocurrency markets. Okay, so we saw in 2022 COVID area during the SEC, okay, the government exchange for securities, okay, they were having some problems with the crypto sphere, but since then things have been passed, things have been regulated, and as we can see, crypto is now shooting into new highs constantly with tons of optimistic future ahead of it. Okay, and let's talk about project failure and exploits. So the collapse of large projects like major stablecoins or exchanges lead to contagion and a severe loss of investor trust. Okay, so if you see certain things like certain exchanges fall down, or certain brokers where a lot of people invest in to shut down randomly, that could put some fear into the market. More fear into the market, less people are going to be investing. Okay, but that's just things that could happen. But just like a bank, banks have random maintenance where you can't pull out your money. Okay, so anything has its cons, anything has its pros. Okay, only thing's perfect is God. Sometimes things are going to shut down, just is what it is. So psychological game, right? Conquering FUD. So investment success during a bear market is going to be 80% psychology. Okay. Really 80%. I'll say like 90% plus. Okay. Because you can have really the best levels on the screen. Okay. And I've done some tests with certain students. Okay. You can give somebody the best levels, but they don't close where they need to close. Okay. Due to the fact that their analogy or how they process it in their head might be completely different. Okay. So trading is really going to be psychology and how you look at the market. Okay. So mistake number one. Okay. So mistake number one that people make, this is the main reason why people will remain unprofitable, okay? Their stop losses are going to be too tight, okay? Way too tight, okay? Causing them to panic sell, okay? So selling assets at low prices locks in permanent losses. And the single best way to lose money in a bear market is to sell everything when despair is the highest, okay? Sometimes you got to sit and you got to hold through certain periods expecting price to sweep up. Now, I'm not saying hold every single trade, just certain past the worst dump of all time or past your stop loss. But if you have a calculated trade that you have planned and it starts going in the red, it's part of the game, okay? And the game is really about who can survive when market's in drawdown or your account is in drawdown, okay? And who can't, okay? Because whoever's going to sell all the positions when market's in drawdown for a loss, their account is never going to grow. Okay, you have to be able to sit there and stomach through it. There's times I've had tons of time. This is why time is going to be one of the biggest factors in trading. This is why crypto is really amazing. Okay, well, when you're trading cryptocurrency, you have time. Okay, cryptocurrency, as soon as you buy, you can hold it forever until the end of time. So you have time. So if you sell, okay, that's going to be on you. Okay, there's no time running behind you. As soon as you buy some spot cryptocurrency, okay, when you just buy crypto on a normal broker, okay, and you can just buy and hold without any leverage, okay, and no leverage buying cryptocurrency, just being the normal way, it's called spot. So when you do that, okay, you can decide like, okay, I'm going to sell in a couple of years. Okay. It's not as easy to do that with other instruments. Okay. Other instruments can be time gated, such as like futures, for example. Okay. Futures, each contracts, they have expiration dates. Okay. So things can be a little bit different. So let's talk about tactic number one, right? The zoom out. Okay. We got to zoom out. We got to get the whole long-term perspective. This is why we use our higher time frames. Okay. Time frames we're going to be using. Okay. Some great notes here. Time frames that we focus on. Weekly. Okay, we're going to use our weekly time frame. We want to see everything on the larger, higher time frame scale. Okay, after we check out our weekly, maybe for take profits. Okay, and take profit is where we close the trade out. Okay, say you got it at an area of support. Okay, and you close at an area of resistance above current price. You can go ahead and do that. Okay, so you're going to have the weekly. You're going to have the daily. Okay, and then you're gonna have your 4-hour time frame. Okay, then you're gonna have your 4-hour time frame. Okay, so using those time frames all together is really gonna help you put your trade into perspective and be like, okay, this is the type of setup I want to be taking from now on. Okay, and these are the type of trades that I just take. Okay, so that's what you want to focus on. Okay, weekly, daily, and the 4-hour. So let's talk about zooming out. So the HODL view. So we're going to focus on the long-term vision, okay, of 3 to 5 years plus. And all major crypto bear markets have been followed by new explosive bull market cycles. Okay, look at the monthly or the yearly charts. Okay, not the 5-minute charts. Okay, tactic number 2. Okay, reduce obsession. Okay, we should be grinding in real life, stacking up some bread, okay, putting some money away, okay, and just growing our capital in the real life so we have more money to come put into the markets. Okay, but constantly checking P&L, seeing how much money you're up and down, it's not what we want to do. Okay, focus on the charts. Okay, you could look at the charts, see where it's at, but even that, don't turn it into unhealthy obsession. Okay, take your time, check your charts out maybe once a day, a couple times a week. Okay, but don't sit there stuck on the position every minute. Okay, constantly checking the price feeds lead to anxiety and they lead to impulsive behavior. So set clear rules and limits and then step away from the daily chart fluctuations. So it's really about a battle of just you versus you at a certain point. So quote for perspective, right? Be fearful when others are greedy and greedy when others are fearful. Okay, so when everyone's scared, price is going in downwards direction. As soon as it starts making a curl on your weekly or daily, you can go ahead and get in, buy that, and then you buy the low where everyone's fearful. And then by the time it's at all-time highs, that's when you're going to start seeing the posts like, oh, everyone, and then everyone's going to start buying all-time highs. Okay, it happens constantly every single cycle. So when we know how to sit through the bear market cycles and buy certain dips, we're going to be able to prepare and be a lot further ahead than other people due to the fact that we can analyze something so simple. Okay. So accumulation through DCA. So let's talk about DCA. So DCA stands for dollar cost averaging. Okay. So DCA, it's dollar cost averaging. What is that? Okay, it's one of the most powerful tools for risk mitigation and capital deployment in volatile bear markets. And it needs the need to time the bottom. Okay, and let's talk about the DCA mechanism. So fixed schedule. So investing a fixed dollar amount, let's say for example $100. Okay, at regular intervals, let's say weekly or monthly. Okay, that's going to be DCA. Okay, when you're just regularly putting away a certain amount of money, okay, that you can. Okay, pay your bills, get some groceries, and then you can invest. If you're going to say you're going to invest $1,000 in Bitcoin a month, okay, then go ahead and do that. Okay, if you can do more, then do more. But DCA means just take a percentage of your money, okay, break it down and put it into some cryptocurrency or whatever investment. Okay, I don't care if you get $10. Okay, go ahead and break it down, put 7 of it into crypto. Okay, just having that type of stack mode mindset is going to help you grow your currency and help you stack way faster. Okay, and your portfolio will flip in no time. And shalom. So reducing the timing risk. So, and also keep yourself broke. Okay, so if you keep yourself broke, this is a strategy I notice a lot of people do. Okay, it's something I definitely do. Okay, I don't keep any money in my checking account. Okay, after I pay my bills, I get my big lump of groceries. Okay, I do what I need to do. Okay, I buy what I want to buy. And then from there, every dollar that I have the rest, okay, I'm going to pay my credit card. Okay, and then after that, I'm just going to invest. That's all I do. I put every single dollar into investments and I just keep myself broke. Okay, I paid my rent. I got groceries, so I'm not going to starve, thank God. Okay, and I did everything I need to do. So I'm good. So I can keep myself broke and I'm going to survive. Okay, so keeping yourself broke whole time you got money stacked away in investments is going to be a really, 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 really good thing to do. Okay, just changing the whole mindset. Just, you know what? I don't need to go get this coffee today. I'm going to bring some coffee from home. I'm going to take this money and I'm going to invest. Okay, so it's something personally my wife really helped me out with. Okay, just changing the whole mindset of everything. Okay, changing the whole mindset of everything and really understanding like, okay, you know what, let's not eat out today. Let's stay down, groceries, and the rest of this money is investment money. Okay, because this stuff, it adds up quick. It's easy to spend $40 on a DoorDash meal, $50 on a DoorDash meal for 2 people, okay, quickly. Okay, but $50 worth of groceries, it really goes a long way. Okay, so it goes a much further way. Okay, so it's about just staying down, making the right decisions, and then we can go ahead and ball later. Yeah, so the compounding effect, right? So this strategy becomes exponentially more effective when asset prices are depressed, okay? As your fixed investment buys a larger portion of the supply, okay? So when market is in a downtrend, okay, and market's about to make that curl in an upwards direction, okay, and then we have cash to just stack and throw in there, and you buy, okay, even if you don't have all the cash in the world to buy at the low, as it curls up, you can keep adding, okay, and that you hit your trade, okay, and it's just about mindset. Then from there, take that capital, and then you can go ahead and deploy more cash into there and just keep stacking your wins over time. Nice. So thriving the strategy. All right. So let's talk about some fundamentals there. So bear markets separate speculative noise from real technology. Okay, so this is the time to ignore hype, okay, and focus exclusively on fundamental analysis and your technical analysis. Okay, so when market's in a heavy downtrend, let's say there's a speech from a president or something like that that has dropped the market. Okay, we want to be looking once again on our weekly and daily time frames primarily. Okay, and we're going to be looking for that V curl up. Okay, we want market to make an area of support. Okay, and then we want to see market start to curl up, either after a couple of days from the daily or a couple of weeks from the weekly. Preferably weekly curls are going to be really, really nice. Okay, because that means price really wants to reverse. Okay, if you start seeing 2 weeks in a row, price action, price filling in the V, okay, a lot of the times that's going to be the setup you would like to take. Okay. So, and we're going to ask ourselves too, if something is going down, why is it going down? Okay, was there any bad news behind it? Okay, did something happen? Okay, and let's think about utilities and use cases. So does the token or protocol solve a genuine, tangible problem? So we'll talk about Solana, for example. Okay, Solana, you need it to trade meme coins. Okay, so that point alone, Solana has value. Okay, if people want to create their own cryptocurrency coin, okay, they gotta generate some Solana first if they want to make their own meme coin. Okay, but then we'll take something like a random meme coin that's just a joke. Okay, it doesn't have any community behind it, no nothing. Okay, just a random meme coin. If it goes down to 0, okay, a lot of people wouldn't be surprised. Okay, because does it solve any genuine, tangible problems? But then you're gonna have something like Ethereum, for example. And Ethereum was created due to the fact that Bitcoin is limited. Okay, so one day Bitcoin will be gone. So people still want to trade cryptocurrency, so that Ethereum was created. Okay, so Ethereum has its purpose there. And instead of using power to create it, like Bitcoin's using power to create it, Ethereum is created using computers and smart contracts. So it's a lot more power efficient for the earth and it's healthier. Okay, so Ethereum actually has real uses compared to certain other things like random just joke meme coins. Okay. So, because if something has a real use and it dips down, people are going to be hounding to buy that dip. Okay, the second something valuable dips, people are hounding, buying tons of it. Okay, the second Bitcoin dips, people putting in hundreds of millions of dollars worth of orders, whether it be governments, BlackRock, any type of companies, anybody. Okay. So talk about the cryptocurrencies team. So is the development team public, experienced, and actively building during the bear market? Okay, and you can check certain GitHub commits too. So certain cryptocurrency coins, okay, even though they're dipping down, they're working on tons of stuff on the back end, okay, looking to progress the future forward. And the community and governance behind it. So does the project have a vibrant, resilient community and a clear decentralized government model? Okay, so just like Bitcoin has tons of community behind it. You got companies such as MicroStrategy, also known as MSTR, okay, big representative of Bitcoin, okay, things like that. Okay, and also have, once again, governments, US government, other governments, etc., participating in buying Bitcoin and other tokens as well too. So the tokenomics of everything. Okay, so analyze the supply schedule, vesting periods, inflation and deflation mechanics, and allocation of the team versus the public. Okay, and blue chip versus speculative asset, right? So blue chip cryptocurrencies, they're going to be our big heavy hitters. Okay, our Bitcoins, our Ethereums, XRPs, etc. Okay, and these assets, they have the deepest liquidity. Okay, and liquidity is going to equal money. Okay, and money equals the amount of people. Okay, the more money something has, the more people are trading it. The more people are trading it, the higher liquidity it has. Okay, so liquidity is going to mean money. So they have the highest and deepest liquidity and have proven recovery patterns over multiple cycles. For example, Bitcoin's 80% drop in 2018, followed by new all-time highs. Okay, so people, once again, if something's a valuable resource and it dips down, people are going to be hounding and fiending and hungry to buy the dips, because I know I definitely am. Okay, I just bought some Bitcoin today. Okay, so speculative meme coins. So assets with high returns during the bull run are often the first to lose all liquidity in a bear market, okay, making them highly dangerous accumulation targets. So focus on protocols with established ecosystems. Okay, for example, layer 1 networks and major DeFi apps. Okay, so let's get assets with high returns. Okay, during the bull run, the first to lose all liquidity in a bear market. Okay, so focus on protocols with established ecosystems, things that have been around for a couple of years, okay, and has some value. Something you can sleep on your investment. So that's one thing we want to think about in trading, you know? So sometimes we hop on the markets, we think about money. You know, that's the right mindset. We're trying to run up a bag, but sometimes we got to play it safe. So the safest trades, a lot of the times, what people don't know, the safest trades, a lot of the times, is what's going to make you the money. Okay, focusing on discipline, being as safe as you possibly can with your money inside of your account. A lot of the times, that'll lead you to running up that big bag. Okay. So people are going to claim that market's going into a bear market when all it's doing is going in a downwards direction. Okay. It's people who think that market's going to run up infinitely, going up forever. It's extremely unreasonable. Okay. Market's going to obviously fall down, correct? Even if it's a hard correction, you have to understand that there's people who've been invested in years, months, and many more days before you even thought about it or even got in. Okay, so we have to think about those players and how long they've been waiting to close. Okay, so that's why quote unquote bear markets happen. Okay, markets just selling off due to the fact that there's too much supply. Okay, people who got in way in the beginning of time are holding so much of it. They're like, all right, I'm going to take my money and do something with it. Okay, and hence, and then a succession of everyone doing it at the same time, okay, leads to a bear market, leading price to go in a downwards direction. So staking, okay. So we'll talk about this in a second, but understand that the goal is really to increase your total asset count while the prices are low. So this is why I really promote the V, okay? So market, it's gonna fall by itself, okay? Market's gonna do its thing, and the left side of the V is gonna be market falling. Now, once market makes a bottom of the V is when we wanna look for a setup, okay? Look on the weekly or the daily, look for the bottom of the V, and then catch the rest of the V gap fill. Okay, that's what you're going to be looking for. Okay, catching the rest of the V gap fill. So you want to buy something at a low ideally and catch a sweep up. Okay, buy something at a low and catch a sweep up. Okay, because if you buy something a lot of the times Okay. Especially if you're like an options trade, if you buy something at super all-time highs, okay, you can expect to get pulled back on. Okay, but understand that, yeah, certain positioning, it really does matter. Okay, especially if you're gonna buy certain things that you're not expecting to hold for years and years, is especially if you're trading something like leverage crypto. Okay, then we want to go ahead and think about that. Okay, so yield farming. Okay, so providing liquidity to decentralized exchanges to earn trading fees and governance token. Okay, so that's going to be one of the things that some people do too. Okay, and that's going to be something that's just involved, but we don't really have to worry about that. Okay, as well as staking and then stablecoin allocation too, allows you to earn low risk, low yield while maintaining purchasing power for potential market dips. Okay, so there's going to be certain things you can do. Yield farming, you can pretty much kind of like the bank, get APYs, annual percentage yields on your money. Okay, if you invest in a certain cryptocurrencies. Okay, so you can do that. That's a potential option. I don't really recommend that. Buying spot or just buying normally in a normal broker is going to be just a lot safer too. Okay, because certain of these yield farm coins can go down and then you're not going to get certain of your returns that you expect back. But some of them do provide nasty returns like 40% per year and things like that, okay, on your money. So yeah, that's some things in the cryptocurrency space. So, so, okay, and then but market will always recover. So even if market decides to go in a downtrend, okay, if something's a valuable asset, it's putting a smile on people's faces. Inshallah, if God wills, it'll hit a sweep back up. Okay, so following every 70%, right, major drawdown in Bitcoin, for example, people were thinking, oh, it's the end of the coin, it's the end, like it's over. And Bitcoin has not only recovered, but has gone on to achieve significantly higher all-time highs every single time. Okay, and the bear market is not the end. It's simply just the consolidation phase where people are just getting a opportunity to buy in. Okay, so it's just an opportunity. So bear markets are an opportunity, hence why a large amount of millionaires were made in the 2008 recession, for example. Okay, how were millionaires getting made in one of the worst times for people? Okay, but it was really just the worst time for people who weren't investing. Okay, if you were investing during that time, you would have been able to make some really, really, really great money. So yeah. So this is why we take advantage of any dips now. Okay, any dips, we're going to go ahead and buy the lows, and then you can catch the whole sweep back up. So the bear market, it's just not the end. Okay, it's not the end, especially if something is valuable. Inshallah, you could expect to sweep up. So essential risk management and security. Okay, so self-custody is key. So let's talk about some crypto things right now. So let's talk about keeping our crypto safe. Okay, so keeping your crypto safe is going to regard in a couple of things. So if you keep your crypto in a broker like Cash App or Coinbase, Kraken, or things like that, okay, they're safe. But if these brokers happen to shut down, then you lose access to your cryptocurrency, okay, or something like that. Okay, so you're not going to have access to certain things. Okay, so what you can do eventually, okay, you can keep it on a broker like these for now as you stack up, but I advise once you get past like 4 figures to the 5 figures range, then go ahead and move and start. You can still buy on these exchanges, is what they're still useful for, but after that I recommend moving your coins to what's called a cold wallet. Okay, so you could either use it's going to be a hardware wallet where you can actually physically plug it into a computer and then you can get access to your crypto. So those can be destroyed. That's the only bad thing about that. So again, we talked about certain things like the guy clearing the landfill, okay, looking for his cryptocurrency. Okay, so things like that are going to come into play. So you can actually just use a seed phrase. There's going to be certain things like Phantom, okay, Phantom on the Apple App Store. It's really, really good. It's just going to be like a ghost icon, okay, with like some eyes. And there it's going to be backed up by a seed phrase. And the seed phrase is going to be a 12 to 24 word seed phrase. And yeah, you can go ahead and just either write it down on pieces of paper, email it to yourself with a secure key, and just keep the code, spread it out somewhere. Okay. So you can do things like that. So cool. So now we're gonna be good. Okay, so we're gonna focus on bear markets, and we're gonna be waiting for curls. Okay, we're not gonna think of bear markets as bad. We're gonna eyeball them. We're gonna see opportunity in that. Okay, we're gonna see the good in it. All right. So cool. So that's gonna go ahead and be that.
Class, let's go and let's jump straight into it. Today we're going to be talking about mastering financial analysis, and this is going to be the beginner's guide. So what is a financial statement analysis? Financial statement analysis is going to be the process of reviewing and evaluating a company's past and present financial reports, the three statements to make better economic decisions, and then it involves calculating key ratios and comparing data over time against competitors. So we want to be making sure we know how to read how much is a company making, does it have a lot of debt, and are we going to be able to profit off the company due to the fact that they're putting a smile on people's faces and it's a profitable company, which is going to affect the future, and is it a company that's hiring people and nonstop making profit? Okay, because that's going to let us know that the share price has an incentive to increase. So it's going to be a comprehensive course on analyzing a company's financial health. Let's understand that the financial statements are going to be the bedrock of intelligent investing, effective management, and sound business decisions. Whether you're an aspiring investor, a business student, or a founder, these skills are going to be fundamental and imperative. So let's take a look at past performance. So you got to look at past performance to identify trends, growth rates, and recurring issues with the company. And comparative analysis, benchmarking the company against its closest competitors, peer group, or industry averages. Okay, see how it's faring up. If it's a tech company, see how it's faring up against other tech companies. If it's a healthcare company, see how it's doing against other healthcare companies. Okay, and do it like that. And forecasting, using historical data and current trends to project future financial performance. So it allows us to answer certain critical questions about a business. Once again, how much money are they making? And are they in debt? It's pretty much going to be the two main questions that's going to let us know if something's going to be a good investment or not. So the income statement, profit and loss, and measuring performance. So the income statement is also known as the profit and loss statement, and it measures a company's financial performance over a specific period of time, for example, quarter or a year, and it shows how revenue is transformed into net income. And the core structure, a journey to profit. The statement is constructed like a ladder, and subsequently deducting expenses from revenue to arrive at different levels of profitability. And the revenue sales. Revenue is going to be the total amount of money that's generated from the sale of goods or services. And this is going to be the starting point. And the first thing we want to look at is the company making money in the first place. Let's check the cost of goods, COGS, the direct cost attributable to the production of goods or services sold. And this includes raw materials and direct labor. And gross profit. Gross profit is the revenue minus the cost of goods sold. And this metric shows a company's ability to manage its production cost. And operating expense, OPEX, the costs not directly tied to the production, and primarily selling, general, and administrative, SG&A, and research development. And operating income, this is earnings before interest and tax, and this represents the profit generated from the core business operations. And let's talk about net income. Net income is going to be the bottom line. And net income is going to be the operating income minus interest expense and taxes. And this is the profit available to shareholders. So the key income statements, ratios. How to analyze the P&L effectively, you got to use margins to see what percentage of the revenue remains at certain profit levels. And gross profit margin is calculated by dividing the gross profit by revenue. And a higher gross profit margin indicates better efficiency in production, which means they can go ahead and scale the business up while still bringing in profit. Okay. So the balance sheet, the accounting equation. So the balance sheet provides a snapshot of a company's assets, liabilities, and the owner's equity at a specific point in time. And it's based on the fundamental accounting equation, which must always hold true. So the foundation assets, okay? Assets equals liabilities plus equity, okay? So this equation dictates that everything a company owns, its assets, must have been financed either by debt or by owner's contributions, which is going to be the equity. So assets, they're going to be whatever the company owns.
Assets are anything of economic value that can be used to produce goods or services. And current assets, they're expected to be converted to cash within 1 year. For example, cash, accounts receivable, and inventory. And non-current assets, long-term items are not easily converted to cash. Property, plant, equipment, and intangible assets. And liabilities, they're going to be what the company owes. Liabilities represent the company's obligation to external parties. So current liabilities, obligations due within 1 year, for example, accounts payable and short-term debt. And non-current liabilities, obligations due beyond 1 year, for example, long-term bonds and deferred tax liabilities. And section 3, the shareholder's equity, and that's the owner's claim. And equity is the residual claim on the assets after all liabilities have been paid off. And it includes common stock and retained earnings, which is cumulative net income minus the dividends paid. So that's how you get that equation too. And so let's talk about tracking real cash. The cash flow statement is often considered the most reliable statement because it bypasses non-cash entries like depreciation and crucials found in the P&L and balance sheet, and it shows the net change in a company's cash balance over a certain period of time. So the 3 core activities, OIF, the CFS is divided into 3 sections that explain where cash was generated or spent. So 1, the cash flow from operations, CFO. This section starts with net income from the P&L and adjusted for non-cash expenses and changes in working capital accounts. This tells you the actual cash generated by the company's normal business activities. So the key adjustment, adding back depreciation and amortization, which is pretty much going to break down expenses on the P&L, but do not involve an actual cash outflow. And working capital changes. Changes in accounts like inventory, accounts payable, and accounts receivable are adjusted here to reflect real cash movements. And cash flow from investing, CFI. This tracks cash used for investments in long-term assets or revenues from selling them. And the largest item here is usually capital expenditures, CapEx, which is the cash spent on maintaining or expanding PP&E. So interpreting CFI. So a negative CFI, right, which is going to be the cash outflow, is often a sign of a growing, healthy company that's investing heavily in its future by purchasing equipment or new facilities, looking to scale its business outcome and business income by putting all the profit back into the business pretty much. And a large positive CFI may indicate a company is selling off core assets, which can definitely be a red flag, which means they're going broke. So if a company's going broke, that's not a good sign. It's a good sign that the stock might actually crash within a negative direction. So check a look for that. So turning data into insights. Ratios allow us to standardize financial data across companies of different sizes and asset-specific aspects of their health. Most notably liquidity, which is the short term, and solvency, which is the long term. And liquidity ratios, can we pay the bills? These ratios measure a company's ability to cover its short-term obligation using its short-term assets. Generally, a higher ratio is better, but industry context is crucial. So it's current ratio. The most common liquidity metric is it compares a company's total current assets, which is its cash, receivables, and inventory, against its current liabilities, which is its payables, short-term debt, etc. And the ratio below, let's say $1, is usually a 1 sign. And the current ratio is calculated by dividing current assets by current liabilities. So, quick ratio, the asset test ratio. A stricter test of liquidity, excluding inventory from current assets, as inventory can be slow to convert to cash. And this ratio focuses only on the most liquid assets. And the quick ratio is calculated by subtracting inventory from current assets, then dividing the result by current liabilities. So, solvency ratios, long-term survival. Solvency ratios gauge a company's ability to meet its long-term debt obligations, and whether it is financially sustainable. Excessive debt can cripple a business during economic downturns. So debt to equity ratios, DE. It compares the amount of debt financing to the amount of owner investing financing, and a high ratio indicates a company is highly leveraged. And the debt to equity ratio is going to be calculated by dividing total liabilities by the total shareholder equity. Let's talk about the interest cover ratio. It measures the company's ability to cover its interest payments using its operated earnings, the EBIT, and the interest coverage is calculated by dividing EBIT by interest expense. And a ratio of 1.5, for example, or higher is generally considered safe, but the higher is going to be better. So putting it all together, let's talk beyond the numbers. While the financial statements provide the objective data, a world-class analyst always incorporates qualitative analysis to provide context and foresight. And let's talk about the qualitative factors, the moat. These are non-numerical factors that determine the longevity and strength of a company's competitive advantage, its economic moat, and management quality. It assesses the track record and reputation of the executive team and asks, do they make rational capital allocation decisions? Are they investing their profit profitable? Okay, and asking those questions is going to be a good thing to know before we just put money into an investment. And doing the industry analysis. Is the industry growing or is it shrinking? Okay, tech industry as of currently in the 20th century has just been booming, for example. And what are the key competitive dynamics? Okay, is there any threat of new entrants? And what's the pricing power of it? Okay, and competitive position. Does the company have a sustainable edge? Okay, patents, brand recognition, low cost reduction, and how many smiles does it put on people's faces? And the small summary of the three statements. Okay, the three financial statements. Okay, one, your income statements. That's going to be the performance over a period, and it focuses on the profitability. Okay, for example, margins, how much money a company's making. And the balance sheet, it's going to focus on its assets, liabilities, and equity at a point in time. And it focuses on resources. And then we have the cash flow statement. It tracks cash movements over a certain period, and it focuses on liquidity and funding activities. Okay, so look at all of them. Okay. So your goal is to cross-reference the three statements. For example, if the net income, okay, is high, but the cash flow from operations is low, it suggests that the company is booking sales, but not collecting cash. That's a critical finding, okay, meaning that it's sinking, okay? So figure out what you guys want to invest in, okay? Stay prayed to God, keep grinding, and head over to Stackmode.net to learn how to trade and invest. Peace. All right, guys, this is going to be the easiest way on how to read the crypto chart. So it's going to be really imperative to know how to read the chart. It's going to tell you when to exit a lot of times. So sometimes when you come into the cryptocurrency market, buying when there's a lot of hype could mean that you're buying relatively at a high price. Okay. So when we show you guys when to buy at the dips, how to know when to trim some contracts off or trim a percentage of your tokens off, and how to know when it's a good time to buy in general. Okay. So one, let's talk about support and resistance in the first place. So understanding the logic, this is a left to right chart. So price started way over here, and it's way over here today. Okay. So we can clearly see from a logical perspective, the goal of the chart is to go in an upwards direction. Okay. Price year after year, month after month, even with dips, incrementally decided to keep going within a higher direction. Okay. So we can already logically put into perspective that, all right, the ultimate goal of cryptocurrencies are to keep breaking new all-time highs, okay? Because people want to invest their money and make their money by buying and holding it as something that has future value, okay? And in order to do that, price has to keep breaking new all-time highs. So let's say current price right now, as of this video, Bitcoin, it's 122,000, right? All-time highs, which is going to be the highest area of resistance, and resistance is going to be an area where price decides to fall within a downwards direction. So your highest area of resistance needs to go ahead and be broken over and over and over and over and over and over again. And that's how price progresses. Yeah. So if I come over here, I can see at one point in time, the highest price for Bitcoin was 109,000. But then I can see over here to the right, price decided to get above the area of resistance here. And once again, resistance is going to be the area where price decides to fall in a downwards direction. So we can see price getting above the area of resistance here, tried to hold it, and then over here, it definitely held it. Okay, and what happened? Price decided to stop falling around this 109,000 area, and it progressed to a new area, to 122,000. And it's going to try and progress again to maybe 150,000 and so on. It's going to just keep going, maybe to 1 million. Okay. So that's how things work. So as far as the cryptocurrency market, understand that people are investing their money to make more money. So the goal of this is for it to go in an upwards direction. Okay. People are trying to get paid based off of just growth and capital gains. Okay. Which means you're getting paid as something moves within a upwards direction. So resistance is going to be a really important thing to understand. especially when just coming onto the charts and just putting on certain trades, because it's going to tell you when to close too. So say you wanted to close a certain percentage of your position, then you'd be able to do that as well too at areas of resistance. Okay, so you know it's an upward chart. So you know areas of resistances are looking to be met with each other. Okay, so prices, as you can see, like this area right here, could mirror each other and do the same thing. So price came into this area once, twice, okay, and mirrored each other. Okay, once, twice. Price hit that blue line and decided to fall within a downwards direction. Okay, so that's why knowing when price is about to hit an area of resistance is going to be extremely imperative. Okay, because it's going to let you know when it's time to close, when it's time to trim some profits or anything like that. Okay, so resistance, that's going to be when market decides to make a top and fall in a downwards direction. And the opposite of resistance is going to be support. So the opposite of resistance is going to be support, and support is going to be when price makes a bottom and decides to bounce within an upwards direction. So after resistance gets made, and the whole logical reason resistance gets made in the first place is because price can't just keep going in an upwards direction. People are eventually going to want to take profit and take their money. Okay, so they're going to want to take their money off the table, and when that happens, resistance is going to get made. So that's why price goes in a downwards direction. Okay, because it's too much supply. It's more supply than demand. Okay, and then when price decides to go in an upwards direction, there's a lot of demand. Okay, there's more demand than supply. Okay, make it scarce, which is why people make money when stuff goes in an upwards direction. So that's a logical reason why support and resistance work with each other, why they correlate with each other. Okay, so support is going to be when price goes in the upwards direction. Resistance is when sellers come in after holding from a while, and then they want to go ahead and sell, take some profit, and then price is going to go in a downwards direction. Okay, so we know that one, price is always trying to hunt areas of resistance. You can see on the Bitcoin chart here, we know that price is trying to hunt all-time highs here. Okay, even no matter if price makes the most vicious dump to zero, it's still one day, inshallah, going to try and reach all-time highs. That's just how it works. That's just how it works. Okay, price is going to try and break this 124,000 level here. Okay, it's going to try and just continue to go up. Okay, and what can also happen here, so we see, okay, price is trying to meet up with the highest area of resistance to try to break it, or price might reverse here. Okay, it might reverse here, and even if it reverses all the way down there, okay, finds a low right here. Let's say support gets made right here. So even if support gets made down here, it's fine. Okay, because price is still going to try and sweep back up. That's just a better point to buy. Okay, so you know that price is always going to try and break areas of resistances. Now, due to that fact, you know that, okay, if price makes a good dip down, either A, if price mirrors an area of support and then bounces up, okay, I'm going to know, okay, that's going to be a good place for me to buy. Or if I see an area of resistance, right, get broken and turn into support, then I'm going to also know it's a good area too to buy. Okay, check out this area right here. So I can see right here, this area of resistance got created. Price decided to fall in a downwards direction. Okay, and you can go ahead and see to the right, price decided to break out of this areas of resistance right here. Okay, and guess what? Price decided to break this area of resistance right here and turn it into support. So resistance got formed, broken, okay, and when an area of resistance or support gets broken, we know that's called a breakout. Okay, and resistance, okay, an area where price fell down at, got broken through because price is trying to make some progress and keep making new highs so people keep making money, inshallah. Okay, and support gets made right here. So support's going to be that area where price decided to bounce in the upwards direction. So support can be formed after an area of resistance gets broken sometimes. So sometimes resistance can be broken. That's a support. Okay, it's going to be my favorite model. Okay, and this model is going to be called break, and retest. Okay. So whenever you see resistance get broken, turn into support, that's going to be called break and retest. Break and retest is going to be just one of the surefire ways in order to take safe trades, especially when you're taking dip downs. Okay, so if market makes a dip and you're like, okay, is it going to be a safe place? Then you can go ahead and look for break and retest to go ahead and define that. And another way, you're going to go ahead and decide to see if price is going to be a good place to buy at this area, is you can go ahead and look for what I like to call support mirror. Okay. So sometimes you're going to see an area make an area of support. Okay. And then no matter what happens, even if price goes below that area of support, one day it might come above it and then bounce at the same area of support again. Okay. So if you see the same area of support get reacted off of, okay, I like to call that support mirror. Okay. Support mirror. So let me go ahead and show you an example of a support mirror. Okay. This is how you know that, okay, price wants to go ahead and do the same thing over and over again. Okay. Because essentially that's what price is doing. Okay. It just does the same thing over and over again. So let's check it out. So I can see this area of support was created right here. Okay. Again, area of support is going to be an area where price decides to bounce in the upwards direction. All right. So just keeping it simple. We know that. Okay. Price bounces in an upwards direction once it hits support. Okay. So I can go ahead and see over here to the left, price decided to create some support right here. Okay. So right here, price decided to create some support. Okay. And then blast it up. Okay. Price made this area of resistance, and we're trying to make another one right here and break through it. Okay. All of these up here where price is falling within a downwards direction are going to be classified as areas of resistance. Okay. Area of resistance, resistance, resistance. And we can go ahead and see down here, price is going in an upwards direction. Okay. Support. Okay. Down here, price going up. Right here, price going up. Okay. Support. Support. We can see up here, price going down. Price going down. Resistance. Price going down. Okay. Resistance. Okay. So this is how support and resistance correlates with each other. And whenever you see support and resistance bouncing in between each other like this is what I like to call a range. Okay. So this area of support got created over here. The price did the same exact thing and create a support over here again. That's how I would have known, okay, that would have been a simple or good place for me to go ahead and purchase some Bitcoin, for example. Okay. Okay. I saw support mirror, or if I ever see resistance get broken, okay, and turn into support, then I'm also going to know, okay, that was a really good area for me to go ahead and purchase too. Okay. So I'm also going to have this area here of resistance that got broken and turned into this area of support right here. Okay. Resistance, support, resistance broken, turn into support, or support bouncing at the same place. Okay, even if it's not immediately, even if price breaks the support, but if it comes back up, bounces again at the same place, that's going to be a support mirror. Okay, so let me go ahead and cover another example here. So when we're looking at support and resistance, it's understanding the range, putting everything in the big perspective. Okay, putting everything in a logical staircase mindset. Okay, so essentially that's what we're playing when we're looking at the charts. It's a staircase, and it's just about who can read the staircase ideally the best. Okay, so take this area right here. Okay, so I marked this out a couple of days ago, and we can see it's working out now. Okay, so I can see this area of support right here wasn't just created for a reason. Okay, so I personally like to look at everything on my higher time frames too. So we're always going to be making sure we're doing everything on the 4-hour time frame, and we're going to be doing things on the daily time frame. Okay, so what I'm going to go ahead and do, get the black line here. Let me just put it down. Okay, so I like to look at my daily first, zoom out. I know I'm playing a left to right chart. The goal of it's to go in the upwards direction. So I know that price is always trying to break resistances. Okay, so my take profit is going to be all-time highs. Okay, especially when I'm trading crypto. That's what I'm going to be wanting to take some profit off or close some of the position personally, is all-time highs. Okay. So boom, I'm going to go to my 4-hour here. And we can see price created this area of resistance all the way over here to the left. Okay. Price decided to break this area of resistance. Could see price went up, went up, went up. Made all-time highs right here. All-time highs is the highest point price has ever been. Okay, and price is going to be always trying to aim to break that. So always know that within a logical perspective. So all-time highs, ATH. Okay. So ATH stands for all-time highs. So price is always going to be trying to hunt this area, no matter what. No matter how much we dump down, it's always going to try and sweep back up. And ideally, we're going to be hunting this area. Okay. Because the point of these cryptocurrency tokens, the point of these investors and coders and people working so hard to get these laws passed is so it can go in an upwards direction. So not only people can make some more money by investing their money, they're going to be able to have the freedom to send money and transfer money however they would like via the blockchain system. Okay. So it has value. It's not just going up for no reason. This is something that's bringing value to the world. So understand that that's why it's trying to go up. It's not just trying to go up for no reason. Okay. Now, you can go ahead and see this area of resistance that I created right here. And we can see resistance got broken once again and turned into support. Okay. Resistance got broken, turned into support. And then price is heading into an upward direction, looking to break the all-time highs in order to try and break that. And it might even retest off of that. It might break the all-time highs. It's a common scenario. All-time highs gets broken and turns into support for a little bit. It might burst a little bit and then fall down. Maybe try the support again. Okay. And then it might won't even go lower. Okay. It might won't even fall down to an area of support like down here. Okay. So then I might try this area here. This is why it's amazing to have all your levels marked, because then you're going to see, okay, if price wants to go down to this support and then it holds it, okay, you start seeing multiple candles on the daily. You're like, okay, cool. And then you'll catch the whole sweep up. Okay. Even right here, price created the resistance right here, decided to fall down, broke above it. Okay. Created all-time highs, and then price fell all the way down where the original resistance was, decided to turn into support, and it's heading up in a sweep. Okay, looking to break the all-time highs. So let's go over another example here. So when we're putting in the repetition, we're putting in the hours, we're putting in the work, just staring at the charts. Okay, marking out setup after setup after setup, and just having that repetition and understanding that reading dips is pretty much going to be just understanding the logic behind the market. Okay, you know why market's dipping. Okay, when market dips, it's just creating more ammo, collecting more money, just so stuff can go in a more upwards direction with more volume and volatility. Okay, because if it's a left to right chart, so if someone got on here and they sold up here, okay, they're not going to keep buying. Okay, they're not going to just keep buying over and over and over again. They're going to go spend their profits. They're going to go reinvest it into something else, and they're going to just take their money. Okay. So that's just how that works. So we have two examples here, right? Two very, very, very simple examples here. So support mirror, okay? So we have this triple area of, we'll say quadruple area of support right here being reacted off of, all right? So we got 1, 2, 3, 4. We got 4 areas of support here. Going within an upwards direction. Support. 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 Okay. Bounce at the same place 3 times. Okay. And we already know where it's trying to head to. We're trying to break through all-time highs. And we can even see all-time highs got tapped twice. Okay. Price came up here and made all-time highs. And guess what? Price created resistance at the same area twice. So we know that this area of resistance is definitely special. The more taps that you have of an area of resistance or support is going to be really solid. Okay. Once again, the more taps that we have of areas of support or resistance is going to be really solid. So let's make sure we always have that in the perspective. Okay. Resistance, resistance. Then we have support, support, support. Okay. We know price is trying to head in the upwards direction. Okay. Price wouldn't just be making support for no reason. It's trying to keep going higher. Okay. So just understanding market within a simple logical perspective can really help. Price is always trying to chase and break areas of resistances. Okay. In order to make price go in a higher direction. The higher the direction goes, the more something's going to be worth. The more something's going to be worth, whoever the creators are and the large investors are going to get wealthier. So they want it to go in the upwards direction. Okay. And if you're a large investor, you want it to go in the upwards direction too. Okay. So people are going to buy the dips because everything is not always going to fall down to zero every time. It's not how things work. And it's just not probable. Things build value and things are not going to always fall to zero. Okay. That's just fear. And just having fear in the market is just not something that's going to be tolerable. Okay. This is why we only fear God. Okay. And we take all the risk that we need to. Okay. So boom. Catching this support mirror would have been quite simple. Okay. And let's say you missed the support mirror. Fine. All fine. This is just confirmation that price wants to go bullish down there. But even if you wanted to wait for a dip down, you can see right here. Price created this area of resistance right here. Okay. Price broke above it on the 4-hour time frame here and turned it into some support. Okay. So even right here is a dip down too. Okay. And then price looks like it wants to continue to go in an upwards direction still. Okay. So you can still see as you scale down too, where it's going to be a solid place for you to go ahead and purchase your contracts. Okay. So buying the crypto lows, buying crypto dips and stuff like that is not going to be difficult. Okay, it's just about being patient. And even if sometimes you don't get the most perfect entry, okay, because only God is perfect. Okay, so we can't destroy our investment portfolio bringing about the best entries of all time too. You see the support here got tapped 1, 2, 3, 4 times. Okay. So price most likely will not come down here big time anytime soon again, I don't believe. Okay, if it just held this area for over 2 months, okay, bouncing in the same place, then I don't think it's going to go down and break it anytime soon. Okay, I would go ahead and just buy. Okay, you know price wants to go ahead and go in an upwards direction. It's holding stable support. And especially when you see tiny dips like this, okay, you're buying on red candles that made some retest. You could be like, oh yeah, and go ahead and take it up to the next leg, okay? And just go ahead and buy and invest, okay? You see all this space that's left, okay? All-time highs, the goal of the market is to break all-time highs. You still have all of this space to go ahead and enter, okay? There's still all this space left. So much space left, so much crypto to still purchase, okay? And we're trying to catch the rest of this gap fill from where current price is at right now. Okay, catching the rest of this gap fill. And this gap is going to be bigger than the stop loss gap. And even it's like, you're not even playing with stop loss, but if you wanted to, you know, you could go ahead and play there. But I recommend just investing an amount that you are comfortable to lose with certain things. Okay. So if you're going to say you're going to invest in Bitcoin, then you should be comfortable with all the funds that you're going to lose. Okay. Because trying to micromanage your crypto trades can just make you lose money in the end, because don't forget, this is a left to right chart. So the goal of it is to go up, and one day it could just burst and sweep way back up. So this is why it's really going to be nice to buy at dips too, instead of buying at all-time highs. Because when you buy all-time highs, this can do nothing but go in a downward direction, and then you're going to be upset. And then you might close early, and then you might close for a loss just to buy the dip, and then, yeah, it's all over the place. So this is why we just buy the dip. We buy the gap fills. Okay, I can see all-time highs is up here. This area of support is holding down here, and I can see price wants to try and fill the rest of this gap right here. Okay, right here. Price is going to be trying to fill all the rest of this gap. Okay, so just focus on how market logically works, and it's going to be pretty easy to make some profitable trades. For real. And so let's check out Solana here. Okay, so let's say here, we can see up here, price decided to create this area of resistance all up here. Okay, resistance all the way up here. So we know price is trying to hunt that. Okay, we got this much left in the gap. Okay, and let's go and let's check out something here. So I'm gonna check out this area of support down here, right? We black line it. Boom. Okay, I'm gonna see if I see anything. Let me zoom in. Okay, I do. I see a heavy area of resistance right here on this line. Okay, so price created this area of resistance right here. This is why I like to just immediately look at the lows. Okay, I can see price create a resistance right there. Okay. Let me zoom it up here. So price did make resistance there. Let me see, where does price want to retest off of? Price also made resistance off of here. And let's see if we see any support mirrors or anything to the left here. Okay, price created this area of resistance like right here. Okay, and then price turned into support right here. So if price were to come down and try this area of support again, okay, that'd be a good place to go ahead and buy. Okay. Or even if price pulled back to like this area of support down here, okay, or resistance. So price is either going to try and come down to bounce at an area of resistance or previous area of support. So it's going to try and turn previous areas of resistances that it already broke below it into support, or it's going to try and just mirror areas of support. And areas of support are most likely already in areas of break and retest that has happened to the left. A lot of the times that's going to be like what it is too. So let's go over another example here. So we always know that price is trying to hunt all-time highs. Price is always trying to hunt all-time highs when it comes to the cryptocurrency market. Check out Doge, for example. Up on my daily time frame here, I can zoom out. Okay. Oops, it looks like I marked this out here. So let's check it out. So we have this area of resistance that was created all the way up here. And then we have this area of support down here. Okay, and this support didn't come from no reason. It came from this area of resistance right here. Okay, support, and then price already had an area of support get created off the resistance too. Okay, boom, resistance, broken, turned into support the first time right here. Okay, you can see it on the first candle right here, and then price went upwards direction. So this is what I like to call the pro tap. When you see break and retest instantly happen, okay, that's what I like to call the pro tap, because you got to be watching the chart there, waiting for that resistance to be broken and turn into support, okay, to see if that's going to happen. But then when you see area of support from the original retest get mirrored again into an area of support again, you know price wants to go ahead and probably hold that area, especially if it doesn't break and you start seeing what's called closes. Okay, so if you start seeing price tap the blue line and give you a wick, okay, I never like to enter on the candles that are wicking off the blue line. I like to personally enter on the candles that are above the blue line, because once it's well above the blue line, I know, okay, price probably wants to go in an upwards direction. I don't like to buy ultimate lows and ultimate highs. I like to sell at ultimate highs. I like to wait for ultimate lows to be created in order for me to catch it into ultimate highs. Okay, so I like to trade just safe. Okay, trading safe is going to be a lot better than trying to be overly precise with the best entry. The best is the best. It's great to have it, but knowing where you need to close and knowing if it's a good dip area is going to be more than enough to make profit. Okay, take this example. You could see this area of resistance got formed right here. Okay, resistance turned into support, resistance right here turned into support. Okay. So resistance gets broken and turned into support. Okay. Resistance formed, price fell down, broke, retest, turned into support, turned into support again, price going up, resistance here formed. Resistance formed and then turned into support. And then, you know, okay, I believe price is going to be a good place to go ahead and buy right here. Let me go ahead and take it here, and you take it up, and you still have this whole gap to go ahead and catch. Okay, you still have all of this money to make. Okay, this whole giant gap. Okay. So once you see price confirming itself, making higher lows, okay, heading in upwards direction, here's the ultimate low. Okay, here's an even higher low. So this low right here is higher than this low. And this low right here is higher than this low. Okay, so when you see price making higher lows, heading in a staircase direction, you know, okay, price is most likely ready and show up. Okay, so just play logically and just take your time. Take your time and play logically. Understand like how much progress price is trying to make. Okay. It's trying to sweep into all-time highs. No matter what cryptocurrency, no matter how devalued it is, the goal of it is to go up. Okay, it wants to go up. Even if it's not going up, it wants to go up. I'll take this coin for example. Okay, we have this highs area up here, then we have super all-time highs up here. Okay, so I can see that here. So I can see here. Price decided to created a support mirror. Support area right here. Support area right here. Okay. So, and we can go ahead and see over here too. Support right here. Okay. And the area of support didn't just come from nowhere. Okay. So, resistance. So area of resistance here, broken, turn it into support. Okay, price went in the upward direction, created an area of resistance up here, also known as the high. Okay, so resistance is just going to be a high area that price is trying to get back to. Okay, so price created all-time highs up there. Okay, so it's not quite all-time highs, but this is just a good area of resistance. How price is trying to get up to. Okay, so you can see price created the area of support here, create a support area here. Okay, and then try to mirror it again right here. And the price is trying to bounce it in the upwards direction. Okay, and you can clearly see here, especially once you start looking at your daily. When you start seeing multiple daily candles past where the blue line is supposed to wick from, then you know a lot of the times, okay, inshallah, price is just incrementally trying to make its progress up to the highs here. Okay, trying to fill the rest of this gap here so you can go ahead and make some money, inshallah. So sometimes it's just about the way you're looking at the market. Okay, and then if you want to go ahead and close it there, you can completely just close it there. Okay. Oh. Let's go ahead and check out something else here. So let's say AVAX, all right? If I zoom out, yeah, you can see price is definitely trying to make some progress here. Okay, so before we even get to all-time highs, I can see for just one, we're trying to get up here. Okay, it's a major area right here. Gonna have some more major areas too. Major area right here. Major area right here. And we can see the area of resistance got created once. And it's tapping again, okay? So 1, And guess what? Price created a low. So I would already know here, price is a good area for me to buy right here. I could see price created the area of resistance. Check all the way over here to the left. Broken. Okay. And right here. Okay. Resistance. Exciting. One area right here. 1, 2. Broken. Turn into support. It's going to be a good area to go ahead and buy. Okay. And then you can go ahead and try and catch the sweep all the way in an upwards direction. Okay. So once again, this is classified as resistance over here. Check out how price is falling in a downwards direction. Okay. Resistance. Price falling in a downwards direction here. Downwards direction. Price is always going to try and chase resistances. Okay. Even though it mirrored right here. Okay. Create a resistance again at the same line. Doesn't matter though. Got broken. Okay. No matter how many times things fall down, it's always going to break through. Okay. It broke through right here. Boom. Price made some progress. After that, price created resistance right here at this area right here. So this is why it's important to be closing at certain areas of resistance, because you can see price hit that area of resistance and decided to fall down again. Now price might try and break this area, but it depends. If you're just scalping or in a swing trade for a couple of weeks or days, it's not something you want to hold infinitely, then I advise you close at areas of resistance above current price. Okay, if you buy a dip, or you close at an area of support above current price. Okay, and this is because support above current price can turn into resistance, causing price to dip. Okay, so support can be broken sometimes and turn into resistance, just like resistance can be broken and turn into support. Okay, so check out. Once again, I'm gonna put down this area right here. Boom, check out this line. It's extremely simple. We got resistance right here. Some more resistance right here. Some more resistance right here. And price is going in a sweep upwards direction. Okay, so I can assume that price might want to try and break this height right here. Okay, but even for that, we got this resistance up here. Okay, we got this resistance up here. This one here. And this one here. That it just mirrored at. Okay, so price is going to keep trying to get past these blue lines above, as these are all going to be areas of resistance. Area right here, area right here, right here, and right here. So it's exciting. Okay, market starts becoming extremely fun when you start knowing how to read the flow. It's, you know, it works in clockwork. And you can see even down here, see price created this area of support right here once, twice, 3 times. Okay, and price is constantly making, so here's a low. Okay, but this low is higher than this low. Okay, so when you see price making higher lows constantly, you know we're heading in an upwards direction, inshallah. Okay, so it's super duper fun and exciting when you see, okay, this is how everything works in correlation. It's like art. Okay, it's like a puzzle piece. That's how everything it comes together and all clicks. Okay, so the resistance got created there. The support floor got created here. Resistance got broken, turned into support. And you start seeing the staircase in a whole perspective. Okay, it's very, very, very interesting once you start putting everything into logical reasoning. So you can see price is trying to break the resistance up here. Okay, it created it, but we know price is trying to hunt it, break it, so we can end up to this resistance up here. Okay, so AVAX, whoever the creator of it, can claim that they have the best coin. Okay, that's the whole point of people creating stuff, is so they can try and be the best or try and help people. Okay, so it's wanting to go up in an upwards direction. Okay, the developers of AVAX, whoever took time coding the token, thinking of the idea, I'm sure they want their idea to be worth some value. So that's why things go in an upwards direction. Okay, so we can see how much confirmation here that price is bullish. So much confirmation. We have a support floor. Strong floor. We have strong floor theory supporting that we want to go in the upwards direction, and we have break and retest, and we have resistance getting broken and turn into support. It's crazy. Okay, so we're good. We can go ahead and get into something like this if we wanted to, and close at any of these areas of resistances above current price, because we can see, just like these areas of resistances can mirror each other, just like supports can. But if we're buying at the bottom, we want to be closing before we get reversed on. Okay, this way we're going to be keeping all of our profit, or as much profit as we can, inshallah. Yeah. So just don't panic too. When you see your close, you know what a good setup looks like. You got to really trust God. You can't have any fear. You're good. Once you get in your setup, you got to trust that. You got to be like, all right, I'm good. I'm good. I'm good. Don't think about drawdown. Don't think about losing. Okay. You got to be comfortable with whatever you put into. Okay. If you put in an amount of money into a trade, you got to be cool with it going to zero. I promise you, it's going to help your psychology a lot. Okay. Be comfortable with just losing whatever you put in. And I promise you, your trades are going to work out a lot better. Okay. The goal of these are to go up. And the reason why a lot of people are unprofitable is because they self-sabotage. Okay. They jump in the middle of their trades and they cut it early. Instead of seeing the plan all the way through, you got to see the plan all the way through. Okay. We never know what God has planned. You got to see all the way through. If it's even in your heart to get it in the trade, you got to see all the way through. Okay. If it's working out, if you're up some profit, don't just close it and see it all the way through. You could see 10x that profit. Okay. You got to see it all the way through. Don't self-sabotage your trade. Don't destroy anything just based off of thinking too much. Okay. That's something I've been having to check myself on with certain things. Okay. So if price creates this area of resistance right here, and then price comes all the way back down to it in terms of support, don't mentally self-sabotage. Get in that trade, okay? And you can confidently take that to this area of resistance here. I'm gonna bust out the ruler, and you can see how many units of price action are left. It's a whole gap, still around 5.4 thousand, right, areas of price to go ahead and make on this token here, okay? So you can make a lot of profit here. Still a very, very, very large profit window. Even if you wanted your stop loss underneath this low, right? Say you set alerts down here if you wanted to, okay? The risk to reward, it'd still be positive, okay? Even if you entered right here. So let me pull out the risk to reward tool, and the risk to reward tool is pretty much gonna show you how much you're gonna make versus how much your risk is. So say the risk is down here and the target's all the way up here. So your risk reward would be a 1 to 2. So no matter what, if you hit take profit, right, you would double your money. Okay, so you would double your money. So just focus on certain things. Okay, put it into perspective. Okay, like, okay, is this the type of trade that I want to get into? Does it match up my parameters here? Okay, and even you could see the ultimate entry is all the way over there, right? Check it out. Here's another confirmation that price wants to go bullish. Inshallah, check it. Boom. Price creating an area of support right here. And guess what? We have some more resistance right here. Break and retest. It's spamming it over and over and over again. It's actually almost impossible to not make money in the market. It's genuinely difficult. Okay. You could be the least technically gifted person of all time. You could be blind and you can make money. Okay. Like if someone told a blind person where all-time highs was and someone set alerts there, okay, and something called out when all-time highs was hit, they would be able to make money. Okay, if anything, that might be better. Okay, because you wouldn't be staring at the charts. You wouldn't even know to self-sabotage your trade. You're just going to be in, just expecting take profit to get hit, and then when your alert goes off, you're going to be good. Because how many times have you been in a trade and then your alerts go off and take profit gets hit? A couple days or weeks later, you're like, dang, I wish I got on that. Okay, so in order to stop that, just don't look at it. Don't stare at the charts all day long. Okay, and don't self-sabotage. It's really easy to self-sabotage by overthinking. Okay, sometimes you gotta just leave it with God and just keep it trim. Keep it trim and just let it do its thing. Okay, let the trade work out. That's the reason why you got into it. You analyzed something. Okay, you saw something good in it. So just play it out. Play it out. So this would be a really good sweep to go ahead and catch too. And you're gonna notice too, all the crypto pairs that we just looked at, they have a very, very similar kind of price action formation. So they all had a very similar gap. Okay. And that's because a lot of the cryptocurrencies, some of them do move like relatively like the other ones, but sometimes like Bitcoin, for example, are just so powerful and just do their own thing. So yeah, depending on what you're looking at. Yeah, but say Hype, for example, Hype could have a very similar looking setup to Link. Okay, with that large gap with the resistance way above. Okay, but then something like Bitcoin, okay, could literally be at all-time highs. Okay. So it just depends on what you're looking at, depending on how many people are investing into what you're playing to. It's going to depict on how quick it moves. So if you just see something else at all-time highs and one crypto just isn't, then one is going to tell you how valuable something is in the long run, honestly, and Yeah. So you can see this came out in 2021, and price is trying to make some progress and sweep back up, but let's analyze this here. So let me go ahead and instantly put this area of resistance as I'm going to take profit up here. Okay. It's going to be the highest point I can currently see with my eyes that I know price wants to try and sweep. Okay, so even right here, price created this area of support. I can see why. Support got created because of this area of resistance up here to the left. Okay. So that's going to be one thing I like to do, is just put a line down at the lowest area of support and be like, why? Why is this support created? So breaking everything down logically is going to really help you. Okay. So check it out. Even ask yourself why right here. Okay. Why is this support created? You can see this area of support all the way over here to the left got created. Price went in the upwards direction, and price mirrored that over here to the right. Okay. And then went in the upwards direction. So that's going to be another confirmation that, okay, I think price wants to go in the upwards direction. Okay. And check this out. This is definitely going to be like, okay, let's see. Price created resistance right here. Resistance decided to get broken right here. And just like our bread and butter, we always talk about, turn this to support. Extremely, extremely simple. And we can see price wants to try and fill in this wedge to this resistance up here, fill the resistance up here, okay, and then fill the resistances up there. And we still have around this much area of price action left. Okay. Simple. It's simple. It's not hard. It's not difficult. And it's just taking our time. Really taking our time and knowing when we're investing, why we're investing, and what we're going to be getting invested to. Okay. And it's taking your time. Straight up just taking your time. Okay. When you're waiting for these trades to work out, when you're waiting for areas of take profits, you're like, okay, let me go ahead and take my profit, cycle it back into whatever I want to, and just keep going, keep going, keep going, keep going. Okay, take it trade by trade. And this is going to be a really, really surefire way to keep growing your account. Okay, just analyze each setup, and the patience factor is really what's going to determine how quickly you're going to grow your account. Okay. Because if you run up a bag, you don't wait for a setup that you should be waiting for, and then you blow it. That's on you. Yeah, we take that to the chest, we pray on it, we move on, we come back stronger. Okay. But when you're marking these setups out constantly, we just did like 10 setups in a row. You have everything hawk-eye down, just gonna be constantly raking in money, raking in money, raking in money, raking in money. Okay, so it's important to be humble and really disciplined and know what to do with the profits. Have a strategy, know what you're gonna do, whether investing into business outside of trading or just doing whatever. Okay, just know what you're gonna do with profits. Okay, because once you know how to read the market, it becomes it's really simple. Okay, it's very, very simple. You know the gap fills, you know how things work, and you can break it down within logical perspectives. Okay, you can say, okay, this works because of X, Y, and Z. This works because of ABC. Okay, and all of these things are going to be like, okay, well, we know why this is occurring, so let me go ahead and do this. Okay, and the logic behind everything really, really helps a lot. Okay, helps a lot. So let's go and let's do one more example here. And going through a bunch of different crypto coins and constantly marking out setups is going to be a really good way to get profitable too, because you're just going to be living on the charts, understanding how things work, and you're going to be like, yeah, this is definitely how market's supposed to be played. So check this out here. I can already see this area here. So I'm getting my daily. I can zoom out. Okay, so I have this area right here. Okay, so I got this area of support right here. So support got created based off of this area of resistance right here. Resistance right here got broken. Resistance got broken. Turned into support. Okay. So resistance got broken, turned into support, and I could see, again, within the distinction, I could see resistance right here got broken and turned into support. Okay. and then price decided to make a new high all the way up here. Okay, so I can see that price wants to try and at least tap this area of resistance right here. Okay, and if I wanted to, okay, would be able to go ahead and invest into this, catch the rest of this gap fill. Okay, close up this area of resistance here. Trim there, you can trim there. Okay, and trim there. Okay. You can see price is trying to make a sweep, and if I bust on my ruler here, could see all the room that's left. Okay, all the room that's left to go ahead and attempt this to make some money here. Okay, so take your time, take your time, take your time. When just reading your setups, keep paying attention to resistance and to support. Resistance and support is going to be your best friends, okay, within the market, and just trust. Okay, trust. Okay, you got to really believe in your setup. Okay, trust God. There's a reason why you're thinking about getting these setups. You're good. Don't blow it. Don't blow it. And you can constantly keep getting in these setups, making your money, putting into other long-term positions that you just don't have to close, that you could have open forever if you wanted to. Okay, so it's going to be up to you how you want to play it and how you want to grow your account. All right. So head over to stackmode.net, learn how to trade cryptocurrency. Say a prayer to God. Keep grinding. Peace. All right, let's talk about how to buy stocks in crypto at the right time. So we'll talk about trend trading and we'll talk about pullback trading. So both are going to be great ways in order to make some profit, both used in different scenarios. And we'll talk about pullback trading first. So pullback trading is going to be when you're buying at an area below where current price already is. So if price is going in an uptrend, you can just wait for price to come back down, buy it again, and take it back up. Okay, this way you could catch an even bigger trade, catch larger profits, and you might even be able to sit on your trade with a lot more safety too, due to the fact that price already dipped. And we know that the stock market and crypto markets are markets where people want to go ahead and hold and gain APY per year. That stands for annual percentage yield. So people are trying to gain APY on their money. I know I definitely am, by holding in something that has value, whether it be a cryptocurrency that has value or a stock that has value. Okay, so you invest in the future, buy at certain lows, and let's go ahead and let's talk about how we can identify certain lows and how we can buy at these certain areas. So let's go. So first thing we're going to go ahead and have to do is hop on our higher time frames. Higher time frames are going to be important. We got to see everything. We cannot be tunnel vision on the smaller time frames. Okay, if you're on the minute time frame, you might see a downtrend, but then whole time when you're on the daily time frame or weekly, you'll see the trade going up in an upwards direction month after month, week after week, year after year. So make sure you're on your higher time frames, doing your analysis before you scale down. You can use your smaller time frames, but you can really just use them in order to get in at your entry. Okay, so you can use like your 1 minute to get in at your entry, but all your analysis for the most part should come from these two key time frames. They should come from the daily, and they should come from the 4 hour. Daily and the 4 hour are going to be your two time frames that you're going to have to use in order to catch some profitable trades. You got to see the real trend. So the daily is going to come in play, and then the 4 hour time frame is going to be used in order to show you any candlesticks that you can't see on the daily. Okay, due to the fact that stock market is only Monday through Friday. So sometimes extending trading hours is going to have to come into play. So your 4 hour is going to show you certain candlesticks that you might not be able to see using only the daily candlesticks. Okay, so that's your 4 hours going to have to come into play. And then you could scale down to your 30 minute as well. Okay, personally, I like to go down to that after my 4 hour too, just to verify my entry on an even smaller time frame. Make sure everything correlates, make sure it all lines up before I get in a trade. I'm not going to risk my bread doing anything on the block. I'm going to make sure that playing structured trades that have logistical planning behind them. Okay, one of them making sure we're making some bread in the markets, not wasting money that we've worked hard for. Okay, so buying pullbacks are going to be extremely important. Stop buying at all-time highs. Okay, don't hop on Twitter, don't hop on Instagram, YouTube, or anywhere and see hype being talked about. Okay, a lot of people are just now buying in Nvidia, for example, and a lot of times by the time things are being posted, stuff is probably already at all-time highs. Okay, by the time media gets things, it's already too late for the most part. So here's how to identify real dips. So one, use your daily time frame and see where current price is at in the first place. Okay, current price is at all-time highs. You have to wait for a pullback. Okay, don't buy at all-time highs because one, Think of it logically. People got in way over here to the left. Okay. Some people have been holding these trades for years, way over here. Okay. They're going to sell eventually. So anytime price makes an area of resistance and falls in a downwards direction, all it is people taking their bread off the market. Okay. Nobody's about to sit and hold for an unlimited period of time. Once people are up some profits, 1,000% plus, okay, people are going to be like, you know what, these are some great gains. Let me go ahead and take some money on off. Okay. Especially when they've been holding for a few years, definitely down to go ahead and get paid. Okay. It's a lot of money increase within these past couple of years. Okay. If you've held NVIDIA for 5 years, for example, could have got in at around $50 a share. Okay. And price today is at $252 a share. Okay. So that's almost a 4x of your money. Okay. So you can put your money in a shares calculator too to go ahead and check everything out and see the actual percentage yield you would have gone ahead and returned based off of that. Okay. So prices at all-time highs. Don't buy at all-time highs. Wait for price to pull back. Okay. So you're going to be looking for two things on a pullback. You're going to be looking at an area of support to be touched again. Okay. Price can either mirror supports, okay, the same support area that it bounced off of another time, or it's going to go ahead, bounce down, and try and turn an area of resistance below current price into support. Okay. And that's primarily where your pullback areas are going to come from. It's either going to be an area of support below current price or an area of resistance below current price that you see on your 4-hour or daily time frames. Okay. So my daily time frame, I can see where all-time highs. Let me go ahead and put a line here at the top of all-time highs resistance. Let me get on my 4-hour time frame, zoom out. Okay. And let's go ahead and identify how we can find the best levels here. So stocks is going to be a bit different. I'm going to go to my indicators here. Turn on that market open marker indicator here, the one by Charmeager. Okay, then from here, I can get on my 30-minute time frame. Okay, so I'm going to go ahead and look at areas in between these green shaded boxes. This is going to be for stock market. Okay, cryptocurrency is going to be a little bit of a different analysis, but for stocks, this is how it's going to go. Look at these green shaded areas. I'm going to go ahead and put lines at the 9:30 a.m. areas. Okay, so it's showing me when market opens. Market opens at 9:30 a.m. Eastern time. Okay, hence it's why it's called the New York Stock Exchange. Okay, everything is based off of Eastern time. New York is in Eastern time. So I'm going to look below current price. Okay, current price right now is going to be 253. So I'm going to look at 9:30 levels below current price, expecting price to go down to these levels and give me a bounce back up. Okay. So let's go and let's mark some levels. So let's jump into it. So I'm going to stay on my 30-minute time frame and I'm going to look below current price at certain levels that I'm going to be paying attention to. Okay. So I have a 9:30 level right here too. Boom. Go. And just check the direction and the flow of where the chart is going. Okay. If you can't tell which way the direction is going from the candlestick, then you feel free to hop down to something like your 15-minute time frame where you can see things a little bit more cordially. Okay. So let's say I delete everything here. Okay. Price is at 253. I look below current price. Okay. I have this area of support right here. And that matches this area of support over here. Okay, so we know that this could be a potential area right here. Now I'm going to keep looking at areas below current price. Have this area of support down here. Area of support down here. Even down here. Okay, as you can see, some of these areas are going to line up with each other. Okay, the more areas that you see line up with each other, the more probable that area is going to be tapped again, inshallah. Okay, so use your past information as data. So we have this area down here too. So, and you can even go down to your 5-minute too to see things just a little bit closer, just to verify that these 930 levels are exactly what you're looking at. Okay. Nice. So right here, up here. Okay, very, very clean. We're going to put a line down here. Looking below current price here. Have an area of resistance right here. And area of support down here. Yeah. Then I can go to my 4-hour time frame. And I can wait for price to pull back to any of these levels. Okay. So if I see price pull back to any of these levels, I can be like, okay, you know what? I'm going to go ahead and trust that price wants to potentially give me a retest off of any of these areas here. Okay. These are all 930 areas here that are going to be extremely, extremely just key levels here. 930 levels are going to be important because it's when market opens. Okay. When the market opens, everyone's excited. There's going to be a large rush. And that's going to be the time where the most orders are going to be in place. So Eastern traders are trading, okay, or American traders in general, and European traders are both trading in the same session. Okay, so a lot of the time, the volume is going to be extremely, extremely high. Okay, so if we put up London session, that's going to mix with New York session during this time. So for stocks, that's going to be an easy trick in order to find the cleanest areas of support and resistance, or to identify where you want price to pull back. So if price pulls back to any of these levels, okay, and personally, I like to wait for a 4-hour close. Okay, so 4-hour close is going to mean I'm never going to really take the first wick like this, how price tapped the black line and then went up. I don't normally take the first wick. I'll take something like this, the second wick, or the second candlestick with a wick above where my zone is. This way I know that price truly wants to reverse in an upward direction, potentially, inshallah. Okay. But if you take the first wick, you can easily just get destroyed. You can get pulled back on, and then you can be upset and be like, you know what, dang, I shouldn't have taken that trade. You know, I didn't know if it was ready, and you don't want to be getting pulled back on for no reason. Okay, so take your time, let the trade verify itself, and catch the whole sweep in upwards direction. Okay, so let's go over another example here. And this works for all stocks, all popular stocks. And we'll talk about a trend trading example here. Okay. So when you're trading with the trend too, it's going to be a lot of volume. What volume is going to be? It's going to be the amount of people trading. Okay. So when there's a lot of people trading, your trading should happen in a quick direction. Okay. Because everyone's expecting price to go in the direction in which your trade is planned in. Okay. So let's do it. So if I got on my 5-minute time frame here, I got on my market open marker. I'm going to look above current price. I'm going to go ahead and mark this area of support here. Okay. Okay, just so we have this area here as data. I got this area up here. It's going to represent some resistance. Okay. Or I could do the support area right here. Breakout area in between, very, very clean. Okay. We have this area up here that matches with this area. Okay, so as you can see, one area of resistance right here matches with another area of 930 resistance here. Okay, the more taps, the better. Okay, more taps, the better. And as you can see, we have a tap here from previous levels. So we know that these levels are going to be probable. A lot of levels here working out. Extremely, extremely nice. I'm going to go ahead and put a line here at this area of resistance. So you can see price went in a downwards direction. Okay, so that's why I put it at the top, signaling where the resistance is. Another candlestick wicking off of previous data. Okay, so the more data that we see, the more probable we know the trade's going to be, inshallah. So up here, resistance as well too. We got right here an area of support. Okay, because we know price is going in upwards flow here, and then price bounced off the area of support again. Okay, so take your time when you're reading the chart. You can do this on your 5-minute time frame too. Okay, it's easy to read. This area of resistance kind of close right here. Yep. And then if you run out of candlesticks or if you don't have premium data, then you could go back and do like the 15-minute stuff like that. But I know not everyone has that, so yeah, just read your higher time frames as best you can. And then, yeah, waiting for price to pull back to these zones here. I'm going to put this area here. Yeah, so these are going to be just very clean areas that I'm going to be relying on. As you can see, the more taps that we have, especially on past lines, the better. Okay, another tap right here. Another tap right here. Okay, so you can see all these taps are reacting off of each other. Once you do these levels once, you're going to be good. You don't have to continue to do them all over again. Okay, they're going to be here for you. Okay, and you can just update them as price decides to go ahead and continue in an upwards or downwards direction. Okay, so right here. And as you can see, another area of resistance being reacted off of right here. Okay, so after you do all your levels like that, you can go back to current price, go back to your higher time frames, and you can check everything out. Okay, so say I'm on Amazon here. Okay, I can either wait for price to get above, let's say, this black line here. Okay, I can wait for price to break and retest and take it up to this area here. Okay, take this as first take profit, and then I could take up here as the second one. Okay, if I wanted to. Okay, so you can be very flexible once you have your levels down. Okay, even if price decides to come down, give me a pullback off of here, that'd be fine. Okay, or even if price goes up and gives me a pullback at this level, that'd be valid. Okay, so even if price gets above these black lines and gives you a pullback, that's going to be valid. So whether you pay the head break and retest or wait for price to pull even back further, okay, it's going to be just up to you depending on the market. And once you have your levels down, you're going to be good. You're going to have your information. You're going to know what to do, and you're not going to be panicking. Okay, so I also have this strong area right here too. This is the 30. Yep. But then you could check your 4-hour time frame too. Just scan it all. Make sure everything makes sense. Okay, so I can see. Yep. So I can see, okay, price wants to potentially come back to these levels here. If I see price give me a 4-hour close above or below these levels, and I'm going to be like, okay, these are going to be some clean levels. Okay, so let's go over another example here. So we'll do Google. Or actually, you know what? We'll do Tesla. Okay, big stock. I know a lot of people like to invest in that. Let's do it. So starting off on my daily time frame here, it's going to give you my bird's eye view for absolutely everything. Okay, it's going to help me see what I need to see. Okay, it's going to help me put everything into a global perspective. So when it comes to the global stock market and cryptocurrency, I know that price is trying to go in an upwards direction. Okay, due to the fact that companies aren't putting in hard work for their stock to not go up in value. Okay, there's dividends and company owners get paid more depending on their share status. Okay, so billionaires and stuff like that. It's not $1 billion in a bank account. There's not bank accounts that can really hold like hundreds of millions of dollars and stuff like that. So a lot of the time it comes from a person's company share value is what makes them a billionaire. Okay, so not the pure fiat cash value. So knowing that, we know that the value of certain currencies are trying to go up, whether it be it a cryptocurrency or a stock, okay, like Tesla. It's always trying to innovate, always trying to get better, and always trying to improve with these things down here called financial earnings. Financial earnings are letting you know if a company is profitable or not. And if a company is beating these, like slamming these year after year, month after month, making bread, you know it's going to be a good company. Okay, sometimes Tesla beats earnings, and sometimes it misses it. It can be inconsistent, but then you'll take a company like Nvidia, for example, that consistently beats earnings over and over again. Okay. So I'm not saying things that don't beat earnings consistently are going to be bad investments, just they can have more fluctuations due to the fact that the earnings are going to be negative sometimes. So Still, same logic stands. Price is trying to hunt the area of resistance above current price. Okay, so we know it's trying to hit this all-time highs here because it's trying to make some new all-time highs. This price is trying to keep going. It's not trying to stay in the same place. Okay, it's just like real life. So you can see from 2018, shares were $20 a share. Now they're $434 a share. Okay. Yeah, many millionaires were made by just buying and holding. Okay, so all it takes is just a couple of years of buying and holding. M's will be made. Okay, but just like the plays I've been really just researching and really just planning yourself in the future, we have opportunities over and over again. Okay, during this Tesla time, Apple coming out with AirPods, Face ID and stuff like that, 2016, 2013, a lot of millionaires made there. Okay, there's always going to be an opportunity. There's going to be a lot of new AI companies, inshallah, hitting the stock market soon. Okay, so any good AI companies hitting the stock market will definitely go ahead and be a good play. Okay, so investing in the future, depending on whenever you're watching this, is going to go ahead and be important. Just keep investing into the future. Whatever time period you're in, invest into the future. Okay, as of 2025, cryptocurrency and AI are two things that's really innovating anything forward. So NVIDIA, for example, has been going in a very bullish standpoint due to the fact that AI chips are produced from it. Okay, so anything AI related as of like 2025, it's going to be extremely popular. Okay, so cryptocurrency is also going to be something that's popular too. So brokers like Robinhood, okay, as of 2025 has able to shot up, okay, within a pretty instantaneous standpoint. So due to the fact that people know that it's a great company, okay, people need it in order to trade, okay, and it's very, very user-friendly. Okay, so people invest into the future and make some money with the share. So we know that price is trying to always hunt new resistances and break out from those resistances. Okay, you can even see this resistance right here. Go to my 4-hour. You can see right here. Price created an area of resistance right here. And as you can see, resistance got broken and turned into support right here. Amazing break and retest. And then price decided to go up in this upwards direction. Okay, we filled this area of resistance up here. Okay. And we're trying to fill this area of resistance into this area of resistance all the way up here. Okay, extremely, extremely nice. And we see which way price wants to head. All the way up here to all-time highs. So here's how to trade pullback levels, even if price is all the way up here. So same thing I would do, just like before. I could go to my 5-minute time frame, and I can go back as far as I possibly can. So on the 5-minute time frame, let me go all the way back. I'm going to start placing out levels below current price. So my current price is currently 436.32. Okay, 436.32. We look below current price, mark this area of support. Why? Because it's below current price. Same thing right here. Mark this area of support because it's below current price. So I'm going to stay on the 5-minute time frame. Keep marking areas of resistance. Okay, area of resistance right here too. I'm going to keep marking areas of resistance or support. Okay, depending on the direction of the candlestick. Okay, so if I see price going in a downwards direction after the 9:30 candlestick, then I can assume that the top of the candlestick is going to be where the level started. Okay, so put it where the level started. As you can see, you're going to have correlations. One tap right here where price decides to fall downward, and a whole another tap right here. Okay, so price a lot of the times will mirror itself too. That's what makes trading simple. Okay, have your levels marked out, and you're the only thing that can self-sabotage anything. Okay, everything's already done for you. So look, the resistance here was created, did it again a couple of days later. Okay, it's double resistance mirror. Okay, and as you can see, price got broken, turned into support, and then price filled up to the next area up here. Okay, that's a 4-point trade. 4-point trade is very nice money on. Okay, especially on Tesla. It's crazy money. Okay, it's times on Tesla I've been in a trade for like 2 minutes, like 3 figures, and just instantly closed. Okay, and just stuff like that. Okay, so yeah, especially my early days. So yeah, Tesla, it can be wild. But when you start playing it logically, like I was just playing like a fool, okay, but when you actually play it how it's supposed to be played, with levels and just all your analytics down, it's going to be lethal. Okay. It's a great way to make some just profit. So these day trades, especially when you have all these levels down, it's going to be really clean. So right here, we have this area of resistance. And just go as far as you can with the 5-minute time frame here. Down here, key area of support. It's literally going to give us the best levels here. Okay, the key levels that we got to be paying attention to. Okay, and then price decided to go in an upward direction here. Price created resistance here, fell down. Price created support down here, went up. Resistance right here. Another support down here. Support or not resistance, not support. Price went up. And then breakout in between that level 2. Really nice level there. 930 support right here. Price went in the upward direction, so bottom of the candlestick. And we have another high up here. And even up here. Area of resistance. So the more levels we have filling in the space is going to be just the better. Okay, bottom right here. Okay, and then I'm going to have this area right here too, where price decides to go in the downwards direction. And then down here. Yep, this area right here. Okay, and then let me go ahead and mark this area right here too. So let's just say I did all these levels, for example, and go to my 4-hour. Check everything out here, okay? So I can know that, okay, if price pulls back to any of these levels here, okay, I could potentially go ahead and take a day trade, okay? So even if price decides to give you some break and retest, okay, you can also take trades based on that too. Okay, so either that or wait for price to just pull back to these levels simply. Once again, all-time highs all the way up there. So you can just wait for price to pull back to any of these levels, give you a 4-hour close, and then go ahead and take your trade. Okay, in between here, this whole gray space, I would just go on like your higher time frames, go to the left. Since the price action is too old, even on 30-minute, it can be too old. If you're not a premium user, and just put it down the best levels you can. So I have the top of the resistance here from the 30. Top of the resistance here from the 30. Okay, which lines up with this one. Okay, got the bottom right here. Price went in upwards direction. 930. 930 resistance up here. 930 support. Not resistance actually. Price support right here. There we go. And a lot of these levels, once again, are gonna correlate for sure. Okay. There we go. So then from there, after you have all your key levels down, okay, you have all your information. So even if market decides to go in a bear market, okay, if you see a sweep from any of these levels below current price, okay, then you know, like, you know what, this is actually going to be a pretty decent buy area. Let me go ahead and take my chances. Okay, you can check out your levels too on your 30-minute time frame. Okay, just make sure everything looks how it's supposed to. But if price goes down, gives you a 4-hour close from one of these sweep areas, then go ahead and take the trade and chill out. Okay, let's go over some crypto examples. So crypto is going to pretty much be the same for the most part. Only thing on crypto is that you can't do the 930 strategy. For the most part, you have to primarily just use your daily in your 4-hour time frame, which is still going to be extremely strong. But yeah, let's go and let's cover it. So we'll cover Bitcoin first, for example. So Bitcoin. Okay, if I wanted to read Bitcoin, start off on my daily time frame, just like I always would. I'm gonna be putting a line at all-time highs because I know people wanted to break all-time highs in order for price in order to progress in a bullish scenario. Okay, so think of it from a human standpoint. People want to just see numbers go up. So I know that my goal is always going to be all-time highs. Okay, now on the daily time frame, I'm going to go ahead and analyze certain setups. Okay, so I can go ahead and see. Okay, price has this area of support down here. Okay, price might want to feel this area of support right here. Okay. So waiting for the right time, waiting for pullbacks, it's going to be important. Okay. So we don't want to just buy willy-nilly. Okay. We're going to see, okay, does price want to break this trend line? Okay. If it does, then we know the support wants to get reached. Okay. Then you'll see if the support will be held or broken. Okay. If support gets broken, then you're also going to be able to, pull back to the next level. Okay. And you can use your 4-hour and your daily levels. Crypto is also going to have a lot more levels too because it's 24/7. So, but still, areas of support are going to be valid because you can see this right here. Check it. Look at this area of support all the way over here. Bounced once, came down to the area of support, bounced again. Okay. And then came back a couple months later, bounced again from the same area. Okay, so on crypto, supports can also be extremely powerful and strong in order when making your TA. Yep, and we're always going to be waiting on our 4-hour candle close. So yeah, 4-hour candle close is just going to give us a good jurisdiction, like, you know what, this is a good trade. And you can see the timer all the way to the right and whatever broker you're on too. So yeah. So after that, you can go ahead and see, okay, you know what, price created this ultimate level. Okay, but price doesn't always have to come down to an area of support. Okay, once again, it can stop in an area of resistance. Okay, it can turn resistance to support, and then it can go ahead and bounce. Okay. So plot out your trades neatly. Okay, make sure it's a strong area of resistance that you think is going to be successful. Okay, take this example. This area right here of resistance decided to get broken and it turned into support right here. Okay, clean. Okay, break and retest, extremely clean. So I could, once again, try to buy at the areas of support below current price, okay, and see if price wants to give me the same bounce. Or I'm looking below current price and marking areas of resistance that are going to be strong and heavy and seeing if price wants to give me a retest level. Okay, check this out. Area of resistance 1 and resistance 2. Okay, guess what? Price broke out of the resistance over here, break and retest. Okay, and then price continue in the upwards direction. Okay, and same thing over here. After price support mirrored here, all it did was do it again. So support mirror. Okay, price will mimic itself, and it's just about finding the key good reactions. Okay, and that's when the price did it, it decided to blast off. Why? Because when price did it right here, it blasted off. Okay, so just know what you're investing into and know where. Knowing where is going to send you to a different realm. Okay, you're really going to understand what's going on when you know where to get in and where to exit. Okay, those are going to be the two most important things of the risk management when it comes to these charts. is knowing when to get in, knowing when to exit. Okay, you cannot be cooking your trades, holding it way too long for no reason. Okay, so that's how you find pullback levels even without the 930 strategy. Okay, or you can wait for an area above current price to be broken, turn it to support. Okay, and that's going to be trading with the flow. Okay, and it's going to be different depending on what your goal is. So if you're trying to hold a cryptocurrency for years, then trading with the flow like that might be different than trading pullbacks. Okay, because you want to be buying at the lows. Okay, you're expecting to hold for years. Okay, so when price is dumping, you should be happy. Okay, but if you're a day trader, option trader, or just a trend trader in general, okay, then you might want to wait for resistance to be broken. So this is support. Okay, make sure you can trust the trade. Okay, and let it rock out. Let it do its thing. All right. Yep, resistances below current price. We're gonna go ahead and do, because we know resistance can be broken and then turn into support. And then we're also gonna do sometimes the supports. Because check this out. Amazing example on XRP. So right here, as you can see, this low right here got met up with this low right here. Okay, so supports a lot of the times we'll try to meet, especially if it's a bear scenario. Now, will it not break is another question, but a lot of the times Chicago support and certain things like that within the stock exchange is really going to be imperative. Okay, so look at the support, look at the key levels, and make sure everything just makes sense. Okay, so look at the bull. Okay, so bull. Okay, so think of the Chicago Bulls, think of a U. A lot of the time your trade is going to go ahead and look like a U. Okay, it's going to look like a horn. So your sweeps, whether in a downward scenario, okay, price might try to sweep down, meet the supports. Okay, bullhorn down. Or in an upside formation, price might try to meet these areas of support here and then sweep to an upwards direction up here. Okay, so an upwards U. Okay, so price can go up in that direction or go down in a certain direction. Okay, so if it just hit an area of resistance and it's falling in a downwards direction, price might be trying to hit an area of support below current price to try and meet at and then try and bounce again like it's doing here. Or it's going to try and find an area of resistance below current price and try and bounce there due to the fact that resistance can be broken and turn it to support. Okay, so it's about catching the flow and just making sure that we're trading the right things properly. Okay, so it'll be trying to bull rush down, okay, to an area of support or resistance just so people can buy it again. Okay, because on the daily time frame, just like we talked about in the beginning, if I zoom out, price is nowhere near where it was like a couple of years ago. Okay, 2022, price is at 0.30. Okay, and price now is at 2.8. Okay, really big jump in XRP. Okay, over the course of a couple of years. Okay, so it's just about where you're buying, catching the sweeps, and holding your positions, even though certain things are going to take time. Okay. So let's go and check out this example here. So you know price once again is going to try and hunt certain areas of supports, just like the other cryptocurrency we just looked at. Price decided to hunt the area of support that was right here and bounce at the area again. Okay, and we are getting some 4-hour closes, so we'll see if it wants to hold. Okay, but in this instance here, you could also wait for an area of support above current price to be invalidated. Okay, so this area of support, and if support below current price gets ran through, or if support below current price gets turned into resistance and then ran through, okay, then that area could be a decent area. Okay, so I get on my 30-minute here. See the strong area of support. Okay. Price has the potential, and you could see some support candles here too. Okay. Price has the potential to break above this area and give it a support mirror. Okay. So I call this inverse break and retest, and price can definitely do this too. Let's say it wants to go ahead and fill like the resistance area up here. Okay. Or even just up here. And then check everything on your higher time frames. So you can see, okay, higher time frame support is obvious here. So if price decides to go up, okay, turn this area of support into support again by inverse break and retesting, that can go ahead and be a valid area to play too. So let's go over that. Okay, so we'll go over some meta. All right, so we can go ahead and see price all the way up here. Okay, price is trying to hunt all-time highs, and we're currently in dumping period. Okay, when you see heavy, aggressive red daily candles like the one right here, then you know price is trying to hunt for a low in order for price to retest, okay, or just find a certain support low and bounce its way back up to certain all-time highs. Okay, check it out. If I zoom all the way out, I look at the daily here. See, over the course of the years, price has just been going in an upwards direction. Okay, flowing. So, knowing that, area of resistance above current price, we can go ahead and keep that here. Okay, why? Because we know price has to break areas of resistance in order to progress. Okay, so I'm going to put that here as my take profit and my goal. Okay. Then from there, put my 4-hour time frame. Okay, and let me look down below current price. Okay, so I can just see the structure here. Okay, I can see price meeting up with this area of support here. And since it is the stock market too, unlike cryptocurrency, I can actually swap over to my 15-minute or 30-minute time frame and use the market open marker indicator. Okay, so I can check out the lows and see if anything does make sense. Okay, so I'm looking at levels below current price, and we're going to see if price wants to bounce at any of these areas potentially. Okay, we have this level right here. Price decides to go in upwards direction from here. And then price right here. Upwards direction. Have our area of support down here too. And we're going to go on the 5-minute too, make sure everything is clean how it should be. Okay. This area of support makes sense on the 5-minute. This area of support makes sense on the 5-minute. Same thing with here. Okay, so the 15-minute and 5-minute going to give you really clean, accurate entries. Okay. Right here, we got this area of resistance right here. Actually, not support. We're going upward direction. Support right here, lining up with it. Resistance lining up with it over here. We got support right here. Okay. Price lining up with that. Resistance right here. And price is falling in a downward direction here. Price here, falling down. Price down here, bouncing upwards direction. Then right here. We got this level here. Okay. And a lot of times I like to wait for a good 4-hour close. So price is kind of starting to bounce at this black line right here, okay, indicating a level. Okay, so if price decides to keep going in an upwards direction, this could be a potential pullback level that's valid. Now, if price decides to break below it and it tries to retest from this level here, that's fine. Okay, it could break this one and try this one, or here, or here, or here. You get the gist. Okay, any of these levels that give you a good 4-hour close and a sweep, or you could even wait for a daily close too for even more safety. Okay, you can go ahead and just plant, buy years out. Okay, depending on your options contracts. Okay, you can buy years out or as many months out as you can, or you could just buy shares. Okay, sit on it, hold, and just hold positions until certain take profits, like let's say all-time highs up here, something like that, for example. Okay, let price do its thing. Let price gain equity. Okay, and let your money gain APY by just putting down good profitable trades. Okay, so price could potentially want to hold this area here. Okay, especially after this heavy area of dumping in a downwards direction. Okay. So might want to hold here, and something that makes this area more exciting too, I can see on the 4-hour this area of support right here too. Okay, so price decided to make the same area of support here and then blast it in upwards direction. So this area of pullback here could mostly be pretty good. Okay. So when you're doing examples, make sure you're paying attention to key parameters. Okay, let's go and let's do Palantir. So Palantir here, you know, price is trying to go ahead and chase this all-time highs. Okay. I can go to my 15-minute here. I can look below current price if I wanted to, or I could look above current price and play the trend continuation. Okay, if I wanted to, or once again, I could look below current price. Okay. Or for pullback, so we got this area here. I'm getting my 5-minute. Make sure I got accurate entries. 930 support here. 930 support here. And we got this area right here. And then price decided to go in upwards direction right here. Okay, so the more lines in the zone, ideally the better. And that zone is going to be pretty strong for the most part. Price bouncing in upwards direction from here. Down here, price bouncing in upwards direction. Price shorted right here. Shorted right here. Bouncing in upwards direction here. Okay. Let me show it here. Okay. Getting all these reactions down. Resistance here. Yep, support. Okay. Support down there. And like you see right here, sometimes the levels are going to go ahead and correlate. 1, 2 taps of the same level. Okay, the more taps of the level that you see, the better a lot of the times. And the 930 strategy only works for stocks. Cryptocurrency, you got to use your daily 4-hour in your smaller time frames to verify everything normally. Support. And then resistance. Okay. And down here. And then, you know, we can go to current price. Go to our 4-hour time frame. Check out everything. Okay. So I know if price pulls back honestly, I could just make this one big zone here. So I know if price pulls back to any of these areas, price could potentially give me a good bounce. Okay, price could give me a good bounce to a higher direction. Okay, so that's what I'm going to be looking for ideally. Okay, so price could come down to this black line, give me a 4-hour close, try and bounce in upwards direction. If not, we could try this zone here, or try this line, or here, or here, or here, or here. Ideally, these are going to be some strong levels we're going to be able to play. Okay, if price decides to go in a downwards direction. Okay. Then from there, we can buy the pullbacks and buy months and weeks out. Yep. So yeah, 4-hour daily, and then 30-minute for crypto, and then time frames for stocks for the market open maker. It'd be like your 4-hour, your daily, and then like the 5-minute. So both of those together, or all of those together, are going to be like an extreme combination. But especially your 4-hour and your daily together is going to be your 4-hour and your daily together. It's going to give you good combination. Okay. So yeah, we'll stop there.
Class, are you guys investing or are you guys gambling like a casino? Let's go and let's talk about the difference between disciplined trader versus the gambler. Each scenario is going to go ahead and represent the scenario that we should be doing, which is being disciplined, being humble, not having ego, making sure we're being persistent and consistent within our investment methods. Or a gambler, someone who doesn't play within their risk parameters, does anything, overtrades, is emotional. And let's talk about the difference between the two. And which one are you? So the gambler's mindset. Focus on instant gratification, which is going to destroy you. Anything that comes super quick could definitely be lost extremely quick. Things take time to build, have to be planted like a seed. Okay. And the gambler's mindset, trader and investor, is going to seek quick, massive returns. And they view the market as a zero-sum game of luck, often driven by the excitement of large, immediate payouts, instead of thinking of consistently trading the market year after year after year, generating income so they could stop trading effort and exertion for income. Instead, they could make their money, make the money. Instead of having that mindset, they're thinking, okay, let me just make this quick play real quick and try to pull out $10,000 from this trade instantly without any experience or anything like that. And the gambler's mindset trader is going to have irrational hope. They believe they can predict short-term price movements through gut feeling, hype, or just any type of randomness to the trade, ignoring historical data, quantitative metrics, or technical analysis, just buying things based off of the fact that, I think it's going to go up. I think it's going to go up. Okay. And without any true fundamental analysis behind it, make sure you have data behind why you want to get in, whether it be a technical data on the charts or fundamental data. Be like, this company's doing well. They just put an earnings report out of X, Y, and Z. I think the company's profitable. I think this dividends PE ratio is going to be worthwhile getting into due to the fact that it's pretty good, okay, compared to other dividends. Okay, so just examples here, but you can go ahead and use logical formations before you just enter in any trade. But the gambler is just going to be entering anything, and you don't want to be doing that. Plot your trades logically and take your time. And they treat capital as lottery tickets. And each investment is seen as an all or nothing bet. Never take your whole check. Never take all of your business income and invest it into one play. Don't do that. Okay, take your time, diversify, have risk into it. And that means that they often risk an unmanageable percentage of their total capital on a single position. Okay, so don't do that. Make sure you guys are controlling where your income is, spread it out, have it in different investments, and keep stacking cash. Okay, and the disciplined trader mindset. Focus on statistical edge. Okay, and they view the market as a long series of probabilistic outcomes, expecting not to win every single trade, but definitely expecting that, I can only lose the trade when I close too. So having that mindset is really going to keep you in the game. If you're here to trade year after year after year, stocks, cryptocurrencies, etc., go up year after year after year. So the goal is not to win every trade, but to execute a positive expectancy model of over 100 plus trades over the course of a couple of years, gaining data, and then having an edge. And disciplined traders are going to be process oriented.
and understand that success is measured by adherence to a predefined trading plan, not by the single of an outcome of a single trade. So even if you make a whole bunch of money on one trade, you're still going to be disciplined. You're still going to be waking up, praying to God, being consistent, being humble, not losing sight of the plan. Okay, you can't just make $10,000 on one trade, right? Which might happen. Sometimes you catch a gap up and things like that. It might be unintentional money, okay? But you can't do that and then play with a whole different position size the next day that's way over leveraged, not in any calculations of your risk parameters, thinking you're the best trade ever just because you hit one trade. Relax, okay? Withdraw, take a step back, breathe, pray on it, be grateful, and then come back with a logical, process-oriented mindset and make the next trade. And the disciplined trader focuses on capital preservation and just cash preservation in general. And the primary objective is to project existing capital, okay, which is risk management, with profit generation as secondary. Independent outcome and losses are budgeted expenses. So for example, the gambler buys a volatile stock based on a Reddit post, for example, or Instagram post, instead of actually looking at the chart, doing their own statistical and fundamental research, making their own analysis, which you should be doing, expecting it to double overnight, right? And the disciplined trader buys the same stock only after confirming its consolidation near a key support level in a trend, allocating less than 1 to 10% of their capital per trade. Okay, letting their money make the money, letting it stack up, and letting their capital just always generate. So the edge, the chance versus quantifiable advantage. So the gambler's edge. The gambler operates with non-existent or poorly defined methodology, and their decisions are typically random and highly discretionary and impossible to replicate or backtest. And no validation. They never test their strategy. They remember big wins, okay, and have confirmation bias, thinking that, you know what, it's going to do this over and over again. Now, I understand that if you find a strategy that works or some technical analysis that falls into place repeatedly, that's amazing. But don't expect this to work 100% of the time. Don't have an idealistic view of this will work, this will work, this will work. Don't think that you're really going to lose, but be comfortable with losing. You should only be investing in that you're cool with losing in this way, that if you win, you're not going to be emotional. And same thing if you lose. And that's going to go ahead and be able to cancel out any anxiety or fear that you're having on the markets. So the gambler is going to be following noise too, and trades based on news headlines, social media chatter, or recommendation from unreliable sources without performing due diligence and doing their own research. Don't do that, okay? Don't be a sheep. Do your research. Make sure you want to invest in something that you believe in, something that you feel a connection to. Be like, you know what? I think this is a good strategy. I think this is a good investment. I think this play is strong. And go ahead and get into it. And unseen rules. Entry and exit rules change mid-trade, and the plan is subjective. So if they say, you know, I'll sell when it feels right, or I'll hold until I'm even, instead of having logical checkpoints where they want to exit their trade and enter their trade. And we'll talk about the disciplined trader edge. The disciplined trader must have a statistically verifiable edge and a set of rules that over time yields a positive expensive T. Okay. So their win rate is high. Okay. And their average win percentage is high. Okay. And even if they take a loss, their whole account is not going to be destroyed due to the fact that being a disciplined trader means that you're not trading with more size than you should be trading with, meaning that even if you lose, your account's not going to be destroyed. Why? Because you're trading between 1 to 10% of your account. And the disciplined trader backtests and optimizes their strategy if anything is wrong. And strategy is going to be rigorously tested and studied and backtested over decades of historical data. And the trader knows the system's maximum drawdowns and expected monthly return range. And the disciplined trader has a written plan. Every scenario is detailed in a formal trading plan. And this documents defined setups and valid market conditions, risk rules, and exit mechanisms. Okay? The trader is going to calculate certain mathematical expectancy of their system. Be like, you know what, my win rate is this percentage. There's certain trading journal programs that can go ahead and calculate it. And I'm working on the Stackmode app right now, which is going to help you guys calculate your trade journal as well too. So risk management, annihilation versus preservation. And this is arguably the most critical divergence. And a trader's long-term survival is entirely dependent on rigid risk control, which a gambler fundamentally ignores. So I'll talk about the gambler's capital allocation. So averaging down, they panic when a trade moves against them and buy more to lower their average cost instead of just standing on business on their position. Okay, be like, you know what, I lost. Let me go ahead and have a set place where I should be closing at, and if it exits there or if the price hits there, I'm gonna go ahead and close and exit for a loss. Okay, but instead, when the moves are going against them, they're gonna add more with that gambler's mindset, trying to convert the small loss into a big win. Instead, that small loss just turns into an even bigger loss most of the time, okay? Turning into a catastrophic concentration of risk. And sometimes playing with no stop loss can be bad. So it depends on what you're investing in and how you're investing too. If you're on futures or Forex, you should be trading with stop loss. Why? Because margin call is a thing. You don't want to get margin called by the broker and other broker money. So play with the stop loss, especially if you're on futures and Forex. Okay, stop loss in crypto, you can get away with no stop loss, depending if you're buying and holding. Same thing with ETFs. But for futures and Forex, definitely stop loss. Please do not gamble on futures and Forex, playing with leverage especially. And they believe that the market must come back, all right? And they refuse to accept a small loss, often leading to a margin call or a total account wipeout, which is most of the time only possible on futures and Forex. The gambler is also going to trade with emotional position sizing. And their position size is determined by current emotion or desire for profit, not mathematical risk. And they often risk very, very high percentage of their accounts, 10 to 50% of their account on one trade. And the gambler faces ruination probability. And that's the mathematical certainty of eventual losing all your capital due to oversized losses and emotional decisions. Now let's talk about how to be a disciplined trader. So the disciplined trader position size. So they have a fixed percentage risk. They never risk more than typically a fixed small percentage of their total capital per trade. Okay, so if you have $1,000 in your account, okay, and you're risking 1 to 10% of your account per trade, you're going to risk between $10 and $100 of your account per trade. Okay, keeping your risk in place. And let's say stop loss. So a stop loss is placed before the trade is entered. So once again, especially if you're on futures and Forex, you got to know exactly where you're going to exit at and where you're going to enter at. And it defines the point where the trade idea is invalidated and the risk is contained. And the risk position is sized. So the position size is calculated based on the distance between the entry price and the stop loss, ensuring the monetary risk does not exceed the 1 to 10% rule. And the disciplined trader ensures that even a string of 10 consecutive losses will only deplete the account by 10% if you're trading 1%, but if you lose 10 trades in a row, and I recommend 10%, 5 to 10% of your account if you're more experienced, because 10 trades, then you could destroy your entire account. But you shouldn't be losing 10 trades in a row realistically. Now, research and information processing. The gambler's information flow. Don't want to be trading like a gambler. So the gambler prioritizes novelty and social proof over objective data. Information is consumed for emotional validation rather than strategic input. There's a reason why God says don't gamble. Gambling is wrong. Okay, it's bad. It's the reason why is because you don't have any jurisdiction in it. Okay, you're not trading with any logical output. You're not making monetary decisions with any logical output behind it. Okay, just throwing your money into the void, hoping for the best. This is not what we want to be doing. So hearsay and media hype. So they trade based on unqualified tips, sensational news stories, or expert predictions on cable television. Don't trade like that. Do your own research. Hop on your charts, hop on your broker, make your own analysis and decisions. And superficial charting. They may use rudimentary technical analysis. Okay, so you might draw random lines, okay, but ignore volume, market structure, or context. And their analysis is descriptive, not predictive or actionable. Okay, so you can go ahead and mark out something, right, that may look bullish on the 15-minute, but then on the weekly time frame, it's a whole different story. Okay, so you can't just look at one time frame either. Don't trade like that. Don't just look at one view. Look at the whole global perspective on every single time frame, and then make your decision. So, lagging indicators. So you can only get in indicators after price has already done its thing. So indicators are going to be pretty late. And getting it late is not always going to be a bad thing. Sometimes it's going to make it more confirmed within a trend scenario, but getting in certain indicators is just, it's not going to be it. Okay, like MACD, for example, it's very late. A lot of indicators are just pretty late. They can be used for confirmation, but you don't want to be relying on that. Okay, understanding how the wicks work, support and resistance, and read how the chart needs to correlate. So the disciplined trader. So the disciplined trader uses a multifaceted, systematic research process to validate setups that align with their quantifiable edge. Okay, know what you're getting into. If you're going to trade break and retest, you're going to trade some break and retest. If we're going to trade reversals, you get in a reversal. Okay, and get some data behind it. Study your setups, back test it, paper trade it first. Make sure it works before you start putting money into the market. And the disciplined trader is going to utilize a blend of TA, technical analysis. You can go ahead and look at your patterns. If you're looking for break and retest, put your volume into play, Make sure it's something people trade, and look at the momentum. Okay, see how it's moving. And relevant fundamental analysis, see if it's a profitable stock, see if it's something that trends heavily, to really form a complete picture. And track the events too. Know when earnings is going to be too. You don't want to get into a trade and then earnings is the next day. Okay, that's going to be a form of gambling. Make sure earnings is pretty far away and then make your decision. Even if you're a long-term investor, wait till earnings happens first and then go ahead and get in. And they're going to always be on top of the economic data releases or any stock or company releases that's going on, or any type of negative news that could affect the price movement as well too. Okay, you can advert to couple of news sites which lets you fact it, like forexfactory.com. You can fact check and see all the news and the data reports and put that into correlation. That helps a lot with futures, for example. And TradingView, for example, shows you all the stock news, and a lot of brokers do too. And look at the market structure. Focus on the who, what, where, and why of market movements. Why is price making resistance here? Why is price making support here? Okay, ask yourself these questions before you get into the trade. Put everything together in your brain, lock it in, and then go ahead and make your trade. And work on the directional bias of the higher time frames. Be like, okay, I want to get in the trade here because of X, Y, and Z, and then make your decisions. And the trader's analysis really answers, okay, why do I want to get in here? Okay, what's my maximum loss? And I understand we're on the charts trying to make some money, but don't lose yourself, okay? Take your time, build up your capital, be disciplined. Because if you full port your account in one trade trying to make some money, you're going to be wishing that you were disciplined and you took your time. So I'm telling you guys, being disciplined is going to be the most worthwhile decision in the long run. So impulse versus automation. So the gambler is going to be trading based off of impulse. You got to pretty much be a robot if you want to be a successful trader. So the gambler is going to be chasing the market, entering super duper late on big giant candles, getting in the trend late and just missing the whole thing. Okay, and getting pulled back on, getting wicked back on, and just living in drawdown. And they often buy at the high or sell at the super low after the move is already completed, catching the final remaining scraps and pieces. Okay, so revenge trading. After a loss, they immediately enter a new larger position to win back the money. And this is the fastest way to accelerate capital loss. Okay, don't do that. Okay, don't do that. If you take your loss, you got to get off. Okay, plan yourself a better trade. Be like, what, why did I get into this trade? Did this trade really make sense? Okay, and if it did, okay, cool. Accept that loss. Take a better one, okay, or try again. Play something with better volume. Okay, there's probably some reasons why the trade didn't work out. Because if you notice, once you start playing S plus setups, they're going to work out a large percentage of the time. Not every time, but a very, very, very large percentage of the time. So ask yourself, why did I lose before you just get in the trade again, trying to make some money back? And keep a record too, okay? Know how much you're making, know how much you're losing, know how consistent you are, because it's really going to help you go back and see, well, I've been slamming, well, I've been crushing it. And a lot of brokers keep track of that, but you guys can keep track of it too. So the disciplined trader, you got to be like a robot in the game. You got to get up, be a robot, okay, grind. And the most disciplined person, the most robotic person when it comes to keeping their emotions stable is going to win, okay? You can't be letting fatigue, emotions, anger, fear, anxiety, and none of that get to you. Okay, you got to be a boss, stand on business, and get to it. And execution is for a disciplined trader, and it's robotic and unemotional. And the moment the traders entered, all necessary parameters, the stop loss and the target are set. And strict adherence. Traders are only taken when the market offers a setup that perfectly matches the criteria in the written plan. Okay, the edge. And talk about the trade journal. Every single trade is logged with the entry, exit, reasoning, psychological state, and a chart screenshot. And this data is used to iteratively improve the edge over time. Okay, you can go back, be like, whoa, okay, I was crushing it here. Let me stick to this. Why am I changing it up? Let me invest into this. Okay, this led me to a positive equity curve at the end of the year. Okay, let me stick to this. Okay, it's gonna help you guys keep your data. And you're gonna have a positive expectancy focus, wanting to crush your goals and be a better you and just be better every single day. And you'll understand that the goal is not $10,000 profit today, but the statistical certainty that $10,000 will be achieved by repeating the process over a period of growing your seed, stacking wins, stack mode. Okay, take your time. Okay, it's not a race, it's a marathon. And be in the game for decades, years. Okay, don't just lose your account overnight trying to make a FOMO trade. Relax, be disciplined. I'm telling you, it's going to be worth it to be disciplined. When you're chilling on the beach, when you're driving in the Lamb, when you're doing what you want to do, when you're chilling in your house, okay, when you're put up because you stayed down and you were in stack mode, you're going to be cheesing hard. Okay, it's going to be worth it, inshallah. So let's say, for example, the trader reviews their journal and finds their system has an 80% win rate, okay, on Tuesdays. And they use their objective data to confirm their edge. Let's say news is on Tuesdays and they notice that the news correlates with their edge, and then they go ahead and keep trading that, and they find a profitable way to make some money, for example. And let's say the gambler, okay, they review their account statement, sees a negative balance, leading to frustration, more reckless trading, booting up their account more, whole check into it, okay, and just losing their whole mindset, okay, and not sticking to a consistent edge, which is going to help you grow your account over and over again, okay. Take your time. So, psychological mastery, detachment versus attachment. Trading is 80% psychology. I'd really say like 90%, okay? Because there's been times you can really give someone really good levels, and if they don't know when to close, or if they're greedy, they can still destroy it all, okay? So the final differentiation lies in how losses and profits are internalized. So the gambler, they're really attached to the outcome, okay? They have way too much greed. They're fiending to win every single trade, and they're very impatient, wanting to make a trade every single day too. You're not gonna trade every single day. It's not realistic. They close profitable trades early too, destroying the risk to reward because of the fact that they're scared, okay? It's why you gotta trust God, okay? Relax, okay? Only trade with what you're okay with losing. You're gonna be cool. Let the trade play out, and if you see something, believe in it. And they hold losing trades for too long, okay? Now, if you see your trades going in the opposite direction and it's way past your stop loss, okay, you could go ahead and close your trade, especially if it's way past your stop loss. You got to. Don't hold something that's clearly not going to go ahead and reverse anytime soon. That's ego trading. And that's viewing losses as a personal failure or an indictment of their intelligence. And this fuels revenge trading and their need to prove the market wrong, which could lead you to throwing more funds into a loss. And mood swings. They experiences extreme emotional volatility with deep euphoria on wins, okay, extremely happy, cheesing hard, jumping up and down. But then when they lose, crashing out, sad, okay. Be stoic. Whether you win or lose, just keep going. Stack mode, put 50% away, keep 50% in your account, keep stacking it up, keep going, go on to the next trade, okay. Keep getting richer, keep getting better. And the disciplined trader, they're attached to the outcomes. They have a sense of neutrality built into them. Okay, and you got to accept that a single trade is meaningless. Even if you make way more money on one trade than the other, that doesn't mean that that trade was better than the other. Did you stick to your process? Did you stick to your rules? Were you grateful? Okay, and stay humble after your wins. It's really going to keep you guys focused on the process, which is really going to get you the next level, inshallah. So the focus is on executing the edge perfectly, regardless of the P&L, profit and loss, and learning from losses. A views of a losing trade that adhere to the plan as a successful win, okay? So even if you didn't make any money on the trade, if you stuck to your entry plan, you stuck to your stop loss, you saw what you needed to see and it just didn't work out, that's a win. Okay, keep yourself mentally balanced, keep yourself mentally good, and understand that losses in life and on the market are just tuition for you to learn from experience and go forward, okay? And objectify, okay? They use if-then statements to govern their actions. If price has stop loss, then they're gonna exit. If price turns resistance into support and they're looking for a long, they're gonna enter. Okay, if price hits resistance, they're gonna exit. Okay, so you guys are gonna go ahead and have some parameters set. Like, you know, if price does X, Y, and Z, I'm gonna do X, Y, and Z. Okay, and that's gonna help you trade logistically, robotically, and play the chess moves correctly. And mental discipline is gonna be important. The disciplined trader sees a loss, not as I just lost $1,000, but I just incurred a 1R loss. You know what? It's okay, which is budgeted. I planned for this, and it's statistically necessary for the system to eventually produce 2R, 3R wins. Okay, so when you lose that 1,000, but then you make 4,000, you're not gonna be mad. You're gonna be like, you know what, I'm happy I only lost 1,000. I'm glad I didn't just risk my whole $10,000 account trying to make a whole play. Okay, because I just stayed within my risk, caught a nice trade, and I didn't blow my account even though I took a loss, and I made it back the right way. So don't be a gambler. Gamblers are driven by emotion. Don't be drinking alcohol. Don't be doing nonsense. Don't be trading with the mindset of, you know what, I'm going to come on and make some money. Nah, come on the market and be like, you know what, I'm going to make some good financial decisions. I'm going to come onto the market. I'm going to enter because I have some logical parameters on why I'm about to enter. I'm going to enter because support is at this area here. You know what, price doesn't want to go below here. This is safe. Let me go ahead and take this trade here. Oh, resistance just turned into support. Let me take this trade here. Okay, take the money out of the picture. Focus on the charts. Take your focus off the P&L too. Okay, get your eyeballs off the P&L. Don't be staring at that. Look at the chart. And the discipline trader, focus on statistics. Focus on getting better. Okay, understanding that the ability to even trade in itself and make some money just looking at the screen is a blessing. Okay, straight from God. God is great. Okay, so let's go hard. Let's keep going. Let's keep pushing harder than ever. So don't focus on the money. Professionals focus on the process, the discipline behind it. And to succeed, you must first manage your risk, and only then can you manage your profits. Stay prayed up to God, keep grinding, and head over to stackmode.net for all trading education. Catch you in the next one. Peace.
Guys, what's up? God is good. It's a beautiful day. We in the coop, hanging out. Alhamdulillah. So, I want to tell you guys, it's a little deeper than just trading, okay? You can't just trade and just live off of your trading income alone. It's not good. It's not healthy. It's not healthy for, one, your mental health. It's not healthy for your pockets, too. A lot of people might ask me, Chris, why don't you just survive off your trading profits? One, I would probably go mentally insane. I wouldn't go insane, but what would I do all day if I couldn't coach, if I didn't do the thing or teach the thing that I'm just so passionate about, that I love, that pulled me out of depression, that pulled me out of a hard time? I'm not just gonna let that go because I'm just making good income and I can provide for myself and my family, thank God. You know, I want to do more. My soul wants to do more. As I mature, I'm 22 now. As I mature, I realize it's a lot more things to life than just money, of course. And I feel like I've always known that, of course, God, family. But I'm realizing that my soul and what I want to do to help the world is what really matters. So I want to tell you guys that if you have a business idea, if you have anything that you're passionate about, if you have anything that you feel like you're really good at, teach somebody it. Or help somebody by developing a product. Or coach somebody. Do something so we can just all be better on this earth. You know, it's not just about money, competition. And, you know, I'm an extremely competitive guy. It's just something God put in me. But still, I'm starting to realize that the world is about, one, worshiping God. And two, it's about helping one another. Of course, you're going to make some money through the process, inshallah, if God wills. But it's deeper than that. Yes, you got paid to coach somebody, but now that person has a lifelong skill. Now they can put food in the refrigerator for their family because of what they learned. You know what I'm saying? So it's deeper than just money and competition. So I'm just going to be going 100% on Stackmode. You know, I want more books out for you guys, more audio books, and I'm going to just branch everything together. You know, everything is a big oak tree. So trading, you know, I like it to be my base, but then you're going to have the branches. I have business, other things I talk about. Fitness is involved with it. I want to write a book and tell you guys about the herbs that I use every single day, water that I drink, how I work out Monday through Friday as consistently as I can. You know, the clothes, how taking care of yourself and following God's rules, most importantly. It's the most important thing. You follow God's rules, you'll live a really good life. Inshallah, you'll live a really good life if you follow God's rules. I truly do believe, and your soul will be fulfilled. Try hard to get married. You know, I'm married. And if you guys can just find somebody you can worship God with, settle down, get yourself a house, and really build a life with, it matures you. It teaches you a lot. And I want you guys to grow your business because you can't have your family's hunger, right? Your family's mental health, whether you're thinking about a roof over their head and stuff like that in a job's paycheck cycle, right? Forever. You can. Now, if you have a job right now, run up that money, do your thing. But if you have a real talent and you're passionate about it, you have to get it out there so you could help the next generation, a wave of people. I'm going to die. Okay, I'm very aware of that. So this is why I try and produce the content I can. Yes, and thank God, God is so amazing that I can make money during the process of this, but I can help other people too. So that when I die, people are still going to be able to feed their families, inshallah, off of this content that I produced here. So we have to put a lot of things into perspective, and we have to ask ourselves, like, what's holding ourselves back? Is it the people around you? If you're in college or something like that right now, I'm not saying drop out. If that's what you really want to do, then do it. But are you in college because you were influenced by your parents, grandparents, something like that? Maybe you didn't want to disappoint somebody. But you have to ask yourself, ask your soul, are you disappointing yourself by doing these things? Okay, you don't want to be disappointing yourself. You got to start putting more focus on your mental health and what makes you happy as a person and a human being. Okay, we're here once on this earth. Why are we putting so much faith and trust in the system instead of God? Don't do that. Don't do that. You want that stable paycheck. You think it's stable. Whole time, boom, as you can see with the government shutdown, they clip, fire. People just lose their jobs. Okay? I've worked with people where people just got let go of their jobs. People got bills to pay. People got debt. All kinds of stuff like that. So if you love your family, get out there and really put your passion out there in the world. We are here one time on this earth. We can't be sitting around wasting time when we don't even know if we're going to wake up tomorrow. It's a blessing that we woke up today. If you're playing video games, hop off of that. The game is here. The game is here. You're your character. Level this up. Level this up. I'm talking to myself as I talk to you guys too. Level this up. Level up your character. Hop off the game. Start creating. We got to start helping each other. People want to complain about the world. Oh, the world is X, Y, and Z, but we're not out here helping each other. And I don't want to be a part of that cycle anymore. So I'm done suppressing myself. I try and go as hard as possible for you guys, but I feel like I can go harder. And my soul has been disappointed recently because I feel like I haven't been giving you guys as much fruit as I can. I don't want to hold in the business stuff that I know. Making the website. Making 4 to 5 figures during business or just online in a short period of time. I want to help you guys get paid off of YouTube so you guys can spend time with your wife, spend time with your husband, spend time with your kids, your mom, your grandma, cousins, your family, your close friends, whoever. I want you guys to have that time, and it's really important that I teach you guys the ways and the things that work for me so we can get this money. You might even be able to do things better than I can. You might be really good at making seasonings. You might be really good at playing tennis. You could be one of the best tennis coaches right now. Teaching plenty of kids. Making the next superstar. You never know. And then you're going to be sitting down like, yeah, like, I made that guy. Like, not you made him, but like, you helped him get there. You taught him the sauce in the game. And even though you're not the one playing, your soul will have that satisfaction. You'll be happy that you have participation in greatness. So forget the money and understand that you have to participate in greatness. Don't just rely on your trading income. Go harder than that. We got people out here that are depressed, sad. Sadly, suicide rates going up. May God grant them ease. Okay? Me personally, and may God bless their hearts, I've had friends who I've sat down and ate food with who are no longer here on this earth. Okay? Due to mental health issues, jump into things like substances and stuff like that. Okay? There's things that I've struggled with. And this is why God has really saved my life. There's things that I've struggled with. Okay? Off camera. I'm not here to show you guys glitz and glamour and cars and trading and this and this. Life is not about that. I want to be a real person and show you guys the real things about life. There's times I go through depression, anxiety. Okay, there's times I feel fearful of things. Even though my income is straight, there'll be things outside of trading, outside of money that are stressing me out. Okay, so ask yourself, are you happy? Is your soul happy? And I'm telling you guys right now, the money will not make you as happy as you think. I'm telling you. If you think that the money will make you super duper happy, you're wrong. Okay, you're wrong. Yes, your problems will be relieved for the most part financially. You're not going to stress about that, and that's a beautiful blessing, alhamdulillah. And you can take care of the ones around you, and you can have fun. So it's super duper beautiful. I'm not saying it's not beautiful. I'm not about to lie to you guys. It's definitely beautiful having money. It's way better to have money than to not. But all your real life problems, let's say if you struggle with things like lust, okay, you're just going to go ahead and use that money and indulge more into your lust. If you struggle with substances, then you're going to use that money and get more substances. If you struggle with materialism, you're going to get more money and buy more stuff that's not asset related. Okay? So we have to ask ourselves, are we doing this for God? Or are you doing this to please people in the world who don't really care about you for the most part? So stay prayed to God. Keep grinding. I'm going to catch you guys in the next one. I got some work to do. I love you guys so much. Head over to stackmode.net. Just wanted to give you guys a raw talk. I don't really care about numbers or anything. I'm just going to upload as much as I want. Pump as much content as out there as I can. I don't care who sees it. I don't care who doesn't. I just love you guys so much. And this makes my soul happy. Talking about life, talking about the charts, talking about income, getting this income. I love it. And I want to help you guys too. Stay prayed to God. Keep grinding. Get out the darkness. Jump into the light. Put the past behind you. And go forward, man. Or woman. Catch you guys in the next one.
What's going on, class? Today we're going to be talking about the number one investing mistake that all beginners make. Let's jump into it. It's not about what you buy. It's about when you sell. And stop thinking that everything is quick and instantaneous. You're not going to get rich overnight. You're going to have to hold these positions for a long time in order to actually build your portfolio. So be ready to be in the game for decades and years. And if you think that market's a casino, or you think you're about to come in, get rich quick and get out, you're not gonna make it. I'm just gonna keep it simple like that. But if you're someone who's ready to wake up, pray, be disciplined, be consistent, and ready to get to the next level and improve each and every single day, then the sky's gonna be for you. Let's go. So 1, the emotional market timing. The belief that you can consistently buy at the lowest point and sell at the highest point. Not true, okay? Sometimes you're not always gonna catch the lowest of the lows. You're not gonna always be able to sell at the all-time highs. People obsessed with catching the ultimate tops and bottoms normally don't typically make money, okay? They'll go through a panic cycle. So buying high, for example, investing after a big market run up, say Bitcoin, for example, people like to consistently buy all-time highs. Once they start seeing Bitcoin being posted all over the internet and stuff like that, it's at all-time highs, then people want to go ahead and invest in. And then they're going to go ahead and get pulled back on due to the fact that instead of investing at a certain low and catching the sweep up, they just decided to buy all-time highs due to hype. So FOMO is going to be the biggest mistake that certain people make when it comes to investing. Okay, being emotional and FOMO. FOMO stands for fear of missing out. Okay, so thinking that, oh, I'm not going to get money in this trade if I don't hop in right now. Like, relax. Most things go down just to come back up. Okay, understand that when market decides to go down, all it is people selling. People have gotten in from the beginning of the stocks opening or tokens opening. So people, of course, are going to take profit eventually as it goes up. Okay, and don't sell though. Okay, out of fear. Selling everything during a market crash or just a dip because the news tells you the sky is falling. Okay, you should have your stop losses in place, which is going to be an automatic order that's going to close your trade at specific areas in case your trade goes to an area you don't want it to. But otherwise, you can't just sell based off of just certain dips and stuff like that. Have a long-term vision, have a long-term plan. And a lot of you end up negative in P&L too, profit and loss at the end of the year due to the fact that you guys close your trades too early. If you don't give your trade room to breathe and really do its thing, you're going to consistently just keep selling for a loss over and over again, causing you to be unprofitable. And if you guys have noticed that, oh man, after market dipped down, a couple of days or weeks later, you'll notice that prices even past where it dipped from where it was high at before. Okay, so you have to realize that just by holding a little bit longer and being emotionally resilient through drawdowns, you could actually make a lot of money. And lock-in losses and missing inevitable recovery. Okay, so you're locking in losses every time you just decide to sell early. Every time you sell early outside of your plan, or sell early thinking, oh man, I don't want to lose money, or you just see a little bit of drawdown, you sell early, you're locking in losses. You're not locking in gains at all. You're locking in losses. And that's not what we want to be doing. Okay. And make sure we're not chasing the hype. Okay. So when it comes to stock picking or crypto token picking, believe it, you can find the next Amazon or crypto based on a tip from a friend or social media may not be the most ideal answer. Make sure you guys are doing deep financial fundamental analysis. Make sure whatever you're investing in is profitable. Okay, this way other people are going to go ahead and invest into it as well too. Make sure it's having a future, and make sure it's really making a way for people to have an easier time within life. Okay, because a lot of the times those companies and those tokens, what they're going to do is go ahead and put money in people's pockets since they're advancing the future. And putting 90% of your money into one risky asset can be really, really bad too. Make sure you guys diversify a little bit. I recommend you guys do between like 1 to 3 long-term plays. Okay. So even if you're a day trader, I recommend you guys still trade between 1 to 3 long-term trades. And the reality of it all, active traders consistently underperform the broad market index over the long term. So the devastating costs, missing the best days. So when market returns from 1980 to the 2020s, for example, the average return of the S&P 500, which is just the index of the top 500 United States companies, okay, just put into one big conglomerate called the S&P 500. You can decide to invest in that. And the average annual return of the S&P 500 is 10.7%. Okay, let's say investor A, for example, they didn't close, they held due drawdowns, they knew that market was going to fluctuate up and down, but eventually they know that the whole goal of the market, cryptocurrency or stock market, is for the price to go in an upwards direction. Because why? For the stock market, when people release an IPO, you have to understand that people are releasing the stock market in order for them to gain more funding for their company. Okay, so that's why we're buying shares, to be participants of that. So they want their stock to go in an upwards direction. Same thing with crypto tokens. There's people putting in tons of work behind these projects, and they want their crypto token to go up because I'm sure they have large reserve as well too. So investor B, let's say investor B missed the best 10 days, okay, and their annual return plummets to 4.9%. And investor C missed the best 30 days, and their annual return drops to 1.5%. The best days usually follow the worst days. And if you're out the market, you miss the recovery. Okay, so the best days usually follow the worst days. So what that usually means is after market dips, okay, you want to go ahead and try and catch the sweep at the low and catch the sweep back up. Okay, even if you don't catch the most bottom entry, if you start seeing market make a nice sweep upwards, especially towards an area of resistance, say all-time highs, because market's goal is always going to be trying to break all-time highs. Whether it be a stocks or crypto, market is always going to be trying to break all-time highs. So always know that. Put that into your logic. So the fact that you know it's always going to try to break all-time highs, any low, okay, that happens, especially after that, and market starts going in an upwards direction, that'll be a great time to buy. And that's the best days. Okay, when you catch the best days and you're able to catch nice sweeps consistently, you're going to be able to make a large percentage gain back. Okay, and taxes as well too can come into play. Frequent selling means you're paying short-term capital gains tax, which is taxed at your higher ordinary income rate. Okay, so that's also why there's going to be something called long-term tax gains. So I recommend you guys have 2 portfolios. I recommend you guys have one account for day trading. Okay, and make sure you guys are doing your short-term capital gains tax calculations on there. And then I recommend you guys have one long-term portfolio. Okay, and then your long-term portfolio can go ahead and be used for holding your shares, okay, your ETF plays, exchange traded funds, or even your crypto plays, etc., for just some years. Okay. And trading fees. While many brokers are commission free, hidden fees like fund expense ratios and bid-ask spread friction still erode small, frequent trades. So the cure: embrace automated indexing. So 1, dollar cost averaging is really going to help you out. Do your calculations, pay your rent, okay, get some groceries, pay your extra bills. After that, see what you have left over. Okay, what do you have left over? After that, I want you guys to take that dollar amount, right, and divide that by like 50%. Okay, whatever you have left over after rent, groceries, and bills, take that 50%, because the other 50% stuff might come up. You might need gas for your car, emergencies, I don't know, Uber, something like that. So you don't want to just invest everything. So take 50% of whatever you have left over, okay, or 60%, however much percent you guys are comfortable with, maybe 70, okay, and take over that percent of leftover, and then you can go ahead and invest that into the market. This way you guys took care of all your priorities. You're not going to be trading out of desperation, Okay, you have some money left over in case you want to get some food, you need an Uber, you need a bus ticket, you need some gas for your car, something happens. Okay, you guys have some money left over, and then the remainder of that you can go ahead and safely invest. So you can go ahead and buy the market as well too. You can use your funds to buy low cost stocks, or you can buy index ETFs, exchange traded funds that track broad market indexes like the S&P 500 or the total market VTI. And diversification, it can remove single stock risks if you're wrong, especially when you're a new trader. ETFs can be a really good way, but single stocks are also going to be a fantastic way to make some profit too. To do your research and make sure you guys know what you're investing in. So patience, the compounding engine. Your primary job is to give your money time to work without interruption. So during year 1 to 10, your growth is going to be pretty slow. Okay, this is going to be when you're running up your money. Okay, you're taking it from like $100 to your first million. Okay, I say within the first 1 to 10 years, then 10 to 20 years, should be able to take it from $1 million to 10 million, and then 20 years plus 10 million plus. Okay, but you guys can also shatter these time frame way quicker than what I'm saying here. But your growth might be slow at first. Your returns are mostly going to be from the money you personally contributed, and the discipline is going to be just compounding over time. Once year to 10 to 20 hits, okay, or even year 5, even year 3, growth is going to accelerate and returns start being driven by money and making more money, compounding. And this is when your long-term plays are really just going to be paying you guys. Even just 50K invested into certain ETFs will go ahead and pay you guys back. And years 20, it's your exponential phase. The interest earned vastly outweighs your new contributions. And time is going to be your largest contributor when it comes to investing in the market over the time like this. And the goal is not maximum return, but the maximum time in the market. Keep your account alive. The more you guys keep your account alive, and the more you guys focus on the trades that are key to keep your account alive, instead of focusing on the trades that are just going to make you profit all the time, the better you guys will be at keeping your account. And the better that you are at keeping your account, the more consistently you can make some profits, inshallah. Because as long as your account's alive, you can make some profits. So the winning mindset. Boring trading is beautiful trading. There's no such thing as boring trading, in my opinion. Did you stick to your logistical plan? Okay, I know when I stick to my break and retest strategy, I'm happy. Okay, I love withdrawing. Okay, I'm excited. I'm ready to come into the next trade, and I'm really just coming into the mindset of, okay, I'm ready to dominate. And automate everything. Set up automatic deposits if you can too, so you guys don't even have to think, or put yourself on an automatic schedule. Be like, you know what, every 2 weeks I'm gonna invest this. Every week I'm gonna invest this. Every percentage of my income I'm gonna invest this. And set up automatic deposits and investments, and make saving the path of the least resistance. Okay. And diversify. Buy the market using low cost index funds. You can go ahead and own stocks as well too, and just do what you would like to do to go ahead and invest. Okay, just make sure you guys are doing your research though, and think decades into the market. Even my day traders, think about reinvesting that profit into long-term plays. This way your money is going to always be making you guys money, because there's going to be a time where our brains aren't going to work the way we need them to all the time. Our bodies aren't going to work the way we need them to all the time. So let's grind now. Let's stay down now. Let's invest into the markets, and our money will be making us money for the rest of our life, inshallah. And you can ignore daily market movements. Your money is planted for the long term, and don't dig up the seeds. And the best investment strategy is the one you can stick to. All right, stay prayed to God. Keep grinding. I love you guys so much. You can head over to stackmode.net for all trading education. Catch you guys in the next one. Peace. Trading can be difficult sometimes, but through prayer, discipline, and being consistent, you won't have any days of you just sitting at your screen wondering how everything slipped out of your control. Emotional trading days feel heavy, but they don't have to follow you into tomorrow. The truth is, recovering starts with separating the market from your identity. One bad day does not make you a bad trader. Sometimes it's just the wrong mindset meeting the wrong moment. So let yourself step back and give your mind space to cool down, because the clarity never shows up when your emotions are running the show. Once the noise fades and once things shift, the mistakes you made earlier stop feeling like failures and start looking like signals. Little messages from the market about what needs to change, and that shift alone is powerful. It turns frustration into fuel, because the real comeback doesn't happen on the charts. It happens in your head. When you decide that today's chaos isn't your story, it's just a chapter, when you choose to reset instead of spiral, when you remind yourself that disciplined trading is built on composure, not emotion, then that's when you'll start seeing the profits flow in. Let's go and let's jump in how we can control ourselves and become a more disciplined trader, inshallah. So, trading discipline, it's going to be the factor that determines if you're going to be profitable or not. Okay, if you're not going to stick to your trading plan, if you're not going to stick to your risk parameters, okay, and if you're going to lead with your flesh, you're going to continue to get those results over and over and over again. Okay, so being spiritually grounded is going to be extremely important. In Quran, okay, it states, and those who, when they spend, do not excessively or sparingly, but are ever between that, justly moderate. Okay, so that means that you want to be spending your money not in an excessive manner, even when you start making 10, 20, 30K a month from trading. Okay, you don't want to excessively be blowing through your money. Okay, take your time and having that grounded mindset, trade after trade after trade mindset, stacking it up over time. Okay, no matter how much money you make from the markets, you're going to stay patient. Okay, you're going to still stick to your risk parameters. I don't care if you start making 50K a trade. Okay, you still wake up, pray, stay disciplined, and keep taking the same type of setups, because exactly what got you there is what's going to keep you there. So don't lose that consistency. Don't lose that discipline that's been built into you just because you start touching the money and the numbers that you finally want to get. Okay. Do not start spending excessively, and do not start making excessive decisions once you start getting to a certain point. Okay. That doesn't mean once you start getting a 90% win rate, okay, to just start putting on 5 trades a day just because you have so much conviction, okay, based off of past results. It's about being consistent today and every single day, okay, and finding peace through God, balance, and moderation. So let's go to the next slide. So you got to recognize the tilt, okay? Check yourself emotionally, okay? You know when you're about to get upset. You know when you have a feeling of wanting to trade over and over and over again, okay? You know when you're having feelings of wanting to crash out, okay? So keep heed of your emotional red flags, okay? Before you can fix it, you got to admit to yourself, okay, that things got to change, that you're broken right now. So an emotional trading day usually involves revenge trading. Okay, so if you take a loss for $200, okay, say that was in between your 1 to 10% of your account risk parameters, right? That's fine. But then you take another trade. Okay, so instead of just using $200, you now lose $400. Okay, and then say you try to put on some size trying to make back that $400. Okay, and then you end up losing $800. Okay, and that's how the cycle starts, and that's how quickly you can blow up your account. So don't revenge trade. Okay, if you take a loss, close your trade, and that's it. Okay, plot out another trade, a cleaner setup, and stick between your 1 to 10% of your account rules per trade. Okay, because trying to make it back will end up turning your account into a whole different spiral in a different direction than you would expect it to go, a lot quicker. Okay, because if you lose, you might lose again. If you lose again, you might try and risk more than normal trying to make back the double losses. Okay, so I'm telling you, if you don't recognize the tilt, you could lead into a whole different spiral and mental mind space than you'd want to be in the first place. And paralysis. Okay, so staring at the screen, making you unable to execute a good setup. This is why it's really important to have your stop loss set up as well as your take profit too, with limit orders, especially if you're trading futures or Forex. Okay, this way you guys aren't going to have any emotional paralysis. Say something just clips way past your mental stop loss, you're not going to freeze, okay, because you don't want to lose all that money and close out your trade, even though you know you should, okay? And increased size, once again, increased size usually comes into play when revenge trading comes into play, okay? But for the most part, you shouldn't just be increasing your size out of the whim. Stick between 1 to 10% of your account per trade, okay? So don't double down on risky trades out of anger or out of past losses, okay? And check yourself, okay? So ask yourself, are you feeling anxiety? Is your heart racing? Okay, are you cursing at the monitor? Are you breaking things? Okay, if so, you got to stop immediately. Okay, you got to stop right then and there. Okay, get up, go pray, take a breather, hop off the charts, and immediately check yourself right then and there. Okay, it's not worth destroying your family's future, destroying your seeds that you have planted in the ground because of a quick moment of disparity and anger. It's not worth it. Okay, keep your account alive. In this game, it's not really about making money. It's about who can be consistent, who cannot be led by their flesh, and who can be disciplined every single day. Okay, so let's head over to the next slide, class. So the pattern interrupt. Okay, walk away physically. Okay, if you notice yourself, especially if you're on prop firm or trading something quick like futures or Forex, where you can instantaneously lose money fairly quickly, okay, you got to get off the charts. Okay, hop off the charts. If you notice you have a trading addiction, you got to pray to God, okay, and really ask to get better. Okay, ask yourself, why are you taking so many trades too? Are you chasing money? Do you have bills that you're trying to pay? Do you have some debt that you're trying to clear? Okay, because you can't trade out of desperation. Okay, trading is not something that you look to when you're dead broke trying to make it out. Okay, you got to get your life together first, get some income, then come onto the charts. Okay,
get closer to God, build that relationship with yourself, and know yourself intimately and deeply. This way you can check yourself and check any type of emotional parameters or boxes whenever you feel like you're about to crash out or having a rough trading period. Okay, you can't solve a trading problem with more trading. Okay, you need to sever the connection between your brain and the charts. Okay, so once again, you cannot solve a trading problem with more trading. You have to sever the connection between your brain and the charts. Okay, so close the terminal. Okay, if you notice yourself crashing out, taking multiple trades during a day, okay, you got to close TradingView. You got to close your broker and you got to just hop off. Okay, or sign out of your brokerage account and log into paper trading. Okay, and change your environment. Okay, leave the room, go outside, take a breather, and the change in lighting will really help reset your circadian rhythm. So when you come back on the charts, you're going to be like, you know what, I was tripping. Why was I crashing out and doing all that? Okay, and don't check quotes on your phone. Okay, whenever you enter in a trade, stop staring at it tick by tick. Okay, enter your trade, have your alert set at your stop loss and take profit, or set your limit orders. Okay, and don't look at it. Don't look at it. Okay, because I'm telling you, you might look at it, make a decision that will ruin your trade, okay, and then end up taking another trade, and that could start a whole downward spiral that you don't want. Okay, so understand that trading is pretty passive and hands off. Okay, after you've aggressively studied and gained the knowledge, once you actually hop on the charts, it's going to be pretty passive. Okay, so let's head over to the next slide, class. So you got to reset your biology completely and get out of survival mode. Okay, give yourself a cold reset. So your nervous system is in fight or flight mode, especially when you enter a trade for the first couple of times. Okay, and you got to force it back to rest and digest. Okay, so some actionable tactics. Number one, praying to God. Go to God about all your issues. It's really going to help and really going to build accountability within yourself too. Okay, you can't just be blaming the markets like, oh, market's doing this, market's manipulated, market's not manipulated. Okay, it's been going in an upwards direction, especially United States stock market, year after year after year after year after year. It's not manipulated. You have to check yourself and hold yourself accountable. Okay, if you're making monkey decisions, don't make monkey decisions anymore. Okay, check yourself. There's plenty of times where I've made monkey decisions. Okay, plenty of times where I blew an account within a couple of minutes. Okay, due to the fact that I was chasing that quick money. Okay, so checking yourself and staying in tune with yourself, even when you fail, is going to be an important part of being a CEO and being a boss. When you're a trader, you're not just on here trying to get some money. Okay, you're signing up to be a business person. Okay, you're signing up to be your own boss. You're in control of your finances whenever you come onto these charts. You're in control of when you get in, when you get out, and how much you're going to risk. Okay, so don't run around blaming the market when you got to take accountability for the actions that you did. Okay, so breathe. Okay, breathing is also going to be a really good tactic too, something I've been working on myself. Okay, so breathing is really going to help you out. Okay, if you notice you're about to crash out, close your eyes, take a big breath. Okay, and working out in the morning too. If you notice that feeling of high anxiety or intensity in the morning, make sure you guys start your day with a prayer. Okay, and then go work out. Okay, when you guys work out, your body's going to release a lot of cortisol. Okay, and it's going to be in more of that healing and building mode instead of fight or flight mode. Okay, so your journal. Okay, make sure you guys have a trading journal. I don't care if you do it on Notion, Discord, a physical trading journal, whatever. Okay, just get it out. Write out your emotions. Okay, write out your goals. Write out how you're feeling. Okay, and emotions loop in your head until you write them down. Okay, once they're on paper, your brain is going to feel safe. Okay, to let it go. Okay, so if you notice yourself, you're struggling with over trading, like, man, I keep taking 4 trades a day. I can't accept a loss. Write down why. Write down what you're trying to chase. Why do you want the money that bad? Okay, and break it down logically, and it's really going to help you be more intimate with yourself. Okay, and write answers to these 3 questions. Okay, what specific rule did you break? If you notice yourself losing consistently based off of just emotional decisions, okay, ask yourself how you're feeling before you enter the trade. Okay, and ask yourself, what's the worst case scenario? If stop loss gets hit, okay, because if I'm hitting my 1-to-4 risk to reward ratio trades, let's say I'm risking $100, okay, if I'm making $400 per trade, okay, then I'm still going to be profiting $300, okay, which is going to give me more extra room in case I ever have a losing streak. Okay, so the worst case scenario is that you hit stop loss. But the thing about it is that if you stick to your rules, okay, you stick to your discipline, you stick to the plan that you wrote down, If you stick to your stop loss, how are you going to be unprofitable? If you have a decent win rate, you're sticking to your risk reward ratio, okay, and you're staying in between your risk management parameters, trading between 1 to 10% of your account per trade, how could you lose? The math is right there for you, okay? The only way you lose in this world is when you lead with your flesh, okay? It's the only way you will ever lose. If you are disciplined and consistent, it's almost impossible to lose. Let's head over to the next slide. So, radical acceptance, okay? Forgive yourself, okay? Beating yourself up creates more emotional pain, which leads to more bad trading tomorrow, okay? And sunk cost. The money is gone, okay? Once it's gone, don't try and chase it back. Don't try and boot up your account again and be like, oh, I'm about to recover all this. No, don't do that, okay? You cannot trade to get that money back. Once it's gone, it's gone. Once something is gone in the world, it's gone, okay? But that's perfectly fine, okay? Because you can only trade new setups. There's going to be better setups, okay? And view every single loss in life, in business, wherever, okay? Just view it as a lesson. View it as tuition, okay? Some of you might be in college, okay? Paying for your tuition. Treat every single loss in life. I don't care if it's on the charts, okay? Business, relationships, whatever it is. If you need to view it as a lesson to learn and progress and go forward, okay? And you're not your profit and loss, okay? You're your risk manager. You're still going to be the same person if you're making $50 a trade or $50 million a trade, okay? You're still going to be the same person, okay? Your spirit is still going to be the same. So the money is not the thing that changes you, okay? The thing that changes you is the knowledge, okay? And you learn how to keep your spirit happy, how to not go through pain, okay? And that's what we're here to do on this earth, okay? Pray to God and find out ways to keep our spirit happy and avoid pain, okay? If you notice yourself crying at the end of the night because you crashed out your account and you got bills due the next day, okay? You need to learn from that pain so it doesn't happen again, so you don't grieve your spirit, okay? So if you're frustrated due to your own actions, stop doing it, okay? Pray to God on it, check yourself, and come back stronger and better. Don't let it happen again. Let's head over to the next slide. The return protocol, okay? Start small, okay? Don't jump back in with full size, okay? If you got to scale down, take a step back, okay? Because it's not about the money. It's not about the money, okay? If you notice yourself crashing out, if you're trading with $200 a trade risk, okay, and you're crashing out with that, lower it. Maybe you should be risking $50, $100, okay? Lower your size, especially when your confidence is damaged, okay? So for the next 3 days, okay, try to trade with 50% size or less, okay? If you just had a horrible streak of losing, crashing out, being led by your flesh and emotional decisions that led you to straight destruction, okay, take a step back, okay? It's all good. You can always come back stronger. So try it for the next 3 days. Try and trade with 50% size or less, okay? And prove to yourself that you can follow the rules before you're allowed to go back to risking your full normal size amount of capital, okay? Because before you can even start touching the money, you gotta have the discipline built in you, okay? You're not gonna touch a thing, or you're not gonna be able to keep a thing if the discipline isn't built in you. It won't matter. I'm telling you, it won't matter. So if you're making $1,000 a trade, you should still be happy if you're making $100 a trade, okay? Just the fact that we can come onto these charts, look at candlesticks going up or down, and clicking buy or sell, and being able to make money is a blessing. So why are you ruining it for yourself? Okay, please don't make it hard. It's welfare, okay? It's welfare here. And all you have to do in order to get it, you don't got to go sign up on a website. All you have to do is be disciplined, okay? Be disciplined. And praying to God is going to be the #1 way on this planet to build discipline. Then from there, you guys can start working out. Then from there, start grinding every single day. Then from there, you're going to get very strict on your setups. When you're praying to God every single day, you have a strict health diet regimen, okay, and you're sticking to your trading plan, trading is not going to be difficult for you. I'm telling you, it's going to be very, very, very simple, okay? But most people who struggle with this, and it just shows you how undisciplined 99+% of the world is, okay? The main reason why 95% of people plus aren't profitable is because most people on this planet lead with their flesh. Everyone always wants to feel good all the time. Everyone always wants to be comfortable all the time. Everyone always wants to be happy all the time. And that's not realistic. Okay, you have to be disciplined consistent, and you have to have that iron edge regardless of what's happening in life. Okay. If you want to live in a fake realm, okay, being led by your flesh, that's fine. You'll continue to get those results. Okay. But if you want to be the 1% in the world who's ready to reap the harvest, okay, who's ready to get the resources, who can help everyone else out, okay, you got to put yourself through the fire. Okay. And you got to come out not tripping. Okay. Let's head over to the next slide. So tomorrow is a new market. Stop tripping about the past. Okay. That little bread that you messed up, forget it. That account that you blew up, forget it. Okay. Whatever happened back then, it happened back then. That was a weak version of you. And it's time for that version to die. Put it away. Okay. Come stronger. Build yourself a whole new version and come way better. Think different. Okay. So wake up, pray to God, and work out. When you guys are working out consistently, it helps your cortisol run through your body a lot less intensely, so you're not going to have random crash out spurts. Okay. Working out is really, really going to help you. Okay. And walk away from the computer too. If you notice yourself pansying on the market, spamming buy or sell because of a loss, relax. Walk away, go pray on it, check yourself. You probably did some emotional stuff that's your fault, and cool down physically. Okay. Then go journal the mistake. Okay. Throw it in your Discord, your Notion, your trading journal in real life, notes on your iPhone, whatever. Okay. You got to release the loop. You cannot do the same things in life and expect different results. Okay. So if you're doing something in life and it's working, okay, you notice you're waking up, you're praying to God, you're grinding, and you're getting somewhere, continue to do that. Okay. But if you throw off the loop, if you notice yourself throwing in random days of doubling your leverage, okay, then your risk to reward and your consistency is not going to be able to be built like that. You can't be risking $100 one day and then 2 days later you're risking $400. It's not how you're going to build yourself. Okay. And then when you return to the market after a crash out series, start smaller. Okay. Start smaller because you're not even ready for the money right now. So if you're blowing up your account, you're not even ready for the money. Some of you guys are thinking about the money, but you're not even ready for the money. Too many of you forget about the grind. If you have a skill, a talent, and discipline in this world and you pray to God, you'll get to some money. But some of you forget about praying to God. You forget about the grind. You forget about the hours of studying that it takes to be successful in whatever you want to be in. Okay. I don't care if you want to be an athlete, if you want to be a CEO of a business. Okay. Whatever you want to do in this world. If you forget about the grind, and most importantly, if you forget about God, you're not going to be able to be successful. That emotional turmoil might catch you, and that one bad day could destroy you. But understand that one bad day does not define who you are in your career. Okay. Stay hard, stay disciplined, stay focused on God, and keep grinding. Don't ever give up. And catch you on the next one. Peace.
Future trading can be a little tricky if you let it be. You only want to buy when buyers are buying. Try not to ever buy when sellers are selling. In this video, I'm going to teach you guys exactly how to trade pullbacks and how to buy when the buyers are buying and what to identify and look for. Let's go and let's jump into it. Inshallah. All right, so here's going to be buying at the right time. You want to buy after sellers are done selling. So sellers need to sell first, and you want to buy when buyers are buying. If you buy when sellers are selling, you're going to go ahead and just get destroyed. Okay. If you're looking to buy at the right time, we have to wait for pullback. We have to wait for price to form an area of support. Okay. So playing pullbacks is going to be really, really important. And here's going to be the things we have to look at. Okay. One, you need to make sure that you're trading in a trending market. So if we're going to trade pullbacks, which is just price coming down, lower, and then going back up. That's all it is. So if price goes up, comes down, and then goes back up, that's a pullback. So you want to get on your weekly time frame ideally, or be on your higher time frames, such as your weekly, daily, or your monthly. And then we need to analyze the full chart. So I'm going to start off with my weekly here and get the full bird's eye view of absolutely everything. So I can see here on my weekly that price decides to trend upwards year after year after year after year, no matter what. Okay. We're still ending up at new all-time highs, regardless of how many dips that it's made. Now, the way that price works within a staircase manner.
And in order for price to progress, it has to make higher lows. So that means that the new low that price just made is going to go ahead and be higher than the previous low that it made. If that's happening, then that means price is trending within an upwards direction. Okay. And you need to buy when price makes these areas of supports, also known as the higher lows. Okay. So I'm going to break down how we can time and what we're looking for. So you want to buy when market is down, so then you can profit on the sweep up. Once again, buy when market is down, so you can profit on the sweep up. So in order to do that, you have to be trading something that's trending in an upwards direction anyways. Okay, so get on your higher time frame, start off on your weekly, and look at absolutely everything. So on my weekly here, I can peep. We have this low starting from 2020. Okay, and I could see here, we have not stepped back here since. And I'm on my weekly here. So I can start marking from the bottom of this low. And I'm going to go through and mark all the higher lows up until current price, just to show you that price is trending. So I can start seeing price trending in upwards direction after it hit this 21,000 area here. Then price bounced super duper heavy. Okay, made another higher low here near this 26,000 area. Price came up, topped out right here. Okay, when price tops out, all it is making the left side of the V. Then once price makes support, it's making the bottom of the V. Our job is to catch the right side of the V. So even right here, you could see price come up, top out at this area, and then come down. After it come down, stopped right here, then bottomed up. Okay, price stopped up here. Price came down, and then bounced up, stopped right here, came down. Okay, so this is going to be a whole area in itself. Got price coming up here. Looks like price stopped towards this top, bottomed out right here, and then kept going. Right here, came up, stopped at this red candlestick, pulled down, made a low right here. Stopped up here, pulled down, made a new low right here. Okay, then over here, price decides to get underneath the lows. Okay, made a higher low right here. So even though we fell all the way down right here, it's still higher than this low right here. Okay, so that's good. So this higher low is still valid. Price was deciding to come in the cut here. Decided to bounce up the same area twice. We just still see price just trending, doing its thing. Trying to make a low here. Kept trending up, kept trending up. Price came down. Okay. And this low is still higher than this low here. So we're still in an uptrend, regardless of how hard we're dipping. We're still in an overall uptrend. This low right here. This low right here. Low right here. We can see price heading in upwards direction. Okay. Now, what is price hunting? Price is hunting these areas here. These areas of resistance. These are going to be the areas that price are hunting. Price can't make new all-time highs unless price breaks previous areas of resistances. So after market decides to pull back, okay, your take profit, ideally, a lot of the times is going to be an area of resistance above current price or an area of support above current price. So you want to wait for price to pull back, wait for sellers to stop selling. And once you've identified sellers have stopped selling, which you'll see, and a good indicator to know that sellers have stopped selling is going to be on either your daily or your 4-hour candlestick. After you see a candlestick make an abrupt stop on your daily and 4-hour, pay attention to the next candlesticks. If you're looking for a long trade, if price action decides to randomly stop in the bottom, and then you start seeing multiple green candlesticks going in upwards direction, then you know buyers are going to be buying. And ideally, you're going to be looking for around 2 to 6 daily
or 4-hour candlesticks after an area of support was created. If you see 2 to 6 daily or 4-hour candlesticks going in an upwards direction after it makes an area of support, then that's how you know it's going to be true. Okay, and you want to be looking on your daily or your 4-hour. You're going to be looking for 2 to 6. So even take this low right here, for example. Price decided to make this super low right here. Okay, and so here's the super cool thing. Market does all the work for you. You don't got to do too much. You just got to chill. Be patient. Okay. Pray to God and just live your life. So boom. Market made the left side of the V for us right here. Market came down. Sellers were selling. Boom. Made an abrupt stop. Okay. And here's how you know if it's true. The candlesticks afterward were multiple green candlesticks. So after that abrupt stop, I have 1, 2, 3, 4. Okay, so I went 4 green candlesticks on my 4-hour here. Okay, and then even on my daily, I would have had 2 green candlesticks. So at the bottom, and then I had 1, and then I could have entered on this candlestick here and caught the rest of the resistance fill. So let market make the left side of the V. Let market make the bottom of the V. And you can see if the bottom of the V is real, knowing and seeing what candlestick come afterward. Okay, take this example. You see price trending in a higher low scenario here. You see this low right here. Okay, price bottomed out. I'm on my daily candlestick right here. Okay, I'm on my daily. After it bottomed out right here, I'm looking for 2 to 6 candlesticks, either on my daily or my 4-hour. So I can see price made the left side of the V up here. It's about patience. It's really about patience. Market decided to come up, top out right here, and then fell all the way down right here. This is how I know that the bottom is real. Okay, I paid attention to the candlesticks afterward. Okay, so after this bottom got created here, and sellers were done selling, you could see 1, 2, 3, 4. Okay, 4 candlesticks. And as soon as we got to like this upwards direction, I would have liked that. So I probably would have entered around like right here. Stop loss below the daily candlestick supports. And then take profit at previous resistance from where price decided to fall down from. Okay. Because I could see price already made the ultimate support, and all I did was catch the higher low entry. So let's go and let's do a fresh example here and see if I can find the setup. So I'm going to pull up the micro Bitcoin. Let me analyze from start to finish. So I'm going to get on my weekly time frame here. Okay, great looking thing I'm looking at here, because we're not at all-time highs. So that's why it's a great looking thing. If you're at all-time highs, you can't long. Okay, you cannot long at all-time highs. Don't do it. Okay, because price always wants to be chasing an area of resistance above current price. That's going to give a reason for buyers to step in. If there's no resistance above current price, there's no reasons for buyers to step in. So only play pullbacks, okay? Because then you're going to be buying when buyers step in. It's going to be extremely, extremely simple. So buy after sellers have sold. So I can see here from all-time highs, heavy aggressive selling has been coming into place these last couple of weeks. Okay, extreme selling to the downside. We met up near this area of support here. Okay, met up near this area of support here, and we're gonna go ahead and see what this is gonna entail. So on my weekly here, we have a red candlestick. Get on my daily here. So on my daily here, start seeing price try to curl up, but it's a lot of mixed match candlesticks. A lot of green, red, green, red, green, red, not the same color. Okay, if these were just straight green candlesticks for the most part, heading in upwards direction, then it'd be a lot more definitive. But in this case here, it's very, very spotty, not direct big candles. Right after like this low, for example, okay, heavy green candles, 1, 2, 3, 4 heavy green candles. Even after this one, kind of, we had a heavy green candle here, had to run one. But then after this higher low, straight green candles. This one here, we hit this low.
and then a green candle, then a red candle, a green candle, and then kind of a doji, and then a red candle. So this one, I don't believe is fully ready yet. We could see this could be a higher low in the formation. And then we could see if maybe this low wants to hold or something. This low right here. Price seems to be trying to find itself some support here. Okay. So this is why we scale down to our smaller time frames, just to see things a little closer. So we're going to go ahead and have this. We have this super low here. We got a higher low than that. So as you can see from this higher low, the V did get filled in from right here. So that's really good. So we'll see about this V. All right, because we're looking for a setup right now. So on the 4 hour here, I see price. I actually like this a lot, honestly. Even if I don't take it to all the way up there, this area of resistance will be fine. Same thing with this area here. Okay. Even if I wanted to just take it to this one up here, that'd be fine. So I like this a lot, actually. This is what I've analyzed. Is price making higher lows recently? Yes. Bottom, up, pause, down. Okay, and the pause that it made down is higher than the previous pause. So this high is higher than this low. Higher lows mean staircase trending in upwards direction. Okay, and we're buying after sellers sold. We're buying after all-time highs dump. So I like this a lot. Okay, I see higher lows being in place, and I think this is a new low being in place. Why? Because I have one area of support here. And guess what? I also have a whole nother candlestick. It has me so excited right now. Boom. Whole nother candlestick. Boom. And I'm on my 4 hour here. Here we have 1, 2, 3, 4. 4 green candles headed in an upwards direction. So get on my daily here. I could wait for one more daily candlestick to be green. Like if this daily candlestick closes green, then I would feel comfortable for sure taking it up to maybe like at least this resistance up here. Honestly, I won't be scary. Play big, take profits. I would at least take it up to this resistance up here for sure. So I need at least one more. I'm gonna be patient though. Patience is everything. Don't just get in and be like, oh, higher lows, because sometimes your lower time frames could be your worst enemy. So on my 4 hour, do I like it? Yes, but we don't tunnel vision. You know what I'm saying? We need the real thing in life. So boom, have this super low being made, higher low being made, and then another higher low being made. Okay, so I have 4 green candlesticks on the 4 hour. I like it a lot. Okay, I'm gonna decide I'm gonna close all the way up here at these 2 areas of resistances. Right here. This is where I want to close. Okay, this is the strong area of resistance. You see how price marked it and hit it twice? Definitely not for no reason. So strong area of resistance, price has beef with. So what I'm gonna go ahead and do is, you can either do this too, but yeah, you can analyze your higher lows, and I can get on my 15-minute here. Four hour. Okay, so either going to be looking for like a tiny little 4 hour wick. Okay, because right now the 4 hour candlestick is red. So right now selling is in place. Okay, so I only want to buy when it's buying. Okay, so right now it's making a little mini V. So I believe this is the top of the V right here that it's making with these 2 resistances. Let's get on to the 15-minute. You see these 2? Okay. So you want to remember, you do not want to buy when price is selling. So you would not buy right now on the 15-minute and the 4 hour. Price is heading in a downwards direction. But overall, we're in an uptrend. Okay, but you want to be buying at the right time, though, is the thing. You want to be buying at the right time. So right now, sellers are in place, but overall, buyers are in place. Okay, so to get that specific entry, you can scale down to your 15-minute, be like, okay, I could see these 2 areas of resistances. That's why price is falling down. Once you start seeing green candlesticks, or once you start seeing a green candlestick on your 4 hour or your 15-minute, then a lot of times that's how you know buying will be ready. But right now it's falling down from an area of resistance.
I need to wait for this candlestick to go from red to green to show me that buying is real again. Okay, I do not want to buy when selling is occurring if I'm trying to buy a pullback. That's just not what I want to do. It's not what you're going to be looking for. It's called a pullback for a reason, because you're expecting it to go back up and it's just pulling down for a second. So right here, sellers are in place. Red candlestick, price is heading down even on the 15-minute. Okay, now if I'm on my 4-hour and I get a red to green candlestick, then I would feel a lot more comfortable going ahead and to enter. Because price might want to honestly fall down a little bit lower. I could get a little bit lower entry and save myself on some drawdown. But if this red candlestick were to go from red to green, that means buyers were to go ahead and be in place. And then from there, I should be able to go ahead and you can have your target all the way up there, for example. And then, you could do your stop loss under here. And this would be, give me about a 1 to 3. Okay. So this would be about a 1 to 3 here. Extremely profitable trade. Really nice trade. So catching your setups is about taking your time, really. It's about just seeing what you need to see. So I'll do one more setup here. So I hit on my weekly. And I'll mark out all-time highs, because this is going to be the most obvious place that we've recently fell from. So I'm on my weekly. Okay, not quite all-time highs. It's going to be over here. It's exactly what we get on the weekly. You want to zoom all the way out, see all the price action you can. That's going to be all-time highs. Then from there, I'm going to go ahead and put a line down at this new area of resistance here. Okay, the area of resistance where we're recently falling down from. I could see price making higher lows. Price has a super low here. And I could see higher lows being put in over time, which means that we are headed in a upwards direction. Okay, we're trying to get up here to all-time highs. So this is what I analyze here on my weekly. So on my weekly right here, the current candlestick is red. So we would not be buying right now. Okay, we would not be buying right now because we're currently selling at the moment. So we want to see if there's any reason why. Yep, I can see exactly why we are selling. So try and analyze why price is doing it, what it's doing. The price doesn't just do stuff randomly a lot of the times. As you can see on the weekly, I have this area of resistance here. You'll be able to see it a little clearly on the daily. This area of resistance is linked to this new area of resistance that just got created. So that's why price is falling in a downwards direction, logically. Now let me head over to my daily here. You're going to be able to see the curl a little bit closer here on the daily. Okay, price at the area of resistance that it matched with over here. Okay, price did some break and retest. Price came down and then wicked back up to the specific black line and then tanked down. Okay, so this is a very nice area of resistance that price likes. So we need to get back to this area though. So now this is so simple. It's the easiest way to play pullbacks. Just wait for sellers to sell first. So you can see that's why sellers are selling. Price at an area of resistance. So right now sellers are selling straight red candlesticks on my daily time frame with it right now. I'm waiting for price to bottom out. Okay, and this is the easiest way to not get faked out. So people got faked out on this candlestick, for example. And let me head over my 4-hour. Okay, so this candlestick right here, people bought this. The price decided to wake up and people probably thought they caught the ultimate bottom. You never want to try and catch the ultimate. Okay, you want to catch the high or low entry. So check it out by staircase. You see how this low's here? And then you have this low. Then you have this low. If I zoom in, I have this low. This low. This low. This one. Okay. So we could see price dumping in and making each of the higher lows. We'll go ahead and start it from all the way over here. Got price all the way down here. Support. Higher low. Another higher low. Price continues to just go in an upwards direction. Okay, we got these areas of support here mixed with this one. Mix with this. Trending. All we're doing is buying the bottom, higher, low entry. Exactly. Yes, sir. That's all we got to do. Just buy the bottom entry. See how these two supports over here are correlated with each other? Very, very cool. Let's check this out. Check out this higher low right here with the recent higher low that we just did. And then we're still trending in the upwards direction here. I'm on my 4 hour right now with it. You can see we came down a little bit. Still, this low is higher than this low. And then we decided to trend up again and continue the higher lows. As you can see, we're filling in multiple V's. Each one of these pullbacks are a trade. Each one of these pullbacks are a trade. Boom. Pullback. Pullback. And it's the same parameters every time too. No. So boom, pullback. So now we just need price to bottom out at an area, and we need 2 to 6 green candlesticks. And once I start seeing that and price filling in the right side with some green candlesticks going up, I'll catch the right bottom. Okay. But right now I'm gonna wait. People probably got burned right here with these candlesticks. Yep. But if you get on your daily here, we only have 1 candlestick. So this is why you need your daily. This is why I say 2 to 6. So that's why your daily and your 4 hour is really important. You can't just tunnel vision on your 4 hour. You need 2 to 6 candlesticks on your daily and or your 4 hour. Okay, so right here it was only what, 1 green candlestick on the daily probably, and then another one open red. So if we have 1 green candlestick on the daily and another one open green and we're heading in an upwards direction, I'm taking that. Stop loss below the lows, taking it to the highs. Gotcha. So a lot of the times I'm overnighting. So I'm always overnighting actually. So each one of the setups I'm overnighting because I can just focus on my higher time frames, which is the real bread and butter. And yeah, and that makes it really, really easy. And that's going to be how you can play pullbacks.
Trading options can really be crazy. You could be right directionally and still be losing money, and I know that can be extremely confusing. So I want to break down the Greeks for you guys. They're the factors that control your options P&L and your contracts. And if you don't understand the Greeks, you just aren't trading. You're donating money to Wall Street and the people selling you the contracts. So here's going to be the cheat sheet to the engine that actually drives your contracts. I'm going to explain delta, gamma, theta, and vega, and understand that you can't control the market, but you can control your risk and the math. Let's go and let's jump into it. Inshallah, if God wills. Before we even think about throwing $1 into options, we gotta understand the Greeks. Inshallah, if God wills. It's extremely important. You don't want to just be in a trade, seeing it go up, and you have some calls purchased, and you're like, why am I not making any money? It can be heartbreaking. It can be confusing. And I'm telling you guys, the science, the math behind these Greeks, once you understand them, you're going to be able to avoid a lot of things. So before we get started, let me go ahead and just tell you guys a quick little cheat code to help you with Greeks. Your time that you have as far as when your contract is going to expire on options is the most important thing. Stop trying to buy 0 DTE contracts and have extremely far take profits. Okay, that's not making sense. Okay, if you're going to play on the higher time frames and have further take profits, then you need to have more time on your contract. Okay, ideally, one of the best ways to play options is via leaps. Okay, you guys might have heard me talk about leaps before, but what leap contracts are contracts that expire in 1 to 2 years. Okay, when you give yourself years on your contract, you have so much time to sit and wait for price to reverse. Because you have to understand that the United States stock market, it's meant to go in the upwards direction year after year after year. Okay, Amazon, Google, Microsoft, Apple, these are all global companies that are implemented in the whole world. Okay, but these are American companies. So the US stock market, which is based off of stocks, okay, which options derive from, has to go up year after year after year after year. So you have to understand that. Okay, you can't be closing your trades early because you're like, oh, it's just going down for a couple of days, couple of weeks. If you have time on your contract, because your risk on options is how much the contract actually costs.
So if your contract costs $200, the max you could lose is going to be that $200, but the max you could win is going to be infinite. Okay, so putting everything into perspective like that really does help you. So your stop loss on options should be exactly how much you purchased the contract for. Okay, if you purchase a contract for $200, then on options, that should be your stop loss. Okay, don't close your trades early. Purchase time on your contracts. Okay, and use your stop loss as the full value that you purchased the contract for. And I'm telling you guys, watch how your trading will change. Let's go and let's jump into how these Greeks actually work though. So trading options is going to be kind of like driving a race car. You're going to have 4 main gauges on your dashboard. You're going to go and have your delta. Your delta is going to go ahead and determine how fast that you're going. Then you're going to have your gamma. Your gamma is going to determine how much your contracts are accelerating. Your theta is going to be your fuel tank leaking. Okay, for example, think of it as time. And your vega is how bumpy the road is. Okay, the fear, the intrinsic value baked into it. Understanding these Greeks are really going to change everything. Okay, let me go and tell you guys a quick story. There's been a time where I was trading SPX. Okay, I was trading at 0 DTE, and what DTE stands for is date to expiration. Okay, so whatever the day is before you see DTE is how many days before the expiration. So if it's 0, that means that the contract will close on the same day. Okay, so the stock market is open from 9:30 a.m. Eastern to 4 p.m. Eastern. Okay, so in each time market comes up to 9:30 a.m. Eastern, that's another day that goes by. Okay, but if we're going to play a 0 DTE, then the contract has to be closed by 4 p.m. Eastern. So what I did was open up a SPX contract during a Jay Powell speech. I'm sure you guys have heard of Jay Powell, and was up around $930. The reason why I didn't win that trade is because of greed, pure greed. What I did was trade with P&L instead of looking at the actual chart and understanding Greek, so I got burned anyways. So I didn't close the trade, one, because I was P&L trading, and I didn't understand the Greeks. 2 things. Okay, so the first reason, I was on like $930 and didn't close it because it wasn't $1,000. I was trying to make 4 figures a day. Stupid mindset, I know. I was young. But thank God I learned. And another reason why I lost is because I just didn't understand the Greeks truthfully. Okay, so SPX, I told myself, you know what, if I'm up $930 right now, but you have to understand that things work off of acceleration options. If you have a bunch of price action bursting really, really quick, happening fast, your contracts are going to be going up. But as soon as that contract slows down, starts consolidating, if you don't have enough time on your contract, okay, then your contract value is going to go down immediately. Okay, so if it's bursting in a certain direction that you have a contract based in, so let's say you have a calls contract, okay? Calls contracts mean that you're preparing for market to go in an upwards direction. So let's say you have a calls contract, right? If market's pumping up super duper fast, okay, even if you have an out the money contract, and what that means is, let's say a contract, let's say a stock is at $30, right? And you think it's going to go up to $35. Okay, if you buy a $35 contract, which is out the money, okay, it's not there right now, okay, then if price is bursting really fast, even though it's not near $35 yet, you're still going to see some profit. But once again, as soon as that price action starts consolidating and going sideways, your profit can instantly be wiped away from you if you don't have enough time on your contract. So having time on your contract, theta, is going to be one of the most important things. So try and buy contracts that are 1 to 2 years out. Okay, this is going to give you guys a lot of more flexibility and purchasing power to really do what you want with your contracts and how you want to trade on the markets. Okay, so let's go and let's break it down. So delta is going to go ahead and be the speed. Okay, so here's a definition. So if the stock price moves up $1, how much money would the option make? Okay, so if the stock price moves $1 and the delta is 0.50, then that means the option price would move 0.50. Okay, so 0.50 per dollar. Okay, so that means that every time the stock moves $1, okay, the options price would go ahead and move 0.50 cents. Okay, and remember, you want to go ahead and multiply everything by 100. Okay, so the options price 0.50 is going to go ahead and equal $50. Okay, that's going to go ahead and equal $50. Once again, So you want to grab whatever decimal number you see on options and multiply that by 100. Okay, so 0.50 times 100 is going to be $50. Okay, if you're going to have 2.70 times 100, that's going to go ahead and give you 270. Okay, if you're going to have 4.50, you got to multiply that times 100. It's going to be 450. Okay, so whatever one of these decimal numbers that you see, you got to multiply it by 100. You have to. Okay, multiply all decimal numbers that you see in the options world by 100 in order to get the actual currency value of that. So think of Delta as the concert ticket. So it's going to be the coupon, right? Imagine you have a coupon to buy a concert ticket for $50. Okay, and let's say the price rises. If tickets are sold out and scalpers are selling them for now $100, your coupon is now very valuable. Okay, that's high delta. And let's say the price drops, right? If nobody wants to go and tickets are $10, your $50 coupon is now worthless. Okay, that's zero delta. So you want your delta to increase, because the more that your delta is increasing, the more that your contract is going to have more value behind it. Okay, but if price is dropping and your contract isn't working out in your favor, or it's not going in the direction which you have purchased, okay, so if you bought a calls contract and market's not going up, okay, then that means that the delta is going to help destroy your contract because your prediction is not right. Okay, but if your prediction is right, then the delta is going to go ahead and go up, deeming your contract valuable, making your contract more expensive, meaning you'll make more money. And gamma is going to go ahead and equal the turbo boost. So think of it as acceleration, right? Delta tells you your speed, and gamma tells you how fast your speed is changing. So think of gamma kind of like the nitro button. A super fast acceleration, okay? Think of this rocket ship. Boom, the turbo is behind it. So gamma is going to be like the nitro button in a racing game, okay? So you're speeding steady, and then you got to just burst, okay? That's what gamma predicts. So gamma makes your profits explode faster as the stock goes in your favored direction. So if you're on a calls contract, meaning that you're waiting for a price to go in an upwards direction, then the acceleration is going to help your contract make a lot of money, even if it's out the money once again. So let's say the current share price is going to be $30. Okay, if you think price is going to go up to $40, okay, you don't buy a $40 contract. Okay, what you're going to do is buy a $31 contract. Okay, so always buy the number one above or below current price in order to have your Greeks move the best. Okay, if you guys don't want to get destroyed by Greeks, do this: buy contracts 1 to 2 years out. Okay, buy contracts 1 to 2 years out, and buy contracts. If you're buying a calls contract thinking market's going to go up, I don't care where your take profit is. If the share price is $40, the contract you should be purchasing is a 41 call contract. Okay, that's just what you should be opening. Okay, you should be opening a 41 call contract. Okay, and if you're going to buy a puts, then you should be opening a $39 put contract. Okay, so understand that in order to have the best Greeks as possible, you need to have the best contracts. You need to make sure that you have as much time as possible on your options contract, and on top of that, you need to make sure that your prediction is going to be hit fairly quickly, or very likely to be hit. Even if it's more expensive, it's worth it. You don't want to just throw money into the void just because contracts are cheap. They're cheap for a reason, and they're plotting on you and preying on you for your understanding to not kick into your brain so that they can make some money. It's trading for a reason. These options contracts aren't just spawning. You have to understand that somebody is creating these options contracts behind. All right. So theta, it's going to be the melting ice cream, ticking time bomb. All right. Theta is extremely, extremely important. So time is money. And every day you hold an option, it loses a tiny bit of value. So once again, this is why I really put on emphasis on, if you're going to play options, try and buy contracts that have 1 to 2 years out. This way, you guys are going to be able to sit on your contracts with confidence. You're going to be able to hold it, and you're going to be able to do your thing. Okay. So theta is the time decay. So let's say day one value of a contract, right? Let's say you have a weekly expiration. So let's say you have a 7 DTE. Okay, 7 DTE. Let's go and let's break this down. So DTE stands for date to expiration. Okay, so the DTE tells you how much how much time is left. Okay, then the number tells you how much time is left. Okay, so if you have 7 days before expiration, then in 7 days, the options contract will disappear and it'll go ahead and be expired. Okay, and whatever you get, you get. Okay, if it closes in the money, which means that you're up some profit, then you'll get that. But if it closes worthless or down, then you'll just get the remainders. Okay, so understanding that theta is going to be the time decay. So here's how our options contract works. So day one value could be $100 and theta decay could be -$5, right? And let's say the day two value could be $95, even if the stock didn't even move. Okay, but because on options you're getting paid based off of time and prediction, you could lose money during a chop. Okay, so if the market is sideways and it's not going in a direction, it's not like shares or crypto where your money will just sit there. Your option could be deemed worthless because you're getting paid based off of how fast and how right you're going to be. All right, so here's an example of theta, right? Think of it as a rental pass. So theta, let's say you have a 30-day pass. So imagine you bought a 30-day pass to a theme park. Okay, so day one versus 29. So on day one, the path is worth a lot. It's jumping. On day 29, it would pretty much be almost worthless because the time ran out. The pass was only good for 30 days. Okay, so your options contract is only good for the amount of time that you purchase it for. So you want to be able to have as much time on it. Try and have some years on it. This way, if anything goes wrong, any type of speeches, with any type of government shutdowns or anything that affects the market, that would make the market move in a negative reaction from whichever way that you purchase, okay, then you'd be able to survive that. Okay, you wouldn't just be getting destroyed. Okay, so when you have time on your contract, instead of having a 30-day pass, imagine having the 3-year pass or the 2-year pass. Okay, the 30-day pass is not long enough. Okay, so the lesson, don't hold on to options that are worthless. Otherwise, pretty much they're going to just melt away anyways. Okay, so buy your contracts 1 to 2 years out. Okay, try and buy them 1 to 2 years out, and make sure you have your take profits too. Okay, so that's also what I mean by don't hold them too long. You should know exactly where you're going to close. Options is extremely strict. It's not like crypto and shares where you can just sit there and hold it forever. Please don't do that. You need to have a strict place exactly where you know you're going to exit. Okay, you need to know where you're going to go ahead and exit, get your money, and close and hit take profit. Okay, once you do that, it's going to be a lot easier to go ahead and progress. Okay, do not sit there and try and hold your options forever, especially once you start seeing profit. Horrible mistake I've made in the past, and inshallah, if God wills, that's not something I want you guys to experience. Okay, so please have an exit plan, know where your take profit is, and please close your trades. And Vega is going to be the fear index. So think of Vega as hurricane insurance, right? Vega measures how expensive options get when people are scared and horrified. So on a sunny day, insurance is going to be cheap, right? That means that the Vega is low. But when a hurricane is coming, okay, whether it be earnings coming, a big news event, whatever, the insurance is going to be expensive. It's going to raise, and that's going to lead to high Vega. So even if your house is fine, the price of insurance goes up because of the storm. Okay, so you guys might have heard of the term implied volatility. Okay, so when earnings come up or when big events come up for stocks, the options value could shoot up due to the fact that people are preparing for a big move. Okay, so there's a lot of cool plays you can make in options too. So instead of actually playing earnings with certain stocks, if you buy a contract before earnings, you might make a lot of money, but then after the earnings, it might go away just because of the hype and expectations. So people are preparing for the future, and that's why options are even a thing in the first place. So certain times when people are preparing for the futures between a big hurricane event that's going to change a lot, your price of the contract could change regardless if it's in the money or out the money. So very cool things you could do with options. So think of Vega as the earning party, right? So before the party, everyone's excited, right? The price for tickets go up. It's a lot of high volatility. Everyone's hyped. It's jumping. It's good music playing. Everyone is getting turned. Okay, but then after the party, the event is over and the excitement is gone and ticket prices crash instantly. Everyone was like, all right, that's it. We already went. It's not lit anymore. Forget it. Okay, so don't buy options right before a big news event. And if you do, make sure that you sell before the big news event. Okay, you do not want to be in a short-term options plays during news. Okay, this is why I also say try and buy contracts 1 to 2 years out. Okay, because if you're playing on your higher time frames, like your daily, your weekly, or even your 4-hour,
Okay, right? You're going to have bigger take profits, right? And there might be earnings in between that, which is going to be amazing, just fine. Because a lot of the times earnings will benefit you for playing the right direction. But if you have 1 to 2 years out, you're not going to be getting destroyed by things like news and certain events like that as easily. Why? Because you have so much time on your contracts. So having time on your contracts kind of wipes out all the negatives of options. Have some time on your contracts and buy reasonable contract too. If the current price is 40, contract you should be purchasing for calls is 41, for puts is 39. Okay, you should always buy the number one above or below. That's going to be the best way to avoid these Greeks destroying your profit. I don't want you guys going through any of that weird cringe anxiety or anything like that. Okay, you guys got it. So let's go on this recap. Let's jump into it. So delta is going to be the speed, right? And it moves with the stock price. Then you're going to go ahead and have gamma. Gamma is the nitro. It's the thing that accelerates your wins or your losses too. And theta is going to be the melting time. Okay, it's the time that eats your money. Okay, and then you're going to go ahead and have your vega. That's the storm, and fear makes prices expensive. Okay, so if it's about to be a big news event and you notice your contracts shoot all the way up, try and sell before news events. But if you're playing a higher time frame setup, you know what you're looking at, whether on your weekly, daily, or 4-hour. And if you don't, head over to stackmode.net. I'm here to teach you guys. Okay, whether you guys want to learn how to trade options, futures, crypto, or whatever, I'm down to get into it. I love you guys so much. Stay prayed up, stay high. Keep grinding. I'm gonna catch you guys the next one. Peace. I'm going to break down calls, puts, and even leaps so you guys can understand stock options in a way that makes sense, no confusion, and no headaches. So use call options when you think a stock is going to rise in an upwards direction because you want to lock in the cheaper price today and profit from the move up. A put option is going to be the opposite. It gives you the right to sell a stock at a certain price, and if you think the stock might fall, puts lets you profit from that drop or protect your portfolio from taking a hit. You can also do something called hedging, which is the main thing options was created for, and which you could place a bet in both directions. But here's where the beginners miss out. Leaps. These are long-term options, usually lasting 1 to 3 years, and they give you a lot more time, more flexibility, and less stress than those short-term weekly options that wipe people out. Let's go and let's talk about them, and let's jump into it. Inshallah. All right, so let's talk about what an options contract is in the first place. Okay, so let's talk about the rights versus the obligations. So an option is a financial derivative contract, and it derives its value from an underlying asset like Apple or Tesla stock, okay, or Microsoft stock, or even stocks like Google, okay? And it gives the buyer the right, but not the obligation to buy or sell that specific asset at a specific price on or before a certain date, okay? So let's say you bought a ticket for $100, okay? Right? That's how much the actual options contract costed you. Okay. And then let's say now the concert were to sell out. Now tickets are going to be worth $500. Okay. If you had a call ticket, okay, because call contracts are going to be used whenever you think price is going to go in an upwards direction. Okay. So you would purchase a call contract. Okay. So that would give you $400 in profit. So if you bought it, okay, if you bought the tickets for $100 and sold them for $500, okay, that means price went in an upwards direction, okay, which means you would have bought a call contract, okay, and that means you would have made $400 on that, okay. So $400 profit would have been what you yielded without ever attending the concert, just because you were right on the fact that prices would have gotten more expensive over time. So if you believe that prices are going to go in an upwards direction and get higher over time and more expensive, then you're going to go ahead and purchase a calls contract. If you're betting that the price of a stock is going to go in a downwards direction, then what you're going to do is purchase a put contract. Okay? So if you think price is going to go in a down